The growth numbers, our enthusiasm was perked up by the very strong auto sales numbers for April. But I've been speaking with economists Abhishek Upadhyay and of ISEC and Sakshi Gupta of HDFC Bank. Also, the head of market research firm Bizom, Lalit Bise, is with us, giving us some very interesting data on consumption, FMCG consumption in April. Gentlemen, and Sakshi, thank you very much for staying on. Sakshi, before the break, you told us that you're expecting growth to fall to 6.5% for the current quarter, April, May, June. Abhishek, what is the current quarter anticipation for you?
We are working with a similar number, Lata. So, I mean, if you look at our actual imported prices for crude, it's around $115
Yes.
for data which is being made available by BPAC for month of March and April. So, yeah, in that context, we are likely to see growth being around 6.5%, if not weaker, in the first quarter and in the first half of the fiscal year before it picks up.
Okay, so Lalit B says very encouraging numbers for FMCG in April, and the auto sales is unlikely to continue in May and June, you think? Abhishek?
Yeah, so auto sales, again, because there is fair bit of momentum there, would think that it doesn't weaken abruptly. Would think this is durable. There is a durable element to this upsurge, especially the two-wheeler sales, etc., that we have seen. But we'll expect domestic demand indicators to also progressively weaken.
Okay.
What we've already seen is financial conditions have tightened, equities are lower, but interest rates have also moved up. And all this will have some impact on interest rate sensitive sectors, including autos, for instance.
Oh, yes, absolutely. We have seen interest rates move now, even for the 10-year bond north of 7%. Lalit, what is the experience normally when prices are pushed up? At the moment, it's only cooking gas prices, that to commercial cooking gas, that has gone up. But eventually, we should expect, increase in packaging costs, which already must be factored in. How does demand normally respond? Were there any price rises you saw in April already? And has that been withstood by the demand? If prices, packaging, etc., rise further, do you think demand falters in May and June?
Right. I know there's already some indicators about it in April, month of April itself. If you look at something like packaged commodities, which is very fluctuating or very, so to say, sensitive to price rises, there are already price rises in April. So overall, packaged commodities do show growth, but that is primarily a value-driven or price-driven growth. There is actually volume has contracted in urban for packaged commodities already. It is still up in rural, but that growth is also pretty small. I mean, low single digits kind of a growth in packaged commodities. And if the prices are increased in other categories, I fully expect a similar kind of a behavior, that overall value growth may be there, but the volume growth is likely to be impacted going in May or June. Okay. So that's essentially how I look at it.
Okay. Well, now let me come to inflation and then get back to growth if I can. Sakshi, would you say that, your 5% inflation forecast, which most of you are around the 5% mark, most of the economists I did in my survey said that they have moved up their average by about 50 basis points, but they've all assumed an average crude prices of $80 or $85, like the Reserve Bank itself has assumed. Now that assumption is under threat. There are more and more commodity experts who believe a $90 average would be a safer average. If that were to happen, what is your inflation forecast and your interest rate forecast?
Right, Lata. So as you said, yes, the 5% inflation forecast that we currently have, I think there are more upside risks to this forecast than this being, the risk being balanced. So one clearly is, oil prices averaging above what we are assuming. Our assumption is $85 per barrel. If it is higher, I mean, for every $10,
US President Donald Trump pauses the naval mission Project Freedom, citing great progress towards a complete and final agreement with Iran, but says Hormuz blockade will continue. US Secretary of State Marco Rubio also says that Operation Epic Fury is over. Meanwhile, Iran's foreign minister lands in Beijing for diplomatic talks. This comes ahead of Trump's China visit scheduled for next week. Stocks on Wall Street closed Tuesday's session higher, with S&P 500 and Nasdaq notching record highs as AI chip stocks surge and prospects of a new deal make investors hopeful. Markets in Asia also open higher, gift Nifty indicating a positive start for the Indian markets. Brent crude prices fall $208 a barrel after U.S. Secretary of State Marco Rubio announced that Operation Epic Fury is concluded, noting that its objectives had been met. And meanwhile, gold prices climbed towards $4,600 an ounce as signs of de-escalation push oil prices lower. L&T reports a muted fourth quarter as crisis in West Asia takes a toll. Profits decline 3%. Management commentary cautious but expects double-digit growth in order inflows this fiscal, even as they say disruption will continue in Q1 and Q2. And in key earnings today, Bajaj Auto is set to report a healthy set of numbers in Q4 FY26. The board is also going to be considering a buyback. Also, watch out for numbers from Godrej Consumers, where revenue is expected to rise 10% from a year ago. Hello, good morning. You've tuned into Power Breakfast on CNBC TV 18. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Now, in terms of the markets, what we're seeing coming in terms of cues this morning as well, Project Freedom that had started in the Strait of Hormuz for the naval mission, that's taken a pause. But we had some commentary that came in from Marco Rubio, who said that the Operation Epic Fury, that's concluded. They met what they wanted to do. The objective has been received. And a purpose has been achieved as of now is what the word is coming in. So what's the Asian market doing this morning, right? Japan is closed, but we have Taiwan index that's open. 1.5% gain there. Hang Seng is managing to hold on to gains of 0.2%. South Korea, that's doing very well. Kospi, if you look at it, it topped around 7,000. It was a new high for them as well. So we're seeing, because of the West Asia tensions de-escalating, some worry on that front is reducing. We're seeing a bit of a green that's come on the screen. And Indian markets, what's the Nifty implied open indicating for us? Gap up start, 196 point uptick. But, we've seen that flip-flop coming in, right? One day green, one day red, depending on the commentary that comes in from West Asia front, US-Iran front. That's keeping the markets on the edge. But today, at least the gap up start, 195 point uptick as of now is the indication coming in for the Indian markets as well. Now, on that front, that West Asia update that I'm talking about, the West Asia conflict, what's the latest on that front? US President Donald Trump has announced that US military operations escorting ships through the Strait of Hormuz will be paused for a short period, citing a request from Pakistan and progress towards the final deal with Iran, but says that the naval blockade for Iranian ports will stay in place. Now, U.S. Secretary of State Marco Rubio has also said that Operation Epic Fury was over, adding that U.S.'s initial objectives had been met, and he added that the president was now seeking a deal and not more attacks. Listen in.
Operation Epic Fury is concluded. We achieved the objectives of that operation. I'm not going to, we're not cheering for an additional situation to occur. We would prefer the path of peace. What the president would prefer is a deal. He would prefer to sit down, work out a memorandum of understanding for future negotiations that touches on all the key topics that have to be addressed, a full opening of the strait so the world can get back to normal. And he preferred that be negotiated through the route that Steve and Jared have been working and that all of us have been supporting. That's the route he prefers. That is so far not the route that Iran has chosen.
Okay, that's the word coming in there in terms from Marco Rubio. But also let's move on. And US President Donald Trump has paused those naval mission Project Freedom, citing that great progress towards a complete and final agreement with Iran. But that blockade in Strait of Hormuz, that will continue. US Secretary, obviously, Rubio said that Operation Epic Fury is over. Meanwhile, Iran's foreign minister lands in Beijing for diplomatic talks. And this comes ahead of Trump's China, meeting that is going to be there as well. So that's the latest update that is coming in on that front as well. We heard Marco Rubio talk about it as well. And, talking about Iran's foreign minister, Abbas Araghchi, has arrived in Beijing for those diplomatic talks. So, those talks are going on as well. Chinese counterpart is what he'll be meeting as well. But, that's important updates that's coming in here as well. Let's go across to Manisha Gupta now also, who's here to tell us what's happening in the world of commodities, to take us through the details given these updates that we have. Manisha, over to you. Good morning.
Thank you for that, Vinny. The updates that you have been talking about clearly have impacted the crude oil prices, which has declined for a second straight day. With the U.S. president indicating a possible peace deal with Iran, U.S. will pause an operation to help escort ships through Strait of Hormuz, but the blockade of Iranian ports just about continues. So while we have seen some profit taking from the higher side, the crude oil prices still are holding above $100 a barrel because of that. Until the time Strait of Hormuz is shut, you will see the crude oil prices kind of supported. What also has seen very strong gains in the Asian markets today has been metals. With the decline in US dollar, with the signs of de-escalation in the Middle East, we have seen the gold prices gain up by 1.5%, silver is up 3%, copper is gained up by 2.5% in the overnight markets. That one is trading at a 1-week highs. Aluminum with 2% gains overnight is trading at a 3-week highs right now. Lithium carbonate, sulfuric acid prices, coal is trading at around multi-month highs. So we are looking at energy and also the metal prices continue to do very, very well in Asia right now.
Okay, thank you so much for that, Manisha. But on that note, we're actually going to slip into a very short break. After the break, we'll tell you how the overnight cues are going to be impacting our Indian markets. Stay tuned in. Welcome back to Power Breakfast on CNBC TV 18. Now let's talk about the U.S. markets. Wall Street ended higher on Tuesday with S&P 500 and Nasdaq Composite scaling fresh record high. Gains were broad-based with Dow Jones also closing in the green. CNBC's Peepa Stevens is joining us to get us a wrap on what happened on Wall Street.
U.S. markets were up across the major indexes in Tuesday trading as oil prices pulled back after U.S. officials said the fragile ceasefire in Iran is still intact. The Dow gained 356 points. The S&P 500, which hit another all-time high, added 59. And the tech-heavy Nasdaq, which also notched a new high, was up 258 points. Several major publishers and author Scott Turow sued Meta Platforms Tuesday, alleging in a proposed class action suit that Meta pirated millions of their works and used them without permission to train AI. A Meta spokesperson responded by saying courts have rightly found that training AI on copyrighted material can qualify as fair use and that they will fight the lawsuit aggressively. The Equal Employment Opportunity Commission filed a federal civil rights lawsuit Tuesday against the New York Times, accusing the paper of passing over a white man for a promotion in favor of a less qualified candidate to meet diversity goals. A spokeswoman for the Times says the company, quote, categorically rejects the meritless and politically motivated allegations. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. Now, U.S. Treasury yields eased after spiking in the previous session as concerns about higher energy costs caused by the West Asia conflict continue to grip the markets. Here is an opinion that's coming from J.P. Morgan's Bob Michael and former Kansas City Fed President Esther George on the bond market and what the Fed may need to do going forward.
It feels like to us that it's running its course. I think you're going through the repricing that the war in the Middle East isn't over in 4 to 6 weeks. It's taking a bit longer. That's pushed energy prices higher. And the easing bias that was in the central banking system 6-8 weeks ago has been fully removed. I don't see 5% for the 10-year Treasury in the cards. For that, you'd need the Fed to move from an easing bias where it is today. Not only the whole Fed has to get to neutral, but they have to go to a tightening bias. And if that happens, that's a long way off.
I do think it's in the cards. And I think we have for some time been punting on inflation, looking and hoping that it will settle down. And of course, over the past year, we've seen any number of shocks that have kept pressure on it, even as the Fed has cut interest rates. So there will be, I think, some point, given the series of shocks we've had, that we will begin to see that upward pressure. And I don't think inflation, regardless of the dual mandate, has been taken out of the picture yet for sure for the FOMC.
Okay, that's the update coming in from the US markets, global front as well. But how is all this going to be impacting our Indian markets? We have a team of research here to set you up for trade, tell you which are the important stocks to watch out for in the trading session as well. First up, let's go across to Hormuz to understand the important market cues that we're keeping an eye out on today. Good morning, Hormuz.
Good morning, Vinny. And the bulls would be hoping that it turns out to be a good morning indeed, because the GIFT Nifty is indicating a 200-point gap up as of now. And there are reasons for that. There is this momentum that came in the second half of the trading session yesterday. The bulls would definitely want to carry that forward, and they have the reason for that. The oil prices are down. They were down yesterday. They are down today as well. Brent is down close to 2%, below the 110 mark. Of course, in a market that is driven by sentiments, you would take 108 compared to 119. So even though the prices are elevated, the fact that they are down is enough for sentiments to receive a boost. The other problem is the fact that the currency is continuing to make record lows, and that is further concern. But of course, once there was a recovery from the lows yesterday as well on the currency front, and if that continues to improve, that will add on to the sentiments as well. There are two major earnings reactions that you need to watch today. One is from L&T, the other one is from Hero MotoCorp. L&T of course has received downgrades and price target cuts as well after their results, and Bajaj Auto is the other big result of the day. Of course, more than the result, it is going to be the buyback announcement that needs to be watched out for. And of course, there are platform companies that are reporting results today. Paytm, PB Fintech, Meesho, all of them. Meesho has been on the radar over the last 3 days. But on the index front, the range continues to remain the same. 23,800 on the downside, 24,300 on the upside. But the positive is the fact that every dip towards 24,000 is getting bought into. That's a positive. For the Nifty Bank, though, it's struggling to sustain above the 55,000 mark. The bulls would hope that that changes in today's session. So for now, it is likely to be a positive start. There are plenty of earnings reactions to watch out for, but the GIFT Nifty is a gap up, and the bulls would hope that it sustains.
Okay, thank you so much for that, Hormuz. But let's talk about important stocks that you should keep on your radar this morning. We have Ria to take us through that list. Good morning, Ria.
Well, good morning. First up, keep an eye on banks and NBFCs as the government announces the ECLGS 5.0, which is an emergency credit line guarantee scheme, largely to cushion the impact of the West Asia crisis. Rupees 2.5 lakh crores is of additional credit is targeted as per this scheme, and this also includes around 5,000 crores for airlines. So stocks like Indigo can also see a boost on the back of this. Moving on to the quarter four earnings, L&T has reported a soft set in this quarter, largely due to their exposure to West Asia. The revenue has gone up by around 11% compared to the previous year, a mild miss compared to the estimate that we were working with. EBITDA up by 5% at 8,611 crores versus the estimate of 9,000 and 9,300 crores. So there has been a miss on the EBITDA front for them. For Hero Motor, the net profit has come in at 1,400 crores this time around, and revenue at 12,800 crores, largely in line with the estimates that we were working with. For Coforge, the revenue growth has been at the lower end of estimate at 2% sequentially. This is the constant currency revenue growth. Margin performance, however, has been quite strong. EBIT margins at 16.6%, which is the highest ever quarterly print for the company. For SRF, the revenue and EBITDA have both gone up by around 7% each, above the estimates that we were working with. Strong set overall for SRF. For United Breweries, on the flip side, it has been a weak quarter this time around, with EBITDA at 139 crores versus estimates of 190 190 crores of EBITDA. Volume growth, however, has been in line at 4% versus the expected 2 to 4% growth range. For Aavas Financiers, the net interest income as well as the net profit have gone up by roughly 18% year on year each, and the AUM has seen a growth of around 15% compared to the previous year. And going forward for the full year FY27, the company is targeting a 20% AUM growth. And lastly, for Poonawalla FinCorp, the AUM has seen a growth of 70% compared to the previous year to 60,350 crores odd, and the net interest income has also gone up significantly by 72% this time around.
Okay. Priya, thank you so much for that. But let's move on to the final update for today. We have Sudarshan joining us to take us through what's happening in the world of F&O, what we should keep an eye out on. Good morning, Sudarshan.
Good morning, Vinny. So it was not a bad day of trade yesterday, considering we had weekly expiry, and the last hour recovery that we have seen in the market may continue even today. And we have all the elements there which indicate you that there can be a recovery and there can be a sustained recovery in the market. And in that process, in all probability, Nifty may move towards the level of 24,300. That's very important level to move higher as far as Nifty is concerned. And I'm saying because of two major reasons. There is a big recovery in the crude prices. So yesterday it was hovering around $114 to $115 per barrel. From that level it has come sharply off highs. Now it's trading around $108 per barrel, and that's following the positive commentary around the West Asia war. And also the recovery has told you that there was a huge put writing between the level of 23,900 to 24,100, and that's the reason Nifty put call ratio has moved higher to 0.96 versus the previous day's level of 0.79. As far as FI flows are concerned, they continue to remain on the sell side, and it's good for the market because it remains heavily shorted market. So if there is any recovery, it can be a very sharp recovery. So yesterday in the index futures, FI have sold nearly 900 crore. In the stock futures, they have sold almost 700 crore. They have added long positions of just 300 contracts, but added short positions of almost 6,000 contracts. Now longs exposure is 12% and short exposure is 88%. On the options data, put side 24,000 and 23,900, as I told you, have seen huge increase in the open interest. On the call side, 24,300 and 24,500 were the most active ones. So support for Nifty, 20 DMA of 24,020 and resistance 24,300. Some of the stocks that will be in focus, M&M yesterday saw a big uptick after strong commentary and strong earnings. Today it might see a follow-up buying. Vedanta has been seeing fresh longs, Godrej Properties and Voltas have been seeing fresh shorts.
Okay. So Darshan, thank you so much for taking us through the important cues that we should keep an eye out on in the world of F&Os. But let's move on. An ITC chairman, Sanjeev Puri, says that the company could undertake more price hikes if inflation creeps in. Speaking exclusively to Shireen Bhan, Sanjeev Puri said that the price hikes have been staggered and more will come. He also promised to invest 20,000 crore rupees for capital expansion over the next 4 to 5 years. Listen in.
The tax increase is massive. We have to pass it on. There is no question of absorbing it. But if we were to do it at a single stroke, then it probably can lead to a larger shift to illicit. So we want to stagger it up. So we are staggering it up. So that
How much have you already taken?
We've taken about, I think, 50-60% of it, something like that. It's ongoing. You see, it's ongoing. I don't have an exact figure. It's ongoing. And some more will happen. In the short term, I think there's no question of growth, of volume. Whenever taxation increases, volume shifts to illicit. So therefore,
there will be an impact.
There will be an impact. Volume growth, there will be degrowth. The question is, what degree of degrowth? We are seeing inflation coming in, things like anything related to petrochemicals, some parts of energy. So inflation is starting to come in, and it will, over a period of time, we will see that more and more prices will get passed on to consumers because many companies were sitting on hedges or past inventory, but it will happen.
Okay, now let's move on. And in key earnings, L&T reported its Q4 FY26 numbers post-market hours yesterday. Vivek is joining us to take us through the fine print of the numbers. How were they looking like, Vivek?
Well, good morning. L&T reported a soft Q4. Remember, two significant headwinds that the company was facing: disruption as far as the West Asia operations were concerned, and execution challenges as far as the domestic market was concerned. Soft Q4, which was largely along expected lines. In terms of commentary, quite cautious, especially as far as Q1 and Q2 is concerned, given the kind of supply chain disruptions that the company is facing, especially due to a lot of raw material supply that passes through the Strait of Hormuz. Remember also the company has unveiled the Lakshya 2031 plans. In terms of the numbers itself, revenues higher by 11.3%. Remember, Q4 is generally the strongest quarter, but this time around it's been quite muted. EBITDA higher by 5%, margins at 10.4 versus 11%, and profitability down 3.1% on a year-on-year basis. Order book all-time high at 7.4 lakh crore. In terms of parameter check, as far as FY26, what the company gave at the start of the year and what they achieved, top line growth, remember the company guided for a 15% growth, they achieved 12% along expected lines, especially on account of Q4 disruptions. Core margins, company had guided for 8.5%. Now they've they achieved 8.3%. So two misses as far as top line as well as order inflow was core margins was concerned. Order inflow was a handsome beat at a 10% guidance. The company managed to go ahead and give an order inflow guidance. Order inflows of close to 24%. In terms of guidance, as far as FY27 is concerned, top line growth in the range of 10 to 12%, core margins flat at 8.3%, and order inflow growth on a very strong base is at 10 to 12%. Expect mild negative reaction on account of the miss to the earnings today.
Okay, thank you so much for that, Vivek. But let's slip into a very short break. Up next, we'll get you the cues from the world of AI. Stay tuned in. Welcome back to Power Breakfast on CNBC TV 18. Now getting you the latest update from the world of tech and AI in a special segment, AI Pulse. We have Rachana joining us, as always, to take us through more details of this one. Good morning, Rachana.
Across the world of technology and artificial intelligence, the stories making headlines today are: the first is the White House is considering an executive order that would require government vetting the frontier AI models before they're released to the public. Officials have briefed leaders from Anthropic, Google and OpenAI on the plans. And separately, the Center for AI Standards and Innovation has signed pre-deployment evaluation agreements with Google DeepMind, Microsoft and xAI. And staying with Anthropic, the AI startup has committed to spending $200 billion with Google Cloud over the next 5 years. That single deal accounts for more than 40% of Google's entire cloud revenue backlog. Contracts with Anthropic and OpenAI now exceed half of the $2 trillion in combined cloud backlogs across major providers. On the markets, IT was a big night. It was a big night for IT chip makers because AMD reported first quarter revenue of $10.3 billion. That's up 38% year on year, with data center revenue surging 57%. Micron crossed the $700 billion market cap milestone for the very first time after announcing that it had begun shipping the world's highest capacity solid-state drive. And in Korea, Samsung has joined the $1 trillion club, driven by surging demand for high bandwidth memory chips. Now to jobs. Cognizant is planning to cut between 12,000 and 15,000 jobs globally, with the bulk of those cuts expected in India. PayPal is cutting 20% of its workforce over 2 to 3 years, targeting $1.5 billion in savings. Freshworks is cutting 11% and Nissan is trimming 10% of its European headcount. Globally, over 92,000 tech jobs have been lost in 2026 so far. And finally, Google has secured a distribution company license in Andhra Pradesh, with the state cabinet reportedly approving it, though there's no official confirmation yet. But the timing is significant because Google recently launched its data center in Vishakhapatnam, and a Discom license would give it direct access to power that facility and many more data centers that it would come up with in the future. That's all for now from the world of artificial intelligence, but we'll keep you updated on more.
Thank you so much for that, Rachna. But let's move on. And actually, we're going to wind down this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, your Bazaar Morning Call.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios, looking a little better. Oil was up 4% yesterday morning. Same time when we started the program, it's down 4%. So we're back at about 108 on Brent oil this morning. I'm Prashant. With me, my colleagues Nigel and Rima. Guys, good morning.
Hi, morning.
Hi, good morning. And the GIFT Nifty is up nearly 80 points. And banks could do well following the credit guarantee scheme aimed to provide some liquidity to the MSMEs. So crude down, a lifeline boost for MSMEs, which should support the banking names today.
Well, that's right. I think it has the makings of a good trading session. And if that's not the case, the bulls will be disappointed. So Prashant, let's get straight to it.
It's the only thing I sometimes feel is that we're kind of sort of living like, eat one day at a time, right? I mean, there's no common thread joining one day to the next day to the next day, right? Because it can be interrupted any time with what can happen. But in any case, I mean, so given what the situation is, I think we accept what comes our way, positive and negative, and this morning is more positive than negative. So the GIFT Nifty, for example, at the bottom of the screen is indicating a higher start, some 170, 180 points. Yesterday morning, same time, there was a 100-plus point cut. Now, oil is down 4%, just to sort of take it from the top. Last night lost 4%, it's down another 1.5% this morning, which basically means we're at about $108 per barrel this morning. So, 108 as we left off last Friday, because the Friday our markets were shut, but global markets were trading. But we left off at 108, went back to 114 yesterday, and then, I mean, we are back to about 108 in that sense. Now, news, right? This morning news coming through. This is, of course, after U.S. markets shut. President Trump has paused Operation Freedom, which was nothing but basically the offer and the attempt to guide ships, which he said, well, are stuck and low on fuel and all of the other stuff in the Persian Gulf out, assisted by the U.S. Navy, U.S. Warships, etc. He's abandoned that. He's paused that. He's saying, well, of course, Iran does not like it. There have been escalation. Yesterday morning, we reported there was escalation attacks on, South Korean flagged vessel and UAE oil depot, etc., etc. Although that's been disputed by Iran, saying that, well, the attack on UAE was not us. But, of course, the one thing is clear that Iran does not like it. And I think President Trump saying, well, he's been persuaded by people, intermediaries like Pakistan, etc., to pause Operation Freedom. And he also, of course, in that post saying that great progress has been made towards an agreement with Iran, and he's hopeful that something gets done. He's maintained that the blockade will continue. I mean, of course, the point is Iran has been saying till the blockade is on, we will not negotiate. There's nothing to negotiate in that sense. Iranian foreign minister, by the way, is in China, Beijing, and he's meeting the top leaders in China. China is, of course, an ally. It's the single most important buyer of Iranian oil before all of this started. This is interesting because President Trump is due to visit China and meet President Xi on the 14th and 15th of May, which is not very far away. So, China, of course, does it have leverage? Yes, it has leverage. Is it willing to use that leverage with both sides is the question, and whether it can do so. U.S. equities last night were higher on signs that the U.S.-Iran ceasefire is holding. So, I mean, even yesterday, right, as these attacks were happening, President Trump, I mean, just stopped short of calling this a violation of ceasefire, because if it's a violation of ceasefire, then he'd have to respond. And that did not happen. And now there's a pause with regards to this new attempt to get ships out there, out of the Strait of Hormuz. So all pointing to, and the market wanting to believe that this is once again, climbing down the stairs of de-escalation, or not climbing higher. S&P ended 0.8 higher. NASDAQ was up about 1%. But of course, I mean, there's the Iran bit, but there's also a fair bit of strength in the AI-related picks and shovels, if you want to call it, right? Memory, chips, semiconductor stocks, they all went higher and largely responsible for the move that we saw. There was also this report that Apple is considering using Intel and Samsung to build a processor for its devices. And I think we'll talk more about this as we go on, but it could be a big one if this is true. AMD, talking about more AI, rose 9% in after-hours trading. Second quarter revenue outlook is pretty strong. I mean, actually, across these companies, it's been super strong. Expectations were elevated, but just look at SanDisk, right? No one thought, I mean, the most outlandish of expectations, forecasts, I mean, they comfortably beat it on the upside. Now, just to tie in levels here, right? We've been now in 6 days in a row, we've been in this range, 23,000, actually almost 8 days if you go back before the gap. So 23,800 to 24,300 is that range, broad range. We left off at 24,030. And we've had number of one touch at 24,300, and then of course we've crossed that as well, only to come back under it. So that remains, to my mind, the immediate kind of range that we need to take out one way or the other before more gains accrue. GIFT Nifty will once again give you a quick sense. I think we're up 170 odd points. Nigel has walked across with what F&O positioning is looking like. Nigel, take it away.
Well, that's right. We're bracing for a positive start, and you'll be very disappointed if by the end of today you don't have a big green day, because the cues are positive. The question is, can the Nifty go ahead and cross the 24,350 mark? That's going to be extremely important. Soundbites overnight, by the way, were very encouraging. If you heard what President Trump had to say, he said he's pausing Project Freedom, while Defense Secretary also said that the ceasefire between the United States and Iran holds out. Now, this has renewed hopes for a deal with Iran and also led to a sharp drop in crude oil prices. So the cues overnight are positive. Additionally, the cabinet has approved the credit guarantee scheme, which gives you a bit of a lifeline, a little bit of breathing space in the near term. And that's encouraging from an economic perspective, just in the near term. So that's a bit of a booster shot that's coming in on the domestic front. Now, on a day that the Nifty was lower, the India VIX as well was lower. That's a positive that I normally see, because on the day that the Nifty was down, even when we were at the lows of the day, the India VIX didn't spike up. And you want the India VIX to keep cooling off. That's something that you should keep on your radar as well. The VIX in trade yesterday was a little bit lower. In terms of flows, the DI is bought, but only around 2,500 crores, while the FI is selling outweigh the DI buying. Now, going by the cues that you have, you'll want to see a lower FI net sell number for today's trading session. But for that to happen, first you need to see some signs of stability on the Indian rupee, because that's continued to weaken and now it's holding above the 95.3 odd mark. You can't expect flows to come back if you see this sort of a slide on the Indian rupee. So stability on the rupee is eyed, and also the FI net sell number, should actually be lower in today's trading session. Let's see how that goes, because they have been selling on a day-to-day basis, barring a couple of days when you have a large trade. On the future side, well, the FIs, they added shorts. Index futures, they added close to around 6,000 short contracts. On the stock futures, they added close to around 30,000 short contracts. So more shorts than longs added on both index as well as on stock futures. I'll tell you what, if a market needs to get up and going, you'll be thanking your stars that you have shorts in the position. In fact, if you look at the last few days, the FI net short position has gone up by close to around 25,000 contracts, nearing close to around 2 lakh contracts. And in percentage terms, it's holding around that 88%. So these markets are net short. You want some positive domestic cues, and maybe some earnings surprises. And the global cues as well are looking a little bit more optimistic just this morning itself. Moving to the options data, 24,000 call as well as put, both of them added close to around 25 lakh shares. The premium between both of them is close to around 450 rupees. So in terms of the levels, well, you look at the near term, that appears there's a bit of a strategy that's playing out on the option side, which is known as a short straddle. That is the same strike. You write the call as well as the put, and then 450 rupees is what you're pocketing. So that's the broad band you're looking at. This is the broad band just in the near term. In terms of levels for today, resistance is at around 24,350. And I say that because numerous times you have gone to that mark and it's got rejected. So that appears a bit of a resistance just in the near term, while support comes in at yesterday's low, which is at around 23,880 odd. The Nifty Bank is trading below its crucial daily moving averages. So you'll want the Nifty Bank to get its act together and in fact move up as well. In yesterday's trade as well, it came a little bit closer to around the 20 DMA. So that's the first level you're looking at. And then you'll want it to move higher from there. Nifty Bank needs to play a role. It's got a bit of a booster shot today. So hopefully it can get closer to around the 20 DMA and take it off. As I said earlier, GIFT Nifty suggesting a strong start. It has the makings of a good day. By the end of today, you'll want to end with some solid gains.
Well, let's just pull up. Well, it's 175 points up now on the GIFT Nifty. Let's just take a quick check on Asia, and Korean markets are powering through. It's a 6% rally on Kospi. Its year-to-date gain now stands at 75%, and Samsung has become the first South Korean company to hit $1 trillion in terms of valuation. Blockbuster number, 69% revenue growth. So that AI juggernaut continues to roll on. Rest of the Asian markets in the green too. The Taiwanese markets up half, Hang Seng up nearly 1. The Japanese markets shut for the third consecutive day. Cameron Brandt, Director Research, EPFR Global, is now joining in. Cameron, thank you very much for joining in. It just seems this whole AI trade is papering over the geopolitical tensions, which is one step forward, one step back. Project Freedom has now been put on pause by Trump. What is your assessment and what are the flows looking like?
So the flows very much reflect what you just said, that the AI story has proved incredibly resilient over the past 2 months, greatly to the benefit of Korea rather than India in the emerging Asia space. One thing we have seen, which I think is of interest in terms of India, is that software and services funds dedicated to that subgroup of the technology universe have rebounded strongly from the worries that they were being assailed with around the time that the Iran conflict broke out. And India is much more associated with those software and services rather than the pure AI story. So we've definitely seen a sort of a thaw there. And I'm sure you're interested in what's happening with India, which is still fairly consistent outflows, but the pace of those outflows is definitely moderated in recent weeks. And the broader context is definitely risk on. The latest news on the Iran ceasefire and hope for peace process is certainly going to add fuel to that.
Sorry, you're saying that the flows are positive with regards to India? I mean, dedicated funds and otherwise? I mean, it's looking better, is that what you're saying?
It's looking better without having fully turned the corner. Okay. But in terms of an inflection point, the fact that software and services are no longer getting beaten up and funds dedicated to them have seen quite a bit of fresh money in recent weeks is, I think, sort of a good indicator given how people view the investment case for India.
I see. Anything else out of the ordinary in terms of flows into asset classes which is worth bringing up, Cameron?
The fact they're as good as they are, given the external context and the continued high price of oil, is, I think, worth noting. Though whether it says that people have completely decided to discount geopolitics again and just focus on the corporate earnings story, I'm still not sure. The rotation away from America, from U.S. assets, that seems to certainly have been put on hold in recent weeks. Flows to dedicated mainland China funds, we seem to be seeing another sort of officially sanctioned effort to prevent speculative excess buildup. And Latin America remains perhaps the favored group in the overall emerging markets universe.
Does Taiwan come? Taiwan is counted as what, a developed market?
No, it's an emerging market. It's sort of flown somewhat under the radar recently, but
and of course, Korea as well, right? Korea as well, right? I mean, I think there was all this debate about upgrading it to a DM status.
Right, and Korea is sort of the outstanding winner at the moment. Yeah. It's riding both an AI and a defense story, but obviously continues to have some major vulnerabilities. They just, apart from oil prices, seem to be fairly quiet at the moment.
You know, in the MSCI Emerging Market Index now, Korea's weight is greater than China's weight, Cameron. Largely powered by all this, the AI plays, AI stocks, and the markets, of course, done phenomenally well on the back of it. How do you see it as someone who's seen flows over a long period of time? Is this an aberration? I mean, essentially, it's just market cap and performance, right? But from a trend basis, how do you see it?
Right. Well, I agree with your assessment of what's driven it, but whenever we get some outperformance by Korea, it rekindles the debate about where it really should sit in the index and investing universe. And by many metrics, Korea is a developed country. Certainly, its per capita GDP, I think, is at or slightly above Japan's at the moment. So this is a recurring debate that has gotten fresh fuel, almost fresh hydrogen fuel, by the outperformance we've seen over pretty much.
All right, Cameron, very quickly with regard
9-10 months.
Cameron, very quickly, what about gold? How are the flows to gold? You know, at one point of time, we're seeing A lot of inflows, and then gold prices have cooled off a little bit. Flows have cooled off?
Yep, flows have definitely cooled off. They're sort of mildly negative 1 week, a little more strongly positive the following. So the trend line is still up, but it's a sort of very zigzag pattern. Yeah, it's people can see more dynamic options. I think they're getting comfortable rebuilding positions in some areas that really sold off with the initial flick.
Cameron, we'll leave the conversation here. Thank you very much for joining in. India's weightage in the MSCI Emerging Market Index has dropped to COVID lows of nearly 12%. The peak was around 21% in September of 2024, which is when the markets too had hit their highs. We will just quickly tell you the interactions that we've lined up on the show today. Coming up at 8:35, JM Financial's Priyankar Biswas will join in to talk about L&T's earnings. 9 a.m., Abneesh Roy of Nuvama will break down the Q4 numbers of Marico United Breweries. 9:20, Dheeraj Agarwal of Ambit Investment will be our market master of the day. 9:30, we bring you a discussion around the new credit guarantee scheme approved by the banks. Following that, the management of PNB will be joining us at 9:40. Towards the end of the show, Lata will speak to 3 experts on the fiscal cost of state finances in today's Indianomics. Stay tuned for that.
So let me do a short break. Come back, we'll go full tilt into stocks that we are targeting in our top 10 segment. We're looking at banks, NBFCs, and Globe Aviation. They're likely to benefit from the ECLGS 5.0 announcement. Hero MotoCorp, we have Coforge, SRF, and Poonawalla FinCorp. All of them will be reacting to positive news flow. We have L&T as well as United Breweries that will be reacting to negative news flow, while we have mixed view coming in on Aavas Finances. Take that break, come back, we get into further detail on all of these names.
Welcome back. You're watching Bazaar Morning Call. It's time now to talk about stocks. Our research team is standing by with CNBC TV 18's list of top stocks for the day. But first up, let's get to the news surrounding banks and the latest emergency credit line guarantee scheme announced by the cabinet. Ritu joins in with the news and the analysis. Ritu.
Well, Reema, it's green for banks and NBFCs with the government approving this ECLGS 5.0 scheme, which is specifically aimed at cushioning businesses from the disruptions that are linked to the West Asia crisis. Now, the scheme targets about 2,55,000 crores in additional credit, and that includes about 5,000 crore window for airlines, where Air India and Indigo are likely to be the biggest takers, and the scheme will be valid till the 31st of March next year. Now, under this, borrowers can get extra credit of up to 20% of their working capital, but it'll be capped at 100 crores per borrower, while airlines can access up to 100% of the credit outstanding with a 1,500 crore per borrower cap. Now, the fiscal hit for the government is estimated at 18,000 crores, as reported by our colleague Sapna. Now, essentially, this is a risk transfer mechanism, so loans come with 100% guarantee cover for MSMEs and 90% for non-MSMEs and airlines with zero guarantee fee. The repayment can also be spread for over 5 years and for airlines for up to 7 years. Now, what this effectively does is de-risk lending for banks and NBFCs, allows them to step up credit without worrying about incremental NPAs. Now, for lenders, this will also help accelerate the loan growth in a segment which is vulnerable to these external shocks. And at the same time, eligibility is going to be restricted to standard accounts, which means this is not a bailout for stressed borrowers. Net positive for all lenders, especially public sector banks that have historically been big lenders under the scheme, disproportionately so for MSME heavy books where the risk is fully backstopped.
Okay, all right. Thanks a lot, Ritu, for joining in and giving us a quick explanation on that. A bit of a breather coming in for banks as well as NBFCs. But the big stock to track today is going to be L&T. After the big run that we've seen the last few trading sessions, Vivek joins in. Vivek, you're going with red on this one. Explain why.
Well, that's right. Going with the red, it's a soft Q4, subdued execution largely along expected lines. Remember, this particular quarter, we've seen two disruptions. Number one, in West Asia, significant supply chain challenges there. 95% of projects continue to operate normally, but despite that, supply chain challenges have impacted operations there. And second, of course, domestic execution, especially in water-related projects, is something that the management has called off. Now, the other thing, of course, to watch out for, Q1 and Q2 expected to be soft. Supply chain disruptions have caused an impact as far as raw material availability as well as cost inflation is concerned. Now, in terms of the numbers themselves, miss across most of the parameters. Revenues higher by 11%, EBITDA higher by 5%, margins contracting 60 basis points, profitability down 3%. Now, let's do a quick guidance check against what the management had said at the start of FY26 and what they achieved. Top line growth of 15%, they achieved 12%. Core margin guidance of 8.5%, they achieved 8.3%. Order inflow guidance of 10%, handsomely surpassed it, coming in at approximately 24%. In terms of a longer term guidance that the management has given, number one for FY27, on a strong base, again 10 to 12% top line growth, on a much higher base as far as order inflow is concerned, again 10 to 12% order inflow growth. That is something that the street would like. Core margins are expected to remain quite soft at 8.3%. The company has also unveiled the FY31 Lakshya targets. That also is something that the street is going to watch out for, but expect a mild negative reaction on the stock today.
Okay, all right. So thanks, Vivek. Thank you very much for that. L&T in focus. Let's move on. Hero MotoCorp reported numbers. Sudarshan has got details here on this one. So good morning.
Morning, Prashant. So it was a good set of earnings from Hero MotoCorp, an all-round beat and strong volume growth. That company has seen 24% YOY, and that has aided the revenue growth. And also, despite the cost increase, EBITDA margin has increased while there is a drop in the gross margin, both on a sequential basis as well as year-on-year. So revenue growth has been 29%, has come in at 12,797 crore. EBITDA too has seen an increase of 31%, and EBITDA margin has seen an improvement. It has come in at 14.5% versus 14.2%. Earnings call is at 10:30 a.m. We'll look out for what does company talk about, domestic growth outlook, and what's the launch pipeline.
Thank you very much for that. And today, Bajaj Auto will be reporting numbers expected to be a healthy set. And along with the numbers, they will also consider a buyback. So auto stocks in focus. Let's talk about Coforge, reported their numbers. It's an okay set of numbers. On the revenue growth, it's 2% quarter on quarter, slightly lower than consensus expectations, or at the lower end of the analyst band at 2%. And there is a moderation that we've seen in the revenue growth, but the margin performance is strong. The company's EBIT margins have reported are at record levels of 16.6%. The guidance, the company says, we expect to deliver robust revenue growth in FY27 and plan to deliver an EBITDA margin of more than 20.5% on a consolidated basis. This compares with 18.6%. So basically a 200 basis points margin expansion. Their free cash flow also increased after being flat for the last 5 years. And this is despite that big investment that they did in Sabre. And the company's guidance on free cash flow to PAT stands at 100% in FY27 versus an earlier guidance of 17 to 80%. So positive on free cash flow guidance. Margin performance has been strong. Revenue growth lower than companies like a Persistent and slightly lower than what the company has been reporting or analyst expectations. But let's move on now to SRF. Sonal joins in with more.
Well, strong set of numbers. There was an expectation of a decline, but it is actually the opposite. Revenues were up 7%, EBITDA was up 7%, margins were flat, but net profit was up 11% on a YOY basis to come in at 582 crore rupees. All the segments did really well. EBIT for technical textiles up 63% on a YOY basis. For chemicals, it was up 5% on a YOY basis. Here, there was an expectation of a decline, so this is a positive surprise. Packaging films saw EBIT increasing by 47% on a YOY basis, 62% on a sequential basis. The big talking point has to be the big capex in the refrigerant gas segment announced by the company at a time like this. They have increased their capex to 2,300 crore rupees versus 1,100 crore rupees to establish an HFO capacity, and also new fluorochemicals plant along with value-added fluorochemicals derivatives. So this is something which will be taken positively by the street.
All right, Sonal, thanks a lot for that. Well, let's go across to Mangalam. He's here to tell us about what's most needed in the heat. beers. Mangalam, how are United Breweries' numbers?
Well, this time around they were soft, Nigel. So maybe there would be positive sales coming in the months of heat, but that time there's some heat in the geopolitical world as well that could make your beer expensive, or at least their margins lower. But for now, it's a soft set, and I believe that the stock could perhaps be one of the accidents of the day, because the revenues that came in at 2250 crores. The street was working with a number of 2450 crores. So there's been a reported decline. And even the EBITDA, that's for, as against street expectations of 190 crores, have fallen to about 139 crores. And as a result of which, the net profit has come in at 101 crores versus street expectations of 106 crores. Remember, the net profit looks comparable to the poll, but this is after a 74 crore exceptional gain that has come in. You take that off, and it's a very big miss as far as our expectations are concerned. 4% volume growth, that's the key positive, as against street expectations of 2 to 4%, led by Prestige, which has grown by about 16%. But the important part is the commentary. Management has said that the ongoing conflict has disproportionately impacted the industry, and this is leading to a significant raw material increase for costs. So that could impact their profitability. This at a time when competitive intensity is high. All these factors should play on their strongest quarter, which is the first quarter of the year, and that may keep the stock on tenterhooks and perhaps a lot lower today.
Thank you very much for that. More numbers, Aavas Financial, Poonawalla FinCorp, and Ananya joins in with the analysis.
Now, Poonawalla FinCorp and Aavas delivered their Q4 results yesterday. Now, let me first start with Poonawalla. We can see a standout performance for them. Management also mentioned that this quarter marks as an inflection point with operating leverage now kicking in after phase of heavy investment. Now, AUM grew robust 69% YOY, while NII increased 79% YOY. Operating profit was a key highlight, rising 109% YOY, and PAT surged 311% YOY. Now, margins also improved meaningfully, with NIM at around 9% ahead of guidance given in Q1 of FY26. Return ratios also improved, and asset quality was good at NPA at 0.74%. Now, on the business front, new segments like gold loans, consumer durable finance, and PL Prime is now scaling well, contributing nearly quarter of disbursement. Now, management remain confident. They are guiding AUM growth of 35 to 40% going ahead. They also indicated that the ROA level seen in this quarter will be the new baseline, and they expect return ratios to improve further. So overall, this was a strong quarter for Poonawalla. Now coming to Aavas, we can see inline quarter, no surprises here, but growth moderated. NII grew 18% YOY, PAT rose 18% YOY, asset quality also improved, and NPA 2.67%, and credit cost stayed low at around 0.12%. Now on margins, management maintained a spread guidance of 5% over the medium term. However, yields may compress near term due to rate cuts, and the company intends to take a further 10 bips PLR cut. Now NIMs expanded 44 bips quarter on quarter to 8.5%. Aavas also raised 50 crore through AAA rated PTCs for the first time, which is positive for funding diversification. Now growth remains key monitorable, with AUM growing only 15%. Management is guiding for 20% AUM growth, credit costs below 25 bips. So overall, we can see inline quarter for them, no surprises seen in this quarter. But we need to take care of the growth and OPEX going forward.
Thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are banks, NBFCs, aviation stocks like Interglobe Aviation, Hero MotoCorp, Coforge, SRF, Poonawalla FinCorp. Stocks with negative news flow are L&T and United Breweries. Mixed view coming through on Aavas Financiers. Let's talk about commodities now. Manisha joins in with a complete roundup and the action. Manisha, crude prices have eased.
Oh, yes, they are, and something that the markets would anticipate with the kind of statements that we are hearing in from the U.S. So what we do understand is that the crude oil prices have declined for a second straight day, and this is as the U.S. winds down Iran offensive. The U.S. has said that its offensive operations against Iran are concluded. The U.S. also said that the U.S. would temporarily pause its effort to assist the stranded vessels in exiting the Strait of Hormuz and allow for renewed talks with Iran. The blockade in the Hormuz, though, just about continues, and that is the reason you are still looking at the crude oil prices holding above $100 a barrel. Now, you will also have seen the dollar slide on Iran deal optimism, and that in turn seems to be supporting various metal prices. So gold is trading 2% higher, Silver, almost 4% of gains. Copper is up 2.5%. Aluminum prices are trading near 3-week highs. We've seen 2% of gains come in for that one as well. So while energy is down, the US dollar is down, the money seems to be shifting in other asset classes. Bitcoin is trading at 81,000. So the risk on trade is what we are seeing in Asia right now.
All right, Manisha, thank you very much for that. So that is the oil indication Q, whatever you want to call it. We'll take a quick commercial break here. We are back. We have JM Financial's Priyankar Biswas joining in to talk about the fourth quarter numbers from Larsen & Toubro and the guidance which was put out. Stay tuned.
Welcome back. Well, it's that part of the show when Hormuz joins in to tell us about all the big movers. Hi, Hormuz. Good morning. On de-escalation days, you'll be hoping, right, this war comes to an end. You've been hearing so much about Hormuz, and then Hormuz joins in. Let's leave the straighter side. Let's talk about the top movers and the buzzers.
Let's get straight to the point then in that case. You know, Credit Access Grameen was the top performer on the Nifty 500 in yesterday's trading session. You know, the stock was up, what, 14-15%? This is the biggest single day gain since December of 2021. In fact, the stock has been rising for 6 days in a row now, and the volumes yesterday were the sum of the last 25 sessions put together. The highest in over 3 months. Over 1.5 crore shares were traded. The 20-day average is only 4.5 lakh shares, and even then 10% of those shares were marked for delivery. So 13.5 lakh shares for delivery. The 20-day average is just under 2 lakh shares, and as a result of this move that the stock has seen, it has turned positive for 2026. And also hit a 52-week high in yesterday's trading session. The negative earnings reaction yesterday came from Voltam Transformers. The stock was down 20% after its results. It's the biggest single-day fall since its listing, and that goes all the way back to 2006. The stock has had gained in 4 out of the last 5 trading sessions before the fall yesterday. Volumes were the highest since September of last year. Over 5 lakh shares were traded. The 20-day average is less than 80,000 shares. And a third of those were marked for delivery. So close to 2 lakh shares for delivery. The 20-day average is less than 40,000 shares. And before the fall that you saw yesterday, the stock was up 64% on a year-to-date basis. And the other positive earnings reaction yesterday came from CAMS. There's a very strong management commentary as well. The biggest single day gain since July of 24. The premiums on the 800 call option were up almost 5x in yesterday's trade. The volumes yesterday were the highest since December of 23. 1.5 crore shares traded. 20-day average is just 14 lakh shares. And here too, 16% of those were marked for delivery. So 25 lakh shares for delivery. The 20-day average is 6 lakh shares. And as a result of this 20% up move that the stock has seen over the last 1 month, this too has turned positive on a year-to-date basis.
Thank you very much for that. Let's talk about one stock, L&T. Reported a soft set of Q4 numbers, largely impacted on account of its exposure to West Asia. And the company has also indicated that the first half of the year is going to be soft, but second half will be better. Priyankar Biswas, Industrials and Logistics Analyst at JM Financial Institutional Securities, is now joining in. Thank you very much for joining in. Good morning. This is Rima here. Now, Q4 was soft on expected lines, understandably so, given the Middle East exposure. But what's disappointed the street is the guidance, and not just for FY27, but even under the Lakshya plan. for the next 5 years, the revenue growth is not very ambitious and it's lower than what they've done in the past 5 years. What is your analysis of L&T and the guidance?
Thanks, Riva, and thanks for giving me the opportunity to present my views. So firstly, I agree that FY27, the guidance in the at the first glance, like a 10 to 12% revenue growth may appear soft. But having said that, what I would ascribe it to is probably the street not factoring in already the impact of the conflict. So if you recall that in April, first week, we had already put out our reports that effect of West Asia conflicts. And what we had suggested then was probably the console sales will grow somewhere of the order of 11%, considering the conflict impact. So it was all apparently very visible, is what my take is. Now, the management commentary was that 10 to 12% consolidated sales growth. So in that case, I would say that our FY27 numbers really do not change. What I believe is what is happening is the street numbers getting realigned from what it was meant in the last quarter versus now. That's point number one. Secondly, coming to the other factor about the order inflow growth guidance, I would say that's quite strong, like 10 to 12% order inflow growth guidance that they have given. Importantly, what I understand based on my interactions is the general broad ballpark view was L&T's order inflows may have peaked and the Middle Eastern ordering would not have a lot of muscle going forward because of the conflict. But having said that, the Middle Eastern tendering process remains quite robust even now. And management did highlight that going forward as well. So not just in FY27, but even let's say over FY26 to 31, the growth guidance is like 10 to 12% on an order inflow basis. So the point what I'm trying to say is that even in this so-called Middle East, you still have a lot of at least a double-digit growth for the next 5 years, which given the base highlights that the ordering would remain resilient.
All right. Hi, Priyanka. Good morning. Good to hear your thoughts here. I recall you had trimmed your estimates earlier in April itself, so you have done it ahead of what the street has done it. That said, if today there is some weakness on the stock, you would be a buyer, I believe. You would recommend a buy because you've gone ahead and increased your target price as well. So give us a little bit of a sense in terms of the reaction to the stock today and what would the likely action be?
So see, the near term, what I mean near term is immediate reaction, maybe a bit negative, because as I said that the street numbers would have to align first. So that will happen today or the day after, let's say whenever the street, whenever the models, etc. are completely updated. But the numbers why we upgraded to, let's say, nearly 300 rupees rise in our TP approx. So see, the L&T revenue and EBITDA estimates, as you say, really do not change much, even if you take an order inflow growth. The rationale for that is because most of the revenue and the EBITDA that you will see is already factored in from the FY26 end order book. So what you get, let's say in FY27 or FY28 has a meaningful revenue contribution or like somewhat in the longer term. Now, what we were factoring in as order inflow growth was something of a 9% CAGR going forward. Now, the management guidance, if you see for Lakshya, is something like 10 to 12%. So when we factor that in and go as far as FY30 and let's say discount back, there is a rationale for a re-rating. So if the stock, let's say, moderates down, let's say to a 3,900 odd levels, which can happen, then I would definitely say a very strong buy at such levels.
Got that. Priyanka, there's a downgrade on L&T by Nomura. And the rationale that they've given is that in a rising commodity price environment, in an inflationary environment, there generally is a delay in the domestic tendering to awarding activities. They had observed it in 2022. Because there is some cost estimate which is built into the tender and now that has to be reworked and therefore there are delays. So therefore the domestic activity. So I get that, you've said that the order inflow guidance for the next 5 years is higher than your own estimate of 9%, which is a positive. But do you think now that we are in a higher, in an inflationary environment, domestic tendering to awarding activity could slow down and that could be a meaningful headwind?
See, of course, I can't comment on others, but I can just give my view on the commodity inflation aspect. So it's right that during that period, there was a significant jump up in commodity prices. So that was a period when we had seen, let's say, container freight rates going up as much as 5x. Then you had very sharp increases in steel or prices, which cannot be hedged. All these things did happen. But the key question is, did the domestic capex slow down? The answer is no. In fact, if you see the budget numbers, because it's all available to be seen, the budgeted capex, the government capex actually went up. So the government actually supported the economy during that time. Of course, one can say that during that time, the government was priming the economy because of the COVID impact, all said and done. What probably it is being referred to is that L&T defocused completely from India. So what happened is government relaxed tender norms significantly. So instead of, let's say, 10 players bidding for a project, it became something like 20, 25. So today in the domestic market, we often come across tenders where, let's say, the government has estimated $100 as the tender cost. The bids are coming more closer to like 80, 85. So it's not really that profitable domestic ordering anywhere. So what you see for L&T, if you see carefully, like from FY22 to 26, the domestic order inflows for L&T has not grown that much. Where they have done is on the international. The key moot point happens is whether the international growth will continue or won't continue. Now the affirmative answer that I can give you on that will continue. And one can ask, okay, international, these contracts are generally fixed price in nature. But what management highlighted yesterday is that discussions are on, payment cycles have improved, in fact, and that customers have generally been sympathetic. Of course, these things take time. But when the new tenders happen, this will, of course, be repriced at the current price levels.
Thank you very much for joining in. So your view is at 3,900, L&T is a strong buy and your target price is 4,700. That's the view coming in on L&T. Today, of course, the stock might be soft on the back of the revenue margin miss in Q4. Get into a break. On the other side, we'll connect with Devin Choksi of DR Choksi, finserv.com. Vodafone Idea. He had stepped down a few years back. Now, the implications are mostly it's a sentiment positive because it's a non-executive chairperson. He's not running the company. But the company is looking to raise some debt fund post the resolution of the AGR issue. So his being there at the helm perhaps lends some sort of a credibility. And I think the street is also making the case that the company at some point will also need equity fundraise. Debt fundraise will not be enough. Now, if there is an equity fundraise and Vodafone Idea doesn't participate, then their holding further comes down. So is this in some way an indication that if in case there is an equity fundraise, the Aditya Birla Group is open to participating? This is a lot of speculation, but I think just want to highlight the news that Kumar Mangalam Birla once again has come back as a non-executive chairperson of Vodafone Idea. The stock has done well in the last 1 month. I think it's up nearly 23%. And generally, when Vodafone Idea does well, you also see Indus Stars having that rub-off impact, but it's a sentiment move only.
I remember, I think it was many years ago, it was an event, and Mr. Birla had told, I think Shireen had conducted that interview. And it was a quotable quote. He kind of sort of, shrugged off and said, well, we've done what we could. And that's the end of it. Many years ago. I mean, I remember that. So, and it seemed like, well, that's the end of the road with regards to, Birlas and what they'd want to do with Vodafone Idea. But it's not. Clearly, it's not. And things have moved a lot. The price has not moved. Occasionally, it sort of, rallies and then comes down, etc. But I think, as you said, indication that maybe a lot of speculation raises the possibility, chances of maybe something happening.
Yeah, but many times you felt that it's perhaps the end of the road for Vodafone Idea. Analysts have called it, the company themselves have said it, but multiple lifelines have been thrown at it, and Vodafone Idea is still there today. And the good news is, for the last 2 months, if you look at the subscriber data, after bleeding and losing subscribers month after month for many years now, at least for the last 2 months, the subscriber data is positive for Vodafone Idea, and that perhaps explains the 1 month move. Deven Choksi is now with us on the show. Deven, morning, and thank you for joining in. Any view on Vodafone Idea? Indus Stars, the street was a bit disappointed with the dividend announcement of 14 rupees. Your thoughts?
Yeah, Arima, good morning. Well, I think the Vodafone Idea probably is already seeing a good amount of breathing space now as far as the AGR deals and its payment is concerned. So it's a significant amount of breather that has been made available to them. Yes, I do agree that there will be a requirement to further capitalize the business. And that's going to be an equally good amount of challenge. I agree that on one side, the squeeze on the payment, is going away. But on the other side, unless they invest in the business and gear up for the next generation of services, I believe that this is going to be always a challenging place. So more amount of equity dilution, more amount of capital infusion, that's a reality. And at the same time, the waiting period for it, would be even longer. Maybe if in the short term, you will have a tailwind in form of trading, and trading-related gains can come into this counter.
All right. Hi, Deven. Good morning. Good to see you, Ben. Deven, I wanted to ask you about Marico. Yesterday in the last 60 minutes, that was one of the stocks of the last hour at least. It ended with solid gains. Any view on this name? Some of these FMCG names have really been out of favor. We have not been discussing them that much as well. Nestle delivered a positive surprise. You have Marico as well. Both of them, in fact, have done quite well from the recent lows. Your take?
So, Nigel, good morning. Well, the most of the FMCG companies are today reporting significantly large amount of contribution through the e-commerce segment in the product selling. And that's where probably some of these organized players, like the names which you have mentioned, are basically finding favor with the investors also now, because the size of the book is probably growing in the organized market through the e-commerce sales participation. And that's where I believe that the larger amount of confidence is returning back. In fact, companies like Nestle and Unilever, they are also significantly using the AI into demand generation, demand prediction. And at the same time, saving on the logistic cost and operation cost through the use of AI. So some of these companies are showing a distinctly different path in form of even operating with a better margin now. And that's where probably the market is a bit excited. Of course, everything is in price. Most of the stocks are putting at a valuation, which is absolutely fair at this point of time. Unless market gives some meaningful downside in correction, the immediate buying opportunity is minimally limited as far as the upside in the stock price is concerned.
Got that. You know, Deven, one space which did continue to do well yesterday. Actually, it was two halves, right? On one end, you had the real estate and the banks and the consumer sector, ex-FMCG, which did badly. Defense continues to do well. Autos, Mahindra and Mahindra reported numbers, and I think that single-handedly helped things. Capital market as a space did well. So that's the differentiation. Defense, Deven, what's the... You know, Nimesh put out on his D Street chatter, some buying interest coming back in HAL from foreign funds, etc. Idea Forge is up quite a bit. Results came through. There was that upgrade from IIFL Equities, I think, a broker upgrade. What's on your radar? What do you like here? Defense.
Yes, Prashant. I think the correction in the stock prices of HL is definitely making a good amount of entry point availability for this particular stock. Just do agree that I think in the past, because of the euphoria-led run, probably I think the stocks became expensive, and that's the time when we were talking that I think good companies, but I think expensively priced. The correction in the price gave an opportunity at lower levels, and of course, I think from lower levels, the stock has appreciated by 10 to 15% or even 20%, I guess. So I believe that I think this is a good story in making as far as I think the business opportunity goes. Strong order book, predictable execution, at the same time, no debt in the balance sheet. So giving a good amount of clarity for the growth as far as HL business is concerned. Many of the defense companies similarly would be beneficiary of government's higher amount of allocation in the spending. And in this year, they are likely to be, I think, getting larger orders too. So from a perspective of looking at this company from the long term, nothing wrong with it. Maybe in many cases, I think we have already got a decent price improvement which has taken place from the corrected price. And that's where we'll have to wait if the market gives correction, better opportunity at lower levels.
Okay. Deven, I don't know if you track Voltamp. That was the casualty yesterday. Numbers came through. Stock was down about 20%, I think, by the end of it. Do you track it?
I haven't seen the number, Prashant, but I think overall the industry is going to be having a challenge in form of higher input costs, raw material costs, particularly copper cost. And their cycle, working capital cycle in the industry, in the transformer business particularly, I think is a significantly large one. And that's when they're even vulnerable on the margin front as well. Both collection as well as, I think, working process inventory, all of them, I think, remain on a higher side. And that's where the challenge would be on the profitability. So maybe I think I have not seen the result as far as I think what has caused the larger impact in the result in this quarter. But general view is that I think they are going to be more vulnerable in the high cost regime, at least at this point of time.
Credit Access, Deven, any thoughts? Went up almost 15% yesterday. I mean, the general assumption, not assumption, but many have said, bankers we've spoken to, that maybe the microfinance cycle is turning for the better. And this used to be, at least at one point, maybe still is the best run in MFI name. But your thoughts?
Yeah, though we don't like this particular space too much, Prashant, because of a lot of vulnerability related to the NPAs, etc. But however, in this last quarter, for most of the companies, they have shown remarkable amount of, I think, collections, and to a greater extent, I think the NPA provision in the books, I think, has remained on a lower side. So that gives you a confidence that, look, if the house is in order now, then some of these companies would definitely show better performance. So as I say, that we don't like to buy MFI space, we would rather like to buy the consumer franchisee in form of some of the private sector banks and NBFCs.
Yeah, fair enough. You know, actually, lots of these individual moves, right? Pull up NetWeb if you will. We had the management with us 2 days back. Very conservative, refusing to sort of get carried away, maintaining their, I think, 30% growth guidance. Ended up about 6.5%. Look at something like a KEI yesterday. KEI went up. The story was not how it ended up, how much it ended up from the last day's close, but basically how much it pulled up. After starting down, it ended just about, it was a 7% bump. Sounded pretty confident on the conference call, which happened. Yeah, I mean, there's a fair bit. And of course, there was Mahindra and Mahindra, which basically rallied into close, ending about 3% higher. So, numbers all told, not all that, actually more good than bad, have to say. Pankaj Tibrewal, for example, was telling us his assessment of the earnings season so far. This is till the end of last week. and the numbers all look pretty good. He said, I think mid-cap earnings growth is running at about 30%. Small caps are much higher, and of course, large caps north of, I think, 15% or so. So that was Pankaj yesterday, and it's showing through as we are getting some of these numbers. Devin, just one quick word on Coforge, if you have a view. Again, reported numbers.
I haven't looked at it, Prashant, in detail, so would refrain from putting further comments on it at this point of time.
Okay. All right. Devin, we'll leave it there. Thank you very much for joining us. Good speaking with you. We'll come back in just a bit. We have Abneesh Roy of Nuvama to talk about the numbers from Marico, United Breweries, and more coming up in just a bit. Welcome back. I think 4 minutes to go for the pre-open session to kick off, and we have our technical trading ideas coming up for you. 140, so maybe a bit of a cool-off from the 170, 180 that we started with at 8 o'clock. Mitesh is with us, and so Sudarshan. Gentlemen, good morning. Great to have both of you here. Thank you very much. Sudarshan, you go first. How are things looking this morning?
Good morning. Well, things are looking good. From Monday onwards, that is day before, I've been saying that the markets have done a test of 23,800. They're willing to go higher. Now, the markets take their own time. It doesn't mean that just because they can go higher, they'll go do that in 1 hour or 1 day. The trade is buy every dip. We can expect a very decent rally in the Nifty. Same thing I said day before, same yesterday and same today. Be long.
Be long. Got that, Sudarshan. We'll track that call. Well, let's get in Mitesh's view. Mitesh, what do you think? We're set for a brighter start. The cues actually overnight are positive with regard to soundbites you're getting from the Defense Secretary or President Trump, which has resulted in crude prices coming down. And on the domestic front as well, things have been holding up. What would you do after a 100, 150 point gap up?
Morning, Nigel. See, on the index, I have not been trading much. Last 6-7 days, I've maintained that we'll do 24,350, 400 to about 23,800. And the market has been in that range, and it's a contracting kind of movement. So the only way to trade narrow range is, you can trade near the edges. So I've been advocating buying around 23,850. Yesterday, we got a low of around 23,882. And on the upside, try to, book profits or even attempt some minor shorts as you get closer to about 24,330 odd zone. So for the time being, 150 point gap up will mean we'll open around 24,180 near the upper end, but yet, still there's some distance to look. So I think I'll wait in case the rally goes further. At least on the long positions, I'll take profits as we approach 24,300. And if there is again, if there's supply visible, then I think even attempt a short there.
Good morning, gentlemen. Happy Wednesday. So, Mitesh, what are the stock recommendations as you play this trading range?
Yeah. Good morning, Eva. On the stock side, I have all buy calls today. Bajaj Finance is a buy with a stop at 945 for targets of 980. Also positive on M&M after a long time, some positive crossovers on the indicators. So M&M is a buy. Keep a stop below 31.79. Look for targets of 32.75. FMCG is something which I've recommended for the last few days regularly, and Dabur today features on the list. That's a buy with a stop at 453 for targets of 475. And also a buy on Aurobindo Pharma with a stop at 1409 for targets of 1465.
And Sudarshan, what would your stock calls be?
Well, Motilal OFS is a buy with a stop under 825. Eicher Motors is a buying opportunity with a stop under 7150. Nykaa is a buy with a stop under 265. My only short is GAIL with a stop above 165.
Okay, we'll come back to you, gentlemen. For now, let's just get some more, viewpoints, corporate opinions. ITC chairperson Sanjeev Puri said that the company would undertake more price hikes if inflation creeps in. Speaking exclusively to Shireen Bad, he went on to say that cigarette price hikes have been staggered and more will come. He also promised to invest 20,000 crore rupees for capital expansion over the next 4 to 5 years.
The tax increase is massive. We have to pass it on. There is no question of absorbing it. But if we were to do it at a single stroke, then it probably can lead to a larger shift to illicit. So we want to stagger it up. So we are staggering it up. So that
how much have you already taken?
We've taken about, I think, 50-60% of it, something like that. It's ongoing. You see, it's ongoing. I don't have an exact figure. It's ongoing, and some more will happen in the short term. I think there's no question of growth of volume. Whenever taxation increases, volume shifts to illicit. So therefore,
there will be an impact.
There will be an impact. Volume growth. There will be degrowth. The question is, what degree of degrowth? We are seeing inflation coming in. Things like anything related to petrochemicals, some parts of energy. So inflation is starting to come in, and it will, over a period of time, we will see that more and more prices will get passed on to consumers, because many companies were sitting on hedges or past inventory, but it will happen.
Okay, that's the view. That's ITC chairperson, but we're going to react to numbers from Marico and United Breweries. Marico came out in market hours yesterday. The stock reacted positively, but United Breweries was a miss. Amnish Roy, Executive Director, Nuvama Institutional Equities, now joined in. Amnish, let's begin with United Breweries. A big miss compared to street expectations, and then there are going to be cost increases on account of the Middle East crisis, which further impacts the company going forward.
Yes, hi, good morning. 2-3 updates or results came yesterday. So Marico, of course, came during the market, and immediately after the results, it was down 3%. It recovered 3%. Coming to a specific question, first on United Breweries, yes, the stock could be under some pressure in the near term. Yes, Iran crisis clearly is a fresh challenge in H1. Coming to Q4, the volume growth was decent, 4%. Please note that in March month, a lot of the summer categories saw the impact of the rains happening in North and East India. And clearly in Karnataka and some of the markets like Telangana, etc., Rajasthan, there was a volume decline. But 4% volume growth, 16% growth in the premium end of the portfolio, I think that's a good number. And those were driven essentially by Maharashtra, etc. Coming to what was the miss, clearly, yes, margin miss was there. Clearly here what's happening is the outsourced breweries, etc., that adverse mix was there. And of course, because of Iran crisis, I think March also there was some impact. And now going ahead, company has called out around 400 to 500 crores kind of impact because of the glass bottles inflation. Currently, there's a shortage of glass bottles in aluminum cans, plus there's inflation in both. So that's why we'll prefer FMCG staples from a near-term perspective in our coverage space, because the pricing power is there, direct there. While in liquor companies, you will have to wait for state government. For example, Telangana is looking at a 12 to 15% price hike, but then state government approval is needed. That's why we'll prefer Nestle, Marico, Tata Consumer, etc. We like Asian Paint and Pidilite also. But yes, United Breweries stock near term, some pressure will be there. El Nino is a big positive for the category, for the company, but packaging cost, there's inflation and there is a shortage. So that's the problem for United Breweries in Q1 and Q2 and Q4 also. The miss in margins is there.
There's going to be an additional 400 to 500 crore of a cost pressure on the stock going forward. And we don't know when the price hike will take place, because it's a state subject also in some way. So what will this do to margins and EPS estimates? Because you are bullish otherwise on the United Brewery structural story.
The structural story is positive. If you see when in Karnataka, where the government has said that linked to the alcohol content, the taxation will be there. That has led to benefit for both spirits and beer companies. For the beer companies, what will happen in Karnataka is the lower end of the margins will improve, X of the Iran crisis. See, Iran crisis, we don't know whether it will be for 1 quarter, 2 quarter. That is going to have a 400 to 500 crore impact. That's why I think currently how much will be the impact on numbers will get more clarity in the 3 p.m. call today. But yes, you are absolutely right. There will be some impact because this industry needs the price hikes from the government. Now, Telangana is talking about a 12 to 15% price hike. If that comes, it's a positive. Maharashtra is doing quite well for beer industry with double-digit volume growth. But yes, margins will be under pressure. My sense is in the first half, clearly we are looking now because of the Iran crisis at a single-digit EBITDA margin versus double-digit EBITDA margin. That cut will be there. I think FMCG companies clearly have much more pricing power. But in case of liquor company, I think spirits will have the UK FTA advantage kicking in from Q2 or Q3. But beer company, the advantage will be quite limited from UK FTA. So yes, there will be a cut in the United Breweries, but we'll get more clarity in the call today at 3 p.m.
Abneesh, the previous answer, you said El Nino is a positive. You meant that for paint companies?
No, it was for beer because beer clearly is a summer category. What we see, yes,
a hotter summer.
Q1, Q2, very strong demand conditions.
I see. For paint as well, I guess, right? I mean, maybe at the margin, I don't know. If monsoons is a down activity, a dull period, a duller period, I'm assuming, especially in some states. From a paint offtake volume thing. So we'll see. But just Abneesh, just one thing, Marico, just to come back to Marico, was it largely an effect of copra prices being down quite a bit, 30-40% from the highs? What led to a kind of a stronger outlook being given out? Or you think there was more? Because it's kind of rare to see, a better, stronger guidance from an FMCG companies, at least lately.
No, you're right, Prashant. I think Marico is, in a sweet spot versus many other FMCG staples because here the key raw material is deflationary, which is copra, which is down 35%. Yes, rest of the raw material, obviously there is inflation, packaging cost, rice bran oil, etc., LLP, etc. But on an overall portfolio, Marico is in a sweet spot, and that's why company, if you see, has taken a 10% price cut in the bigger parts of the parachute packaging. They have taken that. But yes, that's why I think the EBITDA growth has been accelerated to high teens. So that's a good news. Even in Unilever, if you see, company has not changed the guidance. So their guidance pre-Iran and post-Iran, EBITDA margin guidance remains the same and sales growth guidance remains the same. So overall, Prashant, what we are seeing, because of all these subsidies in all states which are going into election and because GST has led to more compliance, right? We see that overall sales growth for the sector remains strong. If you see in Q4, all staples companies have done quite well versus initial trends, versus initial expectation. Even Dabur and GCPL have seen high single-digit growth in the India business, so which was not there earlier for Dabur at least. So yes, there is a revival in staples. What will happen in Q1, Q2? Some bit of growth from volume will shift towards pricing, but overall some margin pressure will be there in gross margin. EBITDA margin pressure will be lower because promotions and advertising will be lowered. That's negative for media companies, but that's how FMCG companies operate.
All right. Hi, Abneesh. Good morning and always good to see you in. Abneesh, a quick word with regard to the point that Marico made in terms of their guidance. They are talking about high teen EBITDA growth. I just scrolled back and I saw, they haven't delivered 15% or more EBITDA growth all the way since FY 2019. So this would be a big aspiration, right? At that point of time, they were doing only around 1,300 crores. Now they're doing 2,300 crores in terms of EBITDA. What are you penciling in terms of EBITDA growth? As you mentioned, the EBITDA margin hit will not be as much. Gross margins could be a little bit higher. But what are you penciling in terms of EBITDA growth?
If you see Marico, one good thing is they give a lot of guidance. Generally, they meet most of that guidance. So they have given the high teens guidance. We were definitely expecting Marico to do quite well in FY27. I think it's coming from copra. Copra is down 35%. And if you see, this company has almost got 60% market share there. And in rest of the portfolio, Vaho is seeing 26% growth. So overall hair oil, if you see Marico, Bajaj Consumer, Dabur, everyone is doing well. And my sense is that's linked to those two reasons. GST is leading leading to more compliance, and definitely freebies by the states are there. So coming back to a specific question, clearly Copra is helping, and definitely overall company, if you see the high single digit volume growth is something which will continue. So if any company which is able to do that, generally the operating leverage comes because of that also. So that's why I think the confidence level is high, that high teens growth of EBITDA in FY27. We are also building in that currently.
Yeah, got that. Abneesh, we'll leave it there. Thank you very much for joining us. Good speaking with you, and appreciate your time here on CNBC TV 18 as always. The pre-open session has, I think, come to an end, and we have a 140-odd point higher start on the Nifty, 24,170. The rupee, by the way, is also opened stronger, if you see. So from past 95, we are at 94 something. Back in the 94 handle, 94.96 on the dollar rupee at this stage. So it's about 1/3% strengthening on the currency, which is coming through at this point. Well, let's go back to Sudarshan and Mitesh, who are with us with the 9-10 calls. Mitesh, what do you have?
I'll go with the buy on Bajaj Finance.
Any stops or target stops, anything?
Yeah, so I'd already given the levels over there. I'll just repeat them. Bajaj Finance, for me, I would look at a price target of roughly around 975 and a stop at about 980 and a stop at about 946.
Okay, Sudarshan, what about you?
Buy Eicher Motors. Buy Eicher Motors with a stop under 7150.
With a stop under 7150. Got it. So those are trades from Mitesh and Sudarshan. Thanks very much, both of you. I just want to put up Coforge in the pre-open session. Numbers came through and they were strong. It's up sharply, 8% higher on Coforge. I think the recent low was about $1,000 or so, closer to 1,000 rupees, I think. And it's now back to about almost closer to 1,300 rupees. The question with these IT names, of course, is, you start open, you start strong, and we've seen this before as well when there has been a beat, etc. But the overall sort of overarching worry about AI and whether that is deflationary, etc., that kind of sort of takes a bite out as the day wears on. So we'll see if something similar happens here or it manages to kind of hold on. In terms of just sheer growth numbers, Coforge, Persistence, etc., have been really, at the top of the end as far as IT goes, and reasonably large-sized IT, not the largest of the lot, but in the mid-tier to the large cap category. Coforge, Persistent, of course, have done phenomenally well. So more on this in a bit. But, exchanges, of course, are also in focus. BSE has done well recently. NSE reported numbers yesterday. Nigel, you've looked at the numbers?
Well, that's right. The Q4 numbers, in fact, look pretty okay because the revenue growth was close to around 27%. That's the operational revenue. And, that's on a quarter-to-quarter basis. On a sequential basis, it was up 27%. On a year-on-year basis, up close to around 32%. Came in at around 4,970 crores or thereabouts. The EBITDA number, well, that popped up by close to 27% on a sequential basis. And on a year-on-year basis, it was up 30%. And the profit number as well did see a good increase. On a year-on-year basis, it was up close to around 8%. On a sequential basis, there was a good bounce back. It was up 19%. So the numbers for Q4 look quite good. Remember, the last year had its fair share of challenges. But the numbers on the whole look good. In terms of market leadership, well, they're holding on to their market share with authority in the cash market. They're holding on to the 93% odd mark. Equity futures, they're at 100%, so no worries on that front. And equity options, it slid for the last many quarters. You saw some kind of downtick in terms of index options. But I'll tell you what, if you compare the January to the March market share in terms of the options data, it's actually gone up a little bit. And for the quarter, it was stable at around 73% or thereabouts. There was a bit of a decline in January, but they've garnered some part of that market share in the month of March itself. April could be a bit of an aberration because there was a holiday on Tuesday, which is their expiry day. And also they started the series on Wednesday. So there were a couple of factors that actually drifted in favor of BSE in comparison to NSE. So I'll be looking at the May numbers very, very closely with regard to index options market share. For the timing, we know the past quarter it was stable. The EPS for the past year was ballpark around 42 rupees or thereabouts. So if you take it that the unlisted share price is close to around 2,000 rupees, then the stock is trading at roughly around 48 rupees or thereabouts. That's the trailing earnings. FY27 as well could be a little bit softish, but the market will be tracking their earnings from year on. And in terms of a multiple, it's trading at a bit of a discount in comparison to what BSE is trading at, because BSE has gone one way up. The unlisted share price, obviously, doesn't have so much of volume and so much of activity. The sweetener comes in yet another year when they give a 35 rupee per share dividend. So the street will like that. That's about NSE's numbers. Quite good for Q4.
Okay, thank you very much for that. Implications for BSE and the rest of the brokerage space as well. Let's talk about Hero MotoCorp. Numbers look good. Sudarshan joins it with a quick read.
The stock is opening with a gain of around 2% after reporting an all-round beat in Q4 FY26. Company managed the cost well. That was reflecting the gross margin. Also, overall, if you talk about the headline numbers, revenue has increased by 29%. EBITDA has seen a jump of 31%. And despite the increased cost, EBITDA margin has increased by 30 basis points. It has come in at 14.5%. All the eyes would be in the volume growth outlook. And the call is at 10:30 a.m. So we'll look out exactly what does company has the outlook for FY27.
Okay, all right. So thank you very much for that. We've got market open coming up in just a bit from now. So we'll just look at rates and at least on the indices, and we'll get into individual stocks, etc. So lots of sort of action. Coforge, I think, of course, was one. There was, Hero MotoCorp, which is starting higher. We'll see if there's any pickup and continued action in Mahindra and Mahindra. After yesterday, Marico, the guidance, etc. We just spoke with Abneesh. Which perhaps should be in focus as well. And lots of these individual names with numbers at the bottom of the screen, Avas and others as well. First rates come up 130, 140 on the pre-open, and I think we're opening around there. 24,200 on the Nifty, so about 0.8% higher. So picking up a little bit. Nifty Bank is up about 1.33%. Private banks and Bank Nifty were the pressure points yesterday. Down about 0.6%, while the Nifty was down lesser. Small cap index is up 1%. It's, of course, been the star last month. And the mid cap index is up about 1% as well. So this is a decent start, good start with the Nifty now above the 24,200 once again. The heat map gives you a sense of where we are starting as far as the 50 stocks are concerned, and then we'll look at individual broader market moves. Mahindra is there after yesterday's 3% pop. It's got more. There is Indigo, which is close behind. There is the a credit guarantee from the government, and there is, of course, oil prices which have dropped as well. Shriram Finance, Tata Motors Passenger Vehicle, Bajaj Finance, or some of the others. L&T is down. Vivek put L&T in the red corner this morning. It is in the red corner so far. ONGC is the other one. So 2 out of the 50 names are down, and 48 stocks are higher. 160 on the Nifty. Rima.
Very few losers to begin trade with. It's a strong start. The Nifty Sensex up close to about 0.7%. Banks are outperforming, and the Nifty Bank was struggling to cross and hold above that 55,000 mark. But today, with a 700-point pop-up, 1.3% gain on the Nifty Bank is leading the gains, 55,250 on the banking space. Other than that, auto continues to chug along smartly. In last 2 days, the auto index has added nearly 3%. IT was under pressure yesterday. It's rebounded, and numbers from Coforge are helping sentiment. Coforge is up nearly 7-8% in opening trade. And that's pulling up the rest of the IT pack with itself. Birlasoft, Hexaware, First Source, KPIT Tech, 4 mid-cap IT companies report numbers later today, and therefore they will continue to be on everyone's radar. So banks, autos, IT higher in trade. In terms of individual stocks, Interglobe Aviation is up and about in trade. That's the top gainer. Crude prices have eased, and plus there is that enhanced credit guarantee scheme which should benefit banks, NBFCs, and aviation companies. Bajaj Finance, a call that one of our technical analysts highlighted for a technical trade. Bajaj Finance is moving up well. Shriram Finance, in fact, all the NBFCs are up. In the banking names, it's SBI which has got top honors. Tata Motors Passenger Vehicles is also higher in trade. There was a news piece that ahead of the UK FTA, JLR may look to bring down some prices, and I think they've done it for Land Rover. They've brought down prices from 4.25 crore to about 3.5 crore. Hefty price, but some discounts ahead of the UK FTA. Bajaj Auto seeing some buying ahead of numbers and the buyback announcement. Consumer names like Titan, Trent in the green, Eternal higher in trade. Today also, by the way, a lot of platform companies report numbers. So you've got Meesho, PB Fintech and Paytm. So 3 platform companies report numbers, and on the way down, it's L&T on expected lines, and now L&T has dropped below the 100-day moving average. just about holding on to the 50-day moving average, 3% gone on L&T.
Well, that's right, Rima. You know, a few stocks that are actually reacting to news. You have NMDC, where they've effected a price increase of close to 200 rupees. The street was sniffing this. They were expecting it. It's finally come about. So NMDC has opened up with a gain of 1.5%. And since February, I think the prices of lumps as fines are up by close to around 800 to around 900 rupees. So that's good news for them. The mining giant, in fact, moves up. Vedanta, you know, that stock now is the holding company of Hindustan Zinc, which it gets bulk of its value from there. That stock, you know, listed at close to around 290 rupees. It's more to around 315 rupees. Remember, if you buy the stock now, you're not eligible for any of the demerged entities. That's the aluminum, power, etc. This is solely the holding company. But the street is bidding up the stock. It's up close to around 3.5% or thereabouts. Coforge is the stock of the morning that's flying away. Sterlite Tech, just take a look at the stock. It had already rallied big time, and now it's up close to around 5%. I think for this week itself, it's up more than 15% because it's consistently gone to circuits. Lloyd's Metal, yes, the numbers were good. However, the stock had already ran up by close to 50%. If I compare it with, the last time we had interviewed the management in February, to now the stock was already up 50%. So the street had already baked in good numbers. That's why you're not seeing a big outsized rally out there. After starting off with a gain of 2%, there is in fact some profit taking that we're seeing on that one. L&T is the big drag today. That'll have to get its act together. The markets can move higher. But otherwise, a good start. And as I said earlier today as well, you'll be very disappointed if by the end of today, we don't go home with some solid gains, because it's got the makings of a good day, and the Indian rupee as well has shown some strength. So hopefully the FI net sell number will be relatively lower.
Okay, well, 24,170, it's about 140 odd points higher at this point in time. Well, lots of individual action, which we'll come back and refer to. But Dheeraj Agarwal is with us, Managing Director at Ambit Investment Managers. Dheeraj, good to have you with us here. From the last time that we spoke, debate raging once again on what is keeping FIs away. Is it AI? Is it taxes? Is it this? Is it that? I mean, we can go on. I guess it's a never-ending debate, but safe to say it's a bunch of things and not one single thing. But if you had to identify one single thing, your pet peeve, Dheeraj, what would it be?
I've been saying that the market is, in some senses, a bit themeless, but I can at least see a couple of themes emerging now, finally. So after many, many years, I see reasons why FMCG can be a big outperformer over the next 2 or 3 years. Typically, in an inflationary environment, FMCG tends to do well because they take price hikes, which are larger than the cost increase and they expand margins. Most of the recent results on FMCG, the volumes have also been slightly better than expectation. So that's one theme. You mentioned one of the reasons for FI staying away being AI trade. So India's derivative of AI trade has been power to some extent, which is another theme which has been doing well already. So it's not a new theme which is emerging. The power demand is rising at a very sharp pace globally. Also, there is a shortage of a lot of T&D equipment in the US where the power demand is on a tear. And many of the exporters from India are capturing the business upside from there.
So let me talk about the first theme, FMCG. Numbers are good, but are you comfortable with the valuations? Because the only pushback for owning FMCG is the high valuations.
Yeah, I mean, FMCG valuations are always high to some extent, but remember, as compared to where they were 5 years ago, when the whole street was unanimously bullish on FMCG, the valuations are down 30 to 50%. So, I mean, just to take an example, for the want of an example, Asian Paints peaked out at 125 times trailing PE multiple. Today is down to 50 times trailing PE multiple. Still not cheap, right? But as compared to 125, is down quite sharply. And market's always relative and not absolute. So if the next 2 years, if the overall Nifty earnings stay stuck in the single-digit zone, and the FMCG earnings, because of margin expansion, go back to teens or mid-teens, they will get rewarded. And that's what it's my top sector bet amongst the largest sectors at this point of time.
But you don't think at roughly on an average 50 times earnings, you risk even if you grow, even growth picks up a little bit into early double digits or something, you have this headwind of potential. Will it sustain at 50 times, you think? That's the basic question, Dheeraj, when everything else seems to be tapering off, valuation-wise.
So it's all relative, right? So by itself, 12, 13 times earnings is not exciting, or 30 or 15 times earnings is not exciting. But if the rest of the market earnings growth is in single digits, then it becomes a relative winner. So let's go back to what happened between 2010 to 20. For almost 10 years, or 2011 to 19, if we cut out the GFC fall and rebound, and if we cut out the COVID year, which is 2020, Nifty earnings growth CAGR over those 8 or 9 years was just 6 or 7%. Again, just to take an example, I mean, over that period, I think Nestle went up 7 times, HUL went up 5 or 6 times, Asian Paints went up almost 10 times, and you want to make it interesting. So Asian Paints starting valuation in 2010, 11, 12 was about 30, 35, 40 times trailing. The stock compounded at 40% plus for the next 10 years. I've asked this quiz to many people that what was the earnings growth of Asian Paints during that period? And after giving this data, and most people come back saying must be at least 25 to 30% to justify that kind of run. It wasn't, it was just 14%. So 10 years earnings CAGR was just 14%, and the stock delivered almost 50% CAGR for a full decade, because relative to other parts of the market, it was doing well. So my view is, Indian economy has anyways been struggling. More gold stays above 90. It keeps on shaving off 5-10 basis points of our GDP growth every single month. And which means that the overall market earnings growth will once again disappoint. And hence, any outperformer will stand out.
Okay. Just to go back to that point, when you said that the earnings growth was 14%, but the stock return was 50% CAGR, what was the starting valuation at that point?
Almost 40 times.
40 times.
We are almost there. I mean, it's higher than that. So do I expect that kind of a stupendous performance coming out of FMCG in the next 2 or 3 years? The answer is no. But I do expect a reasonable amount of market-beating performance.
And in FMCG, Asian Paints, you've clearly sort of indirectly made a case for Asian Paints. But would you like an urban-centric company like a Nestle? Would you go with pure staples like an HUL, a Britannia, Godrej Consumer, Marico, Dabur? Or would it be a broad brush, as you said, that this is a theme that you like and therefore all the stocks should do well?
It's a theme. So I took Asian Paints only as an example. I'm not recommending the name. I don't recommend stocks on television, as you're very well aware. I just took that as an example because the valuation movement for that particular company was so stark that it's a case study by itself. So no, I'm talking about the theme in general. I'm not talking about any individual stock name out there.
And would that extend to platform companies like Eternal, Swiggy? Because that's also indirectly a play on consumption, or QSR companies? Or is it purely staples?
No, it's FMCG, it's staples. I mean, I'm talking only about staples, not the entire consumption basket.
Let's talk about power then. That seems to be emerging as a consensus, and stocks have already gotten re-rated. So what's the upside from here on? Can you make a case for that?
I think power, you'll have to be very case specific, exactly for the reason that you mentioned, that it's already been on a tear. And while the business may do well, one should be a little cognizant of where the valuations have already reached. So it's a theme in play, 100%, but it's not as easy a play from an investing point of view because a number of stocks, I mean, the best performing stock this year, I think in BSE 500 is Hitachi Energy, which is up 75%. So one has to take into account a little bit of valuation concerns out there. So one has to be selective, is what I think.
Hi, Dheeraj. Morning. Good to see you. And as always, Dheeraj, on the headline index, given the kind of cues that we have on the domestic front, what's been good is, the state election verdict is what markets were looking forward to. That could be a broader structural story that takes place in those states. That's the hope, at least. But on the global front as well, still things are very uncertain. Though at least the last 24 hours have been relatively better, with the US indicating that they want to do a deal. At least there are talks that the ceasefire is in place. That said, in terms of a correction on the Nifty, I recall somewhere in March we were talking about possibly another 10% correction from there. Do you think still the markets are, they have that risk that a 10-15% correction could come about? Or do you think we've seen the recent low and that actually should get protected around the 22,000 mark?
At this point, I would say it's more of a range bound market. I think, if you remember when early March, when we talked, when we discussed, I said 22,000 seems almost certain, 20,000 a possibility. So we went somewhere in the mid of that range. At this point of time, if you see what the market is doing is, market is rewarding spaces or sectors which are doing better than, let's say, not rewarding the sectors or spaces which are either vulnerable to high oil prices or bit of a GDP growth slowdown, etc. So, as of now, market has just gotten used to the fact that the West Asia remains a little bit on a slow simmer or a boil. Maybe not escalate too much, but a full resolution is also not in the near horizon. And just picking stocks and themes within that. So there will be pushes and pulls on both sides, from few sectors down and a few sectors up, which means we are likely to stay broadly in a range bound market.
Okay, all right. Let's talk about another theme, the stock marketplace. The exchanges, we had NSE's numbers that came in overnight, and the numbers look pretty good. But the one that's running on steroids is actually BSE. Valuation-wise, the street is factoring in that, they make further inroads in terms of market share, and the volume uptake continues as well. That's been a stark outperformer if you look at it on a year horizon, 3-year horizon, even 5-year horizon. What's your take on the stock marketplace, exchanges, the other wealth management companies that are listed, or maybe the depositories?
So structurally, the business is certainly in an uptrend, right? So you can see that, month after month and year after year, the domestic mutual fund AUM is growing. And as the domestic pool of money keeps growing, every related activity around that, whether it's the AMCs, wealth management, brokerages, exchanges, or registrars and transfer agents, almost all of them are indirect beneficiaries of the fact that more and more domestic savings are going into equities at this point of time. So from a business point of view, it's a structural theme. You'll see some cyclical up and down, but remember, only 7 or 8% of annual Indian household savings are still going into equities at this point of time. This number can easily go to 14 or 15% over the next 10 or 15 years. So it is a long-term structural story. But once again, one will always have to look at what makes sense at what valuations.
Yeah, absolutely. Dheeraj, we'll leave it there. Thank you very much for joining us. Good speaking with you, and appreciate your time here on CNBC TV 18. I think, just two names, right? Coforge is limit up now, 10%. It's the top volume-led gainer of the NSE. So that's a pretty large move. And look at something like a NetWeb. NetWeb is at the number 2 place with regards to volume-led gains across the board. So that is interesting. And I think it's basically come back very quickly to the prior high. Has it made a new high today? I'm not sure, but high today is 44.50. We're at about 44.10. Okay, the high was 44.79 back in October of 2025. So, but from 3,000 to 4,500, it's come a long way, but pretty quickly as well. Mahindra & Mahindra is up another 2%, which means post-earnings sort of price action is about 5% in total now. So we'll see. And I was talking about defense in the morning, right? Idea Forge was up 10% yesterday. It's up another 4% this morning. And it's up 80% YTD, 80% on a year-to-date basis. Had a tough 3-year phase. Was traded below the IPO price for, I think, the bulk of its life as a listed entity, but it's now starting to come back and do well. And there's a Raymond Real Estate, which is doing well, 9% on Raymond Real Estate at about 520 at this point. Wockhardt was another very large mover yesterday, and that is up another 6% this morning. So enough and more action if you look at the broader market. Cigniti is another one. Cigniti is up 11%, 1,200, almost 1,300 actually on Cigniti. So it's got decent sized volumes as well. So not thinly traded at all. That's the one I'm talking about. So 140 on the Nifty, but market breadth, etc., is super strong. 4:1 in favor of advances. 2150 stocks are higher, and about 580 stocks are lower at this point in time. I think let's move on to our discussion. The government has approved an emergency credit line guarantee scheme, or ECLGS 5.0, to support businesses, including airlines, affected by, of course, what's happening in the Middle East. Higher energy prices are taking a bite out of, especially SMEs and MSMEs. Dinesh Khara is former chairman, State Bank of India. Abhijit Devanji is founder, Neostrat Advisors. Our go-to people to understand some of these issues, which of course are emerging. Gentlemen, great to have both of you here. Thanks very much for joining us. Mr. Khara, just first thoughts, assess the size, scale, scope of the latest installment of this scheme, and to your mind, what will this be able to do?
I think it's a very welcome step, and also the playbook is already available during the COVID. So ECLGS was something which actually helped the economy to a greater extent, and particularly the kind of headwinds which we are observing from the global disturbances for the SME. The supply chains have been disturbed quite a lot, and the cost of production have gone up. The receivable cycles have also got elongated. So in such a situation, this kind of a relief is going to go a long way. It is intended that apart from SME, even non-SME also, and particularly even airlines also, because airlines are the worst affected in terms of the cost of crude, which has gone up. Though other SMEs also quite significantly impacted in terms of the cost of crude and the energy. So I think on that particular aspect, this is going to be a significant mitigant, because for the SMEs, it is saying 20% of the peak outstanding which was there in the last quarter of financial year 26. So I would say that it is actually an improvement over what was the earlier ECLGS, because their reckoning was that outstanding should be there on the last day, but here they have looked at the peak outstanding in the quarter. So there could be situations that people might have paid off their debt, but even if there is a peak outstanding which is there in the quarter, they are entitled for this kind of 20% extra funding from the banking system. And for the non-SMEs also, it is provided for. This is again a very good and supporting factor. Airlines on the top of it, they can go up to 1,500 crore, and even for the SMEs also, they have put a ceiling of about 100 crores. So I think overall, I would say that this kind of a guarantee goes a long way in terms of restoring confidence of the banking system into such entities, and also it helps the major segment of the economy to continue to survive and thrive. So that to that extent, it's a very welcome step.
During COVID, Mr. Khara, what were defaults at, sir? What kind of defaults?
Actually speaking, I would say that the scheme actually did wonders, because the default was much lesser than what the provisions were created. So, and I think in overall about 18,000 crore is something which is the outlay which is given to NCGT, ETC for enforcing this scheme. So it's more of a comfort which comes in for the lender, and many times the inability of the lender to support such entities in good time are the contributing reasons for the default. So now at least with the additional 20% for the SME and 100% for the airlines, that kind of default would not happen, and they would have the banking system support available in these difficult times. And on the top of it, these
during COVID, in the 2-3% range, sir, by the end of it at an industry level.
Yeah, actually, it was around 4-5%, but then it was all taken care of because the provisions were made.
Yeah.
Good amount of provisions were made. I would actually say that the provisions which were made were not put to use by the banking system. So that way, they actually could write back those holdings.
Yeah. Just one before I move on to Abizar, we've heard from it's a situation where if you look at stock markets as a reflection of what's going on, you'd say, well, after the initial shock, markets seem to have moved on. Maybe they're saying, well, this energy pinch is temporary, so it doesn't affect the future value of the stock market. Maybe that's the right way to look at it. But we've heard from government officials, the CEA recently, talking about the 7% growth as a pie in the sky. I think he used a phrase just 2 days back. There's other commentary over the last weekend which came through saying, well, maybe the situation is and an explicit line there in terms of a review saying the stock market is being too optimistic or some such. I'm paraphrasing here. So this scheme, sir, Mr. Khara, does this kind of acknowledge that maybe the pain's already there from what the government is seeing in the data they have than what the headlines suggest? Is it? Should we see this as an acknowledgement as well, Mr. Khara?
Yeah, I think it is very much seen on the street also when it comes to energy issues. We have been hearing that, when it comes to even gas and for that matter, even the crude also, there were anxieties. And, part of the price movement is also on account of expectations as well. So if at all, the scenario appears to be that, there is a disturbance in terms of the continuous and the perennial supply of crude as well as gas. So naturally, it leads to some kind of a spike. And we are already seeing that when it comes to OMCs, they're into, their ability to withstand the increase in the crude prices is actually very limited. And as it is, we are seeing when it comes to Brent, it has gone up significantly, much above what it used to be pre-war situation. So I would say that it's almost on the horizon. So maybe there is always a spillover effect, and this kind of a guarantee scheme will actually address that spillover effect also. And before it actually starts hurting, this kind of a guarantee is available to take care of the cash flow challenges for the SMEs and the airlines, etc.
Welcome and timely step announced by the government. Abizar Divanshi, founder of Neostrat Advisors, is also here with us on the show. Abizar, hi, morning. You want to share your initial thoughts? And do you have a view on this 18,100 crore of a total guarantee? Is that enough? How does it compare with the prior versions?
So, as one will notice, I think nothing is enough. And you'll keep requiring more and more of it as long as the crisis lasts longer. But, two issues I want to think about. Without a doubt, as Mr. Khara said, absolute requirement to not only let entities survive and not be NPLs, but also to make sure that the jobs continue and the economy keeps rolling. So absolutely a requirement. I look at it as a subsidy more than a credit guarantee. But I have two issues to really talk about structurally, not only in this scheme, but even what we learned from the other schemes. And one of the things is that fundamentally what you're solving for is immediate liquidity. But immediate liquidity when business is slack through debt is not necessarily a good structural idea. So I think maybe we should think about the scheme. So the scheme has to be there and the amount has to be there. Think about the scheme as some kind of a convertible which is dynamically managed by a group of people. So what I mean by that is that one, we need to provide convertible rather than debt, because debt has to be serviced. Debt has an implication on the debt equity ratio, and enterprises' ability to actually pay money is going to be limited. So that I think is going to be a consistent problem, because people take 4 to 5 years to recover. I know the scheme is for 5 years, but at the end of 5 years, I don't think your ability to pay interest or your ability to repay the debt thereafter will be good enough. So enterprises will continue to remain in stress as long as it's pure debt. The other thing, important to note is maybe we should aim at with this as a consolidation of at least the SME and the MSME sectors. I'm not talking about the large corporates, but the SME and the MSME sector. What happens is if there is an equity-like convertible instrument, institutions which are likely to fail should be proactively merged into much larger corporates so that they can withstand any future issues. And I think the way the world is going, for every 4 to 5 years, we will see some issue coming through. So we need a more long-term solution to scale, which should come through consolidation of the SME businesses. That's on the structural side. Now, coming to the discipline side, I think this is a credit given through the banks through a guarantee scheme. Now, the guarantee scheme is just a trustee entity which will reimburse funds as and when banks incur defaults. But the more important thing and the onus is on the banks to make sure that this credit is given only to worthy businesses which are likely to turn around and revive as part of this process. Not to give it to anybody who comes their way. If anybody who comes their way who are not likely to succeed even with the receipt of the money should be considered to be consolidated, is what I meant. So ideally give it to only deserving people because the pool will be shorter, as I said, pool will always be short. And to make sure that the ultimate onus is on the West Asia crisis. I think these two things will be the onus of the banks going forward. And how well they do it, I think, will determine the success of this scheme.
Abhisar, just to take that point forward, how confident are we that these standard accounts won't slip once the moratorium ends? Especially, if this war drags on, oil prices stay high as well, then this exercise will...
Of course it will. I mean, of course, during COVID, and Mr. Khara would know this, we had this scheme called the OTR scheme, one-time restructuring scheme, which basically deferred everything by 1 year. The big presumption being that entities will revive within 1 year of COVID. That may or may not happen. So at the end of the day, I think this is going to be a dynamic provision. If the war continues, we will have to keep extending this. On the evergreening problem, I think if banks, it's a very easy lure for the banks to use it to cure current debts. They should not be doing that and rather giving money to make sure that goes for growth. And I know that the law says that you only have to give it to standard entities, but standard is kept rather than in spirit adhered to. So that the minute a default, minute the money comes in, it will be used to make sure the account remains standard, which is going to be a problem. Because if the dues go back to the bank is an issue.
Yeah, Mr. Khara, credit to MSME sector on a YTD basis as of March of this year is up 33%. It's actually growing very well. In any case, right? Was growing, but of course this conflict started late February. So there's, is there any risk of excess, as Abhisar was pointing out, that is the onus is on banks to lend with those two aims in mind. So what's your sense, sir? Is there any risk here at all?
No, I would say that when it comes to underwriting standards, there is no need to compromise those standards at all. And I think that has been very well understood by the system, and that is the reason why we have seen the kind of credit costs in the past and the kind of percent book, the way it has cleaned up in the past couple of years. Now, going forward, yes, of course, what Abhisar mentioned, that of course one has to be very mindful of the fact that if at all lending is being done to the borrowers, they should be the one who are affected by the West Asia crisis one. And also they are in genuine need of the funds, which actually means that one has to understand the working capital cycle very comprehensively, and then only this should be extended. And then on the top of it, when it comes to, they have put a ceiling that for SME, it cannot exceed 100 crore. And it cannot be more than 20 crore, but 20% of the outstanding, peak outstanding, and also not exceeding 100 crore. These are the two caps which are there. And for the airlines, they have put for 1,500 crore per entity and 100% of the peak outstanding and 1,500 crore of the maximum amount. So I think that way there's a very clear effort that it should be equitably used, and the intention that if at all the intention or the management's intention is to evergreen, etc. In fact, there can be hardly any check on those kind of things. So that's where management have understood the lessons very well from the past, and they are very mindful of the fact that they have to ensure that the underwriting standard must not get compromised. I think essentially the spirit of the scheme is excellent, and if at all it is implemented well, it will go a long way in terms of supporting this very critical sector for the economy. Rightly mentioned that when it comes to employment potential, etc., all that is actually channelized through SMEs. So I think it will go a long way in terms of giving a very critical support at this point of time when the economy is facing global.
Mr. Khara, Mr. Divanshi, thank you very much for joining in. Many sectors will get the benefit, whether it's textiles, whether it's fertilizer. Many affected sectors will be the beneficiaries. For the markets, we've slipped about 100 points from the top of the trading session. In the morning, there was a spike which took the Nifty to levels of 24,250. But from there, names like Titan, HUL, Power Grid, NTPC have all corrected from the top. And we're in the green, but just up about 0.5%. Get into a break. We'll come back with more on stock. Stay tuned.
Welcome back. Well, markets actually have come off a little bit from the top. Not too much to worry, but we're still holding with a gain of around 100 points. But we started off with a near 200-point gain, so slipping a little bit from the top. But what's encouraging is the breadth of the market. Number of stocks advancing, still outpaying the number of stocks declining. The ratio is closer on 3:1. So you like what you see on the screen. But in terms of key earnings, L&T reported Q4 numbers post-market hours. The stock is under some pressure. The street didn't like the guidance. Vivek joins us to help us out with quick analysis on those numbers. Vivek?
Well, that's right. Earlier today we highlighted about the numbers themselves. In terms of the key commentary and what is it that the street is actually digesting. Number one, it was a soft quarter, which was expected, especially given two key worries. Number one, headwinds as far as West Asia is concerned, and execution worries in the domestic market, especially in the water-related projects, as well as collection inefficiency over there. The other, of course, problem is that as far as Q1 and Q2 of FY27 is concerned, despite the fact that the company has given a top-line growth guidance in the range of 10 to 12%, Q1 and Q2 are expected to be soft, especially given the fact that there are cost headwinds that are emerging, especially due to inflation worries on account of supply chain worries, on account of the blockage as far as the Strait of Hormuz is concerned. So next 2 quarters could be slightly subdued in terms of execution. The other key worry, of course, being the fact that management has guided for a core margin at 8.3%, which indicates that there is not going to be any expansion as far as core margins are concerned in FY27. However, remember in the call, the management did allude to the fact that most of the legacy low margin projects are now behind, and the company henceforth will go ahead and get better margin projects as far as execution is concerned. The other worry, of course, is the fact that there are cost overruns, especially as far as West Asia projects are concerned. Management indicated that despite the fact that these are fixed price projects, what you're actually estimating is that they are in talks with the customers to go ahead and ensure that there are better collection efficiencies. But that is something the street is clearly worrying about. Now, when you're talking about the order backlog quite strong, 3 lakh crore as far as West Asia is concerned. But the tempering of the guidance as far as Project Lakshya is concerned, remember, top line growth in the range of 12 to 15%, order inflow guidance in the range of 10 to 12%, and ROE in the range of 16 to 17% is something that indicates some moderation in growth as far as L&T's prospects are concerned, especially in the next 5 years.
Thank you very much for that. Nagraj Shetty of HDFC Securities is now joining in. Nagraj once again seemed to be facing resistance around that 24,250, 24,300 mark. We've come off. What is your assessment of the morning and the trades that you'd recommend?
Hi, good morning. Nifty has been in a range-bound movement. We have seen Nifty bouncing back from near the support of around 23,800 levels, and the higher level is 24,200, 250 is going to be a strong resistance. I think the overall chart pattern is looking positive. Nifty gradually inching higher. In the sooner or later, I'm expecting Nifty to move above 24,200 hurdle and could eventually reach towards 24,600, 800 levels in the near term. I have 2 stocks from alongside. First one is Anantraj. Chartically, this stock has been a phenomenal up move recently after a sharp decline, bounced back very well, and currently placed at the edge of moving above the 200-day EMA. Overall chart patterns are looking positive. Currently trading around 531.50. One can look to buy at this point of time. 560 is going to be the immediate target. One can place a stop loss at 510. Second one is from IT front, Intellect Design. Intellect Design has been a gradual rounding bottom. Higher tops, higher bottoms is visible on the chart. Currently placed around 776, 777. One can look to buy at this point of time. Immediate target would be around 815. One can place a stop loss at 760.
Okay, all right. We'll come back to you for more, but 100 points now is how much the Nifty is up by. Was up more, 150 odd points in the morning. But lots of individual action, which suggests there is interest in lots of names, 3, 4, 5% well-traded names. So no lack of action there. Chola Finance, Trend, Chempro was up down 5. It's up back up 5. Hindustan Copper, Tata Chemicals, IndusInd Bank. And I can go on, apart from, of course, what we've already talked about quite a bit, which is Coforge, Mahindra and NetWeb, which are the top 3 volume-led gainers on the NSE. At this point in time. Now, just some international news, and they say what happens in the West eventually finds its way through to India, and maybe now in this I don't want to say globalized world, maybe it's getting a little deglobalized, but will that find its way through here in India as well? I'm talking about the U.S. Securities and Exchange Commission proposal of semi-annual reporting for companies, not quarterly, moving away from quarterly to the option to report on a semi-annual basis. So this is important, at least on social media, getting discussed quite a bit. There are enough arguments on both sides. Those who oppose it say, well, this is anti-shareholder, and those on the other side, believe this is going to encourage longer-term thinking and more focus on what's good for the company eventually is good for the shareholder, rather than trying to finesse quarterly numbers. Sandeep Parekh is with us, managing partner at FinSec Law Advisors. We have Sriram Subramanian, founder and MD at InGovern, also with us. Gentlemen, great to have both of you here. Thanks for joining in. For us, Sandeep, it's not a real issue. It's not a real debate, because no such proposal exists right now here. And by the way, in the US as well, there are already lawsuits challenging this. So we don't know the legality and what turn this will take. But first thoughts, Sandeep, how do you look at it?
So, first of all, I think it's just a proposal. It's at the consultation stage. So this is not definitely happening. So they will wait for feedback, and then, probably, you're looking at a couple of months away, even if it happens. In terms of, my own view is, I think I don't have a very strong view. I think there are very good arguments on both sides. I think it reduces compliance burden, it reduces costs, and it, I think much more than costs, which are not that high given, all the IT systems based numbers which come up. I think the real cost is focus of the management on performance, rather than kind of every few weeks kind of getting back onto the next quarterly, preparation of the next quarterly numbers. So I think the biggest argument in favor of half yearly would be, management distraction away from just preparing numbers and focusing more on actual performance. So I think, of course, a lot of people also kind of give the argument that, it reduces short-termism, which is, of course, debatable. And I think really the downside is there's kind of a bigger lag between getting numbers between 2 quarters really. So I think it's like I said, I don't have very strong views on it, but I think I would support it if it were to happen, and it's anyway going to remain optional. Companies want to continue to provide quarterly numbers, will of course certainly be free to do that. And again, this is not unprecedented. Many countries like Australia, even UK, I think they rely more on half yearly numbers rather than quarterly numbers. So it's not something which is kind of quite outlandish.
I wonder if analysts would support it.
They won't, for sure.
They will. They won't.
Won't for sure. Yeah. They want numbers all the time. So.
They want numbers. Sriram wants to come in. Sriram, your view on this?
I think, as you rightly said, investors and analysts would want quarterly numbers as such. Otherwise, there could be information asymmetry, especially the hedge funds who play on, I would think, information-led and momentum-based investors would like quarterly numbers. I think so that is the pushback. The pushback is more from investors, largely the hedge funds, the pension funds and the like, because they tend to think that there is a possibility of information asymmetry because management could be engaging with analysts in private conversations, etc. And there could be much more information gaps for public markets than for investors who have access to management and the like. So I think that is the, but be that as it may be, as Sandeep said, US also allows foreign companies to file semi-annual reports. So from that perspective, it needs to be seen. Probably they will do it in a measured manner. That is, companies which are not in the top S&P 500, for example, they could be allowed to be doing semi-annual reporting and then gradually move to the S&P 500 kind of stocks. That could be one option.
Yeah. But you're absolutely right. I mean, right, management access and conversations then in between become so much important. I mean, just access becomes so much important, and you know, at least the short-term hedge funds, etc. Those class of investors, you know, try to get an edge in any case. So with longer information gaps in that sense, it perhaps puts you know, others who don't have that kind of access at a bit of a disadvantage. Could you, Sandeep, could you argue, could you see that this point of view, argue from this point of view? I mean, it's a fair point, right? Especially in a market like India.
Well, let me answer your question indirectly. Let me take out my crystal ball and assume this law comes not just in the US, but in India. My guess would be the top 100 companies would do quarterly numbers. They would continue to do that. I don't think it would be very popular with large investors and not just hedge funds, even. You know, any large investor would want quarterly numbers to be put out. So it will be very unpopular with the investor community. So my guess is at least the top 100 companies or so would continue with quarterly numbers. And really, I think Sriram had a good point that, you know, maybe focus on the top 500 companies and keep it quarterly, and then make it half yearly. For you know, all the companies below the top 500 or so, some number like that.
Yeah. You know, but if the top 100 follow quarterly, as you're saying, Sandeep, I mean, it's a pretty powerful signaling effect, right, for the rest. I mean, those are the biggest and the most well-respected and the most tracked and the with the most coverage, etc., etc. If they are doing quarterly, I mean, I think it'll be hard for others not to do or to switch to the other system in that sense, right?
That's
so
right.
automatically,
yeah. That's right.
Yeah, Sriram, you'd agree?
So, you know, again, just to give you a historical context, you know, 100 years back, there was no concept of mandatory disclosure. So even blue chip companies, if you see from the 1920s in the US, did not come out with annual reports. You know, the annual reports used to happen every 3, 4, 5 years. And of course, they were not called annual reports. So just to say that, you know, we think everybody will fall in line is not going to happen. I think there'll be several exceptions. Many people would kind of cling on to the half yearly system, but my guess is not in the largest companies.
Yeah. By the way, someone's just messaged saying that employees would be most happy as the window closure to deal in shares would now reduce to half yearly. Sriram, your thoughts on what Sandeep said?
Yeah, I'd say that way historically even sales numbers were considered as competitive information, disclosing sales numbers today. But at the end of the month, we have auto numbers, bench strength, everything going out. So from that perspective, I would think even operating metrics are being disclosed today. So of course, things have changed. And companies which are talking about having compliance burden, etc., these are large companies, by the way. And already with the use of technology, the burden of compliance reporting is sort of reduced, I would think. Even accounting, etc., etc. metrics with obviously enterprise-wide reporting systems, these have reduced a lot. So I would think all companies which are already doing quarterly reporting, they would find it difficult to move to a half-yearly. As you said, investors' pressure will be there. Investors want it. So if it's optional and companies have been doing it for years, I would find them continue to do it on a quarterly basis and not move to a semi-annual reporting basis. Probably only newly listed companies may experiment with semi-annual reporting.
Okay, we'll see if it comes to our shores or this is limited in the US. As I said, there are already, by the way, lawsuits in the US challenging this proposal. So we don't know, as Sandeep also alluded to, it's just a proposal at this stage. Thanks very much for your initial thoughts, Sandeep and Sriram. Appreciate you joining us here on the program. Well, 86 points, so there's more drop-off, almost about 80 points off the day's highest point. But let's get a quick F&O sense of things, what's happening. Mangalam is standing by. Mangalam.
Well, the Sensex weekly options expiry is now fairly gaining a lot of traction. So you just thought one day ahead of expiry, let's look at the trends coming in from there as well. So Sensex doing extremely well this morning. However, you have to look at where it is. It's at the 20-day moving average. 77,229 is where the Sensex is. It crossed the 50-day moving average earlier in the day, though has come off marginally from the highs and is around the 20-day moving average. So those are important levels to track. What are the top contributors today? We have HDFC Bank, M&M, SBI and ICICI Bank. All of them top contributors on the way up for the 30 stock index. But had it not been for L&T and a couple of these IT stocks, the index would have been a lot higher. The biggest drag right now is L&T. Given all these things, the important part is tomorrow's options expiry. We do have a lot of call writing which is visible at 77,500 and 77,600. So 77,500 call has a premium for almost 300 rupees. Remember, these are options that expire tomorrow. So 77,800 thereabouts, closer to 78,000 is where the street believes that there could be resistance for the Sensex. 77,600 call as well comes up for you around 300 rupees in terms of premium. So you plug that in on the 77,500 and 77,600, you get resistance around 78,000 itself. But as we speak, the Sensex, while it's off highs, we still have a lot of support around 77,000. The 77,000 put, which expires tomorrow, has the highest open interest and is the most actively traded option this morning as well, with 200 rupees of premium, telling you around 76,800 to 77,000 is an important support for the Sensex. So if you're looking for a range on the Sensex for the next couple of days, look no further than 76,800 to around 77,800.
Got it. All right, Mangalam, thanks a lot for that. We'll keep an eye out on the Sensex options as well. For the time being, slip into a short break. You come back. Maisha Gupta will be joining us. She'll be telling us what's going on in the commodities market. Stay tuned.
Welcome back. Let's talk commodities. Manisha is now joining in and she puts a spotlight on metals.
Thank you for that. Yes, well, yes. The energy markets have seen a bit of a decline and metals actually have come back into the space there. Well, a couple of things which clearly are supporting. One is the dollar index, which has seen a decline. That seems to be supporting many of these metal prices there. So whether it is about gold, silver, metals, almost everything is trading in the positive. There also are signs of de-escalation in West Asia. There are various reports, various statements coming in from US as well, which says that US is looking to pause on operations and are indicating possible peace deal with Iran as well. US has said that they are looking to stopping operation or pausing Project Freedom to help escort ships through the strait. US Navy would continue to the Hormuz blockade though, and that is the reason you're looking at the crude oil prices holding around that $100 a barrel mark. But apart from that, the Chinese manufacturing data, service data, all of that has come in on the positive side, in turn also supporting metals demand therein. So take a look at the gold prices, nearly 2% of gains coming in for that one. Silver gained 3.5% in the Asian markets right now. You have copper, which gained 2.5% overnight and continues to trade firm in the Asian markets right now. Copper also is trading support from the fact that the Chile is facing supply risks as conflict has disrupted sulfur flows to China, and China is looking to ban export of sulfuric acid, which is used for mining, not just for copper, but aluminum, nickel and zinc as well. And that is where the markets are looking at support coming in. There is support also from the fact that most of the tech companies are now signing more agreements for more data center constructions, and that is where copper demand would come in from. Not just copper, aluminum is traded 2% on the overnight markets, and aluminum is now 14% higher since the West Asia conflict. Well, remember, 10% of global supplies in sense of aluminum comes in from the Middle East, and 25% of non-China supplies also come in from Middle East, and that is what has been supporting the markets there. Not too far away from its all-time highs, and for aluminum as well, it is also about direct attacks on aluminum refineries by Iran in Gulf region. And there are reports suggesting that EGA's flagship plant is expected to return to capacity only after an year. And then when you look at Bahrain's Alba operations, they continue to be completely suspended right now. There is support also coming in for sulfuric acid. Lithium carbonate has gained up by 50% in this year, and we are trading at a 3-year highs onto that one as well. Well, lithium, major input for EVs, and we are looking at strong demand for that one, especially coming in from China, which is looking to double its EV capacities by nearly 180 gigawatts by 2027. So strong support continuing across markets therein. I want to show you on what we've done on a week-on-week basis for many of these metal prices. Last 2 days have been very positive, and that has culminated in gains for the week as well. So we're looking at gold up by 2%. It's 5 to 6% of gains coming in for silver and platinum, and that's exactly what we have seen for the base metal prices also. So aluminum, zinc up 3% on a week, and 2.5% of gains in copper is what we are trading with right now.
All right. Thanks very much, Manisha, for that. We take a quick commercial break here. On the other side, our special segment, Indianomics. Lata speaks with 3 experts on the fiscal cost of state finances in today's program. Stay tuned, coming up in just a bit.
Welcome to Indianomics. The election headlines and upsets are over. It is time now for counting the cost. Cash transfers, free electricity and bus rides announced by Vijay's TVK in Tamil Nadu will cost an additional 2.2% of Tamil Nadu's GDP, taking the total freebie bill in the state to 2.6% of the state's GDP. The BJP's promised transfers to women and youth in Bengal imply additional spend of 3.4% of Bengal's GSDP and take the total freebie bill to 4.5% of Bengal's GDP. The UDF's promises in Kerala increase the freebie budget by 0.5% of GDP. That is from 0.9% before the poll to 1.4% of Kerala's GSDP. And Assam's freebies amount to 1.7% of Assam's GSDP. There, the same government has come to power, so there is no increase. Now, what does all this mean to the fiscal deficit and, more importantly, to interest rates, which will hit all of us? This is not just for the states. Given the higher burden by the, fiscal burden is going to be higher because of falling revenues of states, and they are falling because of excise duty cuts on petrol and diesel. So the fiscal burden is likely to be higher, the borrowing could be higher. Joining me to explain the impact on the state finances and on us are three economists and fixed income experts. Madhavi Arora, economist from MK Global, Mr. M.R. Madhavan, the co-founder and president of PRS Legislative Research. He is also formerly an economist and a bond trader. And Rahul Goswami, the head of fixed income, CIO fixed income at Franklin Templeton. Gentlemen, and Madhavi, welcome and thank you very much for sparing time for us. Madhavi, we are basing our first numbers on your report. So tell us exactly what will be the impact on Bengal first, because that's where there is a dramatic number. According to you, a 3.4% of GDP in terms of expenditure is going to rise. So take us through what it can mean for Bengal's fiscal deficit and interest rate cost.
Hi, Lata. So I think the political battle was largely fought on account of the fact that, freebie economics is a new way to go. It started off since from MP election 2023, and it has continued in each and every election where, the way elections are fought is largely on account of freebies. West Bengal is no different. In fact, was actually, as you mentioned from our report, we are looking at the incremental budget impact or incremental fiscal cost rather of as high as 3.4% of GDP, given whatever schemes that they had, laid out in terms of the freebies. Now that comes over and above the already budgeted schemes, which were costing somewhere around 1% of GDP. I'm not saying that if TMC had come in power, it would have been any different, but the details of the BJP agenda appears to be really stretching the West Bengal map to the extent that we probably would be looking at the fiscal deficit, if at all this has to really be sort of accounted for in the current FD, it would easily cross more than 5%. Now that obviously will not happen because of the FRBM targets that they have to follow. But at the same time, if I look at this year's interim budgets of Bengal, they were targeting around 2.9% fiscal deficit as against 3.5% in 2026 RE. They were looking to improve, but given the constraint that they would have in hand in terms of fulfilling even partial segment of this, the cash transfers and employment aid and travel to women and all of that, would be a big strain for this state. Let's remember that the state also has a very high debt to GDP ratio versus the average state's peer. It's close to around 38%. And if I look at the interest cost of West Bengal, as a percent of GDP, it's around 2.5% plus as a percent of GDP, as against the average state of 1.7, 1.4, 1.8% of GDP. So the strain is pretty much there in terms of accumulated expenditure from the state's point of view, plus this freebie economics that they'll have to probably, fulfill would imply that you are really lurching at a situation where there could be a compromise on, at least in the near term, on other productive investments that they could probably be doing. Okay. But again, in the medium term, things could change. The near term impact would be definitely negative for the state, which is having a very high debt to GDP ratio, very high interest cost, and the incremental budget policy impact of the promises could be as high as 3%+.
Okay, wait 1 minute. You know, I have a similar report, not on poll promises, but a report on state finance from Citi also. Now, Citi is arguing that almost all the states in FY27 are assuming a higher revenue growth than is even credible. The revenue growth is going to be slow primarily because people will pay lower GST. There has been GST cuts. Then there is excise duty cuts, and excise is from the shareable pool. So do you think the fiscal strain is going to be more because revenue will be less? And do you give a chance that actually the borrowing will be higher than what the states are telling us?
So that could be possibly the case. So if you look at the state finances in general over the last 2 or 3 years, in fact, we had done the study with regard to how states perform pre and post the election in the last 5 years. We've realized that post-election on average, there's been a 1 percentage point increase in fiscal deficit. It could be different state-wise, but there's been a clear trend which is an upside. Now, and to a large chunk, that has actually happened also on account of the revenue deficit. Yes, because they were able to actually curtail their so-called promises to some extent, like states like Maharashtra, where if they had actually gone ahead with the full-fledged poll promises, the fiscal deficit would have actually crossed 4%. But what we saw was that from the starting point of 2.2%, it ended up close to 2.9% because they ended up really trimming their schemes and making them more constrained in terms of the spend. But clearly, the revenue side of the state fisc is actually a bigger problem than these freebie because they can be still managed and they can be still delayed in some form or the other. But the revenue strain is pretty much there with regard to own tax revenue. SGST pressures are pretty much real. In fact, the center has realistically taken a much lower growth of GST as against states, as you mentioned. So I think the revenue side slippage could also be a very serious problem for state finances as you go ahead.
So will they borrow more? I want to come to the bond markets. I already had a discussion with Rahul, and he was worrying about how the SDL, the rates, yields on state loans has, the spread over the central government bonds has increased so much. And, corporates have to borrow above the state loan rate. So cost of capital increases for all of us. Are you expecting that total SDL issuance, state bond issuance, will be higher this year than what states are projecting?
Yes. Although we're not looking at net borrowing to be more than 9.4 trillion, but on the gross basis, we're looking at more than 13.5%, which was a number pre these election outcomes. So it could actually have an upside in terms of borrowing. We were looking at around 3.1% FD for FY27 for state aggregate. But I think there could be a risk of around 20% upside on this.
Madhavi, I'll come to you now. Let me get the market angle very quickly. Rahul, see, 9.1 trillion of new bonds is what the total state borrowing is coming to. Now, I have a Citi report which says that they won't be surprised if it becomes 13 trillion because revenue shortfall is severe. Excise duty cuts have been announced. So, first of all, how will even this 9.1 trillion impact bond yields? And if it were higher, what will be the upshot?
So, Lata, thank you for calling us. So, we have seen 9.1 trillion is the net supply by the state governments on their borrowing side. And apart from that, they have to fund the redemptions, which is close to 4 lakh crores. So 9.1 plus 4 is 13 lakh crores. There is possibility that the fiscal deficit actually for the states will be close to 3.1, 3.15% because of lower growth and lower revenue against their expectations or against their projections. So we could actually see state borrowings going to 14.2 to 14.5 trillion INR. Obviously, we are struggling with the central government borrowing this year, gross supply at 17 trillion INR and states at 14 trillion. So total 31 trillion INR is not a small number. And we are seeing some strains that, or some signs that the state governments for the benchmark securities for against 5-year and 10-year, their spreads are actually close to 70, 75 basis points, which is historically at a high level if you see this quarter. This quarter, the present quarter or the first quarter of the financial year is the lowest supply for state development loans. And if in this quarter, the 10-year, 5-year spreads, respective tenor spreads are at 70, 75 basis points, this does not augur well. And you could actually see that spreads moving potentially higher to 90 to 100 basis points over a period of time.
Okay.
But yeah, we have seen like say 5-year GOI trading at 6.7%, and yesterday RBI auctioned state development loans for 5-year at 7.4%. So 70-75 basis points historically in the first quarter of the financial year is actually a higher spread, and we won't be surprised if the spreads actually widen to 90 to 100 basis points.
Okay.
We also have to keep in mind that 90% of the fiscal deficit for the states is funded by market borrowing, whereas for central it's in the range of 70 to 72%.
Yeah.
So there could be a change if things go typically potentially disturbing the market normalcy. Then we could see that states may get opportunity to lower their market borrowing as part of the total funding of fiscal deficit. But yeah, we'll have to see around that.
Okay.
But for that to happen, we think that spreads first will go up and then probably corrective measures.
Okay. Okay. I just want our viewers to understand that, somebody promising freebies in West Bengal or promising freebies in Bihar or Tamil Nadu is not something that is not affecting us. It is going to make the general cost of borrowing higher for all of us. All NBFCs will have to pay more than state government loans, and we borrow from NBFCs. So our cost of borrowing is rising. Let that sink in. Mr. Madhavan, let me come to you now for the developmental question. I want to tell you that PRS represents legislative research. They do impact of parliamentary acts on us, on you and me, and on the economy. Mr. Madhavan, do you think, therefore, the quality of state expenditure will decline? They will have, more committed to salaries and to freebies, and very little will be available for, say, bridges and railways and metros, for which we Mumbaikars at least are thirsting.
Yes, but we have to actually look at these things with a bit of caution. Firstly, election promises are not always implemented. So it may not be as bad as what it looks like.
Okay.
Second, they are sometimes implemented. For example, if you look at what happened in Karnataka over the last few years, Karnataka has moved from a revenue surplus state to a revenue deficit state in the last few years after they did the 5 promises, 5 guarantees they implemented. So it does have had some impact. I would actually caution on making serious conclusions about increasing borrowings and increasing fiscal deficit and looking at the overestimate of states for their own revenue. So we have looked at data for the last 8 to 10 years. And on average, if you look at the revenue receipts that states project in their budget estimate to what happens actually, and this is a 10-year data, they typically overestimate by 10%.
Ooh.
And then what happens? So they overestimate revenue receipts by 10% and therefore have budgeted accordingly. There is a hard constraint on fiscal deficit at 3%. So they cannot spend more. So what happens is they end up squeezing the revenue expenditure because they can't do much about the revenue expenditure. I'll just explain that. So they end up squeezing the capital expenditure. The reason they can't do much about revenue expenditure is about 62% of that last year's budget. I mean, I'm looking at 25-26 because we don't have the 26-27 budgets for all states yet, especially the ones which have gone for elections. So 25-26, if you look at all states, 53% of the total revenue receipts went towards salaries, pensions, and interest. So that is committed. You can't do anything about it. A further 9% went towards subsidies, which theoretically you can do something about, but politically it's very difficult. So you're actually left with only 38% of the budget of the revenue receipts to actually do anything, to do everything else.
Okay.
And that will also get squeezed if you increase subsidies or cash transfers or whatever you may call.
So chances of
freebies is a word
chances of state capex going down drastically is very high at this point in time.
Yeah, the risk is of capex going down.
Okay.
Because that's the only thing that they can cut. They can't cut revenue expenditure. Much of it is committed. So if you get less receipts, and you can't actually borrow more.
Okay.
State governments need to get the permission of central government for borrowing if they have any loans from the central government.
Fair point.
And every state has.
Okay. So here is a devil in the deep sea choice. There will be either a reduction in capex or there will be an increase in borrowing, which will hit all of us in terms of higher capital cost. Chances are both may happen. But let us wait and see. We have more arguments and more data that our guests are prepared with. All those questions and answers after the break. Bazaar viewers, you will get to see the entire show after market hours.
Larsen & Toubro delivers a miss on all counts in the fourth quarter. The company sounds caution over lingering impact of geopolitical uncertainty. The management also lowers FY27 top-line guidance to 12% versus 15% earlier, on the back of which brokerages like Nomura and HSBC downgrade the stock, cut their target prices as well.
Coforge delivers its highest ever quarterly EBIT margins at 16%. The profit more than doubles to around 600 crores. The management issues a robust guidance, eyes EBITDA growth of 20% in FY27. Brokerages maintain an upbeat stance on the counter.
Marico reported an inline set of numbers for the March quarter yesterday. The company closed FY26 with a volume print of 9%. Foods business crossed the 1,000 crore mark and the brokerage is extremely positive.
United Breweries reports a soft set of numbers in quarter four. The volume growth of 4% beats expectations of 2 to 4%, but pickup in ad spends dents the growth for the quarter. United Spirits as well skids. On a soft business update, the top line of around 3,000 crores misses estimates of around 3,050 to around 3,100 crores.
Pre-sales for Raymond Realty more than doubled to cross over 1,500 crores in the March quarter. Collections spiked 20%. The stock rallies in early trade.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. Well, Mangalam, a good start to the trading session. And in fact, we're holding on to those gains as well. So we've come off a little bit from the top though, but otherwise fairly okay.
Fairly okay, Nigel. You know, again, flitting between the broad range of 23,800 thereabouts to about 24,300. As we move towards there, we do see a bunch of, sellers come by. So I guess it is where we are in the market because we are none the wiser with regards to when it comes to, the truce, which is taking place currently in the Middle East.
All right, Mangalam, just a couple of stocks on the broader markets I want to highlight. One is Gandhar Oil. I recall they did the IPO. There was a lot of interest out there. And then the stock did see a lot of selling pressure. Now, in today's trade, the volumes are much higher than any kind of averages. The stock is up close to around 15%. So by the end of today, we'll see whether or not there is some name that turns up. But otherwise, the volumes, I think, are more than 35 lakh shares that already have got traded. And otherwise, on a daily basis, there are a couple of lakh shares that get traded. So that's a stock to track. Big underperformer, but it's come back in style today. And the other one is Tejas Networks. Again, a stock that's a third of what it was at its peak. But that one as well is seeing some kind of buying in today's trading session. A couple of names in the broader markets popping up in trade.
Indeed, Nigel. And the other one actually that stands out is Shoppers Stop. Reported a steady set of performance for the fourth quarter. Nothing that would suggest any big move on either side. But the stock opened about 4.5% lower. Because on the bottom line, the company reported a loss. But the internals looked fairly strong. And from there, the stock has turned around 8% off lows and currently at the high point of trade.
All right, let's focus on our first management on the show, though. We have Lloyds Metals. That's a stock in focus. We have with us the promoter and the managing director, Mr. Rajesh Gupta. Hi, Mr. Gupta. Good morning. Good to see you in, Mr. Gupta. What a journey, right, for you as well as the group. Lloyds Metals, I recall, the company's market capitalization was less than 1,000 crores maybe 5-6 years ago. And now in a single quarter, you're doing 2,500 crores of EBITDA. You've come a long, long way. And it seems that you've charted out a plan even for the way ahead. So let's quiz you on that then. Now, for the coming year, I'm looking at your production guidance on iron ore. You're talking about close to around 26 million tons. And on pellet production, you're talking about around 7.75 million tons. What will the sales numbers be on both these two parameters? And if you could help us out with the EBITDA per ton that you delivered last quarter, will it be even better in quarter one? Because there are some price increases that have come about.
Price inflations are there. In fact, the market is very, very steady upward. There's a very good demand traction both in steel and therefore in iron ore. The projection for this year is around 27 million tons of sales, around 7.5 million tons of 8 million tons of pellet sales. Totally 27 million tons, and our revenue would be in line with that, would be around double of this year.
Okay. All right. So 8 million tons of pellet and around 18 million tons of iron ore sales. Is that correct?
18 to 19 million tons of iron ore sales.
Okay. 19 million tons and around 7.5 to 8 million tons of pellet. That's right?
And to add to that, we will be having around 800,000 tons of DRI sales, as well as around 150,000 tons of steel sales, which will be commissioned by the end of this year.
All right. So steel plant gets commissioned by the end of this year as well. So we'll keep an eye out on that front. Tell us about the EBITDA per ton. If I'm observing the last quarter on iron ore, you did around 1,900 rupees per ton. You have that cost benefit and you're focused on that as well. So price increases will come about. So fair to say that the EBITDA per ton on iron ore will move up. And also, if I look at it on pellets, you're doing roughly around 4,000 rupees, 4,500 rupees per ton. Both these two are sustainable, EBITDA per ton?
I wouldn't like to give any guidance on the pricing. It's a commodity. At our end, we are taking care of costs. We are covering our overhead away. The pipeline, which is now have double the capacity utilization, will also add to that. And definitely we see a EBITDA, which is upward of 1,900, which is this year.
Okay. All right. If I got that correct, sir, you said sales will double this year. Is that correct?
The pipeline capacity, which is right now 4.5 million tons, 4 million tons, utilization because there's no pellet plant to offtake it. Now we'll go to 8 million tons. So we'll save a substantial amount in that, adding to the bottom line per ton of EBITDA.
Okay. All right. Mathematically, if I put it by both these two segments itself, you'll do more than the entire EBITDA of the company. Last year, you did around 6,500 crores approximately. And between pellets, iron ore, as well as DRI, you'll do close to around 8,000 crores. That is mathematically. Tell us, what is the EBITDA guidance for this year, sir? Should we be closer to around 10 to around 11,000 crores or more?
Nigel, you know that we would not like to give a hard figure EBITDA guidance. That is for the analysts to perform. Let us do our job of performing in the company.
Let's understand a couple of aspects then. Triveni, that's an asset that's come into your fold just in the last year. Now, for the last year itself, the EBITDA number that you've reported is around 2,000 crores. For this year, what will Triveni in Earth Movers and Infra Private Limited deliver in terms of an EBITDA number?
We are anticipating a much higher turnover there because of the Surjagarh mine asset going up, around 20% growth in Odisha and in the coal assets in Jharkhand. The gold assets in Andhra will go up, and of course the copper also. So with all of that, we are anticipating a 50% growth in EBITDA on a fair basis.
50% growth in EBITDA on a fair basis would take the EBITDA for the next year closer to the 3,000 crore mark. We give it the same multiple at which your business is trading, and that's a fair amount of value that you're sitting on that business, right? I mean, around anywhere between 30, 35,000 crores. Do you think an IPO is on the cards? If yes, then which financial year?
I would like to hazard a guess exactly on which financial year. There's a big value, like you mentioned, in this business. Being a more steady business, we think that the valuation should be given a better multiple. And at some point of time, we would go in for an IPO. The detailing is yet being done and is on the drawing board.
But that's not off the cards, right? You are looking at an IPO at some time in the future, but not necessarily the very near future.
Yes.
All right. And what explains you having purchased 5% stake in Bharat Wire Ropes?
Bharat Wire is an investment. It's not only this company, along with the other companies, it's a pure investment. They will also be a huge customer of ours when our steel plant with the wire rod comes up. So it's a pure investment, no other activity in that.
But will you look at buying a little bit more stake in the company, or are you all done? As a group, you all bought 5%. I think you'll have some CCPS as well. Will you all convert that and then go the distance and maybe, in fact, have a bigger chunk?
CCPS would get in the drawing board after around 6-8 months or 9 months. We'll take a call then. But it's a pure investment, nothing more than that.
You did say that they are likely to be your customers as well, right? So what's the kind of business prospects that you're seeking from them?
I think they will buy around 150 to 200,000 tons. They are the closest to, we are the closest plant to them, and they're also very close to us geographically. And like, logistics plays a big game, and our quality, we hope, will be better. Wire rope is a very exciting business, and that's why we have invested in it as a pure investment.
Sorry, I may come across as a fair novice here in this sector, but 150,000 to 200,000 tons in terms of revenue would be how much?
Multiplied by 62,000 rupees a ton, so around 700 crore rupees.
Got that. 700 crore rupees is the revenue potential that you're seeking from them. FY28.
Yeah.
All right.
Yeah.
Let's talk about diversification then, sir. With regard to the copper business, you have, I think, around 50% stake in the Surya mine and around 49% stake in Chimaf. You're looking at copper and then cobalt. Could you tell us in this year, from the business, what kind of EBITDA can you report? It could be relatively small, but with a big potential. I'm doing a rough math, 10-15,000 tons of copper, and you have 50% stake in that Surya mines. So at current prices, should it contribute close to around 300 crores to your EBITDA? Would that be a fair estimate?
That's right. Yes, that's right. We anticipate around 10,000 tons this year from the Surya assets.
Okay.
And around, which will be ramped up to 30,000 tons ultimately. The Chemaf asset will ultimately give us 70,000 tons, not anything this year. That will be ramped up next year onwards, and 20,000 tons of total cobalt. That has 2 factories. This is one factory, and there are totally around 180 square kilometers of mines. The Chemaf mines are well established and job reported. The Surya mines, the study is being done, but all the production will be around 50 to 80% from our internal iron ore, copper ore. So the figure that we're anticipating is very, very
around 300.
on the ball.
Around
like I said, you guys are better analysts than we are.
No, sir, but you're the executor. We are the numbers man. I would like to visit your mine someday because I believe a lot of those Naxals actually now they're employed by the company and they have changed their lifestyle itself. But that discussion for another day. For today, we'll just focus on the numbers. What about the net debt number, sir? You have ambitious capex plans. What will the net debt number look like? And what is the capital expenditure plan just for this year? If you could help us out with that.
We invested 8,000 crores this year. 2026 FY, and this year should be around 12,000 crores. Last 3 years, we have invested around 13,500 crores. Our net debt is only 4,000 crores even now, and which is 80% of our back EBITDA. We hope to maintain those kind of figures. And currently, the next year's debt, I already answered that question around 10,000, 12,000 crore rupees. Which would include the completion of the steel plant, big investment in the beneficiation plant, the second pipeline.
Okay.
Also would start working on.
And the steel plant will get commissioned in the last quarter of this year, right?
Yeah. The steel plant will be commissioned in the last quarter of this year.
All right. And 150 to 200,000 tons is what you're guiding for in terms of production. Well, Mr. Gupta, we have run out of time, not out of questions, but thanks a lot for joining in. The street anticipates very large numbers coming in from you. You may think that you're at around 6,500 crores, which is a big growth in the last few years. But what I'm looking at, analyst estimates, they are penciling in 10, 11,000 crores as well in the coming year. So let's see how you do on that front. But thanks a lot for joining in. Well, time to slip into a short break. On the other side, we have Ajit of Religare Broking, who's joining us. Stay tuned.
Welcome back. A bunch of stocks doing extremely well. Tejas Networks up 12.5% right now as we speak, has had a decent time in the recent past. And alongside that, we have Vodafone Idea as well, which continues to spike. Force Motors is the other one, which has actually crossed the 20,000 rupee mark in terms of stock price. But Hero MotoCorp, there are some important updates coming in where the company is given the outlook for the next year. For both motorcycle and scooter, they expect the industry to grow in high single digits. It will be extremely important to see whether they grow in line with the industry or aspire to move faster than the industry as the larger players out there. The street is taking note of that, and as a result of which the stock, which already was doing well, is up around 3%. Good time to get in Ajit Mishra of Religare for a quick technical check on the market. Ajit, you know, we've been volatile in this range of 500 points odd, 23,800 to about 24,200, 24,300 thereabouts. Do you think that continues?
Yeah, good morning, Manglam. So yes, this move almost 8 days now that we are hovering in this 500 points. And if you see the 20 EMA mark close to around 23,900, 950 on the closing basis is something that Nifty is trying to defend. And as you rightly mentioned, that 23,800 being the next critical support area, the previous swing lows which market is defending. But at the same time, the underperformance of the two key sectors, banking and IT, that is capping the upside. And of course, needless to say that geopolitical scenario, which is keeping the crude at the elevated level, it's further adding to their sentiments. But at the same time, sectors like banking, metals and now pharma is something which is providing ample opportunities on the stock-specific front. So while the consolidation may continue in the index, the focus should remain on the sector-specific opportunities in the themes which are buzzing at present.
At present, one of them is autos, specifically Hero MotoCorp, where, Sudarshan tells us the expectation was that of mid-single-digit growth for the industry. The company says it will be high single-digit, and in that as well, they are looking to outperform the industry. So at best, maybe, double-digit growth is what the company can project going forward for its scooters and motorcycle business. And at worst, maybe slightly high single-digit for them as well if they had to outperform the industry. On Hero MotoCorp, do you have a chart check, and what other stocks are you tracking?
Yeah, so Hero MotoCorp, after this almost 4-5 months of corrective trend, we are seeing base formation around 49,000-55,000 levels, and the stock is attempting to reclaim its long-term averages. So, but for the momentum, we need to surpass this hurdle around 53.50. So once we do that, probably 5,700 is something that the stock might test. So it's good to accumulate at current levels with 49.50 as a stop loss. On the stock-specific front, like pharma is something that we are keeping a close eye on, almost like 1.5 year of consolidation, which is set to end in the pharma index and which is reflecting across the board. And Lupin, similar kind of a structure, a very tight range consolidation breakout in today's session with strong volumes. So 2,500 is what we are eyeing as the immediate target with stop at 23.40. At the same time, since the market is still in the consolidation, maintaining few shorts also is equally important. So IT basket still looks vulnerable for further decline. So TCS is a candidate to look for fresh shorting with target at 23.60 and stop at 24.90.
Got it. Thanks a lot, Ajit, for joining in and giving us those picks. Well, let's hop across to Sonal. She's standing by to tell us about SRF, that the stock, in fact, is quite buoyant. Post its numbers. Sonal, take it away.
Well, yes, strong set of numbers, and the expectation was of a decline. So this has come in as a surprise. Overall revenues are up 7% on a YY basis. The EBITDA is higher by 7%. Margins are flat at 22.2%, but the net profit has seen a growth as well, 11% higher on that one. Across all the segments, there was a growth. Technical textiles, where the EBIT was up 63% on a YY basis, 45% sequentially. And even in the chemicals business, where there was an expectation of a decline, the EBIT was up 5% YOY, 58% sequentially. Packaging films also did not disappoint, 47% on a YY basis, 62% on a sequential basis. The other big surprise is that in a time like this, the company has gone ahead and increased and announced big capex in the refrigerant gas segment. There has been pricing and volume uptick in refrigerant gases. So they have increased the investment to 2,300 crore rupees versus 1,100 crore rupees that they had announced earlier in October 2024 to set up an HFO capacity and 30,000 tons per annum of fluorochemicals plant, along with value-added fluorochemicals derivatives as well. The conference call is at 11:30 a.m. today, so we'll get more details, more clarity in terms of the outlook going forward. Definitely good set of numbers, and capex in a time like this is something that the street is liking.
Right. Thanks a lot for that. You're also tracking Raymond Realty.
Raymond Realty, yes. So that is another good set. If we talk about their bookings and their collections, that has been quite strong. Their pre-sales in the quarter gone by are up 104% on a YY basis. Their collections are up 20% to come in at 515 crore rupees as well. FY26 growth has been at stellar 30.6% at 3,023 crore rupees. However, the collections are down 8.5%. Company does say they have around 4,000 crore rupees of outstanding collections, which they plan to see coming to their balance sheet very soon. In terms of their strategy, they are looking at an annual pre-sales growth at 20%. That's the CAGR that they're looking at. Revenue growth at 20%. But do remember, for real estate, revenues can be lumpy because of the accounting. But return on capital employed also at 20%. So they expect to continue this momentum. And also, we'll be speaking to the management today. We'll get more clarity on these numbers.
Lovely. All right. Thanks a lot, Sonal, for that. Both those two stocks buzzing in today's trading session, and Sonal rightly highlighted that. Well, time to slip into a short break. But as we do that, a quick programming reminder. We are proud to bring HSBC presents CNBC TV 18 Future Female Forward Season 4 to Mumbai with Mumbai Gala, a powerful celebration of equity and leadership. Top industry leaders come together for a dynamic town hall, shaping the narrative of New India alongside curated cultural performances that reflect the spirit of the city. The evening will also spotlight our continued commitment to empowering female micro-entrepreneurs through a dedicated advisory initiative, driving meaningful impact through the year. Tune in today at 5 p.m. onwards, only on CNBC TV 18.
Welcome back. The Nifty is slightly below that 24,100 mark off highs, but still holding in the green. Let's speak about L&T because that's the top drag on the index right now after a soft fourth quarter performance. Vivek joins in with a fine print of the numbers. Vivek.
Well, that's right. A soft Q4 for L&T this time around. Execution lagging estimates. Two key headwinds. Number one, West Asia crisis impacting supply chain, also impacting execution to a certain limit. But the other bigger worry, of course, being the domestic execution, where the water projects did not see both collections as well as execution going as per the expected or desired timelines. In terms of the commentary, cautious commentary, especially as far as H1 FY27 is concerned, supply chain disruption due to lower activity as far as the Strait of Hormuz is concerned is impacting the cost of raw materials as well as the availability of raw materials. The other positive news, of course, is the fact that the order prospect pipeline continues to remain quite strong. Order inflow guidance of 2 is quite strong on a very high base. The management also unveiled the Lakshya 2.0 or Lakshya 2031 targets. In terms of the numbers themselves, revenues are higher by 11%, EBITDA higher by 5%, margins softened on a year-on-year basis, almost 60 basis points, and profitability down 3%, a miss across most of the estimates as far as consensus was concerned. In terms of the guidance, remember, the management actually, or the company, missed guidance on two key parameters. Number one was the top line guidance of 15%. They delivered 12%. EBITDA or core margin guidance of 8.5%. They delivered 8.3%. But where they surprised positively and quite a handsome beat was the order inflow. 10% order inflow guidance was what the management had guided to. They came in at around 24%. In terms of FY27, top line growth is expected at 10 to 12%, something that the street believes should be achieved only if disruptions do go ahead and ebb as far as H2 FY27 is concerned. Order inflow guidance of 10 to 12% is what the management has guided to, and core margins are expected to remain soft at 8.3%.
All right, thanks a lot for that, Vivek. Well, by the way, just keep an eye on the bottom of your screen. Sudarshan's listening into the con call of Hero MotoCorp, and the stock has fallen drastically. I think the reason is because margins in the near term could be under pressure. They're talking about price hikes of 2%, but they're saying input cost or cost actually have gone up by close to around single digits. So both those two will not offset each other, and that's why the stock from being up 2.5% is now down close to under %, though they're saying it's transitory in nature, so we'll see whether or not the stock can recover. Though just in the last 30 minutes, the stock has lost close to around 4%. So Darshan will bring you the latest in just a bit from now, but just highlighting the key points. Coforge, though, no worries out there. Stock flying away, strong quarter, good guidance. Rima, take it away.
Well, a couple of positives. One is a very strong margin performance. EBIT margins at 16.6%, highest ever. Also, the guidance for next year suggests margin expansion. So the company is talking about EBITDA margins of 20.5 to 21%. This would compare with 18.6% delivered last year. So again, Q4 very strong on margins, FY27 margin expansion. The second positive was the free cash flow. The company's free cash flow increased by 68% after being flat for the last 5 years. And the company says this is despite the Sabre investment. And they've also upgraded the free cash flow to PAT guidance to 100%. So that has come in as a positive. Now, in Q4, the company's revenue growth was just about 2%. They've also said that Q1 revenue growth will be flat on a quarter-on-quarter basis because the company is exiting some of the low-margin India business. But after that, after Q1 being flat, the company's growth path will resume, and they are pretty confident about achieving industry-leading revenue growth for the full year. On AI, they talk about, the call spoke a lot about AI. They said the internal AI adoption has delivered 25 to 35% faster development, 40 to 60% improved code generation, and 10 times quicker modernization. But he also went on to say that the true cost of AI code is crucial because AI-generated code is cheap to build but expensive to own, secure, and maintain it, and that is creating the massive opportunity for services companies. Back to you.
Take that point, Rima. Thanks a lot for that. With that, we are out of time on this show. But Hero MotoCorp's margin commentary has not only led that stock lower, but all the other auto stocks as well. Eicher Motors, for one, has taken a sharp knock from the highs. Alongside that, we are seeing some decline in Maruti Suzuki as well. What we'll do is take your leave on this edition of Chartbusters, but the promise of continuing the market coverage forward with Trading On. Hello and welcome. You're watching us here on Trading Hour. We come to you live from the CNBC TV18 Motilal Oswal studio. I'm Mangalam Malu. With me as always, Hormas Vatakia and Ritu Singh joining in. The Nifty holding up in the green, but it's been the nature of the market so far. When it opens with a gap down, it sees some purchase, and when it opens with a gap up as it did today, it sees a bit of a sell-off. All in all, staying in this broad range of 23,800 to 24,300 thereabouts as well. The Nifty right now in green, but off highs with 2,000 stocks advancing. The broader market is doing a lot better today, and it is the Nifty Bank which is doing a lot better today. It was a top underperformer in yesterday's trading session, has bounced back. All in all, the pharmaceutical stocks stand out in today's trading session so far. And in just the last few minutes, we've seen a bit of a sell-off in the auto names post Hero MotoCorp's commentary coming in. That stock down about 5% from the highs, and with it, it's taken lower Eicher Motors and Maruti Suzuki as well. Hi Ritu, good morning.
Hi, morning Mangalam. Yes, markets very much in the green, but off their highs. The Bank Nifty doing relatively better today compared to what we saw yesterday. Trading with gains of almost 500 points. The broader markets you pointed out, they're also doing pretty well. The Midcap index is up by more than 1%. The Small Cap index as well, up almost 0.8%. So all around, we're seeing broad-based buying. The pharma pack is leading the rally. Then you have the PSU banks, which are doing well on the back of the ECLGS scheme being announced. The Realty Bank, auto stocks, all of that in the green for now. Yesterday you had the banks that were pressuring the frontline index. Today you have the banks supporting them. So HDFC, if you pull up the draggers and the gainers on the frontline index, the top pullers is HDFC Bank, followed by of course Airtel, ICICI Bank, M&M and others. Whereas the drag is coming in from L&T. The numbers there concerning the street: Reliance, Hindustan Unilever, and Titan. So that's as far as the setup goes. Let's go across to Hormas for individual movers and shakers.
The spotlight today is actually on the small cap index, and that's also because of the rebound that it has seen from the lows that it made in the month of March. In the month of March, the index had slipped up 15,000, and now today, after an almost 3,500 point reversal, today's high comes up to around 18,408. That's the high that it made in today's session, and that implies a 21.5% jump from the lows that it had seen on the 23rd of March, which is just around last month. But take a look at the rebound that the index has had. The 100 constituents since the 23rd of January, 96 stocks on the index have delivered positive returns, and only 4 of them have had negative returns so far. And look at the quantum of the rebound as well. There are 2 names that have delivered more than 50% returns since the 23rd of March. We'll talk about those in just a bit. There are 10 names that have delivered returns between 40 to 50%, 42 of them. So at least there is 80 stocks on the index that have gained anywhere between 10% to 50% since the lows of the 23rd of March. Now take a look at the best performing names since that time. Cohance Life Sciences has been on a tear ever since Umang Vohra was appointed as CEO. The stock is the best performer, 65% from the 23rd of March. Welspun Corp up 60, Ola Electric, Wockhardt, Deepak Fertilizers up anywhere between 45 to 50. But the extent of the sell-off has been such that even after this kind of rebound, Cohance is still 57% away from its 52-week highs. Ola Electric is 50% lower from its 52-week highs, and Deepak Fertilizers is 30% away from its 52-week highs. So take a look at the other names as well that have done well. Angel One, NetWeb Technologies, Garden Reed Shipbuilders, Newland Laboratories, Meesho, all of them have gained between 40 to 45%, and even those names are down anywhere between 10% to as much as 40% from their 52-week high levels. The extent of the sell-off, as I was mentioning, was such that even after this kind of rebound, there are only 2 stocks on the small cap index that are at a 52-week high. Natco Pharma is one of them, and there is another name that's at a 52-week high in this list. Now take a look at the underperformers. The 4 names that have had negative returns since the 23rd of March and have not participated in this rebound. MRPL, of course, because of the volatility in crude oil prices, 16% lower since then. Zensar Tech is down 4. Force Motors is doing well today, but has been an underperformer since that period. And IIFL Finance too has delivered negative returns or has not participated in this rally. Now the road ahead, the index may have seen a rebound, but the other important level for the index is 19,716, and that is the record high that it had hit on the 12th of December of 2024. And after this rebound, the small cap index is now 7% away from those levels. So an important spot to focus on the small caps. There has been a rebound, but yes, the stocks are still significantly away from their 52-week highs.
Take that point, Hormaz. Thanks a lot for that. So those are a bunch of these small cap stocks which have seen the biggest returns. And as we speak, a bunch of mid cap stocks doing extremely well as well. Pidilite reports its numbers tomorrow, currently at the high point of trade. Remember, overnight there has been a cool off in crude prices as well. So that's taken the stock price of Pidilite higher. And it's also taken some of these other paint names. Asian Paints were one to the high point of trade. But the gainers, the top gainers today in the banking space have been the public sector banks, and this because the government has approved an emergency credit line guarantee scheme, ECLGS as we know it, 5.0, to support businesses which include the likes of airlines which have been affected by the West Asia conflict. The scheme expected to cost the government about 18,000 crore rupees as per sources. Ritu, more on this.
Well, Manglam, it is a positive overall because it's a tailwind as far as credit growth is concerned and, of course, buffer against any kind of a stress buildup on account of what's happening in West Asia. So this is the ECLGS 5.0 scheme. This time around, it is, of course, specifically to target, businesses that might be affected because of the West Asia crisis. The targeted credit support is 2,55,000 crore rupees, which, as you mentioned, includes about 5,000 crores specifically earmarked for airlines. The scheme is going to be valid until the 31st of March next year. So it's not that immediately, borrowers will have to go running to banks. But keep in mind, this is only eligible for standard borrowers. That means accounts that are not NPAs, and therefore don't see it as any kind of a bailout for borrowers that may already be stressed. Now, in terms of the guarantee cover, effectively look at this as a risk transfer mechanism. So for MSMEs, the cover goes up to as high as 100% from the government, and for non-MSMEs and airlines, it is 90%. As far as how much additional credit they can demand, up to 20% of the peak working capital, capped at 100 crores for all borrowers. But for airlines, it can go up to 100% of the outstanding credit, but it will be capped at 1,500 crores per borrower. The key beneficiaries, of course, will be the likes of Air India and Indigo that are expected to partake in this scheme. Now, as far as the repayment tenor is concerned, it's 5 years with a 1-year moratorium for all borrowers. But for airlines, it goes up to, again, 7 years with a 2-year moratorium. Now, in terms of the impact, net, this is, of course, positive for banks and NBFCs, especially those that are MSME focused because they get a full backstop. There is, of course, the growth tailwind from loans, so banks don't really have to worry about asset quality pressures with the government, guaranteeing any kind of losses that will come in. The margins on these loans are typically lower because you don't really factor in any credit risk. Airlines, of course, will be the biggest beneficiaries. In terms of banks that have exposures to these airlines, IndusInd Bank, Bank of Baroda, Indian Bank, SBI, Yes Bank, all of these will benefit. And in terms of lenders that have the highest MSME exposed books, you have names like Axis Bank, IndusInd Bank, Yes Bank again, that stand to benefit. So that's as far as the ECLGS picture is concerned. Overall, net positive. But moving on, Hero Moto has erased some of the early gains. In fact, fallen sharply in the last hour or so, despite what was a decent show in the March quarter following cautious commentary coming in from the management on the road ahead. Let's go across to Sudarshan for more details on this one. Sudarshan.
So Hero MotoCorp is holding the analyst call after its Q4 FY26 earnings were in line or say slightly beat against our expectations. And commentary, if you can say in one line, it's not that bad. So first talking about the growth and the market share gain, company is saying it has gained market share in 100cc segment, 110cc segment, also in the EV segment as well as in the segment of 400 to 500cc in which they have the partnership with Harley Davidson. Now coming to the FY27 industry outlook for motorcycle as well as scooter. So industry outlook company is saying it will be in high single digit. The expectation was in the range of 5 to 6%. And at the same time, company is saying it will outperform the industry. So two segments, scooter will slightly outperform motorcycle, but both these segments will see high single-digit growth, much higher than what the expectations were. Now, why the stock has seen a sharp fall from days high? The commentary related to margin. So when the company was asked about the margin, will you be comfortable maintaining the margin band that you had set of 14 to 16%? So companies said it's committed to maintain the margin band of 14 to 16%, but there might be some pressure in the short term because of commodity price increase that we have been seeing over the last few months. Now, regarding the offsetting the commodity price increase, so far this year, company has taken price increase of 2%, but commodity price increase has been in high single digit and that might have an impact on the margin. In Q4, Hero MotoCorp has seen an improvement in the margin. But in the short term, there might be pressure. But it's understandable considering the West Asia war tensions that there might be some pressure on the margin. It's not something new. So commentary overall, I'll say it's more positive than negative, especially on the outlook front, because companies saying it will outperform the industry, and industry is expected to see high single-digit growth as far as FY27 is concerned.
That is possibly why the stock is trying to recover from the lows of the day. But of course, it is a very sharp knock that it has taken from levels of almost 5,300, now sub 5,000 is Hero MotoCorp. So at one point, the stock was down well over 3%, still trading with losses of around 2.25%. So Darshan, thank you for summarizing that for us. Take a short break, put the spotlights on the bond markets with Manisha Gupta on the other side.
Welcome back. You're watching us here on Trading Hour. As we speak, the Nifty has eradicated all its gains right now, or nearly all its gains. It's up only by about 50 odd points. And the biggest drags on the index right now, two of them. We do have L&T, which is down about 3%. But look at the intraday chart of Reliance. Reliance too has fallen about 2% from its highs. And as a result of which, it's the top among the top two draggers on the index. So had it not been for L&T and Reliance, we'd probably be higher in triple digits for the frontline index. Right now, the Nifty is just around that 24,100 mark, 56 points in terms of gains, and no real problems for the Nifty Bank, which is sitting still with a gain of 0.8%. But the impact of the ECLGS and the banking moves, does that emanate from the bond market or no? Manisha Gupta joins in with that update. Manisha.
It does, absolutely, and this has been covering it on retail length, so I will talk about other things right now. But you know, when you look at the overall markets therein, and we've seen the crude oil prices come down, rupees stabilized, equities are gaining. So we also have seen the bond yields are kind of opening slightly on the lower side, taking cues from all of these other market senses as well. Apart from that, when you look at the overall India corporate bond market, and there's a report that IMC released a couple of days ago, it suggests that there's a lot of upside that the corporate bond market in India perhaps could be looking at. At this point in time, we are just about 18% of the GDP. Take a look at the other Asian markets like a Malaysia or an Indonesia, South Korea, for example. They have 80 to 120% of their GDP as the corporate bond market therein. So there's a lot of upside that India perhaps can see. Also, when you look at the overall investors right now that are in the bond market, just as is at 80,000. Average bond tenure, when you look at that, is at 4.2 years. So there's a lot of upside, as I said, on the higher side when you look at the overall Indian bond market and especially the corporate bond market within there. The possibilities that India could be looking at by 2030, as per the reports, also suggest that the markets can perhaps double its depth from current 18% to 35% by then. Retail participation perhaps could be increased to 10 million. If you look at the bond tenure, that can be doubled to 8.5 years as well by 2030, which is just 4 years from now. A lot of work in any case is being done by exchanges, by the regulator as well. We've seen a lot of outreach programs being held and reports that have been coming in from government and private agencies. So when you look at the bond investment, at this point in time, it is at 10,000, can be reduced to perhaps 1,000 to ensure middle household income and retail come in more strongly. And then there is also a proposal of making a bond market development council. It has been in conversation for some time. Let's see how that works on. But other important update clearly comes in from Sammaan Capital Limited. And this is what they wrote to the regulated exchanges, by the way, that they're closing their offer to buy back onto the $45 million of senior secured social bonds with a coupon rate of around 7.5%. It also says in the press release that 45.07 million has been paid in the tender offer, and aggregate principal amount of the bond outstanding at this point in time stands at around $405 million. So an important update coming in from Sammaan Capital there.
All right, Manisha, we'll leave it at that. Thanks very much for joining in. We'll slip into a short break on that note, but when we return, we're going to be joined by Rishi Anand, who's the MD and CEO of Aadhar Housing Finance, to discuss the quarter gone by and the way ahead. Welcome back. Let's put focus on Aadhar Housing Finance. Its fourth quarter numbers saw a marginal beat at the operating level, with asset quality showing an improvement, even as assets under management and disbursement growth both remained healthy. Let's bring in the MD and CEO of the company, Rishi Anand, for more on the way ahead. Rishi, thanks very much for your time here. You know, you've crossed 30,000 crores in AUM and you're targeting 50,000 crores by FY29, 20% plus kind of a profit growth guidance. You know, to begin with, give us a sense of what will be the major contributors. Your home loan segment, of course, remains core. That's 70% of the book. How do you expect this mix to change and what will be the key drivers?
Great. Thank you so much, Ritu, for having me. Yes, you're right. Key milestone of 30,000 crores has been achieved. That's how we started our current financial year, the financial year in question. We wanted this milestone to be achieved. We crossed that milestone achieving 30,571 crores of AUM, which is a 20% growth. We've recorded a 20% growth on profits. GNPA is at 1.08%, well below the guidance number, which was 1.1%. So overall, a happy situation to be in. All the guidance numbers have been met. With regards to your question on where will the growth come from, are we targeting 50,000 crores? Even if I put a guidance number of 20% AUM, 20 to 22% AUM growth, 3 years hence we should be a 50,000 crore company. And you're right, in terms of home loans to non-home loans, we have always been a 70-30 book. We would want to maintain that because we are guided, we are a regulated company by RBI, and the regulation clearly spells out that the PBC, which is principal business criteria, has to be broadly 70-30 because it is 60% on balance sheet. So home loan is always going to be 70%. A LAP, loan against property, will be 30%. Where is this growth going to come from? We clearly see a lot of traction happening in tier 2, tier 3 cities, right from all the government projects under PMAY, whether it is BNC, whether it is PMAY, and multiple other initiatives.
Briefly, LAP, Rishi, I mean, you in your commentary, you said you had intentionally calibrated the growth on that front in the first half because of the stress that you were, foreseeing. How is that book settled? When do you expect it to pick up? If I even look at your bounce rates, they've been more or less steady in the last 6 months. Are you seeing any early signs of stress on account of this? Also, with what's happening in West Asia?
Okay, yes, you're right, Ritu. We had taken an internal decision of looking at the portfolio closely, and even in incremental loan against property business. But all the worries keeping aside, and you're right, the first line of defense for us is always the bounce rates. They've been steady state. We have not seen any stress coming in. And here on Q2 onwards, I don't see an issue why we can't jump back to about 25-30% incremental loan against property. As regards West Asia, the good part is that I cater to a book which is low income segment. Where is the impact going to be is typically, NRI loans, etc. Fortunately for us, we don't do NRI loans because our consumers are not NRIs. And our consumers are more essential commodity, consumers. We have not seen any as I indicated, first line of defense being bounce rates. They have not, jumped anywhere. Last 6 quarters, our bounce rates have been steady state. So we are not seeing any stress coming from West Asia crisis as we speak.
Right. I just wanted your thoughts on the margins, and this for 2 particular reasons. One, on the one hand, your exit cost of borrowing stands at about 7.7%. You believe that it has stabilized out here. But on the other, you also expect the self-employed segment to increase, by share by 1.5% annually. And I believe that would also be a higher yielding asset for you. So in light of both these factors, and obviously, the way you are improving your business going ahead, what are the kind of NIMs that we should target, and what should your overall portfolio yield look like as we move forward?
So Mangalam, if you recall our previous conversations, I've always maintained a stand that as an organization, we'll be, a NIM of 8.5% upward. In the financial year in question, we have a NIM of 9.18%. Self-employed, by design, we are increasing a percentage every year. It is purely from a sustaining perspective. The larger cities in the country, which is typically the urban cities, are definitely, and as we move ahead, we'll also see some thinning of margins. But that's where self-employed comes in. That's where LAP comes in. That's where tier 2, tier 3 comes in, purely from a perspective of balancing out.
All right. And to be able to service the tier 2, tier 3 sort of customers and increase your penetration out there, what's your expansion plan, and how does that tie in with your cost to income plan?
Yeah, okay, so Mangalam, as indicated even last time, we've said that every year we will keep adding about 40 to 50 branches. The year in question, we've added about 46 branches, and all the branches that I talk about, they come typically in the tier 2, tier 3, or internally we call them emerging locations. So that's where the real expansion is coming from. And even as we go ahead, at least for the short to medium term, which is 0 to 3 years from now, we will keep adding about 30 to 50 branches year-on-year basis. Ours is a business of branch network. Today, as we stand, we are at about 626 branches spread across 22 states, catering to about 550 plus districts. And we will continue this momentum by adding about 40 to 50 branches year-on-year.
What about asset quality, Rishi? There was an improvement this time around, especially in the 1+ days past due category. Do you see this as an improving collection trend on ground, or was this just seasonality that contributed to this improvement and these were just temporary factors?
So Harmaz, the way it works is, yes, in terms of asset quality, we get at 1.08. The guidance was 1.1, so obviously the good part is at Aadhaar, we manage collections 100%, right? From fresh loans collections to property and the auction of property, everything is done in-house. So we have hands-on approach. 2 years back, we internally guided our teams to start looking at 1+ numbers, and that's the impact, the ground impact of looking at watching 1+ numbers closely, because a bulging 6190 always creates a problem in the entire system as a process. So keeping that in mind, it has been a concentrated effort of the team to keep the 1+ number. Yes, right. There has been an improvement in 1+ numbers, as well as with our stage 3, which is NPA under control.
Much for sparing time and joining us today. Wish you good luck for FY27 as well. The management there of Aadhaar Housing Finance, the stock down around 2%, around about the mark of 506.5. But the indices are off the highs of the day. Still holding on to gains of around 50-60 points. But after the gap up that we had, there's been some selling pressure that has come in at higher levels. Mangalam has hopped over to the FNO desk to tell us what are the trends emerging from that space. Mangalam.
Well, the Nifty is fulcrumed around that 24,100 mark. That seems to be the order of the day so far. From highs, it's off, but from lows, it's off as well, sitting with a gain of about 70 points. What's leading it higher is the Nifty Bank, and the Midcap index tells you that there is support at low levels, which is why it is outperforming. But the indices which are, pulling the market in different directions, the Nifty Pharmaceutical Index is up around 1.9%, but the Auto Index, if you look at specifically the two-wheelers, they're off highs, and that's what we've seen with, the names like Maruti, etc. as well. And if you look at the individual stocks, two stand out in particular. We have L&T and Reliance. Both of them are dragging the index. Alongside that, we are seeing some support which have come by from all the private sector banks. The Nifty is finding support at its 50-day moving average, which is why at lower levels, every time it moves around that 24,050, 24,060 mark, we see a bounce back around 24,100. That's where the fulcrum is. The Nifty Bank, on the other hand, is facing resistance at the 20-day moving average, not just today, but for the last many days. Even if it is outperforming right now, today's high, 55,344, whereas the 20-day moving average, just 200 points from there, 55,558. So crossing the 20-day moving average will be an important mark for the Nifty Bank. Active Nifty options, because I said it's fulcrumed around the 24,100 mark, the 24,200 call and the 24,100 put, both of them extremely active. These are options that expire next Tuesday. So 24,200 call has a premium of almost 150, 165 rupees. Around 24,365 to 24,400 is where they expect some sort of resistance to come by. But at lower levels, 24,100 put writers are hoping for some support to come around 23,900. So in effect, again, the range that we've been speaking about, 23,850 to about 24,250 to 24,300 is what the market is positioned for.
All right. Good time to bring in Pritesh Mehta from Yes Securities, who joins us for a quick technical check of the market. Pritesh, you just heard as well. And, for the frontline index, for the Bank Nifty, it's been a very narrow range of trade we've seen in the last few days. What are the near-term targets on the frontline index you're working with, and any particular stocks you'd like to call out?
Yeah, good morning. Thanks for having me. Now, see, what we are seeing last few days are contrasting, days sessions of market. Yesterday, on Monday itself, we had a gap up start, and they failed to sustain at the peak. Tuesday, yesterday session, we in fact, gap down opening, we moved higher, closed marginally lower. So I think this theme is going to continue. This is going to be a new norm, because on a broader structure, if you look at the index, 24,700 would be the resistance, 25,300 would be the downside support for the market. And I think we're going to spend most of the time within this range. And other focus on index or index stocks, I think majority of the action is taking place in the broader markets. mid-cap and small-cap space to be in. And I think the outperformance of these broader markets for last 1 month is going to continue, maybe for next 2 months also. So I think rather than focus on index stocks, Bank Nifty is not doing anything, financials are not participating, select top-tier Nifty heavyweight index that is not doing anything. So I think focus should be on the broader markets.
What about specific stocks then, Pritesh?
So the first one that we like is Motilal Oswal. Now see, capital market index has given a fresh turtle breakout on the pointer figure chart. Within this space, Motilal has not yet shown signs of outperformance against the capital market index, but it is now creating a base where what we have seen is a bullish anchor follow through coming in. So from here on, we can see rally towards 1,000 levels in Motilal Oswal. Another stock that we like is CG Power. Recently, the stock has sharp rally from 740 to 830. Thereafter, it went to a bit of consolidation. That is showing signs of resumption of previous uptrend. So a move was 980, 990 is possible for CG Power.
Pritesh, thank you for sparing time and joining us today to views on the index and on specific stocks as well. We'll take a short break. Just as we do that, a quick programming reminder. We are proud to bring HSBC Presents CNBC TV 18 Future Female Forward Season 4 to Mumbai with the Mumbai Gala, a powerful celebration of equity and leadership. The top industry leaders come together for a dynamic town hall shaping the narrative of New India alongside curated cultural performances that reflect the spirit of the city. The evening will also spotlight our continued commitment to empowering female micro-entrepreneurs through a dedicated advisory initiative driving meaningful impact through the year. Tune in later this evening, 5 p.m. onwards, only on CNBC TV 18. A short break. Varun Lochap from HDFC Securities joins in on the other side to talk more on markets. Stay tuned.
Welcome back. You're watching Trading Hour. Markets, lower than when we started, continuing to be about 75 points in the green. 24,104 is where we're at on the frontline index. Let's bring in Varun Lochap from HDFC Securities to discuss market fundamentals and his top sectoral picks. Varun, thanks very much for being here. Last time we spoke, I think a couple of months back, you were speaking about how you're overweight on financials. Just a quick thought on this new development that's come in with regards to the ECLGS scheme. Near term positive, and do you think again it'll be the large public sector banks that corner the market, or will we see more active participation from NBFCs and therefore some near term positive on that front as well?
Yeah, I think financial still looks like a good sector to us. Though we had taken some money off in our model portfolio, at the start of the year, given they had a strong outperformance last year vis-a-vis a lot of the other sectors. But still both banks and NBFCs. But what we are seeing is, the smaller sized banks are reporting a much improved profitability on a YOY basis, given, credit costs are coming down for some of them. Vis-a-vis what was the case last year, whereas large banks continue to be steady and NBFCs continue to do well. So, we continue to like NBFCs across, market cap. In fact, the large ones, both Bajaj Finance and Chola are also rated by, we have a positive rating. Similarly, even Shriram Finance, we have a positive rating. So NBFCs look okay. It's just that valuations, you have to be, I think the upside left in some of these names may not be very high given the valuations, but I think financial still looks like a good space to be in from a 12-month perspective.
But Varun, overall, from a sectoral point of view, given the recent developments, the war, of course, dragging oil on, huge volatility in oil prices and the rupee on daily basis, and what you've seen from the results so far, any changes in sectoral allocations? The last time, again, you told us you were underweight on, consumer staples, on IT. I think you'd also trimmed your position in metals. Overall, any changes made also on account of, what we've seen from the state elections?
One is overall, we are getting more constructive on the markets. First time in 2 years, we are seeing, risk reward sort of attractive at individual stock level as well as, at a Nifty level after a long time. So that is the backdrop. In that context, and we believe, right now it's still a fairly narrow rally with only, few sectors like power, industrials and metals sort of driving it. But we believe some of the other large sectors where FIIs have been continuous sellers will also start participating in the up move in the second half of this financial year. So, that's where financials, IT, even real estate, we have turned positive and we have added some names in this correction. Some of the consumer discretionary names, consumer, as you rightly said, we have been huge underweight for last, actually 5 years now, but we have cut our underweight and we have added. Similarly, IT, we have gone from underweight to neutral. So, we are seeing good risk reward across the large sectors because of continuous FII selling and some of the, small and mid cap sectors, have been doing well. In fact, of the 80 companies in our coverage universe which have reported so far, we have seen a 20% YOY PAT growth. Now, obviously, we know that Q1 and Q2 will see the most of the impact of the war, and this number will come down. But still, to 12% earning growth for next should look to add into more sectors and stocks, in this phase of market consolidation.
So does a similar favorable risk reward look to you for the chemicals sector as well? We are seeing some lines from SRF from their earnings call, and although their sales to West Asia have been impacted, they have been able to diversify to other markets. The stock has also moved to the highs of the day now. 7.5% higher is SRF. Varun, you saw numbers from SRF yesterday, from Aarti Industries as well, but this entire specialty chemical space is such a broad one, with every company having a different USP of their own, be it Naveen Fluorine or SRF or the others. Where does your preference lie within this space?
Yeah, so chemicals is again one of the sectors where we have incrementally turning positive after 2 years of not being so positive, given largely where valuations had gone to in chemical sector. I think chemical again as a sector aggregate, you might see some earnings hit in Q1 and Q2, because especially raw materials for a lot of them are crude linked, and we have seen spikes out there. And again, it's very bottom up sector depending on which stock and whether the output pricing has got impacted or whether the input pricing has gotten impacted. So the stocks which we like in broader chemicals is one, SRF. Then we continue to like Neogen Chemicals, which is one of our preferred bets. The alkyl amines, like the amine side, we are still not so positive given, where we believe earnings will be. But Aarti also, we believe, numbers were pretty good and things will improve from here on. So quite a few sectors. Ether, we continue to be positive on Ether industry. So these are some of the topics.
Interesting. What about the other sector, which has been the automobile space, and the numbers from M&M yesterday? You're hearing some cautious commentary coming in from Hero, but they are also confident that they will outperform the industry this time around. And you saw some decent numbers from Maruti as well. But with the concerns that are emerging right now, there is a possible fuel price hike that is likely, although the government keeps saying that there is no such plan. Yes, but there is a fear that this might happen. Input costs are going up. Production also is in focus as well. But so within this two-wheeler space or within the automobile space, passenger vehicles, commercial vehicles, tractors, where are you betting on?
So actually, automobiles is one sector where we have actually taken some money off the table. So, we were overweight, in automobiles, and we are actually cutting our weight in automobiles. Numbers are still decent on the volume side, but we believe, as second half comes in, those numbers will start to taper off on a YOY basis. Next 2 quarters is going to be tough from a margin perspective, given how metal prices have moved. And where we expect margins to come through. So in that context, names like Maruti and most of the four-wheelers we are avoiding, even two-wheelers we are avoiding, except for the EV play, Ather Energy, which is our top pick in the two-wheeler space and overall auto space. So I think auto slightly cautious. We are moving to some of the other consumer discretionary and staple names in the broader model portfolio, and funding that out of, taking some money off the auto sector.
All right, taking some money out of the auto sector and putting it into consumer discretionary and staples. Always a good conversation with you, Varun. Out of time, not out of questions. What we'll do is we'll take a short break. On the other side, since Varun spoke about staples, the biggest of them all, we have the ITC chairman and MD, Sanjeev Puri. We'll get you excerpts of that conversation with Sanjeev Puri.
Welcome back. Still around 50 odd points higher on the index, still continuing to hold on or hover around that 24,100 mark. But on to an exclusive conversation that Shireen Bhan had with ITC's Sanjeev Puri, where he spoke about the taxation, the price hikes, and including the cigarettes business as well. He also said that the group will invest 20,000 crore rupees for capital expansion over the next 4 to 5 years. Listen in.
the input cost side and the kind of pressure that you are seeing. And if I were to look at the commentary that's come in from your peers, for instance, HUL, they've taken a 2 to 5% price hike versus an 8 to 10% inflation in raw material that they're witnessing. What is it like for you in terms of the input cost pressure? And have you already taken some price hikes, and what can we expect on that front?
Well, we have done some marginal increases where it is relevant. Our idea is always to see how we can manage the cost through internal efficiencies and then only pass it on to the consumers. There is inflation on account of anything to do with petrochemicals, which is really the packaging material, and there is the oils also, the oil for manufacturing. That is also inflationary. So these are the two items that are really inflationary, and it's impacting cost in the FMCG side. And of course, in paper, etc., there are chemicals and so on and so forth that are impacting. So some correction has already happened in all of the segments, and depending on how it pans out, we will have to see and take some action. Yeah.
And react to that. So what would be the pressure at this point, in the range of 8 to 10%, as we heard from HUL, or?
No, it would be lower for us. It would be lower. I won't give you a figure because, there are so many different sectors, sure, but it's not to that degree. It's not to that degree.
Not to that degree. What does all of this mean now in terms of volume growth, and what is the expectation as far as FMCG volume growth in specific is concerned?
So we are seeing that, after all the measures that the government had taken, be it income tax, be it the GST rationalization, and then food inflation has been benign, and there's a cumulative effect of the pickup of the public investments that had kind of, slowed down some time back. Now they have gathered pace. So all of this is in fact giving buoyancy to consumption. Consumption has improved. There is better volume growth than the past. I won't give you the specifics because, we are near the, quarter for this, but as a trend, and that's the
10 to 12% kind of growth?
No, I won't give you any figures right now because, but trends have improved, which is the commentary we gave also in the last quarter, and you're hearing it from some other companies as well. Things have improved, and we are not seeing anything immediately that is kind of dampening this at the moment, but we'll have to watch and see because it's still early days. The price increases have not really gone into or gone into the market in a limited way. The impact of some of the inflationary item may not have as yet got transmitted, may get transmitted with a lag. So we'll have to watch. But it is something that we need to monitor.
But, I just want to understand from you now in terms of what next as far as FMCG is concerned. I mean, you've got your next strategy laid out in terms of the pillars that you intend to focus on. But what can we expect, which are measures on the anvil?
So let's put it this way. I think all of this is really a journey. It's really a journey. And, you referred to the ITC Next strategy. So since the time we started, we have gone from about 10,000 to 22,000 crores. We also said that we will improve margins by about 1% every year. So by and large, in fact, at an aggregate level, we have done it. There have been years where, because of serious inflationary pressures, it wasn't so. But medium term, if you look at it, yes, that's a trend that we have delivered. So having said that, I think the journey is still, there's a lot more to be covered in the journey. Whilst our, the core brands we said have scaled up, have all got, substantial size over time. A lot of adjacencies have been covered. If you look at, brand like Ashirwad, which started as an atta brand. Now from atta, it's gone into vermicelli, besan, salt, spices, so on and so forth. And it's a continuous expansion that we're seeing. Strong center of plate brand, just as an example. So, but there's a lot of headroom to grow because the addressable market in the FMCG portfolio that we have built is actually in the next few years, the size will be 7 lakh crores.
Overall investments, if I were to ask you on the back of the investments that you're making in agri, but also the other investments that you're looking at, what would the CapEx number be for the coming year?
Yeah, for the group, 1 year is, CapEx investments tend to be lumpy.
Sure.
It's not that it's linear. So we'll really look at it in medium term. Medium term, we're talking about 20,000 crores for the group.
20,000 crores, and medium term would mean what, 2 to 3 years?
4 or 5 years.
4 or 5 years.
Yeah.
So 20,000 crores over the next 4 to 5 years.
Yeah.
Let's also talk about the cigarette business, because that's seen a regulatory impact on account of the tax incidence. In fact, the tax incidence has been quite high. What is the outlook as far as volume growth is concerned, and how much have you been able to absorb? How much have you been able to pass on?
If you look at it in India, already it's just about 10% of the tobacco consumption in India accounts for 80% of the taxes. So therefore, it's many times taxed than other products. Our taxes are about 14 times on a per capita GDP basis higher than countries like the US. Right? So that's just to give you data on the intensity of the taxation. Illicit is equal to 1/3 of the legal industry. So that's the magnitude. So that's the concern that all of us have, that every time the taxes go up, it gives a fillip. And this is what worries us. That's what worries the industry. So the view we have, the way that we are approaching it at least, is that if we passed on, we have to ultimately, the tax increase is massive, we have to pass it on. There is no question of absorbing it. But if we were to do it at a single stroke, then it probably can lead to a larger shift to illicit. So we want to stagger it up. So we are staggering it up so that...
How much have you already taken?
We've taken about, I think, 50-60% of it, something like that. It's ongoing. You see, it's ongoing. I don't have an exact figure. It's ongoing. And some more will happen with passage. Ultimately, we have to pass on the whole thing. And we're just cushioning it so that we can retain as much volume as is required.
So hard to give an outlook as far as volume growth is concerned at this point in time.
It will definitely, volume will shift to illicit. So in the short term, I think there's no question of growth of volume. Volume growth happens, legal industry regains volume clawbacks from illicit industry when there's stability in taxation. Whenever taxation increases, volume shifts to illicit. So therefore,
there will be an impact.
There will be an impact. Volume there will be degrowth. The question is, what degree of degrowth? Right? What degree of degrowth of the volumes? That's the only question to be answered, right? And past experience has shown that it does happen.
Yeah.
Volumes degrow.
You're watching us here on Trading Hour. The Nifty is holding around the 24,100 mark. Let's talk about some earnings. Sudarshan joins in for a quick preview on what the street is expecting from Bajaj Auto.
So for Bajaj Auto, like all the other two-wheeler names, we are expecting a strong set of earnings here. Also, company has reported strong volumes, not only for two-wheelers, even for the three-wheelers. Three-wheelers, especially on the export front, had seen volume growth of almost 39%. That is going to aid margins significantly. And besides the volume growth, what is going to impact positively for Bajaj Auto is the currency move. We have seen a sharp depreciation in rupee against US dollar, and that is going to have a positive impact on the margin as well as the realization for Bajaj Auto. Talking about the headline numbers, profit is seen rising 28%, revenue may see an increase of 29%, and EBITDA too can see a jump of 31%. It can come at rupees 3,200 crore versus 2,450 crore in the same quarter last year. On the margin front, like Hero Moto, Bajaj Auto too can see an improvement in the margin on YOY basis. For Q4, margin can come in at 20.5% versus 20.2%. It would be fourth straight quarter for Bajaj Auto to hold the margin above 20% levels. So as I told you, volumes overall were up 24% YOY and were up 2% on a sequential basis. Realization is expected to increase 4% year-on-year and also 1% on a sequential basis. Now, going forward, what exactly in the commentary that we will be watching out for? And also, besides the earning, company will also be announcing the share buyback. Now, in the commentary, one thing on the export front. Now, in the backdrop of West Asia war, what exactly the outlook for the export front? Domestic, we have got the commentary from Hero Moto of high single digits. Let's see what exactly Bajaj Auto talks about, and also about the new launches. As far as the earnings are concerned, it's going to be a strong set.
All right, a strong set it'll be. Sudarshan, thanks very much for bringing us that. It's time to get you the macro signals of the day. For the markets, they've recovered from the lows, still in the green now. You have the frontline index at about 24,109 as we speak. The rupee, though, it has recovered from the all-time low that we saw yesterday of about 95.39, currently at about 95.14. That's where we're seeing the rupee levels. It has stabilized slightly from those lows, but it is still under pressure. Remember, RBI has been intervening to prevent the breach of that psychological significant level, which is about 95.50. In 2026 so far, though all said, rupee has weakened by about 6% and by more than 12% in the last 12 months. Oil prices, meanwhile, they've fallen today following the developments and what's happening with Iran. There was a temporary pause on Project Freedom, and US President Donald Trump also signaling great progress towards a peace deal with Iran. Now, despite the pullback, prices are still about 73 to 77% higher than they were a year ago, continuing to pressure global inflation as well. The 10-year yield, though, there's some good news there. It is open slightly lower, trading at about 6.98 as we speak. That's a 3 basis point softening compared to yesterday's close. The primary driver for that dip, of course, is a decline in oil prices that we're seeing. But also keep in mind, importantly, the market is bracing for a fresh auction of a new 10-year benchmark. That'll be worth 34,000 crores scheduled for later this week. So that is something that the markets, of course, will take the biggest cues from. And analysts expect that coupon rate for the new paper to be above 7% for the very first time in at least 2 years. So that's the macro setup at this hour. We'll take your leave on this edition of Trading Hour. From Manglam, Hormaz and me, it's a goodbye, but stay with us. Halftime report will be up next shortly.
Trump hints at a deal with Iran, sparking a rally in the global markets and in India. Midcap see a surge with realty, healthcare and financials leading the charge, while utilities and industrial sulk.
Indigo climbs after the cabinet clears a credit guarantee scheme for West Asia crisis-affected businesses with a special carve-out for airlines. Each airline can raise up to 1,500 crore rupees via a 7-year loan with a 2-year moratorium.
L&T slides after posting a weaker than expected Q4 and guiding for a subdued first half of FY27, while its order book remains strong. Margin pressure on fixed price contracts due to input cost inflation makes investors cautious.
Aditya Birla Group Chairman has assumed the role of a non-executive chairman of Vodafone Idea after stepping down in August 2021. His resuming the role lifts investor confidence, boosting the stock.
Chairman Sanjeev Puri says ITC will invest 20,000 crore rupees on capex in the next 4 to 5 years. He also points to niche opportunities via newer channels and adds that the tax on cigarettes will be passed on but cushioned to protect volumes.
Hello and welcome to Halftime Report live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Batra. With me is Sonal Putra and Vinny Motiwala. Well, it is turning out to be a session where the Nifty is just about hovering at around 24,000 at this point in time. We have the Midcap index, which is doing better in today's trading session, so up around 1.2% currently for the Midcap index, with the advanced decline ratio in positive terrain. What stands out sectorally is not only the Bank Nifty, which is up around 6%, but it is the entire pharmaceutical and healthcare space which is doing well today. So pharma and healthcare stocks are really leading in today's trading session. The Nifty Pharma Index itself is the top gainer today on the Nifty within the sectors. And we have the BSE Healthcare Index, which is up around 1.7% as well. So a lot of stocks buzzing around from the likes of Cohance, Wockhardt to Ajanta Pharma. We'll be discussing all that and more in the next 60-odd minutes. Hi.
Hey girls, it's a power-packed day. We have so much news inflow that is coming in, conversations, and a lot of earnings reaction as well. SRF, by the way, post the con call, has seen a big surge. The stock is up 8%, positive commentary. Of course, they are also seeing issues that the entire industry is talking about, raw material issues, forex losses. But the stock is up 8%. We'll discuss what the management said on the call. It was a positive commentary, and that is something that the street is liking. But Winnie, it's all about individual names today and what's happening with West Asia war.
Absolutely, individual names, what's happening with West Asia war. We'll talk about all of that through the show as well. And let's talk about the lineup that we have for you all on the show today. On that note, we'll be putting the spotlight on the earnings in our What's Trending segment and talk to the management of Raymond Realty as well as Marico through the show. And in our Movers and Shakers segment, then we'll put the center stage on Hero Moto, SRF, Cohance as well as Wockhardt, which are moving around in the training session. In our commodities corner segment, we'll have Manisha, who will be speaking with Dalmia Bharat Sugar's Kapil Nima. So stay tuned in for that chat as well.
Okay, all right. That is what we have on the show today. So let's begin with an earnings conversation now. Raymond Realty reported strong pre-sales growth on a sequential basis. Their Q4 collections were up 20%, and on FY26 basis, they have reported pre-sales growth of 30%. Harmohan H. Sahani, who is the Managing Director and CEO of the company, is joining us now to take a few questions about the outlook of the business going forward. Mr. Sahani, good afternoon. Thank you so much for joining in. It's a 30% growth in pre-sales that you have seen this time around. Is this a momentum you will continue in FY27 as well? What are the macros like for demand for yourself and the industry overall?
Thank you for having me. It's a pleasure to be on the show as always. And yes, you're right. We've had a great year, which we ended 31st March. We've seen a growth of 30-odd%, 31% on pre-sales numbers. Even on the top line, as far as turnover is concerned, we've seen a growth of 29%. Bottom line also has grown by 11%. PAT is up as compared to last year. Q4 has been extremely good and healthy for us. So the demand remains strong for all our projects. And you mentioned about macros and what the industry looks like. I think we are continuing the same momentum in the month of April also. And April looks quite good in terms of demand and offtake of sales. So the same momentum is continuing, even though traditionally Q1 is not as strong as Q4 for our industry, because this is the holiday season, and a lot of people actually go on holidays and they're not in the mood to buy homes, they're more in the mood to holiday. But this year we've seen strong offtake continuing, so I think Q1 also we will have good momentum going. And as for the year is concerned, our outlook remains strong. We are looking at, on pre-sales, we are looking at a minimum 20% growth. And we are expecting that it could creep as high as 30% for all our projects, because the projects will start to mature, which we have launched in Q4.
All right. Mr. Sani, that's interesting that you say that, because it doesn't seem as though there's any kind of impact when it comes to demand for any of your projects, with regards to the external factors such as the West Asia war. There's no impact really which is weighing in on demand at this point in time, neither the rupee depreciating.
So the rupee depreciating actually will have a positive impact in terms of people who are overseas who want to buy. While that is not a large part of the market, what we are witnessing this time around in this cycle, it's predominantly has been actual user driven. Almost 80-85% of all our sales for the last 3 years and even now continue to be actual user driven. And as far as the war is concerned, yes, the war definitely has an impact on the sentiment as well as the wealth effect which is there. But the way sales moves is that there is always a pipeline of buyers that you have, and some of them are at advanced stage, some of them are just exploring or beginning at that point in time. And people who are starting out will probably take longer to decide. So as of now, we are not seeing any significant impact in that. Yes, maybe people are taking a slightly longer to decide when they are buying homes, because they will need at least 20-30% equity if they are deciding to take a loan on their property. And it may, timing wise, it may not be great because the stock markets the way they are. But but there is a strong pipeline which helps.
Absolutely, a strong pipeline will help. But Mr. Sani, there's one more point I want to understand on is in terms of collections, right? Pending collections around 4,000 crores from unsold inventories. And overall, the estimated value of the unsold inventories is around 14,000 crores. How quickly do you see this turning around into collections? When do you think these, that you will be able to realize this pending 4,000 crores as well?
So all the sales which are there are all construction-linked payment plans. And as the construction progresses, this liquidation of the outstandings will keep on happening. So for most of our projects, some of them are getting completed in this year itself. Some of them will get completed 2 years from now. Some will get completed 4 years from now. So whatever sales we have done so far will get liquidated over a 4-year period. Depending on which project, how much gets liquidated will depend on that. So it's difficult to just generalize in that sense. Yeah.
So, Mr. Sani, if you can leave us with what is the pipeline, if you can give us a volume of the pipeline that you have in place for FY27, FY28, what is the revenue potential from that we'll see, and what does it do to your capex and debt, because you are looking at a lot of launches in Thane, be it in Mumbai, in the luxury segment.
So if we look at our pipeline in terms of new projects, we have already launched quite a few projects in the last year. In current year, we are looking at launching minimum 4 projects that will get launched. And out of that, 1 probably will be in Thane, and 3 we are looking to launch outside. Definitely 2 projects will get launched because they are at a very advanced stage and they will happen somewhere around Q2 and Q3. And 1 project most likely in Q4 will happen. And Thane project should launch in Q2 sometime. As far as debt is concerned, we are at a very healthy debt equity level. As of now, we ended the year at 0.6 on a gross debt basis. On a net debt basis, we are somewhere around 0.35, 0.4. And we are sitting on a significant amount of cash going forward. So it leaves us in a very safe space. I don't see any concern as far as debt is concerned. We have, in any case, undertaken and promised the markets that we will not go beyond 1:1 debt equity. And we have many other avenues of raising funds as well, because there are PE funds which are available who are wanting to invest with us, looking at our track record of early completion that we have and how quickly we turn around projects is something which the PE funds have really liked.
Okay, all right. Fair enough, Mr. Sahni. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Raymond Realty. That stock is zoomed today and post its numbers, so up around 14.6% currently for Raymond Realty. But if you compare it to its 52-week high, it's still quite a distance away, which stands at over 1,000 odd rupees in terms of a 52-week high. But doing well today, reacting to its Q4 numbers and guidance. We'll take a short break, but we'll connect with the management of Marico to discuss their Q4 numbers. Stay tuned.
Welcome back. You're still tuned into Halftime Report. A lot of moving parts in the broader markets. Nifty Pharma continues to edge higher. We do have the Midcap index as well, which is doing well as we speak. But the Nifty has come off from the highs. It is up around 50 odd points, but that's a substantial slip from the highs of the day. But the Midcaps continue to outperform. The IT pack, that is also on our radar, that is in the green today. But do remember that has been an underperformer for a while. Overall, if we look at individual stocks, a lot of action in the realty space. We just spoke to Raymond Realty. That stock is up around 14%. SRF is the other one, up around 8%. L&T is also reacting to its earnings as we speak. So that is something we'll be discussing through the course of the show as well. But it's time for another earnings conversation that we'll be having now. Marico's revenue growth and EBITDA margins held up in the fourth quarter. They also reported a double-digit growth in operating performance. My colleague Mangalam spoke to MD and CEO Shaugata Gupta and started off by asking about demand and the raw material environment amid the West Asia crisis. Listen to a slice of that conversation.
Demand, if you look at our demand situation in the sector and if you look at the results of most of the companies, the second half we have seen an acceleration in demand, a period of low inflation combined with the GST rationalization that has driven affordability and bridged the gap between unorganized and organized is good for the sector. I think the government has done a fantastic job in cushioning the input cost inflation so far. So we aren't seeing any significant impact on demand, and we believe that this is going to be a decent year. As far as the input cost issues are concerned, we are uniquely positioned. If I look at it, copra is 50% of our input cost basket. That's around 30% down. Crude related is only 20% of our basket. So therefore, net, even if crude related is a 50% hike, we are still positive. So I think we are in a unique position. Secondly, I think we compete with a lot of smaller players, and that's the same case with a lot of larger incumbents. Their ability to confront supply chain challenges, working capital and others during this heightened inflation will be much lower than some of the larger players. And we also have, especially in our core, a lot of smaller players. So I think we are fairly okay. And that gives us the comfort of, saying that we should be able to continue to deliver double-digit revenue growth, moving into a 15,000 crore plus revenue, which will be a fastest for many companies, amongst many companies, the sector hitting 10 to 15 in 2 years, and also delivering a high teens kind of a EBITDA growth in this year.
10 to 15 in 2 years and 10 to 20 in 5 years. Saugata, you've always promised, industry-leading growth, and that's what you reported. But, on the demand front, you did say that the government has cushioned a lot of the raw material inflation, and as a result of which it wasn't passed on. A large part of that could also be attributed to the fact that there were a lot of state elections. Now that they are behind and the next 10 months have no major elections, do you think that could be a bit of a risk? And also, the outlook on monsoon isn't very positive. So do you think that could prove a bit of a risk on demand?
I think inflation and El Nino is a watch outs, but I just want to again reinforce the fact that because we operate in a lot of emerging markets, compared to a lot of them, India is in a very, very good position. I think ability to absorb in terms of the overall domestic demand situation. So I think, as Anais said, that being an organized player, if you look at the COVID years or Ukraine and compared, for specifically Marico last year, where we had a 100% increase in input costs for copra, we still delivered, in the second half double-digit EBITDA growth. So yes, it is a watch out, but not a major concern.
Right. What can you, guide for when it comes to volume growth across your categories? At a company level, you've given high single-digit volume growth target for FY27. But if you look at, some of the categories, value-added hair oils has come back very smartly. Parachute has still not come back to positive volume trajectory. And we do have Saffola as well, which has, its own mixed moves. So on a category basis, what's the kind of targets that you have for this year?
Come back to growth, which is the, low to mid single digit growth is something which we are poised to deliver over the medium term. Saffola is something which we are consciously aware of the fact that we would like to operate with a threshold level of margin and focus only on the premium part of Saffola, which is Saffola Gold Total. And we believe that cold press oil is a big bet. It's a growing trend. I think value-added hair oils, we're pretty confident of continuing to deliver double-digit growth. And I think the other part of the portfolio, which is foods and digital business, going to 20 to 25%. So that is the construct, and along with that, an international business growth of mid-teens constant currency. That delivers you the, the kind of a mix of which is a double-digit revenue growth and a high teens EBITDA growth.
All right, so Parachute low to mid-single digit sort of volume growth. We have profitability coming in for Saffola and double-digit growth for value-added hair oils, with 25% plus growth coming in for all the other digital and new age parts of your portfolio. Any other acquisitions on your plate right now? Because you've done a few in the last 6 months or so.
So I think we had a kind of what we call a digital chessboard, in terms of the adjacency where we want to play. There is one or two few gaps, but a lot of it has been done. And I think it's important that we consolidate and integrate some of them. I think what we are also equally excited is to replicate this digital model in some of the other markets, like in Southeast Asia. Vietnam is a country where we see significant digital penetration in BPC. We had seen the similar trend in UAE and Saudi, and therefore one of the other things we are looking at is that we are one of the uniquely positioned organizations where we have pivoted to a digital consumer from an incumbent, and therefore can we replicate it across some of the international markets where there's a critical mass of, especially in BPC, play in digital and social commerce.
Right. And what level of profitability are these new parts of your business at right now? You've been now increasingly speaking about operational improvement out there. And what's your target for this year? You've given us the long-term targets.
I think it is broken even, and it's, if you see the bigger portfolios, which is, in terms of Beardo, which is already at a double-digit EBITDA. Plix is on a journey from 8 to 10%, kind of a thing, high single digits to double digits. Some of the new acquisitions, which is Cosmix, was high teens. We did an acquisition recently in Vietnam, which was in the mid-20s. So there are one or two brands where we have some bleed, but they are minor bleeds. We have to accelerate towards break-even over the next 18 months. And I think the food business is also gradually improving profitability. In fact, the core business, which is the oats and masala oats, delivers company-level EBITDA.
Okay, that's the word coming in from the management of Marico. As of now, the stock is holding on to gains of 2.4% in the trading session. They expect that high single-digit volume growth to continue in FY27. Will be interesting to watch out for and reaching that 15,000 crore mark in FY27. But we have a whole host of stocks that are moving around in the trading session. To take us through all of that, we have Vivek joining us. Vivek, afternoon.
Well, thank you so much for that. Well, we are focusing on the stocks that have come in with results post-market as yesterday and earlier today as well. And we're looking at, some of the key reasons why they're rallying in the session today. So first off, of course, has to be SRF, the top gainer as far as the F&O segment is concerned today. Very good set of numbers, a beat across what the street was anticipating. Conference call, management has guided for strong growth in the chemicals business. On the back of that, higher by over 8% today. Raymond Realty, the other name, after a significant underperformance, this particular stock is up almost 15% on very good volumes. Sequential strong growth seen as far as pre-sales is concerned. That stock higher by 15%. Coforge, the other name, of course, very, very strong growth is what the management has guided for in FY27. Street clearly likes that, almost 10% higher. Ajanta Pharma, Q4 has been very strong, especially as far as the US generics business is concerned, almost 47% higher in that particular space, almost 7% higher. And Poonawalla FinCorp, robust AUM growth is something that the street clearly likes. On the other hand, quite a few laggards as well. Larsen & Toubro, the biggest drag as far as the index is concerned. H1 FY27 expected to be quite muted, both in terms of execution as well as margins. On the back of that, street taking a bit of a reset as far as L&T is concerned. Hero MotoCorp, it's been a very volatile trading session, has recovered a bit from the day's lowest point, but margin headwinds is something that the street is currently fearing as far as the entire two-wheeler pack is concerned. And United Breweries, very weak quarter for the company, almost 3% lower, weak margins, higher ad spends, as well as commodity inflation is something that is going to clearly hurt the margins, and that is something that the street hasn't liked.
Okay, all right, Vivek. Thanks very much for bringing us that entire comprehensive list of all of the stocks which are reacting to numbers. And the other one joining the list is Arvind Fashions, where it's reported a turnaround on the bottom line, net profit of around 47 odd crores versus a loss of 93 crores year on year. And you have the revenue, which has risen around close to 15 odd % as well. As you can see, the stock is up around 6 odd %. So a lot to talk about in terms of specific stocks. In fact, we'll take a short break, and Ashish Kyal of Wave Strategy will join in to discuss what he's strategizing today on the technical. Stay tuned.
Welcome back to Halftime Report on CNBC TV 18. As of now, the Nifty is at 24,000 levels, just holding on to that, more closer to 24,000 than it was at 24,100, around that mark when we started the show. So last 20, 30 odd minutes, we're seeing a bit of a fall. Exide Industries, that's also seen a sharp fall coming in. And you have some con-call commentary that is coming in here as well from Exide. They've taken a price increase of 3% in April itself. And they're seeing some pressure coming in because of the raw material side as well. Commodities also is something in April was much higher than in the March levels as well. So we're seeing a sharper fall coming in for Exide Industries in the last few minutes. But watch out for more commentary on the con call. But let's move on and also bring on board Ashish Kayal, Wave Strategy Advisors, joining us right now. Ashish, good afternoon. And in terms of the markets, one day up, one day down, sometimes we manage to hold on to 24,000. But again, it seems like we're coming very close to the 24,000 level. How important is it to sustain about these levels consistently from here on now?
Afternoon, Vinny, and yes, absolutely. So the market overall, since 29th of April, if you look at it, it's not going in any direction. It's possibly forming a triangle pattern where the range has been contracting. Earlier, we were moving by, nearly Nifty was moving by approximately 300, 400 points very easily in a day. Now we are moving by around 150 points in a day. So that's the range. The movement has been volatile, but within a range. So essentially, I think the high of today is going to be 24,250, 260, which is going to be an immediate hurdle on the upside. On the downside, the support is at 23,900. So in this range, it's better to be avoiding to take any kind of a directional bet. But if we get Nifty any dip around 23,980, 23,970, one can create long positions, keeping 23,900 as a stop loss, and then expecting again towards the upper end of the range of 24,200. So that's how one has to trade. But it has been quite some time. I think there is going to be a breakout soon within a day or two. And what is very interesting is the options data. The put IVs, which have climbed up earlier sharply about a week back, we can see that everything is normalizing now. Market is discounting that the event is behind us, even if the Strait of Hormuz is closed, but the market is discounting it's behind us because the put sellers are not getting much premiums. The call sellers are also not getting much premium, and the premiums have reduced sharply. And that shows that market is now stuck in a range, not much of a momentum. Buy on dip should be the strategy, but play for the scalping intraday trades.
Okay. Well, Ashish, what about specific stocks? What would you be recommending? And a lot of these healthcare, pharmaceutical stocks are doing well in today's trading session. Any calls there?
Absolutely. See, if you look at pharma space, whether you look at Lupin or Ajanta Pharma, Torrent Pharma, everything is showing a very strong momentum. And I think pharma index has corrected since many years, and it has started, the overall pharma cycle has started to turn back on the upside. So pharma stock, Torrent Pharma can do well from here on. We can see the past 3-4 days of bullish pattern formation over here. And on the upside, the stock can move towards the level of around 4,510. One can maintain a stop loss of 4230 levels. And the next stock on the buy side is going to be NetWeb Technologies. We can see a very massive outperformance coming from this space, from this stock. And today it had a gap up opening, continued the rally. The volumes have picked up well. So NetWeb Technologies, one can create long positions, aiming for the target of on the upside somewhere around 4,600 levels. And one can maintain a stop loss of 4215.
Take that point. Thank you so much, Ashish, for joining in. So those are some stocks from the trading angle. But with that, let's move on and talk about all the trends that are taking place in the F&O space. Mangnam Malu is joining us now.
Well, if you look at the market this hour, we're off the highs, we're off the lows as well. The Nifty has made a fulcrum around that 24,000 to 24,100 sort of band, and currently holding with a gain of just about 16 points. And the biggest culprit is the Nifty Bank, which was outperforming earlier and now seen a sharp fall from the highs. 54,755 is where we're at the Nifty, for the Nifty Bank. At one point, we were up by over 1%, now just about 0.4%. We have the Midcap index, which is doing well. That tells you that maybe at lower levels, we will continue to see some support for the frontline index. And because it was 24,100, it's extremely crucial for the market as a fulcrum. The 24,100 call writers have come back into the fray, 200 rupees in terms of premium. So they expect some supply coming in as we cross that 24,300 mark. But it will be interesting to see what takes place of the 24,100 put writers, because there were a fair amount of them and they were hoping for some support to come by around that 24,000, 23,900 band itself. If the market continues continues to trade lower, then maybe these put writers will be unwinding their positions, causing further pressure on the market. But amidst all of this, there are a bunch of stocks which are outperforming and some of them underperforming as well. The one which is outperforming, Coforge, a lot of shorts caught on the wrong side because remember, the IT pack has been under pressure, so a lot of short positions were built on some of these names. So short covering has led this stock, along with good numbers, higher by about 9.5%. But additional shorts are being added on L&T after their performance missed street expectations and the guidance as well. So the stock down by about 3.5%, among the top contributors on the downside to the Nifty.
Okay, Mangalam, thank you so much for joining in and taking us through those important cues in the world of F&O. You have some flashes at the bottom of your screens coming in as well. Keep an eye out on that. It's a CNBC exclusive that we're talking about. So watch out for more updates on that front. But we'll take a very short break on that note. We'll come back and there'll be a commodities segment where Manisha Gupta will take us through a conversation with Kapil Nema of Dalmia Bharat Sugar. Stay tuned.
Welcome back, and joining us on the show now is Kapil Nema. He's Deputy Executive Director, Sugar and Ethanol Business at Dalmia Bharat Sugar and Industries. Kapil, thank you so much for joining in. And we have a very timely, an increase in FRP this time around. But when you look at the increase overall, it's 10 rupees higher than last year. Last year was 15% higher than the previous year. So we've seen a constant increase in FRP. Good for farmers. How is the industry reading this?
This is something, Manisha, hi. Good morning to you, first of all. Well, this is an annual event. We understand when CSEP starts working on the cane price, they work basis a certain formula, and which has different variables, which include the input cost and A2FL pricing model, and basis that they come up with a number. If you look at it year over year, yes, it's a modest increase, which also tells you that when the CSEP do these calculations, one of the factors is the kind of stress our industry is in. And a modest increase directly tells you also that, government is also reading that the industry is already in a stress and the increase has to be a little modest, which you're seeing now. So 100 rupees increase per quintal. Basically, if you look into Maharashtra and Karnataka, where the recoveries are somewhere in a range of 10.5 to 11%, it transpires to around 110 rupees on per ton basis from on sugarcane. So it is modest, but industry welcomes the decision. We understand that sugarcane farmers also have their cost, which is getting increased, and we understand that government will work on the FOP, and the numbers will get revised every year.
Kapil, while of course a modest increase, as you keep saying, but what does it really mean for the industry? Because we do understand that there's that 14-day period within which you have to pay to the farmers as well. That's one part of it. And when you look at the end commodity, which is sugar, that price hasn't gone up in years until time. So would you say that there's a balance that needs to be created perhaps there?
Absolutely, and it's not only about MSP, it's also about the ethanol price. This is a constant request from the industry to the government that, like they are working on a fixed formula for the cane price, there has to be a equivalent and a transparent formula which should link the sugarcane price to the MSP and the ethanol prices, so that industry has a proper transparency. Industry understands that if the input cost is increasing, accordingly their final product and byproduct prices also will get equally reflected basis that formula, and so that industry can also plan on a long-term basis. And they can have their investments in place, and they can have their expansion plans in place basis that.
Oh, absolutely. The other thing that I want to talk about is the impending El Nino, the largest, biggest perhaps in 30 years. Will that impact the cane crop going forward?
There's a very famous saying, Manisha, rain makes cane. So you need rain. In majority of the cane areas in India are rain-fed. So rain is very, very critical. Of course, we have very early warnings of El Nino already setting in, but we need to see how the spread of the rainfall will be, which areas, which district-wise, how the rainfall is going to be. It's very important that how the June-July rainfall will come in, which will help fill in a little bit of reservoirs, which can help sustain the irrigation during the peak El Nino period, which is being talked about for July to September. So, I mean, still there are variable factors which are yet to be seen. We need to wait for May end for IMD to come back with a more firm up monsoon outcast, and then basically this is that we'll have to see. But yes, rain is the primary and the most important thing for the sugarcane.
Kapil, we do understand that the government is in discussion with various stakeholders when it comes to ethanol blending. 21% perhaps is a given right now, but 25, 27, those numbers also seem to be in talks.
Absolutely, we are also hearing on the same lines. 21 is something, which comes with a tolerance. So when the blending happens, there's always a little bit of tolerance limit, which every depot which is doing the blending has to keep. And that's why this 20% plus minus 1% tolerance is being given. I will not say 21% is given, because as you go to 21%, then you actually need 21% plus minus 1% to take care of that, that blending errors or, how the blending happens at the depots. We need a clear-cut policy, either it is E22 or 25 or 27, so that, when you mandate, like you mandated E20 from 1st April 26, when there's a proper mandate for E22 or 25, you have those tolerances still to play around when the blending is being done at the depots.
All right, that point is well taken. So, the other thing really is about the exports. So while the allowance has been higher, the industry tells me that 8 to 10 lakh tons perhaps is what we would perhaps end up exporting.
Yes, so far the way the market scenario is shaping up, we have done around 600,000 tons we'll end up doing around 600,000 tons by around mid-May, and further down, we see another 150 to 200,000 tons happening at the max. Brazil is getting back to crushing. The crushing has already started, so the Brazilian sugar will very soon be out in the markets. We have seen Pakistan looking into exporting around 500,000 tons to the world market. So there will be, sugar supplies which looks like coming out and will be competing. And here in India, we are seeing the domestic prices going up slightly. And And as we go forward during off-season, the demand remains strong. So we believe the prices should remain firmer, and which should keep the export parities in check as we go forward.
Okay. All right, Manisha, thanks very much for taking us through that conversation in the commodity space. But just want to turn focus back to the markets and specific stocks before we take that quick break. The markets have completely flattened out at this point in time for the Nifty. But if you look at specific stocks, and we've been pointing out how pharma has been one of the key gainers sectorally today. We have Ajanta Pharma, which is up around 7% And besides the numbers, the company has guided for a high-teen revenue growth and a 27% EBITDA margin in FY27. So that's the reason why the stock seems to be enthused in today's trade. Separately, we have Aurobindo, which has hit a fresh 52-week high because their Unit 7 facility has now been cleared by the US FDA. Remember, it was inspected and issued 9 observations at one point in time and now has been given the clean sheet by the US FDA. That's the reason the stock is up around 3.6%. We'll take a short break, but come back with a lot more. We'll get you our special Crypto Corner segment once we're back. Stay tuned.
CNBC TV 18 presents Crypto Corner, powered by Binance.
Welcome back in Crypto Corner, and as has been the case with various asset classes where we are looking at a risk-on appetite, that has been the case for cryptos as well. So Bitcoin is trading at around 3-month highs. We are holding above that $81,000 of levels in the international markets there. If you look at the month of April, well, that has been on the higher side as well. 12% of gains, best monthly gain in last 1 year, and ETF inflow standing at around $1.9 billion therein. Well, that's about the market buying in there. Even as there have been gains, remember, crypto did see an all-time high of around $126,000. The Bitcoin prices still are 35% down from those kind of levels. But the last couple of months clearly have been on the positive side. Take a look at the investment products. And when you look at the overall for the previous week, $117.8 million of an inflows is what Bitcoin has done. Interesting reports coming in from Kraken Exchange, which, remember, has partnered with MoneyGram, and they are going to be supporting crypto-to-cash withdrawals across 100 countries. These are the countries that MoneyGram already has clients and reach within. Consumers can access local currencies through MoneyGram's regulated international cash pickup network therein. Also, there are expansion plans that Kraken is looking at right now. This does include local bank deposits, cross-border flows, and also additional money movement options within that space as well. This is earnings season, and a couple of crypto companies also have come out with their numbers, Tether being one of that, and the first quarter profit shows at around $1.4 billion therein. The reserves as well have increased by $8.2 billion into the markets therein. The global adoption for stablecoins has been increasing quite strongly, and within stablecoin as a segment, Tether clearly gets that first rank therein. So privately held Tether perhaps is the largest when it comes to market capital or holding capacity across world markets therein. The other company that came out with results was Strategy, and while they have shown some losses, but Strategy clearly seems to be changing their strategy when it comes to holding, buying or selling Bitcoin. Till time, Strategy has been only passively accumulating Bitcoin. So when you look at their overall numbers, 8,18,000 Bitcoin is what they hold at the end of first quarter, which is at the tune of $61 billion. And an average buying of all of this Bitcoin stands at around $75,500 per Bitcoin therein. But what they want to change now is they want to sell it, buy it, trade it, sell it, buy something else. So that is the change that Strategy seems to be bringing in within Bitcoin, the largest, remember, company that continues to accumulate that crypto.
Okay. Manisha, thank you so much for taking us through what's happening in the world of crypto. Thanks so much for joining in. But on that note, we're actually going to slip into a very short break. After the break, we'll come back and get you the movers and shakers segment, and which stocks are moving around there. Stay tuned in.
CNBC TV 18 presents Crypto Corner, powered by Binance.
Welcome back. In the red, the Nifty is down 17 points across all the board. Major indices have come up from the high. So that's what the market is looking like right now at the day's low for the Nifty. But let's talk about some news now. Sources say Stock Holding Corporation offers to sell around 0.44% of its holding in the NSE IPO. Yash is joining us now with all those details. Yash.
Well, of course, the big headline that we've been able to pick up from our sources is that the National Stock Exchange, through its IPO, is targeting a post-listing market cap of over 5 lakh crore rupees. This is the big number that NSE would be looking through its IPO. Now, in terms of course, the exchange itself has multiple shareholders. A lot of institutions right now are part of NSE. And as per the regulations, anyone holding NSE shares for more than a year gets a chance to participate in the OFS part, which is the entire IPO for NSE. What we've been given to understand is that one of the shareholders, Stock Holding Corporation, has offered to sell about a 0.44% stake in NSE IPO Stock Holding Corporation owns about 4.4% stake in the exchange, which means it's offered about 10% of its holding in the exchange towards the OFS part of the IPO. Through selling this 0.44% stake, it looks to raise anywhere about 2,200 crore rupees, assuming that NSE does get to its post-listing market cap of over 5 lakh crore. Importantly, the listed company IFCI owns about 52.66% stake in Stock Holding Corporation. That is the listed arm of the company which holds stake in National Stock Exchange. Another large shareholder, in fact, the largest shareholder in National Stock Exchange, LIC, which owns about 10.7% stake, has offered over 1% stake towards the OFS portion of NSE's IPO, which means about 10% of its holding again when it comes to the National Stock Exchange. There are other sellers also which we've been able to pick up from our sources. These include New India Assurance, GICRE, Chris Capital, Temasek. All of them have offered towards that pool through which NSE has gathered anywhere around 4 to 5% stake as far as the OFS portion of the IPO is concerned.
Okay, Yash, thank you so much for giving us those details there. But let's move on, and now time for a movers and shakers segment. And first up, SRF, that's in focus and buzzing away in trade today. Sonal, details about this one.
Well, strong set of numbers that the company reported post-market hours yesterday. It was better than what the street was working with as well. The revenues were up 7% on a YY basis, EBITDA up 7%, net profits also were up 10.5%, and all this is better than street expectations, where the street was expecting a downtick across the board. Margins, they were stable on a YY basis to come in at 22.2%. But what really enthused the stock, which opened higher by 4% and is now up around 8%, is the management commentary on the conference call. In a time like this, the company announced a capex. They are also giving a guidance on their chemicals business, which did not do so well versus the other segments. 15 to 20% is the guidance that they're looking at. They're planning a capex of around 2,500 crore rupees in FY27. They say, yes, sales to West Asia have been impacted. This was an important market for them, but they are looking for other avenues for their export markets versus West Asia that they have right now. They are talking about investment in fluorochemicals, polymers, which is going on as planned, and they will see meaningful change in their product mix by the end of the year, where they will see high margin product being a part of their overall revenue. They're confident of strong growth in their fourth generation refrigerant investments that they've been making. This is another high margin product for the company. And in Q4, in the packaging segment, BOPET prices, they say they are mostly bottomed out. The spreads are improving from here on. So that is another positive comment coming in from them. China's anti-involution measures are helping packaging spreads, and they have a fundamentally strong view on the chemicals business. So across the board, all the segments, barring the current tensions that they are seeing because of raw material unavailability and the depreciation of the rupee, they're talking about a future which is positive for them, and that's why they've increased the capex as well in HFCs. That is something that the street is liking. The stock is up around 8%.
Okay, so that's on SRF. But the two stocks that I'm looking at in this afternoon's M&S is Cohance as well as Wockhardt. Now, both these stocks have been in focus on account of news. I'll start with Cohance, which in fact is up 32% since the 27th of April. That is when the announcement of Umang Vohra becoming CEO and MD took place. Now, Umang Vohra has taken over his role from the 1st of May 2026. And to put it into perspective, the stock has rallied around 77% from its 52-week low of around 267 odd rupees, but it's still 59% off its 52-week high of over 1,170 odd rupees. Wockhardt is the other one. The stock has rallied 23% this week itself. That is on the back of its Q4 numbers, where it reported a profit versus a loss on a year-on-year basis. The biotech revenue did well. It was up 126%, led by the emerging markets. And Zenic, which is basically one of their antibiotics under development, WCK 5222. The company has said that the US and EU's review is progressing well. Emroc is another drug that they've launched in India, which was up 106% on a year-on-year basis in terms of sales. Stock is up 159% from its 52-week low, and stock is just about 7% away from its 52-week high. But Vinny, we have some more stocks lined up.
Absolutely, some more stocks lined up there, but that's from Rima. Rima is going to take us through Vodafone Idea, and KM Birla is back on board of Vodafone Idea, actually, Rima.
Indeed. So Kumar Mangalam Birla has returned to Vodafone Idea as the company's non-executive chairman. Remember, he had stepped down about 5 years back. The company was struggling. So it's an interesting time that he makes a comeback into the company. Remember, the AGR regulatory uncertainty has been eased. The overall AGR dues just last week was slashed by 27% by the DOT. Now, the way forward for the company, they're looking forward to a bank fundraise, a debt fundraise. Will Kumar Mangalam Birla at the helm assist with that, support that fundraise? And also analysts are pointing out that the bigger elephant in the room for Vodafone Idea is actually their spectrum dues, which is in excess of nearly 1.2 lakh crore rupees. And for that, the company perhaps will require an equity fundraise. Now, does Kumar Mangalam Birla being here suggest that if an equity fundraise is required, will the Aditya Birla Group be open to participating? Lots of speculation, but I think the street is just trying to see if there are any signals to be read from Kumar Mangalam Birla making a comeback. But remember, he's a non-executive chairperson of the company, and the Aditya Birla Group has about a 9.5% stake in Vodafone Idea. Back to you.
Okay, all right. Rima, thank you so much for joining us with those details. So those are all the stocks that we have on our radar. There's a lot to talk about. So we'll do one thing. We'll take a leave on this edition of Halftime Report. Business Lunch will take all the action ahead.
Markets have cooled off from morning highs with the Nifty and Sensex and now nearing the lows of the day as financials give up gains. Midcaps, however, continue to see a surge. Realty and healthcare gain while utilities and industrials sulk. Indigo climbs after the cabinet clears a credit guarantee scheme for West Asia crisis-affected businesses with a special carve-out for the airlines. Each airline can raise up to 1,500 crore rupees via a 7-year loan with a 2-year moratorium. L&T has declined after posting a weaker than expected fourth quarter and guiding for a subdued first half of FY27. While its order book remains strong, the margin pressure on fixed price contracts due to input cost inflation makes investors cautious. Aditya Birla Group Chairman Kumar Mangalam Birla has assumed the role of non-executive chairman of Vodafone Idea after stepping down in August of 21. He is resuming the role, lifts investor confidence, boosting the stock as well. And ITC chairman Sanjeev Puri says that the company will invest 20,000 crore rupees on capex in the next 4 to 5 years. He also points to niche opportunities via new channels and adds that the tax on cigarettes will be passed on but cushioned to protect volume. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Hormas Fatakia, and well, on similar or familiar script, the market has come off the highs of the day, continuing to find resistance at higher levels. The Nifty has now moved into the red, 17 points lower. The bulls now trying to fight to hold on to those levels of 24,000. Of course, yesterday's low of 23,880 and last week's low of 23,818. 813. Those are the two important levels to watch on the downside. Well, it's a 250 point correction from the highs of the day, and that has been led predominantly by banks. The Nifty Bank continuing to find resistance at that 55,000 mark and failing to hold on to those levels. Yet again, a 700 point cool off from the highs of the day, managed to cross 55,000 intraday, but yet again could not sustain at those levels. The result of the hour though is KPIT Tech. Of course, the management commentary on the road ahead is still awaited, but the stock is now down 5%. Margins have narrowed on a sequential basis. The profitability too. Now, of course, the base quarter had an impact of the wage bill, and therefore the profitability appears to be slightly elevated this time around despite the narrowing of margins. So 5% lower on KPIT Tech. The board has also announced an acquisition of a strategic stake in a company. So that is also something that needs to be considered. Of course, the guidance from the company is what will be awaited soon. Of course, the other big result of the day is going to be Bajaj Auto. And of course, apart from the results, the street is going to be eyeing its first share buyback in the last 2 years. The last time it did so was back in 2024. But ahead of the results, the stock 1.5% higher, doing fairly okay for itself. The last time the company did a buyback was at 10,000 rupees. So now it is trading above those levels is Bajaj Auto. We'll keep you updated more as the day goes by. But of course, the other big earnings reaction today was L&T, and that continues to remain the top loser on the index after a soft fourth quarter. Vivek is now joining in with the fine print of the numbers.
Well, that's right. So L&T, it was expected to be a subdued quarter, a soft quarter. You had two major headwinds. Of course, number one was West Asia. 35% of the order book, order execution is in that particular region. Impacted, work stalled on account of the various geopolitical tensions. But remember, 95% of the sites, the company says, continue to operate normally. The other thing, of course, was the Indian business. You saw execution worries, especially in the water segment, which a whole host of players, especially doing Jal Jeevan work, have called out. So that has also impacted the overall execution in Q4. Now, when you're talking about the commentary, H1 FY27 expected to be soft on account of supply chain worries, especially given the fact that raw materials do pass through the Strait of Hormuz. Management also unveiled the Lakshya 2031 targets. In terms of the guidance check, Q4 was a miss across most parameters. In terms of the guidance, top line growth, the management had guided for 15% growth. Actual came in at around 12%. Core margins guidance was at 8.5%, came in at 8.3%. Order inflow growth, they beat by a handsome margin. A 10% growth guidance is what they had given, but it came in at well over 22%. In terms of FY27, on a strong base, 10 to 12% top line growth, 8.3% margin guidance. That's slightly soft, but it is understandable given the kind of commodity inflations that we are seeing, especially from Q4 to Q1. And lastly, order inflow growth on a very high base, quite encouraging that L&T sees an order inflow growth of 10 to 12%.
Of course, for the big loser on the index now is L&T, 3.5% lower as we speak. Vivek, thank you for that. While L&T is an underperformer, the outperformer of the day has been Coforge, and the stock has seen a very, very sharp up move in double digits as well after a strong quarter and an equally strong guidance, if not more. Rima is here to summarize the numbers for us. Rima.
Well, a couple of positives. One is a very strong margin performance. EBIT margins at 16.6%, highest ever. Also, the guidance for next year suggests margin expansion. So the company is talking about EBITDA margins of 20.5 to 21%. This would compare with 18.6% delivered last year. So again, Q4 very strong on margins, FY27 margin expansion. The second positive was the free cash flow. The company's free cash flow increased by 68% after being flat for the last 5 years. And the company says this is despite the Sabre investment. And they've also upgraded the free cash flow to PAT guidance to 100%. So that has come in as a positive. Now, in Q4, the company's revenue growth was just about 2%. They've also said that Q1 revenue growth will be flat on a quarter-on-quarter basis because the company is exiting some of the low-margin India business. But after that, after Q1 being flat, the company's growth path will resume, and they are pretty confident about achieving industry-leading revenue growth for the full year. On AI, they talk about, the call spoke a lot about AI. They said the internal AI adoption has delivered 25 to 35% faster development, 40 to 60% improved code generation, and 10 times quicker modernization. But he also went on to say that the true cost of AI code is crucial because AI-generated code is cheap to build but expensive to own, secure, and maintain it, and that is creating the massive opportunity for services companies. Back to you.
Reema, thank you for that update there. Now, the government has approved an Emergency Credit Line Guarantee Scheme, or ECLGS 5.0, to support businesses, including airlines, affected by the West Asia conflict. The scheme is expected to cost the government 18,000 crore rupees as per sources. Ritu is joining in now with more on this. Ritu.
Well, the government has cleared the Emergency Credit Line Guarantee Scheme 5.0, which is aimed at cushioning businesses from the disruptions that are linked to the West Asia crisis. The scheme targets 2,55,000 crore rupees in additional credit, which includes 5,000 crores specifically for airlines, and the scheme will be valid until the 31st of March next year. Now, under this, borrowers can get extra credit of up to 20% of their working capital, capped at 100 crores per borrower, while airlines can access up to 100% of their outstanding credit with a 1,500 crore rupee per borrower cap. Now, this is essentially a risk transfer mechanism. So loans come with 100% guarantee cover for MSMEs and 90% for non-MSME borrowers, and airlines with zero guarantee fees. Repayment can be spread over 5 years with a 1-year moratorium, and for airlines in particular, it can be 7 years with a 2-year moratorium. What that effectively does is de-risk lending for banks and NBFCs, allowing them to step up credit without really worrying about incremental NPAs. Now, at the same time, eligibility is going to be restricted to standard accounts, which means this is not a bailout for stressed borrowers. Now, Air India and Indigo are likely to be the biggest takers under the scheme, where banks like Indian Bank, Bank of Baroda, SBI, and Yes Bank have higher exposure. But overall, for banks and NBFCs, the impact is clearly positive in the near term. You get modest loan growth tailwind, and more importantly, a meaningful buffer on asset quality, especially when it comes to the MSME segment. However, margins on these loans tend to be lower because there's no credit risk premium being priced in. Now, if you look at the history, disbursements under earlier ECLGS rounds were dominated by large banks, especially PSUs, thanks to the lower cost of funds and deeper MSME reach, and that trend is likely to continue. Those with higher MSME exposure in particular, like Yes Bank, Axis Bank, IndusInd Bank, and others, can also see relatively stronger traction.
Ritu, thank you for that update there. And on this subject, we also spoke to former SBI Chairman Dinesh Khara and Neostrat Advisors as Abhizar Diwanji on these measures. Listen to what they had to say.
This is going to be a significant mitigant because for the SMEs, it is saying 20% of the peak outstanding which was there in the last quarter of financial year 26. So I would say that it is actually an improvement over what was the earlier ECLGS, because their reckoning was that outstanding should be there on the last day. And I think in overall about 18,000 crore is something which is the outlay which is given to NCGT, GTC for enforcing this scheme. So it's more of a comfort which comes in for the lender. There is always a spillover effect, and this kind of a guarantee scheme will actually address that spillover effect also. And before it actually starts hurting, this kind of a guarantee is available to take care of the cash flow challenges for the SMEs and the airlines, etc.
Absolutely a requirement. I look at it as a subsidy more than a credit guarantee. I think maybe we should think about the scheme. So the scheme has to be there and the amount has to be there. Think about the scheme as some kind of a convertible which is dynamically managed by a group of people. So what I mean by that is that one, we need to provide convertible rather than debt, because debt has to be serviced That has an implication on the debt equity ratio, and enterprises' ability to actually pay money is going to be limited. At the end of the day, I think this is going to be a dynamic provision. If the war continues, we will have to keep extending this. On the evergreening problem, I think if banks, it's a very easy lure for the banks to use it to cure current debts. They should not be doing that, and rather giving money to make sure that that goes for growth. And I know that the law says that you only have to give it to standard entities, but standard is kept rather than in spirit adhered to. So that the minute a default, minute the money comes in, it will be used to make sure the account remains standard, which is going to be a problem. Because if the dues go back to the bank is an issue.
Take a short break. Back with more on the other side. Stay tuned. Welcome back. Now, ITC Chairman Sanjeev Puri says that the company could undertake more price hikes if inflation creeps in. Speaking exclusively to Shireen Bhan, Puri said that cigarette price hikes have been staggered and more will come. He also promised to invest 20,000 crore rupees for capital expansion over the next 4 to 5 years. Listen in.
The tax increase is massive. We have to pass it on. There is no question of absorbing it. But if we were to do it at a single stroke, then it probably can lead to a larger shift to illicit. So we want to stagger it up. So we are staggering it up. So that
how much have you already taken?
We've taken about, I think, 50-60% of it, something like that. It's ongoing. You see, it's ongoing. I don't have an exact figure. It's ongoing, and some more will happen in the short term. I think there's no question of growth of volume. Whenever taxation increases, volume shifts to illicit. So therefore,
there will be an impact.
There will be an impact. Volume growth. There will be degrowth. The question is, what degree of degrowth? We are seeing inflation coming in. Things like anything related to petrochemicals, some parts of energy. So inflation is starting to come in, and it will, over a period of time, we will see that more and more prices will get passed on to consumers, because many companies were sitting on hedges or past inventory, but it will happen. For the group, 1 year is, capex investments tend to be lumpy.
Sure.
It's not that it's linear. So we'll really look at it in medium term. Medium term, we're talking about 20,000 crores for the group.
20,000 crores, and medium term would mean what, 2 to 3 years?
4 or 5 years.
Sanjeev Puri there in an exclusive conversation with Shireen Bhan. Of course, the other big earnings reaction of the day, the earnings of the day actually, is going to be Bajaj Auto. And Sudarshan is here to tell us what the street is expecting from that.
So from Bajaj Auto, we are expecting a strong set of earnings for Q4 FY26. Revenue growth is again going to be led by the healthy volume growth that company has seen for both two-wheelers as well as the three-wheelers. Three-wheelers especially has seen a volume growth of almost 39% if you talk about the export segment. And also over the last few months, we have seen the depreciation in rupee. That is also going to impact positively to the margin for Bajaj Auto. So talking about the headline numbers, profit is seen rising 28%. Revenue may see an increase of 29% and EBITDA too see a jump of 31%, and in resultant margin can come in at 20.5%. It would be fourth straight quarter for Bajaj Auto to hold the margin levels over 20%. Talking about the volumes, overall volumes were up 24% YOY and 2% on a sequential basis. And considering the sharp increase in volume, also there can be an increase in realization. So YOY, there can be an increase of 4% on a sequential basis too. We can expect an increase of 1% as far as the realization is concerned. Now, in the commentary, what exactly would be looking for? What does company talk about the volume growth, both for domestic as well as the export? Export, if you know, it forms almost 50% to Bajaj Auto's total volumes. For domestic, Hero MotoCorp has already given the guidance of high single digit. So mainly from Bajaj Auto, the focus would be on export. And also, what does company talk about the new launches?
Sudarshan, thank you for that update there. The eyes on the company's update and, of course, the buyback announcement later as well. Now, Godrej Consumer is also about to report its numbers today. Mangalam is here with what the street is expecting. Mangalam.
Well, the street knows what to expect, largely because the company is giving its fourth quarter update already. And what we know is that they will report a double-digit revenue growth and EBITDA growth, which will be broadly in line with the revenue. The problem will be what takes place beyond first quarter, largely because of the inflationary trends that we've seen in West Asia. So fourth quarter numbers are going to be good, despite which the stock is lower and off highs. The street is working with a 10% revenue growth, 3950 crores, 10.5% EBITDA growth, which would mean margins coming in at 21.3%, and the net profit growing 17% at 565 crores. Domestic volume growth seen between 7 to 9%. India business, double-digit underlying sales growth, high single-digit underlying volume growth. Excluding soaps, volume growth continues to be in double digits, and EBITDA margins expected to be seen in the normative range of 24 to 28%. So that is a positive from an India business perspective. But that, remember, is the fourth quarter story. The first quarter and beyond story on margins will be extremely crucial to track.
Mangalam, thank you for that update there. Now, sources tell CNBC TV 18 that the insurance regulator is looking to regulate commissions. Yash is here to tell us more on this. Yash.
Well, it's widely anticipated, and what's anticipated is that consultation paper or discussion paper from the regulator on regulating commissions. What we've been given to understand, the big thing that we've been told is that that particular consultation paper on distribution regulations, which will of course include commission controlling as well as measures on other distribution networks, be it agency, bank assurance, is expected by the end of current month itself. What we've been given to understand is that the regulator is looking at an effort-based commission control model, under which the regulator would look at which channel of distribution has to put in how much effort, and the commissions, which is the reward to the distributor, will depend on that. For example, what we've been told is that, for example, an agency channel, individual agents have to put in much higher commission to sell an insurance policy. Out of 10 approaches, there is about 2 or 3 closures that they get, and hence the commission rates on that side would be much higher as compared to a bank assurance or a web aggregator, where the efforts are much lesser and the closures are much faster. This is what we've been given to understand from our sources, and the big thing, of course, the timeline which is anticipated by the industry, the consultation paper could come out by as soon as the end of current month itself.
We'll await details on that. Yash, thank you for that update there. Take a short break. Just as we do that, a quick programming reminder. We are proud to bring HSBC presents CNBC TV 18 Future Female Forward Season 4 to Mumbai with the Mumbai Gala, a powerful celebration of equity and leadership. Now, top industry leaders come together for a dynamic town hall shaping the narrative of New India alongside curated cultural performances that reflect the spirit of the city. The evening will also spotlight our continued commitment to empowering female micro-entrepreneurs through a dedicated advisory initiative, driving meaningful impact through the year. Tune in today, 5 p.m. onwards, only on CNBC TV 18. Welcome back. Now, US President Donald Trump has temporarily halted Project Freedom, citing progress towards a peace deal with Iran. Now, the blockade, however, remains firmly in place. Secretary of State Marco Rubio had earlier briefed reporters, stressing that the operation was purely defensive. Now, Tehran has so far not responded to any of these moves. Dan Murphy has more on this. Dan.
A possible de-escalation in the Gulf, even as we see tensions with Iran remaining higher and the ceasefire continuing to be tested. President Trump says he has agreed to pause Project Freedom. This is the US operation escorting commercial ships through the Strait of Hormuz, citing what he called great progress towards a potential agreement with Iran. However, as you heard there, he has made clear the US blockade of Iranian ports will remain in place. And this comes as the UAE also says it intercepted new attacks from Iran just hours after a Pentagon briefing where the chairman of the Joint Chiefs said the recent Iranian actions do not rise to the level of restarting the war. And obviously that's causing some angst here in the region. Tehran also denying responsibility for any new strikes, but also warning of a crushing response if its interests are targeted from UAE territory, essentially accusing the Emirates of supporting US and Israeli operations. Meanwhile, US officials also attempting to play down the latest incidents in the region, even as Iran targeted American warships and other vessels in the Strait in recent weeks. The Secretary of State Marco Rubio now urging Iran to return to the negotiation table. Listen.
Operation Epic Fury is concluded. We achieved the objectives of that operation. I'm not going to, we're not cheering for an additional situation to occur. We would prefer the path of peace. What the president would prefer is a deal. He would prefer to sit down, work out a memorandum of understanding for future negotiations that touches on all the key topics that have to be addressed, a full opening of the strait so the world can get back to normal. That's the route he prefers. That is so far not the route that Iran has chosen.
Marco Rubio there. The other major development we're following is the fact that Iran's foreign minister is in Beijing for talks with Chinese officials. This comes just days ahead of President Trump's expected visit to China, certainly adding another diplomatic layer to an already pretty complex standoff. And for markets today, the signal is really mixed. We have this pause in US naval escorts that may suggest progress towards de-escalation, but of course, the continued blockade and ongoing threats to shipping means global energy flows remained firmly in place. It's part of the reason we've seen this dual track play out in Asia, where we have equities ripping higher but oil prices pulling lower, something that is likely to continue through the course of the European session.
Dan, thank you for that update there. The market continues to remain very, very choppy. The Nifty is now back up almost 50 points as we speak. The Sensex has also moved into the green. Take a look at the Nifty Bank and the Nifty IT. Both of them have had contribution in this market volatility. The Nifty Bank has started to move higher as well now from the day's low. So 300 points higher, heading back towards that 55,000 mark. And there is some recovery on the IT index as well. KPIT Tech, which was down 5% at the start of the show, has also recovered substantially from those levels. Now is down, has almost turned positive. So it has nearly recovered all of the drop that it saw from the highs until the earnings announcement that came in, and the stock has moved back into positive territory. So that's KPIT Tech. What's doing very well for itself for a second day running is Wockhardt. The stock was up yesterday, is up another 15% today, and of course the top gainer on the Nifty 500 index at the day's high is Wockhardt, nearing its 52-week high. Coforge is another one, as we mentioned, the earnings reaction 10% higher there, and Car Trade Tech, ahead of its results, is doing well for itself as well, 10% higher on that stock. So at the highest point of the day is Car Trade Tech as well. Take a leave on this edition of Business Lunch from me and the team. Thank you for watching. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar, live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, Vivek Iyer. There's a swift recovery from the lows of the day, around 80 points from the lows. The low that we've seen today was 23,997. That was a fall that we saw from the highs, but then there is a recovery. A lot of moving parts in the market. The small and mid caps are doing well.
That's right. Good afternoon, Sonal. Small and mid caps are doing quite well, and outperformance there, especially as far as the mid cap index is concerned. Earnings continue to fly in thick and fast. Mid cap IT, last couple of the last half hour or so, we've seen KPIT Tech, we've seen First Solutions, and they're reacting quite sharply to the results. But a lot lined up on the show, an important corporate conversation as well. So let's start off with the top headlines. Market loses ground, but indices marginally off day's low. Mid and small cap that are the clear outperformers of the day. FMCG and oil and gas are the only sectors to trade in the red.
Pre-sales for Raymond Realty more than doubled to over 1,500 crore rupees for the March quarter. Collections spiked 20%. Management marks optimism, tells CNBC TV 18 that they are eyeing a minimum of 20% growth in pre-sales with potential to scale to 30% levels. Stock sees a sustained rally.
Shares of SRF extend gains on the back of strong Q4 results. The management expects continued strength in the chemicals business. A 2,500 crore capex coupled with product mix upgrades is to drive momentum despite the West Asia impact in the near term.
Steady gains in Aurobindo Pharma following regulatory action. US FDA closes inspection at the Telangana unit, classifying the facility as VAI. Move follows a 2-week inspection with 9 observations earlier this year.
United Brewery reports a soft set for Q4 volume growth of 4%, beats expectations of 2 to 4%, but pickup in ad spends dents EBITDA growth for the quarter. The stock under consistent selling pressure.
All right, those are the top headlines that we're tracking. It's all about earnings actually today. The markets did fall from the highs, but then again, there is a swift recovery. First Source Solutions reported numbers just a few seconds back, and the stock is spiking on the back of that. It's up around 4%, so we'll watch out for management commentary. They have given their revenue growth guidance as well, looking at FY26 constant currency revenue growth guidance at 10 to 13%, EBIT margin at 12.25 to 12.75%, and that is something that the street seems to like as well. They have been talking about it being a defining year, and FY27 is where they are expecting strong wins as well. The total deals in FY26 has come in at 17, and they have signed 4 large deals in Q4 of FY26 itself. We'll get in more details, get in Rima as well to talk about it, but this is the guidance that they have. Revenue growth of 10 to 13% in constant currency terms, and FY27 EBIT margin at 12.25% to 12.75%.
Well, very strong. The other stock, that we'd like to just quickly mark before we head to Ria is KPIT Technologies. That particular stock, after reporting its results around half an hour ago, saw a very sharp decline in trade, and the stock almost went to 720 levels. The stock has completely recovered all of the losses. A forex loss is what impacted the P&L performance. The stock now almost near the day's highest point. But these names and a whole host of other names is what Ria has on our radar. She's standing by the big wall with all the mid-cap movers of the session.
Well, yes, a lot of movers in today's trading session. Starting off with the gainers, we have Car Trade up nearly 10% today ahead of its Q4 results that are set to come out tomorrow. But remember, on a year-to-date basis, the stock is down nearly 36%. But today, the move is backed by very strong volumes, nearly 3 times the average 30-day volumes traded today. HFCL also has hit its 52-week high today, up 7% today, and it continues to show strong momentum. It is up around 86% in the last 1 month as well. E-Clerks showing a big move today, up around 6.5%, but it is down around 36% on a year-to-date basis. Even India Pesticides continues to gain in today's trading session, up nearly 7% at this point of time. And HBL Engineering also up nearly 5%, and it is also up around 24% in the last 1 month. Moving on to the top sectoral gainer today, though, that is the pharma sector, up nearly 2% today on the index for that. Wockhardt and Ajanta Pharma as well as Alchem Labs showing very strong momentum today. Ajanta Pharma reported a very strong set of numbers, which is why that stock is moving, and both Wockhardt as well as Ajanta on the back of very strong volumes, up nearly 6 times the 30-day average volumes traded on both of these counters. On the flip side, looking at the losers, we have Aditya Infotech, which is taking a big hit in today's trading session, down nearly 9% at this point in time, but it was up around 110% in the last 1 year. Meesho is down again today after yesterday's fall of nearly 6%. 6%. Ather Energy also taking a hit, but this stock is up nearly 3 times in the last 1 year. Schneider Electric also down around 5% in today's trading session, but this stock also saw a gain of over 2 times in the last 1 year. And Gallant Ispat also taking a big hit, almost down around 4% at this point in the trading session, but this stock was also seeing strong momentum up until now, up around 50% in the last 1 month.
All right, that's about some of those big movers in the mid-cap space. Thank you so much, Riya, for joining us as always. It's time for an earnings conversation now. Aeroflix Industries reported a strong set of Q4 earnings. The company's revenue saw 36% uptick, while the profit rose 57%. Margins have also witnessed a healthy expansion. To discuss more, let's welcome Asad Daud, who is the MD of Aeroflix Industries, joining us now. Asad, good afternoon. Thank you so much for joining in. A good set to which the street seems to like as well, and you have been positive in your forward-looking guidance as well. Let's just try and understand what the situation is right now. You do have a lot of export exposure, and we are seeing a lot happening in West Asia as well. Any impact on the supply side, anything on the demand side? If you can explain, what are the macros looking like right now?
First of all, thank you so much for for inviting me. Yes, export still contributes majority of our sales. Almost 60% of our sales in the last quarter was from exports. But we have seen over the past 1 year that the share of the domestic market has steadily increased. And in the last quarter, almost 40% of the business came in from the domestic market. And with regards to the export, our major exporting countries remain to be USA and Europe, where the only issue that we have faced is right now with regards to the supply chain issues, but the demand is very strong from both these places, and we continue to see uptick in demand in Q1 as well. Obviously, Middle East has been a bit of a concern due to the ongoing crisis, but we are hoping that the Middle East business will pick up from Q2 onwards.
Okay. Asad, with all the uncertainties in place, given the good performance that you've seen in FY26, we know you have a 3-year guidance. But FY27, can you go ahead and quantify for our viewers what is the kind of top line margins as well as PAT you're targeting?
So in terms of the performance for the current financial year, which is FY27, I think in the last quarter we have grown by more than 35%, and we believe that we're going to grow at the same rate for this year as well. So we're targeting a growth of upwards of 35% on the top line, especially with regards to the capacities that are coming up in the skid assemblies. And in terms of our EBITDA margins, we expect that in the current financial year, our EBITDA margins to be around 23% on an annualized basis.
So, Asad, I know I keep asking about the impact because a lot of companies have spoken about how it could impact their margins. And I know the situation is volatile. Despite that, your confidence of the margin number that you're going to be seeing in FY27, this is the highest ever margin that you're seeing. Is there a downside risk to it if supplies do not come in time, and if they do, they are at higher prices? Or you're able to pass on these price hikes easily and the demand for your products is inelastic?
So, in terms of the demand from certain sectors, right, specifically if you talk about the data center business, right, which is, growing at a tremendous pace, we're seeing a huge demand coming in, and there is not much constraints in terms of pricing in that particular sector. Obviously, in terms of our other businesses, yes, our input costs have increased in terms of our raw material, and we have been discussing with our customers to pass on the cost to our customers. We are also working on our operational efficiencies to improve our operational efficiencies so that even with the increase in the input cost, we can able to maintain our margins. Yes, the input costs are increasing, but we are, as a team, are working on it to reduce the impact to the maximum level possible.
Okay. Asad, last time you spoke to us, you told us that, exit FY26 margins should be in the range of 22%. You've actually managed to exceed that. Now with significant disruption that's being seen, and you're saying that you're going to hold on to the margin guidance. So is it going to be more back-ended in terms of being able to recover margins? H1, do we expect softer margins? And number two, how is the demand environment?
So it would be difficult to comment specifically on an H1 basis because quarter on quarter things change. You have seen internationally also the things have changed from Q4 to Q1, right? So in terms of our expectation, I think the margins that I've mentioned is for the entire year. There may be some quarters where margins would be better than expectation, and there might be some quarters where margins would be lesser than expectation. But on an overall annual basis, we are expecting the margins that we have indicated. And also, if you see in terms of the projections, that we had for last, that I made in the last year for the current, for FY26, we've been able to achieve our targets both in terms of the top line and in terms of the bottom line.
Okay. This is about the margin guidance and the outlook. You have a capacity of 6,000 skids right now, scaling to 15,000 skids by quarter 2 of FY27. What is the demand looking like there? You've also spoken about skid assembly share increasing going forward. What is the targeted market share here?
In terms of the share, we expect that the skid assemblies would contribute about 20% of our overall business in the current financial year. And we are seeing extremely strong demand coming in. Right now, we are slightly behind in terms of, our supply. But in terms of the demand and our capacity expansion also is in line with the expectation of the demand that we are seeing from our customer. So we are very bullish on this segment, and we expect that this segment will be a major contributor to the business in the near future.
Okay, Asad, just a quick clarification. End of FY26, your top line grew in the range of 17 to 18%. FY27, you're saying the pace of top line growth is going to double over 35%. Correct me if I'm wrong. So incrementally, where is it that you're seeing increased demand coming in from, and why isn't operating leverage kicking in if that is the case? Is it purely due to supply chain disruption?
So you're not wrong. You're right. We expect that this year would be a significant growth in terms of our top line and bottom line. This is owing to the fact with regards to the increase in capacity of our skid assemblies, which would be a very big contributor in the growth of the business. Our core business of hose assemblies would also see a significant growth, but the majority of the high growth would come in from the skid assemblies segment. Operational efficiencies in the skid assemblies. So this is a business that we've just started about 5-6 months back, right? So I think operational efficiencies would kick in, I think, probably from the next year onwards.
Take that point. As a last question before we let you go, Europe was a big market for you in quarter 4 of FY25. 43%, it has come down to 29% in this quarter. What is the reason here? Is it just a percentage decline you've seen? The absolute number remains the same. What explains this? And what happens with the UK-India FTA? Does that impact you in any way?
So in terms of the Europe business, right, over the past almost 1.5 to 2 years, we have seen the European business stay almost flat. We have seen a significant growth come in from the US market. But we expect the European market to increase in this particular financial year because we have certain projects coming in from the Europe market. And also with regards to the UK, we have already started to see increased business coming in from the UK. Currently, the UK is a very small percentage of our overall business, but we expect that UK would also be a significant contributor to our business in the upcoming years, especially due to the FTA.
Okay, take that point. We'll wrap this conversation on that note, but the stock is higher on the back of the commentary coming in. Thank you, Asad, for joining in with your thoughts. As we take a break, a quick programming reminder. We are proud to bring HSBC presents CNBC TV 18 Future Female Forward Season 4 to Mumbai with the Mumbai Gala, a powerful celebration of equity and leadership. Top industry leaders come together for a dynamic town hall shaping the narrative of New India alongside curated cultural performances that reflect the spirit of the city. The evening will also spotlight a continued commitment to empowering female micro-entrepreneurs through a dedicated advisory initiative, driving meaningful impact through the year. Tune in on May 6th, 5 p.m. onwards, only on CNBC TV 18.
Welcome back to Midcap Radar. Well, a couple of stocks from the OMC space, oil marketing companies, HPCL, BPCL and IOCL, all of these names have now spiked to the day's highest point. Important to note that the election-related headwinds, especially in terms of fuel retail prices, is something that is now behind, and the street will be keenly awaiting any developments on that front. But it's a good time to welcome one minute. Sonal, you've been tracking this space quite closely as well.
No, I was just trying to say that there have been multiple clarifications from the government as well that there'll be no price hike, but the indication that was that it could happen after state elections. So we really don't know what would happen. There's been continuous clarification coming in from the government as well. But yes, the stocks are higher in trade, all of them at the day's high. So that is important to note as well, that all of them after major underperformance. Major underperformances come by as well, so we need to keep that into consideration as well. So, but let's go ahead and speak with Rajesh Palvia, VP Technical and Derivative Research from Axis Securities, for a technical check on the markets. Good afternoon. Thank you so much for joining in. It's been volatile. There was a fall from the highs, then we did see some recovery as well. What is the next level to watch out for now?
Yeah, good afternoon. So Nifty is consolidating in a range of 23,850 to 24,200. This is the range which we are witnessing. The consolidation is taking place since last couple of weeks. Looking at the data setup, the major put-based concentration is placed at 23,900, 23,800 strike. So this may act as a immediate support area for any kind of dip if we get around those level. So buy on dips would be the strategy for Nifty till Nifty is holding about 23,800. I think any minor decline should be used as a buying opportunity. On the higher side, once Nifty able to take out about 24,200, which is the major call concentration area, if it's take out on the higher side, then some short covering action can trigger, and then Nifty may scale further to 24,400. But broader market is showing a different behavior. Midcap Nifty is at day high. Bank Nifty is still struggling to cross major supply zone of 55,000, 55,200. So Bank Nifty is still showing sign of weakness on the near-term structure. But Nifty, here we are holding bullish view. Buy on dip should be strategy. Midcap stocks are also doing good. So here also one can focus on some of the sector like EMS space, pharma space, metal, all these sector and capital market related themes. All these sectors are showing a good traction in terms of buying. So one can find out opportunity in this sector to remain on the long side of trade for grabbing the opportunity in this market.
Rajesh, can you point out a few names for us within these spaces or stocks that you want to recommend for our viewers today?
Yeah, so from pharma space, Lupin is looking very attractive. The way stock has managed to be breakout of long consolidation. Now on the long-term chart, also stock managed to register a new breakout. Stock is almost at all-time high trajectory. So we believe that Lupin may extend its gain, possible up move towards 2,500, 25, 30. We may see in the near-term perspective. So one can buy and accumulate Lupin. On the downside, 2,400 needs to keep as a stop loss. Another stock from the metal space, that is Hindustan Zinc, is also looking promising. Here also we have seen continuity of uptrend is there. Whole metal basket is showing sign of strength. So Hindustan Zinc is looking attractive. On the higher side, we are projecting target of 670 to 675. On the downside, 625 needs to keep as a stop loss.
Well, thank you so much, Rajesh. Another stock from the broad end of the markets is Godfrey Phillips. That particular stock too has surged all of a sudden to the high point of the day. But with that, we'll take a quick break. On the other side, we'll get you more on the market and stock-specific action on the other side.
Welcome back. You're still tuned into Midcap radar. The Midcap's doing well, and the Nifty has also surged past that 24,100 mark as we speak. But a lot of movers in the broader markets. Let's talk about that now. Exide Industries is lower in trade on the back of cautious management commentary post results. Sudarshan is joining us now. Tell us more. What is the street not liking, Sudarshan?
So last week when Exide Industries had released earnings for Q4 FY26, those earnings had looked much better than expectations. But today, in the commentary that company had in the analyst call, that commentary is looking very cautious, especially on the front of commodity cost increase. Company is saying that in the March exit price, whatever the commodity cost was, and from those levels, there has been a sharp increase in the last 1 month, and April exit commodity price has been sharply higher, and it's higher, and despite the price increase that company has taken from Jan to March, the price increase in tranches company had taken in the range of 5 to 6%. Even in the month of April, price increase is taken of 3%. Company saying there is further price increase required, but still that would be much lower than whatever the commodity price increase is. Now talking about the export, it's saying that there is a good chance to increase export revenue share to 8% FY27 after a sharp decline that company had seen in FY26. It had fallen to almost 5%. Overall, core business revenue growth, there is an expectation of high single-digit to double-digit growth. So on the growth front, it's looking optimistic, but as far as the commodity cost increase is concerned, it's a very concerning that company has called out for.
Okay, all right. Thank you so much for explaining the reason of the fall for Exide stock. The commodity prices, raw material prices issue continues across the board. But the pharma pack, that is in spotlight. Slew of companies reacting to news flow. There have been earnings as well. Let's go across to Ekta for a roundup of all that's brewing in pharma.
Well, yes, I'll start with Ajanta Pharma reacting to its Q4 numbers. Revenue was up around 21%. We had margins which came in at around 23.5% and profit at around 266 odd crores for the quarter. Segment-wise, US generics did well, so it was up 56% year-on-year. India was up around 9% year-on-year, and the management is guided for high-teen revenue growth and 27% EBITDA margins in FY27. Aurobindo is in focus because its Unit 7 has been cleared by the US FDA. It's been received an establishment inspection report from the US drug regulator. Remember, it was inspected and had received 9 observations, but now with the EIR, the inspection is successfully closed. Cohance, that stock is still buzzing. In fact, it's up 32% since the 27th of April, the announcement of Umang Vohra becoming CEO and MD, and he's taken over his position from the 1st of May. Remember, stock has rallied around 77% from its 52-week low, but is still around 59% off its 52-week high. Wockhardt seeing follow-on buying post its numbers. Stock is up 23% week to date. Reported what was a good set of Q4 numbers on the profitability front. It was 166 odd crores. Biotech revenue was up 126% year-on-year, and Zanig, one of their key drugs, is seeing US and EU review progress successfully as of now. The stock is up 159% from its 52-week low and is just about 7% away from its 52-week high.
Thank you so much, Ekta, for joining us and giving us a roundup of all of the pharma earnings and the continued up move some of these names have seen. Well, one particular stock that clearly stands out in the broad end of the market is from the banking space, and that is Yes Bank. Yes Bank up almost 7% in the session, very good volumes, and you're seeing interest over there continues to be bid higher. The other set of stocks doing quite well are the capital market players. Both BSE as well as MCX, both of these names have now surged to the high point of the day. And especially when you're looking at the update coming from Angel One, despite muted customer acquisition growth, the drop has not been as much as what the street was fearing in terms of the ADTO. So Angel One too has recovered after the initial dip. The other set of stocks doing quite well is Asian Paints. That particular stock is up almost 2%. And Tata Motors passenger vehicle, that stock too at the day's highest point. But Midcap IT is in focus. Rima now joins in with the key takeaways from First Source Solutions and KPIT Tech.
Thanks so much for that. Let me begin with First Source, where there is a bit of a revenue miss compared to street expectations. The company's delivered a 3% revenue growth on a quarter-on-quarter basis, 11.6% on a year-on-year basis, but it's lower than the company expectation and analyst expectation. In fact, the company has missed the guidance that they gave just 3 months back. In Q3, the company had raised the full year guidance to 14.5% to 15.5%, but they've ended the year with a growth of 13.6%. So Q4 revenues are a miss, and that's the reason why the FY26 guidance has not been met. Margin guidance has come in line. Margin performance has been in line with expectations, 12.1% for Q4, and for the full year at 11.7%, within the guided band the company had shared. Now, for the next year, FY27, the guidance stands as follows: 10 to 13% constant currency revenue growth. Now, this suggests a deceleration compared to FY26, but FY26 had the benefit of acquisitions also. But 10 to 13%, and margin guidance is an improvement compared to 11.7%. So the margin guidance has come in better than street expectations, and that is what the street is reacting to. Stock is up 5% because margin guidance suggests an improvement, and at the upper end, it's suggesting an improvement of 100 basis points, 12.25 to 12.75%. They go on to say the company won 4 large deal wins. It's the fifth consecutive quarter of 4 large deal wins. The exit pipeline is at $1 billion plus. Sorry, just to summarize in a nutshell for First Source, Q4 revenues are a miss, but the company's delivered on margins, and the street likes the FY27 margin guidance. A quick word on KPIT Tech. Now, they ended FY26 with a revenue growth of 1.3%. For next year, no guidance has been quantified, but what they've said is more promising than FY26, with an acceleration expected in the second half of the year. They also talk about 2 SDV, software development vehicles. SDV programs are coming to an end in H1, 2 of them, but revenue will be largely compensated by growth in new accounts. So that's KPIT Tech for you.
Okay, thank you so much for summarizing those numbers for us. Reported just a while back. So that's the analysis on both KPIT Tech and First Source. With that, it's a wrap on this edition of Midcap Radar. Thank you so much for tuning in. Your stocks when we return.
Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Now, today, what we're seeing is a bit of a recovery coming in from the day's lowest point, right? We went to the red territory as well at one point in time, and then we started seeing a recovery coming back. So again, from the day's lowest point, good recovery, 24,100, above that mark again. Nifty, 0.3% of gain. What's managing to hold on to better gains today is the broader end of the market. So Nifty mid-cap and small-cap is doing much better than the benchmark indices as well. So we're seeing good momentum coming in from the individual names in the mid and small-cap space as well. Earning movers coming in. Look at the small-cap, right? Trading at the day's highest point. So good moves coming in, especially in individual names. As of now, you can see at the bottom of your screen, you have South Indian Bank that's reported its numbers as well. So we'll watch out for more details on this one. Flip-flopping between the red and the green, and now it's started moving down sharply as well. So South Indian Bank has seen a decline with numbers. NII is up 5.4% at around 915 crores versus an 868 crores for South Indian Bank. We'll wait out for the NPA details as well. NNPA, GNPA, asset quality, how is that moving? That will be key to watch out for. As of now, we just have the first cut numbers coming in here. Stock is now down 1% for South Indian Bank. So seems like something that is not exciting the street, but finer details, we'll get your back through the show as well. But this is a show where we solve all your stock-related queries, and we're going to be doing just that with our experts for today. Saumil Mehta, Head of Retail Research, Mirae Asset Sharekhan, as well as Parthav Shah, Director, Tracom Stockbrokers. Parthav as well as Saumil, good afternoon. Thank you so much for joining us on the show as always. Let's start with the queries then. This first query is coming from S.R. Sekar, who's writing to us from Coimbatore. He's holding 250 shares of Crude Vysya Bank, and this is at a price of 300 rupees per share. Wants to know the outlook of the stock. Parthiv, KVB, what's the view coming in on this one? They're making almost at the buy price, not much of a difference, right? So what should the strategy be from here on for the long term?
Very good afternoon to you all. We like the story in Crude Vysya Bank. I think if you compare this bank from the past 3-4 years, I think they've done a tremendous job in terms of the asset quality improvement from gross NPA levels of almost 5.5. They are right now at 0.7, 0.8, which was reported in the last quarter. Plus, if you see in terms of the business mix, I think currently the total business size is around 2.11 lakh crore, of which last year overall the advances have almost touched around 1 lakh crore, which is a growth of around 16 to 17% year on year. And even quarter on quarter, I think they've accelerated in terms of the advances growth. Also, the deposit growth has been pretty healthy, which has been the complaint for most of the peers that the liability franchise is not growing. Here, I think the deposit base has touched almost 1.10 lakh crores, which is a growth of around 16%. So I think in terms of the balance sheet and in terms of the asset quality, I think they're doing extremely well. And the mix is very good. That is what we like about this bank. The retail banking size is around 57% of the total assets. The corporate wholesale banking is around 25%, and the rest is treasury and other banking operations. So overall, what our sense is that, now that this bank has started accelerating in terms of its advances growth, this will definitely yield better results. And the NIMs have held up well at around 4%. I think the valuations are not very expensive. So no doubt the bank is doing well, and I would certainly suggest the investor to hold on.
Okay, that's the word coming in on the fundamentals for KVB. So hold on to this one. That's the view there. But let's move on. And Saumil, what's your view on the technical front for this one? Because in the last 1 year, surely has given good returns to an investor. But the viewer has actually bought it at 300 rupees. So they've not done anything much from the time they have bought it. What should the viewer do now? Is it time to maybe add more? Just hold on? What's the suggestion?
I think hold on to it. It's already in an uptrend. There's no doubt about it. Comfortably trading about 200 daily exponential moving average. Every time it dips down, it takes support at either the short-term averages or the long-term average, which is 200 daily moving average. Now, very recently, it has just broken out of a triangle pattern on the upside. I'll be expecting this uptrend to continue. You can keep if you're a short-term trader, keep a stop loss around 290 or a little deeper 270. Keep these stop losses on your book, and then probably the targets in the very short term would be 340. And if it sustains about 340, then I think 370, 380 would be the medium-term outlook target. But yes, my view would be positive in the short term, in the medium term, both.
Okay, That's the view coming in there, as well as the targets that Somil has highlighted as well. So hold on to this one. That's the view on the technical and the fundamental front. Let's move on then to the next query. Actually, before we go to the query, Rane Madras, that reported its numbers, and we've seen a sharp spike up coming in the profits, and with that, the sharp spike up that's coming in the stock price as well. It's up 8% as of now. Revenues are up 16.3%. This is an auto component company. So we're seeing a good move coming in here right now. Operationally, EBITDA is up 21% as well. Next query for today. Navendu Sharma is writing to us from Bihar. He's holding 1,400 shares of NTPC. Price is 330 rupees per share, making a profit on this one. Wants to know whether he can continue to hold the stocks at the current levels as well as targets. Firstly, thoughts on this stock as well on the fundamental front. Parthiv?
I believe it's a great hold because we know for the fact that it is India's largest power generating company with a total install base of around 77,000 megawatt, and it almost generates it is almost 17 to 18% of total nation's capacity and generates almost 22% of the total power generation. So I think it's a mammoth of an asset, and more importantly, I think in terms of the valuations, it is quoting at around 9 on a trail basis on EV/EBITDA multiple, and also on a price to book multiple is quoting at around 1.9, which is I think a lot cheaper, almost 30 to 40% cheaper than a lot of its peers whose size and install base is a lot lesser. And more importantly, I think this is a company which generates almost 55,000 crore of operating cash flow, which helps them to generate the newer capacities. And there's a lot of capex going on even in their subsidiary, which is NTPC Green, where they hold almost 85% stake. There also there are massive plans to ramp up. So overall, I think looking at the way power demand is ramping up, and more importantly, the realizations that they are getting on a unit basis of power, which is continuously improving, we believe that this company is certainly a hold, and I believe in the long term this can generate a lot of returns from you.
Okay. And Somil, on the technical front, what are the levels they should keep an eye out on in the next 1-2 years is what they're asking.
The NTPC is already in the uptrend, trading above all the short-term, long-term averages. A month back, we've seen a breakout from a huge consolidation, which is a great sign for a stock. Basing out pattern was formed for probably 3 to 4 months, and the breakout also happened probably 3 months back. So overall, high top, high bottom formation, good setup. Hold on to the stock, probably add more. The stock can dip down till 380, 385 levels, but that will be a buying opportunity. I'll be expecting a target of at least 420, 430 in the short to medium term outlook, but I think it can go above these levels, and probably 450, 460 would be my next target.
Okay. 450, 460 would be your next target. We'll keep an eye out on those levels. Next query for today then. This is coming in from Jinesh Shah, who's writing to us from Mumbai, holding 30 shares of PVR Inox. Price is 1,110 rupees per share. Wants to know the long-term view for the stock. Parthiv, your view on PVR Inox?
Certainly, I think it's been a difficult call to hold this very long because what we have witnessed is that, even after the merger with Inox, I think the synergies took a lot of time, and especially the occupancy rates were not great, and the average ticket prices were also not going up. But maybe thanks to blockbusters like Dhurandhar, I think since the last quarter, what we are witnessing that the footfalls have increased. The occupancy has touched almost 28.5%, and this company, whenever the occupancy touches at around 28%, they tend to generate EBITDA margins of upwards of 18%. So I think the management commentary has changed. They've deleveraged the balance sheet a lot. Net debt is now down to almost 365 crore, which was almost 1,000 crores during the merger. So a lot of reduction that they have done. And I think they are rationalizing the portfolio screens in terms of renovations and in terms of the experience. So we expect going ahead, the average ticket prices also to go up. I would certainly like to hold on to this company. No doubt it has not done much even after the launch of Dhurandhar 2. But once the results are out and the operational efficiency kicks in, we believe that this stock can go higher from it.
Mm-hmm. And technically, Somil, what are the levels for the long term that you are keeping an eye out on? Last 6 months, the stock has not done anything much. But for the long term story, what is the level?
I'm not very positive on the stock. It's been, in the downtrend for a very long time. Now, the next hurdle is around 1100, 1120 levels, and the next hurdle would be 1150. Till the time the stock does not sustain about 1150, I would stay away. And this bounce probably is an opportunity to exit. If it sustains above 1150, then probably it can go up till 1250. But my view would be negative. So exit would be my call.
Okay, exit would be your call, not too positive on this one on the technical front. Next query for today, we have Satya Narayana Rao, who's writing to us from Hyderabad. He's holding 100 shares of Ircon International, and this is at a price of 250 rupees per share. They're making a loss on this one. Wants to know whether to hold or sell. Ircon International, Parthiv, at one point of time, we'd seen all these railway stocks actually see that run up, but then that trend went off. And now seems like they are caught on the wrong side right now. What should the viewer do?
Yes, I think in case of Ircon International, I think it had a stellar run post IPO. I think there was a lot of buzz regarding the railway capex going on. And I remember at that juncture, this company did command an order book of almost 35 to 40,000 crore, which has now come a lot lower. It is sitting at around 26,000 crore. In terms of execution as well, I think not much has really happened. And this is a company which, unlike the other PSUs in the railway sector, has quite a lot of debt, around almost 4,500 crore of debt on its balance sheet. I think there was some chatter regarding Ircon International being merged with RVNL, and that could be the roadmap going ahead. But I think at this juncture, we are not very upbeat on this company, and probably it would be better to exit because we don't see much triggers from here for this company to reach the investor's cost price.
Okay, and Saumil, on the technical front, Ircon International, how is it looking like? Last 6 months, when you look at it in terms of a move, nothing. It's not done anything. Down 3%, 3-4% as well. 1 year also just 1% uptick. So what should they do now?
I think Ircon has taken support from very crucial levels. So the top was made around 2024, end of 2024, and then from there it has started declining. And in last 1 month it has started bouncing back from the levels of 115. So it is almost very deep correction. Now this correction I think has completed here in the medium term at least. So I'll be a little positive here. I'll keep a strict stop loss around 140 levels, and I'll be expecting a target of around 180, 185 levels. Once it sustains above 187 to be very specific, which is the quarterly swing high, the next target would be 208. So medium term, I'll be positive. Do not try to trade in the short term, but medium term, I'll be expecting a target of around 200.
Okay, medium-term target of 200, short-term, do not try to trade. That's the word coming in on the technical front. On that note, actually, we're going to sip into a very short break. But as we do that, a quick programming note and reminder for our viewers. We are proud to bring HSBC presents CNBC TV 18 Future Female Forward Season 4 to Mumbai with the Mumbai Gala, a powerful celebration of equity and leadership. Top industry leaders come together for a dynamic town hall shaping the narrative of New India alongside curated cultural performances that reflect spirit of the city. The evening will also spotlight our continued commitment to empowering female micro-entrepreneurs through a dedicated advisory initiative driving meaningful impact through the year. Tune in on 6th May, 5 p.m. onwards, only on CNBC TV 18. Welcome back to your stocks on CNBC TV 18. The market has moved up a bit further from when we started the show as well, right? 24,130, around that mark is what the Nifty is trading at, so we'll keep an eye on that. But let's keep it going with all your stock-related queries. And we still have with us Somal Mehta as well as Partha Shah to answer all those queries. The next query for today, this is coming from Anil, who's writing to us from Kerala. He's holding 450 shares of Venky's. Price is 3,580 rupees per share. He's holding it since 2021, making a loss on this one. What should they be doing with this one? Parthiv, your view on the fundamentals for Venky's?
Probably when the gentleman, I think, entered the stock, it was at its peak of valuations. And since then, I think the valuations have really been massively derated. Key reasons being that, poultry as a business, very seasonal. And more importantly, I think the price realizations are very erratic. If you see, I think, since the last quarter, I think the price realizations were down by at least 10 to 12%. And in all the categories that they serve. And more importantly, I think if you see the last 4-5 years, there has not been much ramp up in terms of the revenue. Even the margins have continuously shrunk, which is where I think this company is not doing well. So I would totally suggest an avoid here. I think very difficult business to track.
So they should just get out of the stock even with this loss right now?
Yeah, I believe so.
Okay. Soumil, your view on this one?
I agree too. I mean, not very positive on the stock. Probably this is a very good time to exit this stock with this bounce. This stock can go till 1700 in the short to medium term outlook, where the stock has taken resistance multiple times, and I don't see the stock crossing those levels. So I think this bounce should be used to exit.
Okay. Use this bounce to exit. Might as well get out of the stock right now is the word coming in on the fundamentals and the technical front. Let's move on to the next query for today. We have Rafin, who's writing to us from Mumbai, holding 360 shares of HCL Technology. Price is 1,280 rupees per share. Currently, the stock is at 1,189. So they're making a loss on this one. Wants to know the advice. IT companies, we're not seeing much of a traction coming in your Parthiv right now. What should the viewer do?
I think last quarter for HCL Technology was a howler, and I think it was totally, not what Street was expecting, and that's why out of all the IT companies post the results, I think HCL Technologies corrected the most. It was a 2.4% year-on-year constant currency growth, which was a miss driven by the software seasonality. There was a delay in procurement in the month of March, and more importantly, I think a couple of telecom discretionary cuts were there. So a lot of things happened in that quarter, which really spooked the Street. But after that correction, I think the stock is taking some support at very attractive valuations. The company is now available at around 16-17 times trading multiple, which has not happened since the last 10 years of tracking this company. And they do have a good track record of inorganic growth and inorganic acquisitions. We believe that maybe in a couple of quarters, this company could bounce back. So I would not suggest an exit here because it's at rock bottom valuations. But I think maybe for a 1 or 2 year hold, we believe that better levels can be seen from it.
Okay. 1-2 years holding time period, better levels can be seen. So hold on to the stock there. Soumil, your view on HCL Tech also, would you suggest a hold?
My view is negative on the IT stocks, whether it is TCS or Infosys, HCL Tech. My view is negative. However, if somebody is ready to hold on for a little longer, I think the stock can really do well. However, you have to be a little patient with the stock because it will take time. Downside targets are probably around 1100 or probably around 1060 levels, which is the previous swing lows in the quarterly monthly charts. So there are downsides still. However, if you hold on to this stock, you will be able to see a good levels in the long run, probably in 2 years, 3 years time. But the time frame has to be larger.
Mm-hmm. Okay, let's move on to the next query. This is coming in from Kaberi, who's writing to us from Kolkata, holding 1,500 shares of IDFC First Bank. She's bought it at 70.5 rupees per share. Right now it's 69, almost their buy price. Wants to know whether to hold, add, sell. What should the suggestion be from here on? Your view on this one, Parthiv?
hold at this juncture. Not that we are very upbeat on this company, because since last many years, this stock has hovered between lower levels of around 55 and upward levels of around 80, and not delivered much re-rating since the last 5-7 years. More importantly, I think there's always been equity dilution. A lot of capital has been pumped in, but I think despite all of that, what we see is that the stock doesn't tend to give good shareholder returns. And I think another reason being that very recently, I think there was a little fraud that had taken place. No doubt the management did give proper justification, and despite the fact that the balance sheet has grown in the last 5 years, but I think the MFI stress in the portfolio is not something that market has a lot of confidence in. So probably any upside to the tune of 10 to 15% from here, the investors better off exiting.
Okay. And Somil, on the technical front, what would your suggestion be?
IDFC First Bank are positive in the long run. It has been taking support at very crucial levels around 58 and 55 levels. So those are very crucial levels. And I think it has started making higher top, higher bottom trading. About 20-40 daily moving average has taken support at, long-term trend line as well. Positive on the stock, hold on to it. Probably the next targets in the short to medium term outlook would be 75 plus.
Okay, that would be the target there coming in. We'll surely watch out for those levels there for IDFC First Bank. But with that, we're actually absolutely out of time on this edition of Your Stocks. The market has seen a very sharp spike up as well. 24,180 is what the Nifty is now trading at. And we're seeing a good move coming in there, 0.6% of a gain on this one as well. So, yes, that's the word there. Prashant is also here with us. Prashant, I think there's some specific reason.
Yeah, we're going to do a live handover to closing bell. So the news is that, and look at that move, 200 points higher. And the news is there is a report on Axios. We should put this up immediately. Quoted to Axios, of course, but this is what is coming through right now, saying that US and Iran are closing in on a one-page memo to end the war. So this is, I think, what is causing the movement at this point in time. 216 odd points, and it's, I think the last 100 points has come just like that, last 5 minutes or so. So I'll just quickly read out what they're saying, right? They're saying the White House believes it's getting close to an agreement with Iran on a one-page memorandum of understanding, a MOU to end the war. And let's just put the dollar rupee as well. And set a framework for more detailed nuclear negotiations, according to 2 officials and other 2 sources who briefed on the issue. And that the US, they also say that the report says the US expects Iranian responses on several key points in the next 48 hours. Nothing has been agreed yet, but sources say this was the closest the parties had been to an agreement since the war began. So that is essentially what has happened and what is causing this move. At this point, oil's making a move as well. That's what I'm talking about. Look at the dollar rupee. It's a sharp move, about 70 paise move, and it's all happened in the last 5 minutes or so. By the way, the story itself is about 5 minutes old. So I think that is basically the reason why you have this come through. So no agreement or anything, but this is a sourced story from Axios saying that both sides are pretty close to coming to some sort of a memorandum of understanding, a one-pager, as they call it, to sort of, set the framework for a more... So, what is also important is that it suggests that nuclear negotiations are for a later time. So maybe that gets pushed out later. That was what Iran was saying. Initially, the US side, White House, President Trump, etc., were saying that, no, it's not possible, but that this is very central. But this suggests, the story suggests that this is possible. Can we just quickly put the story out, source it to Axios, and just put the news flash up out? I think and that's the reason why the markets are reacting in such a ferocious way. Let's just take a quick commercial break here, and we'll just come back. And CG Power numbers are coming through as well, and we'll address that story on US-Iran in just a bit.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Hang Seng is managing to hold on to gains of 0.2%.
Operation Epic Fury is concluded. We achieved the objectives of that operation.
Another 1.5% this morning, which basically means we're at about $108 per barrel this morning. So 24,200 on the Nifty, so about 0.8% higher.
It was a soft quarter, which was expected, especially given two key worries.
Is a very strong margin performance. EBIT margins at 16.6%, highest ever.
The targeted credit support is 2,55,000 crore rupees.
Commentary, if you can say in one line, it's not that bad.
We've had a great year, which we ended 31st March.
In a time like this, the company announced a capex. They are also giving a guidance on their chemicals business. It's all about earnings actually today. The markets did fall from the highs, but then again, there's a swift recovery.
Okay, welcome back. This is Closing Bell. We are coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, hi, good afternoon. And that story is what is making, that entire move, right? 300 points now on the index. So we have the flashes now up on the screen. And take a look at that. I think, just to give you a sense of the move, we're getting a move like this after a long time. But let me tell you. We were at 24,150 and we're at 24,330 now. So, you know what, almost 200 odd points coming through in the last 12, 13, 14 minutes or so on the index. So that's the news flow at the bottom of the screen from Axios. It's a well-respected political news website saying that the US and Iran are closing in on a one-page memo to end the war. The story was posted about 6-7 minutes back, and the fact that this is, the story makes clear that this is, of course, a MOU, like a framework to start the talks, and detailed nuclear negotiations perhaps later. This is according to 2 U.S. officials and 2 other sources which were, who briefed on the issue, and the U.S. is expecting Iranian response on several of these key points in the next 48 hours. The story says nothing has been agreed yet, but this is the closest both sides have been in a long time. So the closest they've been on the opposing positions for some time now, and it's causing all the move. The dollar rupee, just a quick look at it, because actually the currency is what caught my attention, and that started moving first, and then stock started moving. Look at that. It's a sharp dip on the dollar rupee, which means the rupee is up, appreciating 60 paise stronger on the rupee as compared to the USD at this point in time. There have been several misses between the cup and the lip, as they say, and this is a saga which has now gone on for 2 months plus. The markets are what the markets are, right? It's felt for a while that you're closer to an end to this thing, but at some level it's also felt like, there's no playbook to this. There is no specified set of innings that both sides are playing, and it seems like an endless thing. But this is, I think, one more story which is making its presence felt out there as far as markets go. And we'll see if there's this follow through and there is actually concrete statements, etc., from President Trump, who's pretty vocal, pretty open about it in terms of what they are doing, and maybe from the Iranian side as well. So for now, it's a strong, powerful move, all appearing in the last 10 minutes or so of trade. Guys.
That's right. Just take a look at the move that you're looking at on the index, and as you mentioned on the rupee as well. But all those war sensitive, so to call it, they are bounced up in trade. Crude oil prices have corrected. Just take a look at the OMCs. They're off to the races. Whether you look at HPCL, BPCL or IOCA, they are the top movers that we have seen in the last few minutes. All of them moving to the high point of the day. We get some of those intraday charts up for our viewers on the screen as well. And if the war is going to come to an end, some of those stocks actually that took a hard knock when the war just started, would be the likes of Indiglobe Aviation. Take a look at the intraday chart of that stock. From the time this news report did come out, we have seen a big spike up on Indiglobe Aviation. Stock is now up close to 7%. Also pull up L&T. Remember, the stock was down 3.5% earlier today. But that was one of the casualties of the war because of their high exposure to the Middle East. Now, that one's seen a sharp rally from the lows of the day. It's cut its losses by close to around half. And that's why, just take a look at that. It was on the verge of moving into the green as well. So keep an eye out on L&T. And besides that, I think one positive from the technical parameter is the Nifty Bank. Earlier today, we had highlighted that the 20 DMA is important. In the last 30 minutes, the Nifty Bank with the 20 DMA comes up for you on the screen. And that's taken out the 20 DMA. So good times as well. Good start to trade. In today, we have got some good news, and the bulls are latching onto it.
Well, markets are ripping as we speak. The 24,300 mark has been hit on the Nifty, and the move is global in nature. While the Dow futures has also spiked. On my screen, I can see about a 250, 300-point gain. Look at the European indices. The CAC, that's the French index, is up 1.7%. The FTSE is also up about 1.5% to 2%. So there is global risk on. Markets are hopeful. We've had a couple of false starts in the past, but now there is once again a ticking clock. 48 hours is what the report says that US has given Iran perhaps to respond. So, but the market is clearly hopeful. 270 points up on the Nifty, the Sensex higher by 800 points. The Nifty Bank is up 1,300 points. And Brent crude prices, when we started the trade, Brent crude was at 108, now down to 103.5. So how should you position yourself? It's all higher right now. Looking at Interglobe Aviation, that stock is up nearly 7%. Again, impacted on account of the higher fuel prices, the fact that the Middle East disruption has impacted the skies and the flights. Tata Motors, passenger vehicles, trend, Dr. Reddy's, big moves seen across the board. Let's get in some technical trading ideas to find out how you should position yourself in the last hour of trade. Mitesh Thakkar, as always, is with us on the show. Mitesh, you were waiting for this level of 24,300 to be crossed before taking a long position. Are you comfortable going long now?
So the level which I'm watching is roughly around 24,354 zone, and we've had a high of 24,334 today, which is exactly where we had the high on Wednesday as well. So I think we'll just wait it out. On the index, I think 24,354 remains a formidable level. But stock side, yes, I think there are some breakouts taking place. So those could be interesting bets to trade. Would recommend a long on Mankind Pharma with a stop at about 23.29 for targets of 24.20. And Nuama is a buy with a stop at 13.79 for targets of 14.60.
Okay, all right. Any view on a couple of these big movers on the Nifty? Interglobe Aviation, that's now at the high point of the day. L&T as well as seeing some signs of support. How are they looking at the charts?
L&T, I think, had some kind of a negative opening and then it's bouncing back from its 20-30-day averages. So L&T is pretty good, but I would be more comfortable if the stock starts getting past 40.20, 40.25 on the upside. And then, the up move can be more smooth and better. Similarly, Indigo, I think the corresponding levels are around 46.20, 46.10. I think once that zone is cleared, only then I would turn extremely positive. Otherwise, it's a stock which has stopped falling, but no sign of a big reversal on the upside as yet.
Okay, all right. By the way, keep an eye out on the bottom of your screen. Thanks, Mitesh, for that. Keep an eye out on the bottom of your screen. Polycap, the street seems to be liking those numbers. I think there was a bit of a margin beat out there because the top line growth is in single digit, but the EBITDA number is up by close to around 13.3%, which is telling you there is a bit of a margin beat in comparison to what we were working with. So it's contracted, I think, on a year-on-year basis. But if I saw that flash correctly, the revenue number is better. Yes, so that gets a tick mark out there. And I think the absolute EBITDA number as well as the margin number was a little bit better in comparison to our poll. We'll just reconfirm that. For the time being, the first look at those numbers, the street likes it. Yes, a 20 basis points beat is what we're seeing on Polycap. And that explains why the stock has moved to the high point of the day. We'll wait for further clarity on that front. Let's get in Sid Khemka, who joins us on the show. Hi, Sid. Good afternoon. Good to see you in. What's your view on a couple of these wires and cables players? KEI came out with a set of numbers. The stock was down, but that popped out from the lows. And now we have Polycap, where you have the EBITDA growth, which is pretty good, at around 13.3%. Your view?
Yeah, good morning. Good afternoon, Nigel. Yes, glad to be on the show and a good day. I just keep my fingers crossed that hopefully this settlement finally takes place and we get to see the end of this war. in terms of the wires and cables, I think the earnings across has been pretty strong. Even KEI, the numbers were pretty strong. The outlook management commentary, that also came pretty strong because of the strong demand and the ability to pass on the price hikes. If specifically for KEI, if you look at the management has remained optimistic, guiding for a strong volume growth of 17-18% in FY27 and even higher of about around 20% in FY28. This is aided by the strong capex momentum across key sectors plus the capacity expansion that they are undergoing. So while the Q4 numbers were modest, that was mainly because of capacity constraints and the slow ramp up of the new plant. I think overall, we believe that the wires and cable segment should do well. There's a strong demand. They also led to the increasing capacity expansion in the power segment, capital goods, the data centers, the AI demand. All those things are leading to a strong demand. Even for Polycab, the first cut numbers look much better than our expectations. So we were working something around 690 crores of PAT, and I see on your screen the PAT is about 720 odd crores. So much better numbers compared to our estimates. KEI, we have upgraded our target price to about 5,800, and even Polycab, both of which remains our preferred pick stop buys in the sector.
Okay, let's talk about SRF. That's extending gains on the back of strong Q4 numbers. The management expects continued strength in the chemicals business. Sonal joins in with more updates.
Thank you so much for that. Well, the numbers were much better than what the street was working with. So the stock opened higher. There was an expectation of a decline on a YOY basis, but it was an improvement. That is something the street likes. Revenues up 7%, EBITDA up 7%, and profits up 10% as well. Margins, however, were flat on a YOY basis. But it was just not the numbers. The big capex announced by the company is also something that the street likes. In a time like this, they are planning to increase the capex on their refrigerant gas side to 2,300 crore rupees. The commentary was very strong in the conference call as well. Yes, they did indicate that there are issues with the West Asia market because it is one of their biggest markets, but they are planning to diversify their markets in the export segment. They are looking at 15 to 20% growth in their chemical segment, which did not do so well this time around. There was dumping coming in from China, but they continue to remain very positive structurally on this particular segment. They spoke about 2,500 crore of capex in the next fiscal, also talking about investment in fluoropolymers, which is going as planned, and fourth generation refrigerants, which is a high margin business, will come on stream very soon, and they will change the entire product mix meaningfully in FY27. They are talking about the packaging segment where BOPET prices, they have improved in the quarter gone by, and they also spoke about something of it being bottomed out in Q4 itself. So that's a positive news coming in on the packaging side as well. China's anti-involution measures are helping packaging spreads according to the company, and they had fundamentally strong view on the chemicals business. Yes, they spoke about forex losses, raw material prices going higher, but the commentary and the tone was quite positive despite whatever is happening globally.
Okay, all right, Sonal, thanks very much for that. Siddharth, of course, is with us. Siddharth, any thoughts, SRF?
So yes, Prashant, overall, I think numbers were in line with expectations. The EBITDA margins expanded about 180 basis points, higher than our expectation at about 25%. We were at about 23%. And as Sonal highlighted, the focus was on the revised capex project for the refrigerant. This follows the company's land acquisition in Odisha, as well as the expanding to scope of the project to include the HFO, HF, and some of the value-added derivative capacity. So while the project will be executed in phases with the completion targeted by February 28, we believe that the space looks interesting. And while there are some headwinds with regards to the commodity prices, demand, and the company's presence in the West Asian country, even Navin Fluorine that came out with strong numbers. So overall, performance-wise, beats our estimate. Capex guidance outlook remains pretty strong. The chemical segment, that is expected to sustain growth, new product launches, and the capacity expansion that should drive growth. So we remain positive on the stock SRF. Currently, we have a target price of 3,160.
Stock is still down about 18% away from its recent 52-week high, which is 3,325. Lots of mid-cap numbers came out, and just to quickly summarize them, let me begin with KPIT Tech. where KPIT Tech reported, the numbers were okay. But what the street is disappointed with is the fact that the company hasn't quantified an FY27 guidance. All they're saying is that FY27 is going to be more promising compared to FY26, which was anyway not a great year. FY26 was a year of growth compression. The company's top-line growth was only 1.6%. All the company is saying that it looks more promising in terms of visibility and the market opportunity. Secondly, the first half of the year is going to be subdued for KPIT Tech. What the company is saying is that two of their largest SDV programs, that's Software Development Vehicle Programs, SDV, they come to an end in the first half of the year. They're hopeful. The management is talking about replacing that, replenishing that with some new contracts and new client wins, but that's a 4 to 5% top-line growth, which goes away because of these two large programs coming to an end in the first half of the year. So basically, FY26 was weak, and the recovery gets pushed forward to H2 of FY27. So the street still doesn't have concrete signs of that recovery. We're talking about KPIT Tech right now. Margin guidance was largely in line with expectations. Now, when it comes to First Source, what the street really likes is the margin performance. The company's margin guidance has come in ahead of street expectations. The company's margin guidance stands at 12.25 to 12.75%. Which at the upper end is a good 100 basis points higher than where they ended FY26 with. Secondly, the company's outlook on the order wins is also fairly positive. They're saying they're ending with an exit deal pipeline of $1 billion plus. Their medium-term aspiration is for double-digit constant currency revenue growth on a year-on-year basis and 50 to 75 basis points of expansion. But Q4 revenues were a miss for First Source, which is why the company couldn't meet their FY26 guidance. So in a nutshell, for KPIT Tech, growth is still subdued in the first half of the year. The recovery gets pushed forward to the second half of the year, which is why that stock is down 4%. And First Source is reacting positively to the margin guidance. Margins for the company will expand next year at the upper end, nearly 100 basis points. So that's why the stock is up 8%.
Remember in the IT town hall, the market forum that we did, Srikanth the Fractal.
Yeah.
Did he, or am I imagining things now? Did he mention first companies which are kind of sort of, maybe better? Not Srikanth, apologies. Phil Fesher. Yeah. I think mentioned First Source as one of the companies, right? Which perhaps is doing things right in terms of adapting to AI and sort of
the overall headcount has also come down. So maybe they are using a lot more AI to deliver on the work. And the medium-term outlook is double-digit revenue growth on a year-on-year basis. So they're quite confident about that, along with margin expansion. You want to comment? Both these numbers just came out in the last 2 hours.
Yeah, Rima. So I think KPIT, the first cut numbers looks okay. Revenue was above our expectations, margin in line. But as you rightly highlighted, the challenge is on the future growth. And that is where I think the company is looking, at least in the near term, a little bit weak. Two of the largest SDV programs that is coming to an end in H1. But what we believe is that some of that growth or revenue will be compensated by the newly acquired accounts, but that again remains a little bit hazy, and hence lack of clarity is what gives us a bit nervousness in terms of the outlook going forward. First Source, we don't have coverage, hence will not be able to comment.
For KPIT Tech is also directly juxtaposed with Tata Tech, which delivered a good set of numbers, and the company was talking about organic double-digit revenue growth in FY27. Pretty confident about that, and they too spoke about margin expansion along with that, 18% kind of margins by Q4 FY27. So now when you compare all these ER&D companies, whether it's Tata Tech, Tata Elxsi, LTTS, and KPIT Tech, all numbers are out. Which one stands out for you all and Motilal Oswal?
Definitely, I think a lot of numbers have now come out, and we have also been trying to understand both for the services as well as for the ERD companies how the landscape now pans in. I believe some of the companies, for example, as you rightly said, Tata Technologies, there is a talk of better margins, but we believe that valuation still is on the higher side, and compared to the growth, which is for at least for next year looks good, but this year has been a pretty wide shot. So L&T Technologies, I think that is something that we are pretty comfortable in that space, which is looking decent compared to some of the others in terms of valuation.
Okay, stay on. Let's talk about XI then. That's slipping on the back of their Q4 numbers, cautious management commentary. Sudarshan joins in with more. Sudarshan, what did they say also about price hikes?
So earnings of Exide Industries had come last week and those earnings had looked very good and it was much higher than expectations. But today, the company had the analyst call. In that commentary looked very cautious considering the sharp increase in commodity prices it has seen in this year since January. So in January to March, the price increase they had taken in tranches and that price increase range was 5 to 6%. Again, the company had taken price hike of 3%. But because of sharp increase in commodity cost, they were saying that March exit commodity cost and from that level, April exit commodity cost, whatever the levels were, there has been a sharp increase. So company will have to take another range of price hike and that they might announced very soon. They are also in negotiations with OEM regarding the price if there can be any negotiation. So they have said certain OEMs have been convinced about the prices, but with certain OEMs they are in the negotiation. Talking about the demand for core business in FY27, they are saying the growth can be in high single digit or double digit growth. Also, export revenue contribution has seen a sharp fall in FY26. The contribution had fallen to 5%. They believe that now with the demand stabilizing, they believe in FY27 it might increase again to the level of 8%. So on demand front, the commentary was optimistic, but the concern related to commodity price has taken a sharp knock on the stock price. That's the reason you are seeing a sharp downtick from the day's high.
Okay, all right. Thanks a lot for that, Sudarshan. Sid, coming across to you. What do you make of this one? I think I'll have a preference, if I'm not mistaken, to Amara Raja. You could update me on that. But what's the view on Exide, if any?
Yeah, I think what Sudarshan said clearly comes out in the con call where the management remained cautious of the raw material price pressure. Sulfur prices have gone up from an average of about 15 rupees per kg last year to about 74 rupees as of April end. And that's a steep high of almost 3x, 4x kind of a jump. And to pass on this, they have taken 5 to 6% of price hikes in 3 tranches. But again, they will need to make more price hikes, which may be detrimental to the overall demand per se. And I think that will be a phenomena for both the sector stocks, both Amara Raja as well as Exide will kind of face that kind of pressure. But in terms of growth expectations, we have a higher growth expectation for Amara Raja compared to Exide. Both are getting into the EV battery segment where the new age growth is coming about. But in terms of valuation, again, Exide trades at a significant premium at almost about 25, 28 times FY27 compared to Amara Raja, which is around 20 times. So purely in terms of valuation and a bit of higher growth in Amara Raja, we prefer Amara Raja over Exide.
Okay, all right. Siddharth, thanks very much for that. Appreciate you joining us and good conversation. 300 points, by the way. So gains are sticking, and that's good to see. Some hesitation is natural, and there will be doubt and there will be doubters, and it's only fair, especially if you're trading, because it's a source story from Axios which has caused the move. We've had stories before. We've had slips between what was expected, what was supposed to happen, quote unquote. So all of that, of course, will take place, but for now, markets want to believe the evidence is up on your screen that maybe this is going to happen, and we will see some progress with regards to some framework of understanding between both sides. So 94.63, it's a big move. 65 paisa strengthening in the rupee. Brent is down 5.5. Nifty is up 300. Nifty Bank is up 1,300 points as well. We'll take a break here. We'll come back and we'll have Jitendra Sriram join us from Baroda BNP Paribas Mutual Fund on the other side. Stay tuned.
Welcome back. It's a good-looking screen. Crude oil prices, have dipped, and that's given fresh hope actually for the Indian bulls. And actually today it had the makings of a very, very good trading session. And the recent news reports have given further legs to the market. So buy on dip has continued today. At one point in time, the Nifty had moved into the red, but that's a good uptick that you're seeing. Now the Nifty has moved up and the India VIX has cooled off. We mentioned this point yesterday. We ended with a cut of around 100 points, but yet the India VIX cooled off, and now it's moving towards that crucial 15-odd mark. The VIX cools down sub that 15 mark, it'll be a fresh booster shot that'll be coming in for the bulls, and it'll make the bulls a little bit more optimistic. But what's taken place in the last 45 minutes is, with this piece of good news coming with regard to hopes of this big war potentially ending, the Nifty Bank has gone ahead and taken out the first simple daily moving average, which is the 20 DMA. That was close to around 1,000 points away at the start of today's trading session. Well, we're trading a little bit above that. And now the 50 DMA is within kissing distance. So we're at a very, very crucial juncture. You'll want the Nifty Bank to rally a couple of percent from here on and get past some of those daily moving averages, because it corrected one way from around 57,000 all the way to around 53,500. Moving to the Nifty options data, well, the put writing has come back into play. So 24,200 put. Just take a look at the premium, down close to around 60%. That's come down to approximately 108 rupees or thereabouts. I think we'll have to get that as well up for you on the screen. I think we'll have to revise some of those rates actually, because the premium actually has moved down. So we'll do that in just a bit. Moving to the 25,000 call, the premium out there actually has moved up from around 8 rupees. It's moved to around 25 rupees. So there is some out of the money call buying that we're seeing. Yes, that's the right strike that we're looking at. That's moved up. Out of the money call buying in case things get up and going. The PCR though has moved up. Remember, a few sessions ago it had come down to around 0.8. Now it's at around 1.15 because there is put writing that's taking place. Individual stocks doing a thing of their own. Suzlon has seen a good bounce, but there is some unwinding of long positions that we're seeing in today's trading session. Vodafone Idea, I recall it was 9.5 rupees on expiry day. And that one has moved one way actually. And the shorts are getting squeezed out on that stock. So now it's actually rallied on a low base, close to around 15 to around 20%. And there is about a short covering you're seeing out there. BSE Limited, well, you'll have to say that, valuation-wise, it's getting a little expensive, but you need to stay with the trend and you need to stay with momentum. And that's precisely what's happening. Both BSE and MCX seeing fresh buying in today's trading session. And there is a lot of shorts actually that are creeping into KPIT Technologies. So for the time being, I think the guidance is something that's not impressed traders. But we'll have to keep an eye out. That 720, 730 mark is extremely important. So we'll keep an eye out on KPIT Technologies because there is some shorts in the system. That said, Hormuz joins us now to tell us about he's putting the spotlight on the small cap index, a lot of stocks out there. Hormuz, take it away.
Before the last 40 odd minutes, the focal point had been the rebound in the small cap index much before this happened. And after that very, very sharp sell-off in the month of March, when almost all the indices had slipped into correction territory, the month of April and the first few sessions of May have seen a very sharp rebound, particularly in the small cap index. So the March 23rd low was sub 15,000. Today, of course, that number would change. It's well past that 18,000 mark, which is the high in today's session. And as of early today, the index was up almost 21.5% from the lows of the 23rd of March. Now, the kind of rebound that you have seen, only 4 stocks on the small cap index have delivered negative returns in this period. Most of the index has delivered positive returns. Now, there are 2 such names that have surged over 50% during this period. But the bottom line being that at least 80 stocks on this small cap index have gained anywhere between 10% to as high as 60% in this rebound. Now, which are those stocks that have done very well? Cohance Life Sciences has been on a tear ever since Umang Vohra's appointment as CEO. They're up 65% during this period. Welspun Corp is up 60%. Ola Electric, Wockhardt, Deepak Fertilizers all gaining anywhere between 45 to 50%. But the extent of the sell-off in these names has been such that despite a move of as high as 60%, Cohance is still down 60% from its 52-week highs. Ola Electric is half from its 52-week highs, and Deepak Fertilizers too is down 30% from its 52-week highs. The story is no different for some of the other outperformers as well. Angel One, Netweb Tech, Garden Reach, Newland, all of them are up anywhere between 40 to 43%. Meesho also up over 40%, but all of these names too are down anywhere between 5 to as high as 25% away from their 52-week high levels. And since we spoke of the extent of the sell-off, that despite this kind of a rebound, there are only 2 stocks on the small cap index that are at a 52-week high. Now, take a look at the underperformers, the 4 names that delivered negative returns. MRPL is down 16%. Of course, that is because of the obvious reasons. returns. Zensar Tech, of course, down 4. Force Motors and IFL Finance, some negligible returns, but have not participated in this recovery. Now, the next level to watch on the small cap index is 19,716. Why is that so? That's the record high that the index had surged to on the 12th of December in 2024, and now trading anywhere of around about 7% away from those levels. So significant rebound in small caps, but still well away from their peaks.
All right, interesting data there. Thanks very much for that, Hormuz. Jitendra Sriram is with us, Senior Fund Manager, Baroda BNP Paribas Mutual Fund. Jitendra, good to have you with us here. What will do the best when this is now, this conflict is officially, formally, done and buried, if I can call it? I don't know how that'll, in what shape or form will we know? Maybe it'll be a post and say, well, this is the end of it. We saw some of it in the morning, Marco Rubio saying that, well, Operation Epic Fury is behind, is done in its current form, shape, whatever. So what does best, in your opinion, as we get confirmation? You think it's going to be some of the oil hit sensitive, something else? And I feel generally there was a lid on everything because of this, directly affected or not. Your sense?
Good evening, Prashant. And I think you're absolutely right. I think the first order impact would obviously be the oil names, especially the refining and marketing space. But I would also say that, from the beginning of the year, the biggest single change that has happened on people's outlook on India is that we graduated away from a monetary easing kind of a scenario, which is what was penciled in at the beginning of the year, to sometime around now where we are probably looking at a long pause to probably a tail risk of probably some increase towards the year end. And if crude market softens and, crude comes back to two-digit mark again and sustains there, I think that is something that will actually undergo a material change, which is what people are penciling in from a monetary perspective. I think so all monetary derivative plays will be interest rate sensitives could see some kind of an improvement then.
Globally, do you think the sentiment towards India will change? Because before this, it was all about Korea, Taiwan, the AI plays, and that they continue to do well. In fact, they're helping paper over so much of the geopolitical uncertainty. The Korean market is up 75%. So
you're absolutely right on that, because the Korea-Taiwan trade on basically being a proxy to the US market, one, and second, because these are large export-driven economies. See, India, end of the day, has always been a domestic market-driven economy. So to an extent, what is happening in these markets is very different from what you have in India. And India consumes, 88% of its crude basket. So it's a energy-hungry market as well. So to an extent, whenever crude goes up, we do see pain, whether it's filtered through to consumers or the fiscal takes it or the government takes it. The fact is there is pain in the system. So to an extent, whenever this eases off, I think people's incremental outlook towards India will undergo a change.
Hi, Jitendra. Good afternoon. Good to see you. What about the chemicals companies? I recall we had Pankaj Tibrewal, on the channel a couple of days ago, and he was talking about the yuan actually going up close to around 20%. You have logistic costs that have gone up as well. And China had this export booster shot that was in place, which has been removed, export rebate. And that's what's going to make it difficult for their exports to actually get into a market like India. Your view on the chemical space, a few stocks that are running up right now. You have Alkylamines, that stock has popped up in trade. It's up more than 10% if I saw it correctly earlier. You had SRF as well, that the numbers were quite good. Do you think that this sector could actually find its form?
Well, I think specialty, especially these plays which are on ref gases or on fluoropolymers and all that, I think that space could end up doing well, because what you're seeing is this migration of old generation fluorocarbons into newer generation ones. Whereas in that space, I think India still has a slightly longer window to adapt. So to that extent, in the interim, you will see gains coming for that segment as such. I'm a little less positive on, say, the petrochemical downstream chains which are utilizing that, because I think there is still going to be some time before gas markets can come back to their normalcy, because there have obviously been certain bombing, certain damages to gas infrastructure in the West Asian markets, and it may take a couple of quarters before that thing settles down. So you may see elevated prices continue for some time because of supply disruptions.
Jitendra, what's the read on the earnings season, in terms of the way forward, particularly cost inflation, raw material price hikes? So Exide, Sudarshan was just telling us that in the conference call, the management sounded very worried about the raw material costs. They said that prices went up by 5-6% in Q4 and an additional 3% as things stand in April. And they will have to pass it on. So generally, when you analyze, what stood out in terms of the extent of cost pressure that the industry will face and therefore the demand impact going forward?
So what I feel is that, the numbers themselves and the commentary, there was a little bit of a dichotomy there. In a sense, the numbers were actually quite robust, and it's understandable because, most companies do run inventory systems of, say, 3 weeks, 4 weeks. And if you go back in time, the West Asia conflict began in end February. So probably the inventory insulated a large part of your pain point through the Jan through March quarter. A lot of that pain will start appearing now. So that's why you find that the commentary is a lot more, subdued compared to the numbers that the companies are showing. So the numbers are good. The commentary is much lesser and highlights a lot more of tail risks. Like, for example, people doing contracting work in the West Asian markets are talking about potential slowdown, also the elevated insurance costs. As a result, that you may see a little bit of softer numbers through the first 2 quarters. Identical for people who source from those markets, you are seeing the same commentary. In fact, even in certain very domestic-oriented sectors like even cement, multiple companies have highlighted that, packaging material, the PP bags that you use for bagging cement, even that has seen almost 100% price escalation over the last month and a half. So to an extent, there is a little element of pain point which will impact the corporate markets through probably the first quarter.
Jitendra, we'll leave it there. Thank you very much for joining us. Good speaking with you, and good conversation as always. I think lots of numbers are still coming through, and we'll address more as we go along. But for now, D Street Chatter, Nimesh is here with what he's picking up. Nimesh, take it away.
Hi, Prashant. Sharp surge in the last half an hour of trade as crude has sharply fallen off. So clearly a short covering rally in most of the crude names. The OMCs are up, aviation is up, autos are up. So that one leg looks like it's a short covering rally which is playing out in many of those names. Technically now we are at a very crucial level of 24,300, 24,350. On the Nifty, if that gets taken out, the feedback is that you'll see further short covering rally in many of those crude plays. So watch out for crude. And technically, if Nifty crosses that 24,300, 24,350 mark. From a flow perspective, again, a mixed day of trade. So doesn't look like this rally in the second half is backed by very strong FI buying. The flows are still negative, is my sense. But again, while Nifty is in a bit of a short covering rally, there is a lot of momentum in the broader market names, and that trend continues. Even in today's market, the Midcap index is up nearly 2%, and there is a lot of interest in the broader market names, even in today's market. The big rally is also coming in the financial names, and that's because of the government approving the new scheme. So that's going to have a big sentiment impact on select banks and NBFCs. So you're seeing a bit of rally in that space as well. But clearly, from a tactical point of view, a decisive close about 24,350 can trigger further short covering rally.
Yeah, absolutely. Nimesh, in terms of specific stocks, what's on the radar today?
Hi. So the first stock on my list, Prashant, is Spark, Sun Pharma Advanced Research. It's been consolidating in a very narrow range of late, but my sense is there could be a fundraising very soon, and potentially even promoters are likely to infuse money in that fundraising. So that's something to track in Spark. The second name is Jana Small Finance Bank. It's been buzzing since the quarterly numbers. The buy flows have resumed in that particular name, and even in Jana Finance Bank, there is a buzz of a corporate development very soon. A potential fundraise is on the cards in that as well. So that's something to track there. The third name is Marico. Within the consumer names, Marico is one name which has actually outperformed and surprised the street. And they've also raised the guidance, which was a bit of a surprise. And hence you've seen a bit of buying interest back by larger FIs in Marico in today's trade. And the last couple of names where there is selling today, NTPC and Gland Pharma. No big reactions to those names, but there is deliberate selling in both those names at FI desk. So maybe some bit of profit booking or selling, but at least NTPC and Gland Pharma are on the sell side today.
All right. Thanks very much, Nimish, for that. We'll take a quick commercial break here. We'll come back. Our trading ideas, short-term trading ideas coming up next. And, of course, more market conversation in just a bit.
Welcome back. Holding 24,300, up nearly 300 points on the Nifty. Let's get in a few more trading ideas. Mitesh is here with a few BTST calls. Mitesh?
Yep. Well, I think, the way the market is closing, I think tomorrow would be a key test. Let's see if we get past 23,400. But right now, I have one buy and one sell. And the selling side is from the oil companies. Oil India, in fact, is the stock I'm referring to. STBT here with a stop at about 455 for targets of 440. And Pidilite is a VTS2 with a stop at about 1409 for targets of 1440.
Got it. Okay. All right. Thanks a lot for that, Mitesh. Well, the pharma pack is in spotlight today. A slew of companies reacting to news flow and earnings. Let's go across to Ekta for a quick roundup of what's brewing in the pharma space. Ekta?
Well, yes, I'll start with Ajanta Pharma reacting to its Q4 numbers. Revenue was up around 21%. We had margins which came in at around 23.5% and profit at around 266 odd crores for the quarter. Segment-wise, US generics did well, so it was up 56% year-on-year. India was up around 9% year-on-year, and the management is guided for high-teen revenue growth and 27% EBITDA margins in FY27. Aurobindo is in focus because its Unit 7 has been cleared by the US FDA. It's been received an establishment inspection report from the US drug regulator. Remember, it was inspected and had received 9 observations, but now with the EIR, the inspection is successfully closed. Cohance, that stock is still buzzing. In fact, it's up 32% since the 27th of April, the announcement of Umang Vohra becoming CEO and MD, and he's taken over his position from the 1st of May. Remember, stock has rallied around 77% from its 52-week low, but is still around 59% off its 52-week high. Wockhardt seeing follow-on buying post its numbers. Stock is up 23% week to date. Reported what was a good set of Q4 numbers on the profitability front. It was 166 odd crores. Biotech revenue was up 126% year-on-year, and Zanig, one of their key drugs, is seeing US and EU review progress successfully as of now. The stock is up 159% from its 52-week low and is just about 7% away from its 52-week high.
Thank you very much for that big move seen in Wockhardt. Moving on now, sources tell CNBC TV 18, the insurance regulator is looking to regulate commissions. Yash joins in with the details.
Well, it's an anticipated move from the insurance regulator IRDAI. Of course, the market, the industry was waiting for the timeline in terms of when the consultation paper would be out. What we've been given to understand from our sources is that IRDAI could release that consultation paper on distribution regulations by the end of current month itself. And these are distribution regulations, importantly, not just commission regulations, because commission regulations and the tightening there would be a part of this consultation paper. There could be more formalization of framework with respect to other distributors as well, like bank assurance as well as agency network. With respect to commission tightening, what we've been given to understand is that the regulator could look at a proposal to do a tightening which would be distributor based and on a effort based model. What that means is that if a particular line of distribution has to put in more effort for policy closures, which means to sell policies, the commissions there, which would be reward for the distributor, could be higher. Whereas on the side of the distribution, where the efforts could be lower or could be more light touch, there the commissions or the rewards could be lower. Of course, according to our sources, we're given to understand that individual agents would fall in the category where the efforts are higher, closures are lower, which means the commission rates could be high there. But on the other side, on the bank assurance as well as aggregators, the efforts are lower, and of course the closures are higher, so the commissions could be more tightened on that side of the distribution network.
Okay, so basically agents, if agents sell policies and it's harder for them, it's push, not pull. So their commissions are higher. And if you're buying a policy from a platform, or if you're buying it through, I mean, you go to the bank and the bank sells you a policy, that's the effort, right? Yash, the effort is higher and lower. So there could be different caps, different ceilings for commissions for these all the different channels, and there are implications when you sort of look beyond this for insurance companies and how insurance products are sold. Some are sold through banks, so there is an implication. Some are sold majority through agency. There's a different implication. So we'll talk more about this, but interesting story. And by the end of, I think, this month, as Yash is saying, perhaps that a comprehensive proposal on commissions, etc., is going to be put out. A consultation paper, by the way. And then after discussion, it's going to be it's going to be framed as rules. Well, Bajaj will report numbers for the fourth quarter. Let's go across to Sud, back to him to get us a sense of what the street is expecting. Sud, take it away.
So we are expecting a strong set of earnings from Bajaj Auto for Q4 FY26, and it will be led by strong volume growth that company has seen. Both two-wheelers and three-wheelers have seen very strong volume growth, especially three-wheelers on the export front has seen volume growth of 39%, and that is going to aid the margin also. And another positive for Bajaj Auto is the sharp depreciation in rupee that we have seen against US dollar for the last few months. That will also be impacting positively. So talking about the headline numbers, we are expecting profit rising by 28%. Revenue may see a jump of 29%, EBITDA can expand by 31%, even margin can see an expansion YOY and can come in at 20.5%, above 20% for the fourth straight quarter. Apart from the earnings, also the focus would be on the share buyback that company would be announcing after today's board meeting. Besides earnings, what exactly we'll be looking out in the commentary? So first, what does company talk about the export volume? Remember, company had said that on the monthly run rate will increase from 2 lakh units to around 2.20 lakh units. So we'll see exactly by which month it will achieve that. Second, about the domestic volume growth outlook. Already we have the outlook from Hero MotoCorp. So we'll see what exactly Bajaj talk about. And apart from these outlook, also the focus would be on the launch. But as far as the earnings are concerned, we are expecting a very strong set.
Okay, all right. Thanks a lot for that, Sir. Well, we're now joined by Sudeep Bandyopadhyay, market expert who joins us on the show. Hi, Sudeep. Good afternoon. Good to see you in. What do you make of the two-wheeler market? Sudarshan earlier today was giving us the commentary with regard to Hero MotoCorp's numbers. And, the stock was down close to around 3%. But I think Sud was mentioning his analysis that actually it's not so bad, given that the stock corrected, I think, 6% from the day's high between 10:30 and around 11:30 odd. It's now back into the green area. Bajaj Auto's numbers. Bajaj already seen a good rally because of the recent numbers as well as the buyback announcement. What's your preference in the two-wheeler names?
Well, I've been liking Nigel Bajaj for quite some time. I think two things are happening. One is, of course, the domestic volumes are picking up and things are looking good there as well. But beyond that, there are export market, they're getting more and more traction. I will be very carefully listening to their commentary on the ramp up of export business. And I think that's very much on the cards. EV, they are ramping up again, and that's a good news. The profit margin and pretty much all the numbers, performance numbers are likely to be very good in Q4. Also, the buyback announcement has created some excitement. Overall, I do like Bajaj Auto, and I think Bajaj Auto definitely from a long-term perspective does look good. As far as Hero MotoCorp is concerned, I don't think there is a problem either there. Even there, the volumes are going to pick up. They have a significant market share in the rural markets, and rural consumption picking up definitely helps them. So we are excited about Hero MotoCorp as well. Of course, the El Nino sword hangs on all of us, and we'll have to see how that pans out over the next few months.
Okay. That's on some of these auto names like Bajaj Auto. Firstsource, is this a stock that you've looked at, Sudeep? It's been growing consistently, double-digit revenue growth. There's been margin expansion year after year. Sort of seems to have turned the corner. Any views on Firstsource?
Well, I think the management came and, had given an outlook some time back, and they clearly talked about turning around the company. And I think things are going as per plan. So this has been one of our favorite small IT company, and we have been monitoring it for quite some time. And I think performance definitely justifies the view we had on Firstsource. We believe that things are going to improve from here on as well. They are not getting impacted by this AI, AI challenge and things like that, because they probably will be able to ride on the AI wave. Let's see how things pan out. Overall, in this entire space, we are a bit cautious, but Firstsource has been one of our favorite small IT companies.
I think, if I'm not mistaken, I think you had a call even on Welspun Corp. That one has been running from strength to strength, and sometimes they say don't disturb a stock that's in momentum. Any kind of dip is getting bought into. Just a few months ago, the stock was hovering around 900 rupees. We at CNBC TV and had explained the fundamentals at around 750 rupees. It's now on the verge of around 1300 rupees. And in today's session itself, from being down a couple of percentage points, it's now almost at a fresh 52-week high. Your view, has it run its course, or would you still believe it's a good buy?
Well, I think it's definitely a good business. I have no doubt, but I think the valuation has moved up quite a bit. In fact, I completely agree with you. Around 800, 900, we had looked at this stock, and we had talked to our clients about buying it. But around 1300 now, and I think time for it to take some pause. And I don't think I will recommend at this level. It has moved up too fast. And I think a little bit of consolidation at these levels is definitely necessary before it moves to the next level.
I think even here, well, I'd have to look at the numbers, but it's not still, I don't think it's I think should be around 20 times, 22 times earnings. So not outrageous like many other areas in that sense. So that's Welspun Corp for you. Life insurers are all spiking, and this is around the time when we get this monthly numbers for all these companies. So look at HDFC Life, look at SBI Life, look at Max Financial Services. So these are some of the larger ones. ICICI Pru is another one. So there is some gains which are building. So they'll report numbers for April, the monthly numbers for April, and we'll see. Sudeep, this is another space, right? You don't dislike.
No, absolutely, I like Prashant. In fact, it's a great long-term compounding story, and we need to have faith and buy into these companies and remain invested. That's the way to go for in life insurance. It's a long-term business. One has to remember when they're buying into these stocks. There are a couple of triggers which I think are around the corner. One is, of course, you guys talked about extensively the new distribution regulations. I think this will definitely help some of these insurance companies to streamline their costs further, and they will benefit, while Policybazaar and other distributors will have a bit of a challenge in adjusting to the new regime as and when it comes into play. The beneficiaries will be some of these life insurance companies. Also, amongst the life insurance companies, we have been liking SBI Life for quite some time. The only challenge is if the exclusivity which they have with SBI somehow gets broken. They will have a little bit of time for adjusting. And that is the time when probably the price will correct. And it probably will be the best time to buy that stock. Otherwise, I think, HDFC Life, ICICI Life, all are good. But SBI Life has been our top pick.
Okay, all right. Sudeep, thanks for that. For now, we'll just take a break. We come back with more questions to you. So 7 minutes to go for close, 285 points on the Nifty. and it's all looking good. It's all turned, by the way. The market was looking sluggish and not really wanting to move, trading with 60, 70 odd points from the morning. And just like that, at about 220, 222 or so, that Axia story appearing, and it's been up and up since then. Pretty much all of the move for the day after that, in the last hour, little over an hour or so. We'll take a break. We are back with Sudeep and, of course, the closing as well.
Welcome back. Closing strong with a gain of 1.2% on the benchmark indices. Crude prices further slip now to levels of 102. Very few stocks in the red today, but you've got an oil India again reacting to the drop in crude prices. Grow, Ather, Misho reports numbers later. Misho's already reported numbers. We're expecting numbers from Paytm and PB Fintech. So these stocks are weak in trade. And KPIT Tech, where the numbers and the guidance particularly subdued, the stock is under pressure. Sudeep, any more stock that you'd like to highlight?
Well, I think PB Fintech is what I will watch very carefully. And particularly as we were just discussing some time back, the new distribution regulations will have far-reaching impact on PB Fintech. So some amount of clarity on their business way forward and what they're thinking about the distribution platform will be very interesting to understand. As far as Paytm is concerned, I think, again, that is one result which will be watched. The payment bank going was a foregone conclusion. So that's nothing which will have a financial impact, significant impact on the Paytm financial numbers. But the diversification, including the distribution business and the kind of EBITDA situation under the circumstances, will be watched carefully.
All right. Okay, I think we'll have to wind down right now. Thanks a lot, Sudeep, for joining in and giving us your view on a whole host of stocks that we discussed. Well, it was a very good trading session from a bullish perspective. The Nifty goes home with almost at the high point of the day. The Nifty Bank has taken out the 20-year DMA. And also you have the rupee that's going to be going home mostly with some gains after a while. So good to see. Individual stocks that were bouncing around in trade today. There was a lot of action actually in the broader markets. Raymond Realty went up, circuit up. 20% higher on that stock. Vellore Estate, the stock was up close to around 14%. For this week, the stock is up 35%. Delta Corp, the stock was up close to around 10% in trade today. Remember, that's a stock that is a fourth of what its price was at the top. HFCL continues its good run. I think in this week itself, the stock is up close to around 20%. And if I'm not wrong, in the last 45 days, the stock has rallied 50%. Finutex Chemicals, that's another stock that was up 10%. And a few of these earnings reactions, Coforge, Wockhardt, KPI Green, all of them running along in trade. Vedanta, well, this is the holding company that's still out there. It doesn't have any big core business, but the street is lapping it up. That one's up close to around 4.5% in today's trading session. From the frontline names, well, there were a few stocks that did very, very well. Interglobe Aviation, if the war's coming to an end, well, good times. Travel will be in full flurry, and also you'll have ETF prices that will cool off. So that stock was up 7%. Tata Motors was up close to around 5.5%. And Shriram Finance as well was up 4.5%. Maybe, in fact, crude oil prices cool off, inflationary worries die down, and then it gives central banks as well a little bit more ammunition to go ahead and cut rates. Asian Paints was up close to 4%. Flip side, if crude oil price is correct, then Oil India and ONGC are normally the stocks that come off the highs of the day. And that's precisely what happened in today's trading session. Net's net, the bulls will feel good at the end of trade on Wednesday, with the markets actually having a rather good day. 300 points higher. That's as much as they would have wished for. We'll wrap up on this edition of Closing Bell. Don't go anywhere. The team of Markets Forward is waiting by. Stay tuned.
Market zooms to end near day's high on reports of US nearing deal with Iran to end the war. The Nifty ends above 24,300. Oil marketing companies gain as oil prices decline sharply.
Brokerage delivers its highest ever quarterly EBIT margin at 16%. Profit more than doubles. The stock surges over 9%. Meanwhile, KPIT Tech saw a slide after the top line growth in FY26 comes in at 1.3%.
L&T fell after a weaker than expected fourth quarter show, but with the markets and on relief recovered from the lows. And also SRF gained after a strong performance where management remains positive on the chemicals business with a 2,500 crore capex plan.
Alco Beverages names deliver a soft set of the fourth quarter numbers. United Breweries volume growth of 4% was at the higher end of the expectations, but the management flags cost pressures. United Spirits' top line also falls short of estimates. You're with us here on Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Hormas Fatakia, with me Manglam Malu. Well, Manglam, it was a very good session, a tale of two halves. So the first half being very choppy, but the second half was one-way traffic.
It was one-way traffic and a lot of traffic on the green side. Why do I say that? Because, you know, there were reports of peace happening in West Asia, and as a result of which oil prices, when we started trade, was close to around $108, $109 per barrel, ended at around 102, 103 when we closed for trade, and now lower as well, losing in trade. And as a result of which, all the stocks which were beaten down because of the West Asia crisis saw a bit of a relief rally, none bigger than, the oil marketing companies or something like an Interglobe Aviation as well. L&T, which was lower in trade, we'll talk about that in just a bit. That too recovered from the lows. So across the board, there was strong buying. Maybe some of the shorts got on the wrong side as well. We've got you covered for the next 20 minutes, all the big news and key developments on D Street. Let's also start with the big movers. That's what we have on the show today. Top movers and shakers. Sudarshan tells you that. An earnings-packed session kept D Street busy. We'll break down the key takeaways across sectors and stocks and the key events to watch out for as well. As promised, let's go across to Sud.
US and Iran reaching to agreement soon. That's the comment came just an hour ago and helped market move sharply higher. And because of that, we have seen a big move in all the oil marketing companies' names, paint companies, airline companies. That's the reason you can see Indigo closed with a gain of almost 7%. Similar move was seen in oil marketing companies. BPCL up almost 5%. HPCL similar move up 7%. Asian Paints too moved higher, closed with a gain of 4%. One sector that has been moving higher for the last few days thanks to the strong set of earnings that these companies have reported in Q4 FY26. So Tata Motors PV yet to report the earnings, but it has reacted to the that commentary of US-Iran deal, and that's the reason up more than 5%. Maruti, it was a strong set, up 2%. M&M, strong set of earnings, strong commentary. Another day of more than 2% move. Bajaj Auto, just ahead of the earnings. We are expecting a strong set of earnings. Also, companies going to consider share buyback, and that's the reason this stock too moved higher. And last one, Hero Moto. That commentary was largely positive. They are expecting a strong growth as far as the volumes are concerned, despite having a high base of FY26, and the volume growth is expected in the range of high single digit, and it has moved sharply from day's low and closed with a gain of almost 2%. Some of the stocks that have reacted to earnings, Coforge moved sharply higher, up almost 10%. SRF, good set of earnings. Even commentary related to chemical sector was positive, and that's the reason up almost 8%. KPIT Tech, it was a mixed set of earnings, and commentary related to the growth for FY27 weighed on the stock, and at the end down 3%. Excite, the concern is related to raw material price increase. There has been a sharp increase in the month of April. That's the reason this stock too closed with a cut of almost 3%. First source, very strong set of earnings and closed with a gain of 12%.
Sudarshan, thank you for those updates there. Joining in now is Sudeep Bandyopadhyay as well. Sudeep, thank you for joining in. Before the numbers that were reported yesterday, a lot of big results came out just a few minutes before market closing. Polycab was one such number. The numbers look better. They also have more or less maintained their guidance as well with the five-year plan and so on and so forth. But at this price, do you believe that there is still a lot more to be desired on the execution front for them to justify the kind of multiple they quote?
No, Almost, you're absolutely right. I think the results were by and large in line with expectation, but I think the valuation is such that at this valuation, buying into Polycab doesn't make kind of commercial sense, too much of commercial sense. So we have been advising clients to stay away. The sector is interesting with a lot of things happening, and there is absolutely no problem with these companies, but just that the valuation is such that at this stage exposure is not warranted.
Right. Shrikant, just a question on the way the markets moved in the second half today. We've been consolidating for a very long time. For the last 3 or 4 weeks, it's been between this 23,800 to 24,200 sort of zone. Do you think today's move is a bit of a breakout? And if yes, how much higher can we go from here?
Yeah, afternoon, Malu. Afternoon, Hormoz and everyone. So while looking at absolutely what you are saying is right, that the market has been consolidating within the range of 24,300 and 23,800 for almost 9 days. And today's decisive breakout clearly indicating us that it is heading for the levels of at least 24,600 and in the best case scenario, 24,800. One more thing, that on the dismissal of 24,500, we can expect good amount of short covering in the market because a lot of positions have lined up at 24,500. So today's breakout is like very decisive. And even if we consider the breadth of the market, then it is much better. Broad-based activity we saw in today's date, and 23,800 is now going to act as major support. So the support which was around 23,500 has now shifted to 23,800. And today the best part is what Bank Nifty. There also we saw good amount of participation from almost all the constituents of the indices. So I am of the view that the market is heading for at least 24,600 and the best case scenario 24,800.
24,600 to 24,800. Shrikant, that's his view on the index. But the big earnings reaction today before a slew of results that came in earlier in the day was L&T. And that was a miss across the board in the fourth quarter. While management flagged continued pressure from geopolitical uncertainties, the company has also trimmed its FY27 top-line growth guidance to 12% from 15% earlier. Vivek is here with those numbers. Vivek.
Well, that's right. So L&T, slightly soft and subdued Q4, largely along expected lines. Two headwinds that the company was facing. Challenges as far as West Asia exposure was concerned, although the management mid-quarter did indicate that 95% of the company's projects continue to stay as normal, as per what they were doing earlier. The domestic headwind, of course, was the Jal Jeevan Mission water-related project, something that company flagged off both in terms of execution as well as collection challenges that they were facing. Within that context, the management or the company missed most of the expectations that the street was building in as far as Q4 was concerned. Revenue is higher by 11%, EBITDA up 5%, margins down almost 60 basis points. In terms of the guidance, remember, management missed the top line as well as the core margin guidance that they'd given for FY26. However, the order inflow guidance was something that they managed to beat quite handsomely. Going forward, top line growth for FY27 is penciled in at 10 to 12%. Order inflow, again, on a very strong basis, penciled in at 10 to 12% once again. And this is something that the street will like. However, the management expects FY27 execution to be back-ended. So H1 is expected to be quite soft due to supply chain challenges that the company is facing due to the West Asia war. But remember, the stock that spent most of the session down almost 3.5% recovered quite sharply in the last hour of the trade as deals of a truce did come about.
Exactly, Vivek. Thanks a lot for that. The stock closed above that 4,000 rupee mark despite seeing a much bigger gash earlier in the day. But IT stocks, it was a tale of two cities between Coforge and KPIT. Coforge jumped over 9% after its fourth quarter earnings beat estimates. KPIT Tech recovered from day's low on FY27 guidance, but the stock ended about 3% lower. Rima joins in with the details. Rima.
Thanks so much for that. Quite the tale of two cities for KPIT Tech. Coforge stocks moving in opposite direction. For KPIT Tech, the management not quantifying the FY27 guidance. All they're saying is that it looks more promising than FY26 in terms of revenue growth visibility and market opportunity. But then FY26 was not a great year for the company. It was a year of growth compression. The top line growth was only 1.3%. And the thing is that the first half of the year could also look a bit muted for the company. The company in the press release says two of the largest SDV, software development programs, are coming to an end in H1. Continuation of these programs would have resulted in 4 to 5% sequential growth. So that's going to be absent. The company is talking about compensating this via the newly acquired accounts, but basically growth is getting pushed out to the second half of the year. The margin guidance for FY27 stands at 20.5 to 21.2%, which is similar to what they've done in FY26. FY26, they ended at 20.8% at the middle of this guided range. Coforge was a strong performance, particularly margins, Q4 margins at record levels, EBIT margins at 16.6%. The management guidance for next year suggests to further margin improvement. The guidance is for EBITDA. They're talking about 20.5 to 21%, which means an expansion of at least 200 basis points compared to the year gone by. The free cash flow guidance has also been upped. They're saying FCF as a percentage, on their PAT will be 100% in FY27 versus their earlier guidance of 70 to 80%. And they do acknowledge that Q1 will be soft or flattish because the company is rolling off some of the India low margin accounts, but they're still quite confident about the company outpacing peers in terms of growth rates for FY27.
Rima, thank you for those updates there. Sudeep, Midcap IT had two major reactions coming in today, one from Coforge, one from KPIT, and First Source as well, seeing a very, very sharp reaction to its results. That Midcap IT has significantly more potential to outperform compared to its larger peers. Do you have any preferences within the Midcap IT basket?
Well, we do. In fact, we've been saying this repeatedly that we have to be very careful in selecting the IT company where you want to invest in or remain invested. Every company is on their own journey, and we have to, select it very carefully. Coforge, we have been consistently saying that I think this is in a different orbit altogether, and we need to focus on this company. The numbers were absolutely fantastic, and the body language of the management as well as the projections are also very good. So Coforge definitely. First Source, the management had indicated quite some time back about the recovery, the way they want to go about their business, and they're pretty much sticking to that. And the numbers were again impressive. So I think some of these companies definitely merit attention. Also remember that there are significant tailwind for the sectors in which some of these companies are operating, and that definitely helps these companies to generate incremental revenue and profit. So some of the other companies in the technology sector, particularly the guys who are in the automobile transition from IC to EV, those also need to be looked at. The performance hasn't been anything great, but going forward, we believe that Tata Technologies, Tata Elxsi, and the others in that space do have a bright future.
All right, we take that point. Thanks a lot for that. Sudeep, let's go across to Sudarshan now. He joins us on Hero MotoCorp. The shares erased early gains after the management flagged a near-term hit to margins from rising commodity costs. This despite reporting record revenue and profit in the fourth quarter. However, we did see a recovery in the stock in line with the market, but also on account of better than expected growth prospects for this year for the industry as well. Sudarshan.
Hero MotoCorp today intraday has seen all kind of moves. So opened with a gain of almost 3%, at one point was down 3%, and at the close it was up 2%. So almost 7% of intraday move that we have seen in Hero MotoCorp's shares today. And the reason is the analyst call in which company has talked about three major subjects. First, market share. Second, volume growth outlook. And third, about the margin band that company is targeting at. So first, talk about the market share gain. It has gained market share in 100cc segment, 110cc segments, electric vehicle segment, and also in the segment of 400cc to 500cc, for which it has partnership with Harley Davidson. Second, volume growth outlook. It's saying that industry volume growth outlook for FY27 is expected to be in high single digit, and it's for both scooter as well as motorcycle, where scooter growth is going to be slightly higher than motorcycle, but both these segments together will see high single-digit growth. On the margin front, the company's outlook has been in the range of 14 to 16%. It's saying that it's committed to maintain that margin band despite the volatility, considering the geopolitical tensions, and also because the sharp increase in the commodity prices that we have seen over the last few months. But there can be a pressure on the margin in the short term, and that had weighed on the stock, and that was one of the reasons why we had seen a sharp fall. But at this point, the pressure on the margin in the short term is understandable. It's common for across the sector, across the segments, across the company. Each and every company has been talking about the margin pressure in the short term. It was not an exception in the case of Hero MotoCorp, and that was the reason we have seen a sharp recovery. At this point, the focus more on volume growth rather than the margin, and at the end, the stock was up almost 2%.
Sudarshan, thank you for that update there. A recovery from the day's low for Hero MotoCorp. But from earnings reactions to news-driven moves, pharma names, Aurobindo, Ajanta, Cohance, all of them remained active all through the session. In fact, almost every constituent of the Nifty Pharma Index did very well today. Ekta is here with all of those details. Ekta.
Well, yes, I'll start with Ajanta Pharma, which was reacting to what was a good set of numbers. So the revenue was up around 21.5% on a year-on-year basis. We had the US generic segment, which was up around 56% year-on-year. India was up around 9% this time. Management has guided for high teen revenue growth and 27% EBITDA margin as well. Aurobindo, they have received an EIR or Establishment Inspection Report for their Unit 7, and which was inspected from Jan 28 to Feb 10th and had received 9 observations. So that has now been cleared by the US FDA, and that stock was at a fresh 52-week high. Cohance Life, that stock is up 32% since the 27th of April, which was the announcement of Umang Vora becoming CEO and MD, and he's taken over from the 1st of May. The stock is up 77% from its 52-week low, but still over 55% off from its 52-week high. Wockhardt stock is up 20% plus this week itself on the back of its numbers, where it turned into a profit versus loss year-on-year. Biotech revenue up 126%, and Zenic, which is WCK5222, one of their key drugs, is seeing a good progress according to them in the US as well as Europe. Stock is up 159% from its 52-week low and close to its 52-week high.
All right, Ekta, thanks a lot for that. So that's our daily dose of pharma stocks. Let's go across to Sudeep and Shrikant once again. Shrikant, on a chart check basis, do you like the pharmaceutical space? Do you believe that the index has a lot of legs ahead of it?
Yeah, absolutely. I think the way they have crossed their immediate resistance level, almost all the stocks, like even including Sun Pharma, I can say, which has crossed its important level at 1800. They're also, based on technicals, I'm of the view that it is heading for at least 10 to 12% higher from current levels. Same is the case with Aurobindo Pharma as well as Glenmark Pharma. So broadly, I'm of the view that this particular space is buzzing, and ideal strategy should be to look for creating long positions whenever there is a correction in the market or correction in that particular space. But if there is a medium to long-term view, then I think even at these levels, these stocks looks relatively safer options to buy and hold.
And Sudeep, if not in the pharma space, where does your preference lie in the pharma space? The larger names, the Sun Pharmas, the Dr. Reddy's, or the contract manufacturers, or in fact even a name like Laurus Labs that has seen a very, very sharp re-rating over the last few months. Your stance here?
Well, I do like Sun. I think they're doing completely something which no other Indian pharma company is doing. With this organ and acquisition, about 70% of their portfolio will be a differentiated branded portfolio. And that's the way to go. And that's the way to become a global company. So Sun Pharma definitely I like, and can definitely be acquired from a long-term perspective. The other pharma company I do like is Aurobindo Pharma. A little bit of regulatory challenges which was there got resolved in the recent past. And the valuation-wise, it does seem attractive. Amongst the domestic focused pharma companies, we do like Mankind, and we've been liking it for quite some time, and we will maintain our positive stance on Mankind.
All right. Thanks a lot, Sudeep and Shrikant, for joining us on the show, giving your views and your thoughts on a lot of sectors and stocks. With that, we'll take a short break, come back, get you the top corporate voices that joined us on the channel today. Welcome back. You're watching us here on Markets Forward. A stellar recovery in the second half is what we saw in the markets. And a lot of the day's corporate commentary was around earnings itself. So let's start with some of the companies that joined us today. Marico, they reported a good set of numbers yesterday and the stock saw a bit of a rally. The management joined us today and they said that they're not seeing any significant pressure on input costs due to West Asia conflict, largely because a large part of their portfolio is, seeing benefits of lower raw material prices, that is on account of lower copra prices. They expect to sustain high single-digit volume growth in FY27 while targeting double-digit revenue growth with mid-teens EBITDA growth.
The one stock that did well today was Raymond Realty, and that was after a very healthy fourth quarter performance where pre-sales also almost doubled from last year, and that was driven by robust demand across its projects. Now the management though has flagged that the first quarter is typically softer compared to the fourth quarter for the real estate sector itself. Now the company is guiding for pre-sales growth to be between 20 to 30% this time around, and is also expecting a weaker currency to act as a tailwind for them.
Then we had Lloyd Metals as well, doubled their pipeline capacity and expect their EBITDA per ton to improve this year. Speaking to CNBC TV team, they said that they're looking to unlock value via a potential IPO in the future. It's on the cards, but not in the very near future. And the steel plant, the capex of that is on track and expected by the fourth quarter of FY27, with some of their businesses actually seeing over 50% EBITDA growth in this year.
And with that, we call time on this edition of Markets Forward from Mangalam and me. Thank you for watching this very, very exciting day of trade that we have had. We return with the Sensex options expiry as well on Thursday. Take your leave. More news and updates continue on the other side.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. United States and Iran closing in on a memorandum to end the war, according to a report by Axios. This comes after President Trump claimed great progress in sealing a deal and paused the U.S. effort to guide stranded vessels in the Strait of Hormuz. Crude oil prices declined sharply but remain above the $100 mark. UAE faces missile and drone attacks for the second day. Iran denies responsibility. Iran's foreign minister Araghchi arrives in China to hold talks. This comes ahead of President Trump's visit to China later this month. Stocks rise and rupee strengthens on hopes of a deal between the US and Iran. Nifty gains nearly 300 points. Midcaps outperform. Rupee gains over 60 paisa against the dollar, but remains above the 94 mark. Vijay stakes claim to form government in Tamil Nadu hours after Congress breaks ranks with DMK and extends its support to TVK. The Congress says alliance with TVK is not just for formation of new government, but also for future local body, Lok Sabha and Rajya Sabha elections. A DMK spokesperson terms the Congress move as backstabbing. Election Commission orders immediate arrests amid sporadic incidents of arson, vandalism in Bengal. 4 reportedly killed in post-poll violence. BJP's legislative party meeting scheduled for tomorrow evening ahead of the May 9 swearing-in. Police scales down security deployment outside Mamata Banerjee and Lok Sabha MP Abhishek Banerjee's residence in South Kolkata. Freshworks announces 500 layoffs as the software firm restructures workforce. This comes a day after Cognizant's plan to cut up to 15,000 jobs. More than 1 lakh jobs have been lost since the start of this year as tech companies ramp up AI investments. Air India's board will meet tomorrow to tackle mounting losses and discuss the selection of the next CEO. Sources say the remuneration committee will discuss ways to manage the losses projected at 22,000 crore rupees in FY26. ITC Chairman Sanjeev Puri says the agri-tech platform has broken even in the 3rd year. More than 2 million farmers are connected through this platform. Puri says agri has immense growth potential like the FMCG business. That's an exclusive. Energy solutions major Carrier Global invests $100 million in Andhra Pradesh to build a new factory to manufacture air conditioners. Company's global CEO bets big on the data center boom in India to power growth. That too is an exclusive. All right, to the top story this evening, oil prices plunge as reports that Iran is closing in on a deal with the US fuels hope of a breakthrough. Here's a look at the latest developments. Axios has reported that the White House believes it's nearing a 14-point memorandum of understanding to end the war. The US reportedly expects Iran to respond on several key points over the next 48 hours. This comes after President Trump claimed great progress in sealing a deal. In a social media post, Trump also said that he has paused the US effort to guide stranded vessels in the Strait of Hormuz. Trump said he took the call at the request of Pakistan and other countries. However, he maintained that the US blockade will remain in place. Iran's Foreign Minister Abbas Araghchi has stressed that Tehran would only accept a fair and comprehensive agreement to end the war. He made the comments during his visit to China, where he met his counterpart Wang Yi. Beijing echoed Araghchi's sentiment, adding that a complete ceasefire must be established in West Asia. This comes ahead of Trump's visit to China later this month. Amidst hopes of a deal, the UAE came under attack for a second straight day. The UAE's defense ministry blamed Iran for the attack while reiterating its right to respond. However, Iran's Islamic Revolutionary Guards Corps has denied responsibility for both attacks on the UAE. The defense ministry warned that any attacks originating from the Gulf would trigger a firm response. Iranian officials have said that social media platform X removed verification badges from official accounts of its ministries. A foreign ministry spokesperson accused Elon Musk's X of selective censorship and American digital piracy against Iran. The removal came after the Tech Transparency Project reported that X was offering its paid premium service to Iranian figures subject to US sanctions. Accounts that lost verification included Foreign Minister Araghchi. Meanwhile, Israel has issued new orders of forced displacement in 12 towns of southern Lebanon. The Israeli army said that this was because of ceasefire violations by militant group Hezbollah. Israel claims to have attacked 25 sites linked to Hezbollah in the region. Hezbollah has also said that it will launch retaliatory attacks on Israeli forces. This as the US has appeared to soften its stance on restarting military operations in Iran. In a press conference earlier, U.S. Secretary of State Marco Rubio said that Operation Epic Fury against Iran is over.
The Operation Epic Fury is concluded. We achieved the objectives of that operation. I'm not going to, we're not cheering for an additional situation to occur. We would prefer the path of peace. What the president would prefer is a deal. He would prefer to sit down, work out a memorandum of understanding for future negotiations that touches on all the key topics that have to be addressed, a full opening of the strait so the world can get back to normal. And he preferred that be negotiated through the route that Steve and Jared have been working and that all of us have been supporting. That's the route he prefers. Right now you have a country who is unlawfully, criminally, and illegally taking possession of an international waterway and blowing up commercial vessels and putting mines in the water. I don't know if people appreciate how outrageous this is, how unacceptable it is that any country would fire and try to sink commercial vessels or put mines in the water. Both of these things are illegal. And so we're going to take it to the UN, and we're going to give it another chance to be a forum in which we're not even asking people to commit troops to the region and help blow up the Iranian boats. All we're asking them to do is to condemn it.
All right, on to the day's market action. Stocks perked up on reports of U.S. nearing a deal with Iran to end the war. Nifty closed above 24,300, supported by financial heavyweights Bharti, Airtel and Mahindra & Mahindra. Broader markets outperformed, keeping the market breadth firmly in favor of advances. The Indian rupee also regained some lost ground. The rupee gained more than 60 paisa to break below the 95 mark. There is also some optimism over some easing of trade tensions between India and the U.S. India's service output, meanwhile, has risen to a 5-month high at 58.8 in April. According to HSBC India, this growth was led by robust domestic demand, even as export orders declined amid tensions in West Asia. The survey pointed to robust growth in business activity and new orders, supported by competitive pricing and the rise of e-commerce. A reading above 50 indicates expansion, while a figure below 50 signals contraction. Now, American ambassador to India, Sergio Gore, has announced that Indian companies plan to invest over $20 billion in various sectors in the U.S. In a social media post, Gore said these sectors would include tech, manufacturing and pharma, among others. He also said this includes 12 Indian companies who announced investments worth over $1 billion today. He announced that he was looking forward to welcoming U.S. Secretary Rubio to India without announcing any specific date. The big political story, actor turned politician Vijay, whose party TVK registered a stunning victory in its first electoral outing, has staked claim to form the government. He met Tamil Nadu governor today after securing the Congress support. Earlier in the day, 5 Congress MLAs met Vijay at the TVK headquarters to hand him a letter of support. The TVK, which disrupted the long-standing bipolar nature of Tamil Nadu politics, 108 seats and fell 10 short of the majority mark. With this, the Congress has broken ranks with the DMK, its long-time ally. With the Congress now on board, the TVK needs 5 more seats to touch the magic number of 118. However, constitutionally, there is no bar on Vijay to stake claim to form the government. The Congress, in its statement, said that while the alliance is not just for formation of new government, but also for future local body, Lok Sabha and Rajya Sabha elections. It, however, added that the support shall be conditional upon TVK keeping communal forces out of the alliance. A DMK spokesperson termed the Congress move as backstabbing.
Unanimously, the Congress party has decided to support a government headed by the TVK because we believe that the people of Tamil Nadu want a change, but they also want a change which is headed by the TVK, but is also a secular formation. I think the people of Tamil Nadu are very, very clear that they want a secular formation. So we are only aiding and assisting the TVK to put together a secular government in secular and stable government in Tamil Nadu. How they will get the other numbers is really up to them because as they have reached out to us, I'm sure they are reaching out to other political parties.
The DMK is one of the long-standing allies of the Congress. Both parties first came together 55 years ago. But the partnership did face several issues and it was not always smooth. Kiran Khatri has more.
Congress's support to the TVK comes at the cost of an old ally, the DMK. The alliance between the two parties dates back to 1971. Indira Gandhi had been expelled from Congress and had formed her own faction. She allied with DMK to counter the Congress old guard led by Kamaraj in Tamil Nadu. The result was a landslide victory for DMK, which won 184 of 234 seats. Meanwhile, Indira Gandhi secured a massive Lok Sabha victory that year with DMK's backing. Through the 1980s and 90s, the relationship was turbulent and may be referred to as a political situationship. The alliance broke when Indira Gandhi imposed emergency and several DMK leaders, including MK Stalin, were arrested and jailed for a few months. Congress aligned with MGR's newly formed AIADMK after the emergency, and again in 1991, AIADMK in alliance with Congress swept to power, riding the sympathy wave after Rajiv Gandhi's assassination. From 2004, both parties settled into a more stable arrangement under the UPA umbrella. DMK backed Congress at the center. They swept all 39 Lok Sabha seats in Tamil Nadu. In 2006, DMK formed a minority government in the state with the Congress's support. But in 2013, DMK walked out of the alliance after Congress refused to condemn the Sri Lankan government's war against LTTE, which had led to the massacre of scores of Tamil people. So in 2014, both parties contested separately, and both lost badly during the Lok Sabha polls. By 2019, they were back and stronger than ever. Stalin publicly backed Rahul Gandhi as the prime ministerial candidate. Rahul Gandhi called Stalin his elder brother and even visited him with sweets. DMK returned to power in Tamil Nadu in 2021 with a huge margin, and in 2024, the alliance swept all 39 Lok Sabha seats again, with Congress winning 9 of them, entirely on the back of DMK's ground support. This year, they had a pre-poll alliance for the Tamil Nadu Assembly elections. However, the DMK secured just 59 seats and Congress won 5. Reports suggest Congress may have been unhappy over DMK's reluctance to give them adequate seats and cabinet berths. Now, Congress has decided to back TVK in forming the government, and the DMK has called it a backstab.
While Vijay looks set to become the next Chief Minister of Tamil Nadu, the BJP remains tight-lipped about its CM choice for Bengal. The party registered a landslide victory in the state polls, winning 2/3 majority and garnering 45% of the vote share. A defiant Mamata Banerjee, who lost from her home turf of Bhawanipur, has refused to resign. Addressing a press conference yesterday, she said the results do not reflect the people's mandate. Meanwhile, winds of change are blowing through Kolkata. The police has scaled down security deployment outside Mamata Banerjee and Lok Sabha MP Abhishek Banerjee's residence in South Kolkata. The Election Commission has directed for immediate arrests amid sporadic incidents of arson and vandalism in Bengal. 4 people have reportedly died in post-poll violence. This includes a TMC cadre, 2 BJP workers and a TMC polling agent. Vodafone Idea's shares rallied after it appointed industrialist Kumar Mangalam Birla as non-executive chairman. This comes around 5 years after he resigned from the same role in the telecom company. He replaces Ravinder Takkar, who will now take on the role of vice chairman. The move comes as the telecom operator engages with lenders to secure debt funding. Adani Group has filed a caveat before the Supreme Court in anticipation of a Vedanta plea challenging the NCLAT order that upheld Adani's resolution plan for Jaiprakash Associates. Adani's caveat aims to ensure that no interim orders are passed by Supreme Court on the issue without hearing the group's lawyers. Vedanta is likely to seek an interim stay on the implementation of Adani's resolution plan soon. All right, here's a CNBC TV18 exclusive. Insurance regulator IRDAI may tighten insurance distributor commissions under an effort-based model. Sources have said the commissions could be comparatively higher for agency where the effort is higher, while it could be lower for distributors like web aggregators like bancassurance. The insurance regulator may bring consultation paper on the regulations by month end. From one exclusive to another, the National Stock Exchange is gearing up for its much-awaited public listing. Sources have suggested that marquee investors are looking to offload stake via the offer for sale route. Stock Holding Corporation has offered to sell less than 0.5% of its holding in the stock exchange. With this, the corporation could raise 2,200 crore rupees from this IPO. Similarly, LIC has also offered to offload over 1% stake in NSE. Other sellers could include New India Assurance, GIC, RE, Chris Capital and Temasek. Now, shares of Indigo and several banks reacted positively after the government cleared emergency credit worth more than 18,000 crore rupees. The new credit line is aimed at helping companies impacted by the tensions in West Asia. Ritu Singh has the details.
Well, the government has cleared the Emergency Credit Line Guarantee Scheme 5.0, which is aimed at cushioning businesses from the disruptions that are linked to the West Asia crisis. The scheme targets 2,55,000 crore rupees in additional credit, which includes 5,000 crores specifically for airlines, and the scheme will be valid until the 31st of March next year. Now, under this, borrowers can get extra credit of up to 20% of their working capital, capped at 100 crores per borrower, while airlines can access up to 100% of their outstanding credit with a 1,500 crore rupee per borrower cap. Now, this is essentially a risk transfer mechanism. So loans come with 100% guarantee cover for MSMEs and 90% for non-MSME borrowers, and airlines with zero guarantee fees. Repayment can be spread over 5 years with a 1-year moratorium, and for airlines in particular, it can be 7 years with a 2-year moratorium. What that effectively does is de-risk lending for banks and NBFCs, allowing them to step up credit without really worrying about incremental NPAs. Now, at the same time, eligibility is going to be restricted to standard accounts, which means this is not a bailout for stressed borrowers. Now, Air India and Indigo are likely to be the biggest takers under the scheme, where banks like Indian Bank, Bank of Baroda, SBI and Yes Bank have higher exposure. But overall, for banks and NBFCs, the impact is clearly positive in the near term. You get modest loan growth tailwind and, more importantly, a meaningful buffer on asset quality, especially when it comes to the MSME segment. However, margins on these loans tend to be lower because there's no credit risk premium being priced in. Now, if you look at the history, disbursements under earlier ECLGS rounds were dominated by large banks, especially PSUs, thanks to the lower cost of funds and deeper MSME reach, and that trend is likely to continue. Those with higher MSME exposure in particular, like Yes Bank, Axis Bank, IndusInd Bank and others, can also see relatively stronger traction.
This is going to be a significant mitigant, because for the SMEs, it is saying 20% of the peak outstanding which was there in the last quarter of financial year 26. So I would say that it is actually an improvement over what was the earlier ECLGS, because their reckoning was that outstanding should be there on the last day. And I think in overall about 18,000 crore is something which is the outlay which is given to NCGC, GTC for enforcing this scheme. So it's more of a comfort which comes in for the lender.
Absolutely a requirement. I look at it as a subsidy more than a credit guarantee. I think maybe we should think about the scheme. So the scheme has to be there and the amount has to be there. Think about the scheme as some kind of a convertible which is dynamically managed by a group of people. So what I mean by that is that one, we need to provide convertible rather than debt, because debt has to be serviced. Debt has an implication on the debt equity ratio, and enterprises' ability to actually pay money is going to be limited.
All right, time for a short break. Coming up next, over 1 lakh jobs have been lost since the start of this year as tech companies ramp up AI investments. More details on that when we return. Welcome back. South Korean electronics giant Samsung's market cap has crossed the $1 trillion mark. This after the stock surged more than 15%, fueled by investors betting heavily on artificial intelligence-linked stocks. With this milestone, Samsung has become the second Asian company to cross the $1 trillion mark after TSMC. The Trump administration is considering an executive order mandating that frontier AI models be vetted by the government before they are released to the public. The New York Times has reported that the order would establish a working group of tech executives and government officials to examine potential review procedures. White House officials have briefed leaders from Anthropic, Google and OpenAI on the plans. OpenAI President Greg Brockman has testified Elon Musk was aware of plans to shift OpenAI to be more of a traditional for-profit business. He also described a heated 2017 meeting with Musk over the billionaire's early attempt to control the AI company. Brockman said that when he rejected a proposal for Musk to have more say in the company, Musk's mood abruptly changed. Tech giants continue to ride the layoff wave. Freshworks and Cognizant plan to axe a sizable portion of their workforce, and this decision has been driven by AI. Rachna Dhanrajani brings us more. Rachna, massive cuts across the tech industry. Please take us through what you're picking up.
That's right. Two of the biggest names in Indian tech are restructuring, and artificial intelligence is the common thread. Cognizant has launched Project Leap, a sweeping overhaul that will cost the company between $230 million and $320 million. Severance payments alone could reach $270 million. Around 4,000 jobs are immediately at risk, though estimates run as high as 15,000, with the bulk of the impact falling on India. In the same breath, Cognizant says it will hire over 20,000 freshers this year. That tells you exactly what kind of workforce it's trying to rebuild toward. Then there's Freshworks that tells a sharper version of the same story. Revenue grew 16% in Q1 to $228.6 million. Strong numbers, and yet the company cut 500 jobs, 11% of its global headcount, with restructuring charges between $7 million and $9 million. And the reason? AI now writes more than 50% of all Freshworks code. These are not isolated decisions. They're a part of a much larger shift playing out across global tech. Over 100,000 jobs, that's about 1 lakh jobs, have been lost in the sector in 2026 alone, and we're just 5 months into it. This comes to about 958 layoffs every single day. Meta cut 10% of its workforce. Microsoft launched its first voluntary buyouts in 51 years. And then there was Oracle that eliminated up to 30,000 positions in a single email on a morning. And Block's Jack Dorsey put it plainly, saying this is not driven by any financial difficulty, as one would assume, but it is driven by artificial intelligence. Now, all of this means there isn't a contraction, but a conversion. And the pace of it is now picking up, and we can see the impact.
All right. Thank you, Rachna, for that update. Let's move on to CNBC TV 18 exclusive. ITC Chairman Sanjeev Puri has said the agri-tech platform has broken even in the third year, adding that more than 2 million farmers are connected through this platform. Speaking with Shireen Bhan, Puri added that agri has immense growth potential, like the FMCG business.
This foundation is being built on the back of something I've spoken about in the past, which is called the ITC MARS, Meta Market for Advanced Agriculture and Rural Services. Started a little over 2 years back. We have about 2.5 million farmers, 2,200 FPOs connected with that system. And let me start by saying, those that have farmers that are connected have already experienced people who are there for at least a year and a half with us. 25 to 30% increase in income. So that's created a lot of value for the rural economy.
Right, shifting focus now. Big developments expected at Air India over the next 48 hours. Sources tell us that the airline's top management and board will meet in Mumbai tomorrow at a time when the carrier is staring at projected losses of over 22,000 crore rupees for FY26. Madiha Mujawar joins us with the details. Madiha, what are your sources telling you?
Well, sources are telling CNBC TV 18 that the Air India Nomination and Remuneration Committee is set to meet tomorrow to take a call on staff salaries, annual increments and bonus payouts. But these discussions are happening against the backdrop of severe financial pressure. Now, sources indicate that Air India's projected losses for FY26 could cross 22,000 crores, forcing the management to look at aggressive cost control measures. Now, all eyes will also be on Air India board meet tomorrow in Mumbai that will be chaired by N. Chandrasekaran, the chairman for Tata Sons, as well as Air India. Outgoing CEO Campbell Wilson is also expected to be present at the board meet. Now, multiple key issues are likely to be discussed. These include reviewing the airline's FY26 financial outlook, identifying fresh cost-saving measures, and accelerating the process of selecting the next CEO to succeed Campbell Wilson. For Air India, the sources say the airline is examining several ways to cut costs without directly impacting core operations. One proposal under consideration that sources tell us is unbundling meals from ticket pricing, especially for passengers who may not want onboard meals. And another option being explored is giving business class passengers a choice on lounge access instead of automatically bundling it into their airfare. On the leadership front, the race for the next CEO, as I was saying, is also expected to come up for discussion. As per Reuters, former Vistara CEO Vinod Khanna and Air India Express chairman Nipun Agarwal are among the names being considered for the CEO's position. And importantly, sources also say that N. Chandrasekaran is likely to address Air India employees at a town hall on the 8th of May, where the management could outline the airline's financial challenges, restructuring priorities, and future roadmap.
All right, thank you, Madiha, for that update. And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV.
Let's Talk Money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host Surabhi Upadhyay. Now, the Indian market has seen a painful period of consolidation, and this underperformance has actually continued for a good 18 months now. And this is something that a lot of Indian investors are really not used to, particularly new investors who came to the market after COVID. Now, in this period of underperformance and consolidation, some sectoral themes have actually worked. They've managed to show brief periods of outperformance. And if you manage to get them right, then there could be a little bit of an alpha for your portfolio as well. The question is, should we be chasing these tactical themes? Is it time to look beyond just plain vanilla diversified mutual funds if this consolidation patch in the market is going to continue? Well, that's what we're talking about on Let's Talk Money this week. And our guest today is going to give us some of these sharper alpha generation ideas that will work even in a range-bound market. Well, you know him already, Nasir Salim. He's no stranger to the show. Nasir, thank you so much for joining in. So you have your work cut out today. I'm asking you the tough question. How to make money in a flat market? Go on. Welcome to the show.
Hi, Surabhi. Great to be back on Let's Talk Money and with you again. Yes, very interesting times, Surabhi, and the subject and the topic is obviously, a lot of investors keep asking us this question. So, before we get deep diving into it, all that I want to say is that, the last 18 months or so has been very, very, we've been struggling on the Nifty 500, if I look at the TRI index, which itself has been very range bound, particularly a bit negative as well during this consolidation phase. But there are certain categories, which have done well as compared to the Nifty 500. So we'll talk about those in detail. And those are actually non-equity and hybrid categories, should be, which have actually delivered positive returns over the last 15 to 18 months. And I think, those categories that may have worked in the last, in your portfolios and, all the investors' portfolios it's a good mix of, hybrids and non-equity. So, for example, we have, gold ETFs and fund of funds, which have, taken a big return delivery in terms of they've delivered some good returns there, almost as high as 30% in the last 15, 18 months. Then, within gold, you can't forget silver. Again, between FOF and the commodity-based funds like silver, those have done really well. The other very popular category in the retail segment, which we've noticed and we were looking at data over the last few months, has been multi-asset. A lot of AMCs, fund managers have been talking about that. So it'll be precious metals providing a very, very strong cushion, for investors in their portfolios. And not to forget, we in all our discussions, we don't talk about fixed income post the, taxation changes, but that's also a very critical play. And that's also played out really favorably. Short duration, debt funds, very stable and positive in their linear returns predominantly. And then there's this entire international basket, which is benefited from the USD tailwind. I think that's again something which has been very, very positive. I think the key takeaway as far as this overall performance over the last 15 to 18 months in terms of categories is that it was not about the period was about category selection. So and investors who diversified beyond pure equity still made money.
So that's really the point, Nasir, isn't it? That whoever has been largely, they've had their portfolios largely in plain vanilla diversified equity funds, Indian equity funds, those investors have been feeling the pinch. But people who manage to, say, buy gold funds or gold ETFs at the right time, they've been doing better. Those who've managed to somehow take some exposure in global equities, though a lot of those funds are anyway shut for subscription. But those people who've managed to take that exposure, obviously their returns are looking better. So I want to start first with the diversified equity category. So yes, it's been a washout last 18 months, a painful wait. But is it across the board? As in, are most and all diversified funds, say in the flexi cap category or large, mid and large, are all of them really underperforming?
We love the word outliers, I must tell you. So clearly, there have been outliers here as well, right? And happy to discuss those with you on your show. So I think one of the few outliers that clearly stood out as far as diversified category of funds is the flexi cap category. which incidentally has done really well. In that, you know, if we look at data, we see a very popular name, Parag Parikh, Flexi Cap Fund. These guys have delivered a 10, roughly about an alpha of 10% over the benchmark. Benchmark is given a negative 2.9%, so actually a higher alpha. So clear outperformance there, and he's a, you know, they're a clear outlier. I think what has worked for them clearly is that they've taken, they were, you know, they had the first move advantage of actually taking in some global allocation, right? So almost 32% of their portfolios, if you go back to 15 months to about 17 months, they took global allocation to, you know, some of the big names such as Alphabet, Meta, Amazon, Microsoft, which helped offset a lot of Indian market weaknesses today, along with some defensive Indian names, I must also tell you. So they've taken, you know, while we stocks, but they've done some stuff in Power Grid, Coal India, and ITC. So again, that's one done really well. The other one, of course, is, you know, the multi-asset, which is a huge outperformance. So we spoke about it in the beginning, 27.5% as against a benchmark of only 5%. So a good 22.5% outperformance there. Why it's worked, again, very, very simple, not very complicated, strong overweight to precious metals. They've got silver, they've boosted gold ETFs, and equity exposure has been tilted more towards PSUs and utilities like NTPC. So, you know, a good mix. The last one, of course, is quality. I think the other category which has done really well is purely large caps, originally called the fund, now has become large cap in nature. That's obviously been relatively stable, but in terms of outperformance, 6.5% is against a benchmark of negative 1.5%. So, you know, a classic value, buying quality large cap.
So Nasir, sorry, you know, let me ask you to repeat here. So which are those key funds, diversified funds in terms of actual specific names, which have managed to outperform even in this weak market?
So clearly, there are three broad names, clear funds. One is Parag Parikh Flexi Cap in the Flexi Cap category. Then there is the Kotak Multi-Asset Allocation Fund in the Multi-Asset Hybrid category, which are part of diversified funds. And then there is the classic, you know, your large cap funds, earlier called blue chip. Now they've been changed to large cap. And in there, we have the ICICI Prudential Blue Chip, right? Which is outperformed, and there's been an outlier in the last 15 to 18 months.
So that's quite phenomenal. And very quickly, as you were explaining, that for the Parag Parikh Flexi Cap, that outperformance has come from the fact that they've had exposure to US tech stocks, and they've had some exposure to Indian defensive names as well. For Kotak Multi-Asset, I guess it will be just the outperformance of gold and silver, right? I mean, how much exposure do they have? What made this multi-asset fund outperform so much?
So clearly, they've been overweight on precious metals, and silver ETF and gold has been spruced in, and they've obviously, the exposures is as high as 65 to 70%. And what has also worked for them, Surabhi, I must also tell you, apart from the fact that, you know, it's multi-asset, they can also do fixed income and equity as well. What has also worked for them is that they've taken exposure tilted towards PSU and utilities, right? Public sector undertakings, and they've taken exposures like NTPC, the National Thermal Power Corporation. So that's again, you know, kind of played well from a diversified perspective.
Okay.
So that is with the Kotak multi-asset allocation.
And then, of course, the one that really, Nasir, the one that really stood out for me was the ICICI large cap fund. I mean, a large cap fund outperforming the benchmark. How did that happen?
Again, a very interesting question. You see, we were also surprised when we saw that data, Surabhi. So clearly, I think what has worked for the ICICI, this particular fund, the ICICI Blue Chip, now called the large cap fund, has done well because, you know, typical to ICICI, I must tell you, they have a classic value approach of investing. Buying quality large cap banks, for example, during the correction phase, ICICI Bank and HDFC Bank validated this strategy along with very strong Q4 results by FY26. So pure value approach, you know, discount to its price to earning has actually helped a lot of the underlying exposure that they've taken in getting that alpha and the overperformance of 5% as against the benchmark of negative 1.5%.
How interesting. How interesting. So not all men are equal, as they say. And similarly, in the mutual fund landscape also, you'll always have the outliers, as Nasir is saying. And this is just an example of how some funds can actually go ahead and deliver returns. But it depends on picking the right ones. Now, the thing here is, Nasir, from here onwards, if the market continues to be as sluggish, the question is that I think everyone's asking is, should you just stick to a plain vanilla diversified fund? It could be a flexi cap, it could be a large and mid cap. Or is it time to actually add some themes, these thematic funds? That typically, I know all of you experts are very, very cautious and careful while recommending thematics. But has that time come now?
So, clearly, Surabhi, we've always been a great proponent, and that's what we've always learned in wealth management, that there is always a discussion of core and satellite. And I think today, this is the time when satellite portfolios will start to kind of do a lot of heavy weightlifting, right? I think the tactical or the exotic ideas, if I can say so, which in a range-bound market can play out, is where one would consider. Obviously, subject to one's risk profile should be, that's very, very important. I think, before we get into that discussion, the disclaimer is that it has to be subject to one's risk profile, right time horizon, understanding that you've done your basic checks of core and satellite. Now, clearly, to answer your question, I think the few themes that one can make some alpha with the, which looks better in terms of risk-adjusted return at this point in time are three core themes. One, we're looking at, within the thematic, we're looking at banking and the entire BFSI space. Then there is, consumption, broad-based consumption. And then there is healthcare, which is, predominantly diagnostics and healthcare is what we're talking about. I can explain to you each of these. As far as banking is concerned, there is a mean reversion trade expected, which is happening. Private banks will be, there are 3-4 key points I'll tell you quickly here. Private banks are currently trading at 2.1 times price to book versus a 10-year average of 3.1 times. Now, these are near COVID era levels. We saw the last time we saw these levels was during COVID, right? Private versus PSU premium collapsed sharply. Between private versus PSU premium, in terms of the stocks which are available, that's a classic reversal setup. So I think that's a great, again, point to look at when you're looking at this. The asset quality, the third one, is pristine. NPAs today are all-time low at 0.4%. Earnings that we're looking at today is about a CAGR of 15% expected over FY 26 to 28. Now, all of this suggests that we are at the right time to kind of take benefit of the entire BFSI space. And we also have a few funds available there which one can consider basis our shortlisting attribution analysis.
So which are the funds, Nasir? We definitely want to know if someone wants to take exposure to large banks.
So we will look at the Nippon Banking and Financial Services Fund. It's a very large assets under management AUM fund. It's looking very stable. They've taken exposures to good private sector banks. We like the entire play that they are looking at, whether it's an Access, HDFC, ICICI Bank as well in it. So it's a good play. It's also got a good diversified play between some of the NBFCs that they hold today in their portfolio. So it's looking good, right? So that's one fund that we will definitely would shortlist. That will be shortlisted in our recommendation.
Okay, so that's one theme, which is banking.
Yeah.
What else?
Yeah.
What is the other thematic play that you'll add to your portfolio now?
The other one, of course, is the big one. So everyone's talking about it, is the consumption play. This is all about K-shaped recovery and the K-shaped flip that we're talking about today. Most economists and analysts talk about this K-shaped recovery as far as India is concerned. And therefore, consumption as a theme should ideally pick up. Now, there are 3-4 broad reasons why it should be. I think bottom 20% consumption growing for faster than the top 20% as far as India is concerned. That's available, if you look at data between rural and urban consumption patterns, that will suggest to you. I think the other quick one within the consumption is FMCG. The return on equities today are about 35%. Stocks have corrected to almost 13%.
Sure.
So what I'm offering you is quality at a discount.
Okay. Right. So the fund that you're going with is the Kotak Consumption Fund. Why this one?
Kotak Consumption Fund. Kotak Consumption Fund, again, they are very, very broad-based consumptions. They've got automobiles, they've got, telecom, they've got automotive components. They've also got FMCG, we just spoke about. So it's a good mix. It's also got consumer durables, white goods. Summers are coming up. They're peaking in North India. So, all of that combined, I think it's a very well-captured, diversified portfolio within the consumption space that we're looking at as far as the sectors captured.
And Nasser, the third theme that you've picked out is healthcare. And I think within that, you've picked out a fund from the ICICI Prudential House. Tell us why healthcare and why this fund.
Okay, again, healthcare, Surbhi, is a defensive with re-rating potential. We say defensive because, it's the idea is that it's like a contrarian bet that we're looking at. One of the core reasons is that, diagnostics and healthcare, we are more, tracking diagnostics and healthcare here. I think the entire healthcare and diagnostic space has fallen by about 3% in the sell-off versus, for example, banks, which is down 18%. Valuations are at a deep discount to long-term averages will be. Again, that same valuation play.
All right, got it. So those are three themes that Nasser is optimistic on and that he's recommending you to perhaps consider adding to your portfolio. We have to take a very quick break, but on the other side, so thematic funds are definitely a way to get a little more sharp and tactical. What about gold and silver itself? We'll discuss what role precious metals can play in the portfolio in just the next couple of minutes.
Let's talk money. Let's talk money.
Welcome back. This week on Let's Talk Money, we are talking about how to get a little more tactical and smart with your portfolio. Of course, you need the core diversified, equity funds. But beyond that, how can you add certain themes or certain sharp elements to boost the overall returns in a flat market? So Nasser just gave us 3 ideas in terms of sectoral funds. And Nasser, now I'm going to ask an even more controversial question, right? Gold and silver. The way these precious metals moved last year, a lot of people decided to become tactical traders instead of just having a steady allocation, hedge against inflation, that typical steady role that gold had. How are you thinking about this now? Just the role gold can play. Can you actually get tactical with it?
So, Surbhi, a great question again. Gold and silver, frankly, was tactical and has originally between 25 and 26 of, end of 25 and beginning of 26. But incidentally, everyone just caught up in this FOMO thing. And from tactical, it became trading. There's a difference between tactical and trading, Surbhi. I think that's the key distinction. But clearly, between both gold and silver should be, fundamentally long-term holdings, supported by, because, we've seen enough reasons. One is central bank buying. Massive amount of gold and silver being bought by central banks. And that gives you a bit of an idea as to why they're doing so. Number 2, I think it's a clear inflation protection. It's a hedge against inflation. So therefore, it's core as a long-term holding in your portfolio. Silver, especially strong industrial demand. We continue to see that, and therefore silver, the demand and supply economics best at play here. And obviously limited new supply. So these are four core reasons why I think, originally began as tactical, then became trading because of FOMO, but now it should always be a part of your core long-term holdings because these are precious metals and they'll always add value as long as you have the right picture.
The reason why I think people are thinking along the lines of trading in gold and silver is because of the options available now, Nasir, right? I mean, you can trade in and out of gold ETFs and silver ETFs. And now you have these electronic gold receipts, which the NSE has just very recently launched. I don't know if you got the chance to see the details of this product. Tell us about it if you've managed to study it. And therefore, using EGRs or these ETFs, would you at all advise trading in and out of gold and silver?
Fundamental to our recommendation process, we always avoid trading. But yes, there is SEBI has been, I think, been pushing some of the platforms. For example, NSE has launched something called EGR, as you rightly said, just on the 4th of May, incidentally. And that's a good innovation. It's a good step forward because what it does is it helps you trade like shares in your demat account. You can also do that in gold. The good part is that it's fully backed by physical gold in SEBI-regulated golds. So I think that's a very, very key important point here. So it's a good part of innovation. I think the other clear one is, you can buy physical gold. Buying physical gold usually attracts a 3% GST, so immediately. Whereas with electronic receipts, you don't pay GST during the trade on the exchange. It's only levied if you decide to take physical delivery of it. So it's a GST deferred, option that is available to investors today. And of course, the biggest headache or the pressure on one's mind is that, how pure is it, and is it safe to store? Obviously, SEBI words are backed by SEBI. Obviously, purity is its highest. And the biggest important point is, I think, apart from trading, what is giving you is the benefit is for retail investors. I think it gives them accessible to smaller denominations of gold. As low as 1 gram or 10 grams or 100 grams. So 1 in 10 grams is something which, is interesting because somebody wishes to participate. We're looking at retail push, retail participation, penetration of financialization. So I think some of that will be addressed in these EGRs.
No, absolutely. And I think it brings with it the same convenience as digital gold, only that digital gold was not within the SEBI remit. And I think these EGRs could be a good alternative because it's regulated by SEBI. You can, as you said, you can transact in very, very low denominations as well. And you can also ask for physical delivery if you do want the physical gold, at some point in time. So yeah, interesting instrument. We'll see how it evolves. So to put it all together, Nasir, final advice, range-bound markets. You've given us 3 sector fund ideas. Anything else that you will add to the portfolio to sharpen and hopefully boost those returns?
So, one quick one that I'll just spend a few seconds on is, you can't forget the US in this entire overall scheme of things. Global markets. In global markets, we would say that US, for example, beating the index consistently is extremely difficult. So you can look at exposures, which are low cost, broad-based benchmark exposures, which can come in through ETFs. They work best in the US. The US market is highly efficient with deep institutional participation. So therefore, ETFs help you kind of plan that better. Over longer periods of time, 80 to 85% of active US large cap funds usually underperform their benchmark after cost. So therefore, ETF is a good way to do it. I would suggest that, index ETFs eliminate manager risk, style drift, and high expense ratios. So that should be considered. Our choice of 2 ETFs that we've talked about, which one may consider is one of the most liquid ETFs is something called Triple Q. It's through Invesco, NASDAQ 100 ETF. That's something which can be considered. Works well as a satellite allocation for investors with longer horizons. And then, you can also do the Vanguard S&P 500 ETF. Tracks America's largest 500 companies should be heavy exposure to profitability leaders like, the Apple, Microsoft, Nvidia, Amazon, and historically has delivered about 10 to 11%. So a combination of these two, combine S&P for the balance, or the extra kick in the portfolio internationally, and use the NASDAQ for growth. Keep expectations realistic.
All right, with that, we have to wrap up this edition of Let's Talk Money. But as we take your leave, do check out this explainer on index funds and their key characteristics.
Let's talk money.
Hello and welcome to this special broadcast on West Asia. I am Ashmit Kumar. Now, crude oil prices are plunging in trade amidst optimism over a potential deal between US and Iran to end this war. Now, this comes after President Trump signaled a great progress in negotiations with Iran. Now, Trump paused Project Freedom, which was aimed at providing safe passage for commercial ships in Hormuz. Iran has termed this as a violation of the ceasefire deal. Trump said that the move is aimed at giving diplomacy a chance. However, he made it clear the U.S. Navy blockade in the Strait of Hormuz remains intact. Meanwhile, Axios report said that U.S. and Iran are close to a memorandum of understanding to end the war. As per CNBC sources, Iran is reviewing Washington's 14-point proposal. Iranian President Masoud Pezeshkian has slammed Washington, meanwhile, accusing it of pursuing a policy of maximum pressure while expecting Iran to submit to unilateral demands. He said that this approach makes any resolution impossible. Tensions escalated over the weekend. Meanwhile, the UAE has been hit by missiles and drones for a second straight day. The UAE alleges the attacks were carried out by Iran, a claim Tehran denies. Just hours before Donald Trump announced the pause, U.S. Secretary of State Marco Rubio said that the Operation Epic Fury had ended after achieving its objectives. He added that the U.S. would strike Iran only if American assets are targeted and warned Tehran against any move to block the Strait of Hormuz, stressing that it does not belong to Iran and that any disruption will come at a cost. The remarks come days after White House notified Congress that hostilities with Iran had been terminated, since crossing the 60-day mark requires formal authorization from lawmakers. Despite this notification, Trump has repeatedly warned Iran of attacks.
The Operation Epic Fury is concluded. We achieved the objectives of that operation. I'm not going to, we're not cheering for an additional situation to occur. We would prefer the path of peace. What the president would prefer is a deal. He would prefer to sit down, work out a memorandum of understanding for future negotiations that touches on all the key topics that have to be addressed, a full opening of the strait so the world can get back to normal. And he preferred that be negotiated through the route that Steve and Jared have been working and that all of us have been supporting. That's the route he prefers. Right now, you have a country who is unlawfully, criminally, and illegally taking possession of an international waterway and blowing up commercial vessels and putting mines in the water. I don't know if people appreciate how outrageous this is, how unacceptable it is that any country would fire and try to sink commercial vessels or put mines in the water. Both of these things are illegal. And so we're going to take it to the UN, and we're going to give it another chance to be a forum in which we're not even asking people to commit troops to the region and help blow up the Iranian boats. All we're asking them to do is to condemn it.
Well, joining us now to take this discussion ahead with us, we have former ambassador, Mr. Rajiv Dogra. Also joining us a little later on the show will be geopolitics expert Hassan Hashmi Pirzada, as well as author and foreign affairs expert Rabinder Sachdev. But Ambassador Dogra, coming to you first, what do you make of these moves? There is, Washington seems to be confident that, look, we've put on paper a 14-point MOU, and they seem to be confident that this will cut ice with Tehran. What is your reading? Is this more Trump talk coming out of Washington, or is there actual movement on the ground at Tehran wanting to consider some form of resolution?
Well, it certainly shows desperation on America's part. It has tried everything and it has failed right from the word go. It got a bloody nose when it started Operation Fury, and 2-3 days back when it decided to send in its destroyers and so on through the Strait of Hormuz, it obviously got another beating, which is not coming out. But the fact that within a day it decided to withdraw even that operation or even that resolve shows that America is now on the pleading side. I wouldn't say losing side, but pleading side, pleading with Iran directly or indirectly that somehow let's sign something and get it over with. More importantly, Rubio's statement, which you just laid out, saying that UN should do something. Now, UN was something, an organization which was disparaged by Trump and all his subordinates and colleagues. Suddenly, now they realize the value of UN. So clearly, it shows that they are at their wits' end. Whether Iran would agree to whatever that 14-point contains remains to be seen. But I have my doubts, because for USA to say that Iran has agreed to reduce the uranium enrichment to 3%, give it over to another country, I think that probably is more bluster than a solid basis. Secondly, another point which your viewers must keep in mind is the fact that America is slowly losing its ground as the sole superpower of the world. The center seems to be shifting to China. The Iranian foreign minister is today in China. Trump is making all these moves if my reading is correct, in order to make sure that when he goes to China, he is not going there as a defeated superpower, but as someone who somehow agreed to peace. But China is playing it very cool, and Iran is playing it smartly. Iran wants to extract the maximum, and China wants to be seen as the sole responsible superpower in the world.
Well, it's interesting you point out China. We have those visuals running on your screens where you see Foreign Minister of Iran, Mr. Araghchi, there in Beijing speaking to his counterpart in Beijing. But Ambassador Dokra, coming to you, Donald Trump pulling back as far as Project Freedom is concerned. Does this indicate to Tehran that it's Iran which is operating, which is negotiating from a position of strength? This is something that Tehran was opposing outright. And now with Donald Trump conceding to that position of Iran, has he told Tehran that, look, Tehran, the Iranian leadership is operating from a position of strength?
Well, in diplomatic negotiations, you don't have to tell anything. Your body language, your statements convey the message loud and clear. And Trump's messages, despite all his bluster, show a man who's defeated, show a man who's not thought through the game. Because right from the beginning, he was advised by his own army generals, don't get into this. We will not be able to achieve any of the objectives that you have spelled out, like regime change, denuclearization, and so on of Iran. Nothing of that sort has happened. In fact, Iran has emerged stronger. And not only that, there may be a situation where America may be forced out of all the bases that it has in Gulf. So it will be losing a very, very strategic foothold in a very important part of the world. So America's basic objective seemed to have been that it should control the energy resources, not just of the Arabian Gulf, but also of Iran, meaning thereby the bulk of energy resources of the world. Now that game has fallen through. So we are looking at a reduced America, and a man who's the leader whose bluff has been called.
Sure. Ambassador Dogra, there does appear to be some progress on the ground. We're seeing reports coming in from Al Jazeera which suggest that the IRGC is saying that safe, stable passage via Hormuz will be ensured now that the U.S. threats are neutralized. This reportedly was one of the aspects, opening up of Hormuz was one of the aspects, one of the points on that 14-point plan that has been shared between the two sides. Given that there's progress, do you believe that there's traction for some of the other more heated subjects between the two? As per the Axios report, there is a conversation that is being had through this 14-page MOU that there should be a 12 to 15-year cap on enrichment, that the enriched uranium should be shipped out to another country. You think there is ground for at least some kind of interim framework on these contested issues?
Well, we'll have to wait and see as to what actually happens in the coming days and weeks. But if you look back, and I'm sure over the period of next few months and years, people who are strategic experts would analyze how all this unfolded. But for the present, let's look at how it began. Operation Fury began in the beginning of March. Right from the first day onwards, Tehran's statements have been very measured. They have not gone in for any bluster. They have not gone in for, claiming that they've kicked out America. They've let facts speak for themselves. And they have tried to appear to the world as a mature nation, which is stable, which will not get cowed down by even loss of the supreme leadership of Iran. It has bounced back, and it has defied America at every turn. So if you look at the global public opinion also, it is more in favor of Iran and its moves rather than America or Israel or even the Arab Gulf states.
Ambassador, you'd refer to the role that China will play, of course, Mr. Araghchi in China, in Beijing as we speak. Tell us, at this point, at this stage where we find ourselves, is China more eager, more keen on bringing Iran to the negotiating table for some form of resolution, or will China be more invested in keeping Donald Trump, in keeping United States locked in the West Asia crisis, a crisis of their own making?
Well, China would want a situation where the ultimate result is to its liking and in its favor. So for that, it will not want Iran to just agree to the 14 points given by whatever they are by United States. In fact, it would be seen as a country that ultimately influences Iran to give some concession to America. And for that, Trump will have to plead to Xi. He will have to stop issuing threats like sanctions on China. So China wants to get its pound of flesh. And China specializes, to paraphrase Merchant of Venice, in taking its pound of flesh without a drop of blood being spilled. So it's playing a very clever game. Just as I said, Iran is playing a mature game. China is playing a very clever game.
Well, we'll see, of course, all of these games, as you put it, play out in the next few hours, if not days. Ambassador Dogra, we'd like to thank you for joining us. We request you to stay on. But let's also go across to some of the other experts who are joining us. We have geopolitics expert Hassan Hashmi Pirzada, who's joining us for a Pakistan perspective. Also with us is author and foreign affairs expert Rubinder Sachdev. Mr. Pirzada, let me come to you. It's not very long back that we had a post being put out by the Pakistani Prime Minister where he said that he was acknowledging the role that Pakistan played along with Saudi in weighing upon Donald Trump to pull back as far as Project Freedom is concerned. How important is it? That was being seen as a development that is leading to this 14-point MOU that we're talking about. How much of a say does Pakistan, Gulf countries like Saudi have in terms of weighing on Donald Trump on the need to perhaps scale back and make some concessions to Tehran for taking this resolution forward?
Thank you for having me. I think so. Pakistan has a very, a good leverage in this play. We have seen this repeatedly happening that Pakistan has played a very key role in, having their ceasefire done, bringing them into the table on Islamabad once, second time almost there, but Pakistan is the only viable channel which is active at the moment, which is talking to Iran and then, presenting that back to President Trump and his administration. And we have seen repeatedly from President Trump and his administration, praising Pakistan leadership and Pakistani government to playing a very key role. So I think so. We have also seen in the last 48 hours the Tuska vessel, for the Iranian vessel, which has been given back to Iran through Pakistan. So Pakistan has not only just putting the messages across, Pakistan is actively playing the physical role in this play, and bringing the Washington and Tehran closer. Also, Pakistan has actively opened up the ground routes to Iran for their trade. So I think so. We are in the game. We are actively trying to bring this region to peace. Saudis, whether it is dealing with our Saudi friends or the Chinese friends, we have seen Foreign Minister Ishaq Dar met up with the Chinese ambassador in the last 24 hours as well, and the diplomatic, the cables are going around from Pakistan to all the way to Washington, Tehran, and Riyadh, constantly in the last 24 hours.
Sure. Mr. Sachdev, let me also come to you and get a sense on perhaps challenges as far as this resolution is concerned. We've seen attacks being suffered by the UAE. We've seen civilian casualties there as well. There's a big debate underway, speculation on social media as well as to who's responsible for those attacks. Tehran saying that, look, it had nothing to do as far as these attacks are concerned, suggesting that there are vested interests in ensuring that these talks capitulate. This was being talked about from the very early onset, that there could be false flag operations to ensure that these resolution talks don't go any forward. Give us your sense. How do you see these 14-point MOU, this plan proceeding now under the cloud of these attacks on civilian sites, on civilians, especially as far as UAE is concerned?
So thank you. Pleasure to be with you. See, in the big picture, from what I understand, Trump wants or wanted and still wants. He wants a prize. He wants a trophy. And that trophy is, drums of the enriched uranium on the tarmac of Tehran airport, an American Air Force plane coming, those drums being loaded, and the enriched uranium out of Iran. Trump wants that physical victory. Okay, so let's say that's the maximalist point, but that he really wants. So to my mind, if anything results in a peace deal of sorts, where that is not achieved, I think Trump will not be able to claim full victory. The uranium going out of Iran to the US or Russia or Geneva, wherever, but the uranium has to go out. That is the bottom line, one. Apart from that, the others are incidentals. And incidentally, the Strait of Hormuz was never a factor in consideration. It is this war which has created a new super weapon. This super weapon has been created only due to this war. This super weapon has been battle tested. The American firepower, the Israeli firepower, the epic fury, the economic fury, all of those furies have not been able to, let's say, demolish this weapon. So this is a new super weapon which has been found or created, and Iran is not going to give it up. Okay, it may step away from the blockade for the time being. America, you lift, I lift. Okay, fine, that could be so. But down the line, Iran will cast a shadow, especially on the Gulf countries. And the Gulf countries, I think, must be very, very much worried. Now, coming to this point, by the way, of the attack on the Fujairah refinery yesterday, which Iran says it has not done. Iran has earlier also said it could have been. One of the earliest attacks on Aramco during the initial stages of the war, Iran was implying that it is Israeli Mossad which has done it. And even now, it could be Mossad, who knows, or somebody else. They're wheels within wheels in this whole complex scenario. But the point is that if this one-pager MOU, which seems to be just a tentative MOU, it will lead to a 30-day ceasefire, apparently, and other topics will be sorted out. Even if it results, it will result in a half-baked peace, and it will result in a situation after a month, assuming some of these factors are worked out, it will result in a situation wherein Iran will be a dominant, if not power, let's say, but a dominant shadow, once again, I could use the word, in this region. It will be a very uncomfortable peace.
Right, that's the situation that we have in our hands. Mr. Sachdev, do stay on with us. It's time now for slipping into a very short break, but we'll continue this discussion with our eminent panelists on the other side. Stay tuned. Well, we're still joined by geopolitics expert Hassan Hashmi Pirzada, as well as author and foreign affairs expert Robinder Sachdev. But before I come to you, just a post that has been put out by Donald Trump, by President of United States. He says that assuming Iran agrees to give what has been agreed to, which is perhaps a big assumption, the already legendary Epic Fury will be at an end, and the highly effective blockade will allow the Hormuz Strait to be open to all, including Iran. If they don't agree, the bombing starts, and it will be sadly at a much higher level and intensity than it was before. So clearly Donald Trump alluding to what could be some middle ground that the two parties are trying to find. But Mr. Pirzada, you have your ear close to the ground, especially as far as Islamabad is concerned. Tell us, what are some of the key takeaways from the 14-point MOU that we're discussing? Is the Axios report accurate? Are we talking about nuclear enrichment? Are we talking about shipping enriched uranium out of Iran? What are some of these aspects being discussed, negotiated between the two sides?
I think so. They're working on the base which they have already created before on the Joint Comprehensive Plan of Action, and also in the Iranian talks as well, because they didn't get the time in this, after this war, to go back and forward a lot face to face. So I think so. The key agreement was always there for the uranium enrichment to be lowered to the 3.67%. I think so. That is the agreement which Iranians will be coming on to it. I think so. What was happening in the last 1 to 2 weeks was the Americans wanted a complete, blockade and complete stop to the uranium enrichment, while Iranian wanted some sort of a sunset clause, either in 10, 12, or 15 years. And I think so. Americans have agreed to this now, and now that's why we are seeing in the Axios report from Barack Revit that it's either it's 12 years or 15 years, and after that, if Iran doesn't do anything, they can able to enrich. So. I think so. We will see, but I think so. The other things which will be in play will be how much the centrifuges quantity they will lower. But in the past, it was they were agreed to lower it to the 6,000 mark from the 19,000 marks back in 15. So we'll see how much Iranians will agree to do that, and also the heavy water reactors as well. But I'm hearing from Pakistan that there is progress which has been made a lot in the last 24 hours, and especially the Iranian foreign minister going to China. Pakistan is very close to China as well, so the influence is going through. The only problem in this whole equation is the military side, the IRGC, and the political side of Iran. There is some imbalance there, which hopefully they will come on to some sort of agreement within them, and then this interim kind of peace can go ahead for the 30 days, which can lead into a permanent kind of agreement.
Sure. Mr. Sachdev, coming to you again, just borrowing from what Donald Trump has just posted on Truth Social, where he says, assuming Iran agrees to give what has been agreed to, which is perhaps a big assumption, anyways, indicating that there is some kind of concession that Tehran seems to have made, at least to Donald Trump. Taking this on face value, are you confident that in the next couple of days we could see perhaps, given all the indications we've seen, a rollback of Project Freedom, this post put out by Donald Trump, Tehran indicating that it is open to the idea of opening up Hormuz. Do these indications tell you that in the next 48 hours we could perhaps be looking at some kind of interim framework for a resolution?
Actually, you know what? I think we might be looking forward to, or we could anticipate. And the other reason why I think this could be, this whole MOU thing and a 1-month ceasefire and discussions, I think could also be a very well a ploy by America and Donald Trump to cool down the Iranian theater in advance of his visit to China. Otherwise, maybe his visit to China would be consumed a lot by the uncertainty which is happening back here in the Iranian and the Gulf theater. So this could also be a move very wisely by the Americans to see that if in 48 hours, okay, they will come down maybe a couple of steps, but Iran, let's say wherever they can maximum force Iran, and to arrive at a situation where they could say, okay, we have, a tentative peace or a tentative pause, let's say. Okay, what that pause will do for America and Trump is that it will relieve him of the pressures of what's happening in the Iranian theater every 24 hours, 48 hours. He goes to China because he has much bigger fish to fry there. Okay, an entire US-China trade deal is pending. So many other aspects are pending between China and America. If this war or this situation continues, it's not a war, not a peace kind of a thing, it will take up oxygen in those discussions out there. So it would be much better for Trump that this matter for the time being is at least pushed to the background. And then he comes back from China and then he can again say, you know what, these guys are not living up to their deal or to what we expected of them. Boom, another ultimatum, and now we are going to start bombing again. It could very well be a ploy to that. So if that's the ploy that America and Trump is playing and wants, then there are chances that in the next 48 hours, some kind of a half-baked deal with many things left unclear could be arrived at.
Sure. Mr. Pirzada, let me come to you that assuming that there is some kind of interim framework reached in the next 48 hours, no one's assuming that this crisis will be resolved for good in just the next couple of days. But if an interim arrangement is reached, is there grounds that Islamabad has made for perhaps in-person talks between the two sides for a longer-term, more meaningful resolution to this issue?
100%. I think so. That is the play Pakistan is playing at the moment, that, come up on some sort of arrangement in the next 48 hours as we're hearing the news, and then bring these parties together again to work on it for the permanent solution. We have seen and we know Iranians are known to be very slow in their processing of these talks. They take time. They, methodically go through each and everything before coming up and agreeing on something. So I think so. Once this has come through as an interim solution, then they can able to sell it to their domestic audience as well. And then once they come to Islamabad, then we can have some detailed discussions on the stuff which are important for Iranians as well. We have a new thing in play, which is Strait of Hormuz. We haven't heard anything particularly like how that will play out. Iranians want to have some sort of toll as well. Will that be acceptable? How that will play out within the convention? So there is a lot of stuff which now has to be discussed, which was not discussed before. But I think so this would be a good start to, both parties to sell it to their domestic audience and then come to Islamabad and then, iron out all the details for a permanent solution to go forward.
Right, so both sides, at least for now, seem to be indicating, at least through the optics, at least through the media, that there is some scope for resolution, for conversation between the two sides. Whether it materializes, well, it's anybody's guess. I'd like to thank both of our panelists for joining us, Mr. Sachdev, Mr. Pirzada. But with that, it's a wrap on this special broadcast on West Asia War. More news and updates will continue right here.
American multinational Carrier Global is betting big on India. The company is investing $100 million in Sri City in Andhra Pradesh to set up a new facility to manufacture air conditioners. The state's IT Minister Nara Lokesh laid the foundation stone for the plant, which promises to generate 3,000 jobs. Valued at $60 billion, Carrier Global is a leading energy solutions major operating in 160 countries with around 53,000 employees. The company generates $22 billion in annual revenue. David Gitlin has been the chairman and CEO since 2019. Under his leadership, the company's market cap has grown 5 times from $12 billion to $60 billion. Facing pressure in the Chinese market, the company is setting its sights on India for expansion and is hoping to ride the AI wave through the boom in data centers. I spoke to David Gitlin to find out more about the company's blueprint for growth in India and the outlook for the rest of the world. Before I talk to you about Carrier's global growth forecast, let me double down on your plans for India. Sri City in Andhra Pradesh is where you've decided to set up a 39-acre manufacturing facility. $120 million is what you intend to invest there. Let's start with your plans for India.
Well, look, we could not be more excited to expand our footprint in India. You know, we've been selling into India for close to a century. Our first facility here, our first building was back in 1936. And we were the first in our industry to establish operations here 40 years ago. We're celebrating our 40 years of operations here. We started in Gurgaon, and the beauty of our presence here is it's really an end-to-end value chain. So we have operations and manufacturing and supply chain up in Gurgaon. We have significant engineering in Gurgaon as well as Hyderabad and Bengaluru. We have significant operations with our JV partner in Pune. And now we are very proud to announce this $100 million investment in Sri City, which will be a state-of-the-art manufacturing facility, and it really builds out our presence. The growth that we've been seeing in India is unlike any country that we have around the world. Our CAGR over the last 4 years has been 20%. We grew 33% in the first quarter. So the growth potential here is significant. We've been realizing it, but we cannot keep up with that growth without a complete localization and without significantly expanding our footprint.
Well, congratulations on 40 years and congratulations on your new facility that you intend to set up in Sri City in Andhra Pradesh. When is that likely to be operational, David? And will it also focus on demand for the export market?
It'll be operational in the third quarter of next year, so we're doing an accelerated schedule. And the answer is yes. We not only plan to have the facility for the capacity that we need here in India, but we plan to export to Africa, parts of the Middle East, and then we'll see where it goes from there. But because we have not only a state-of-the-art factory, we're going to surround it with a complete supply chain ecosystem. Today up by Gurgaon, we have about 200 suppliers. We're going to need 3 or 4x that number in Sri City. So it'll be tremendously state-of-the-art. It'll be a complete community of suppliers, and I think it'll be perfect not only for India, but for the region.
You know, you talked about the supply chain ecosystem, and this is something that the government has also been focusing on. Lay out for us how many suppliers we're likely to see move to Sri City, to Andhra Pradesh as part of this ecosystem that you spoke of.
You know, today, the number of suppliers we have in Gurgaon is about 200. We're probably going to need about 3x that in Sri City. And part of the beauty of Sri City is a few. Number one is by the end of next year, about 50% of the air conditioning needs for India will be manufactured in Sri City. So it already has a robust supply chain. The other thing that really attracted us to the community is that it's within 100 miles, within 100 kilometers is 5 different ports. So it's perfect for exporting to the local region as well.
Well, yes, you gave us an indication of the kind of export aspiration that you have. You know, given the fact that India is growing at a CAGR of 20%, that billion-dollar revenue number, David, on track to achieve that by 2030?
Yeah, we should definitely be at $1 billion by 2030. When you look at the investments that are taking place in India, if you look at data centers alone, today it's about 1.5 gigawatts, and you look at the announcements of not only the hyperscalers that we've seen, folks like Microsoft and Google and AWS announce significant data center investments in India, but also the colos, folks like Colt and Reliance and so many others. So we see India going from 1 gigawatt to 10 gigawatts. And you think about every gigawatt of investment in data centers, about $50 billion. So we see hyper growth in the data center market. We've seen that globally. We've certainly seen some phenomenal wins in the US and around the world. And we think one of the most exciting growth vectors that we have globally for data centers is right here in India. But it's not just data centers. That's one of the beauties. When you have a GDP CAGR of 7% or so, consistent growth, and we look at investments in commercial real estate and hospitals and hospitality and so many verticals. Once you start building data centers, that brings with it things like chip manufacturing. So not only direct data centers, but the amount of urbanization that we're seeing in India and the amount of growth in so many other vectors, we think 20% CAGR is a minimum. In India, what we try not to think about is CAGRs. We try to think about growing the business 2x, 3x over a short period of time. So today we're about 500 million of sales. I have no doubt that we'll be hitting that $1 billion mark before the end of 2029.
Okay, before the end of 2029. I want to get a little bit more color from you on the data center business, because your data center cooling business hit $1 billion in 2025. Given the accelerated pace of expansion, the jaw-dropping capex numbers from the hyperscalers and others, what is the outlook for the data center business?
It's tremendous. You know, we 2 years ago, Carrier did 500 million. We said that last year we would double it to $1 billion. This year we've said it's going to increase 50% to $1.5 billion. And the reality is internally we're driving to do a much better number than that. And we're building our backlog not only for 27, but for 28. So the growth potential in the United States, but honestly globally, it's kind of a once in a generation opportunity when you look at this data center opportunity. And one thing that Carrier's done is invest in innovation. So we now have a complete product portfolio. We have things like 2 and 3 megawatt maglev bearing chillers that are perfect for the data center market. We have water cooled chillers that we'll be making here in India for the local market as well, both air cooled and water cooled chillers. And then we look at a lot of the differentiation is through systems integration and intelligence. So we have an offering at Carrier that we call Quantum Leap, which is the integration of what were formerly disparate systems. So traditional cooling, liquid cooling, a building management system, a data center infrastructure management system, putting that all together in a way that minimizes water usage, minimizes energy consumption, and really creates the state-of-the-art efficiency that our customers expect. So we see we're in the early innings of this data center growth, and we think it's going to continue for years to come.
I want to get back to your plans for India, and while you give us, some guidance there as far as your manufacturing operations are concerned, walk us through the plans for the engineering centers. You've got Hyderabad, Bengaluru, Gurgaon, as you pointed out. Are you looking at hiring more? And what kind of work is happening at these engineering centers? How much of the IP-driven work is happening at your engineering centers in India?
It's absolutely tremendous. In fact, just before we arrived in Mumbai, we were in Hyderabad, and we have 1,600 professionals in Hyderabad, and it's a combination of digital and engineering and some back office work as well, where we've consolidated a lot of our back office activity that does record to report and some of our payables activity right here in Hyderabad. So the kind of skill sets that we're looking at spans the gamut of electrical engineer, software engineer, mechanical engineering, systems engineering. And on the digital side, we have an entire department dedicated to AI. We use Hyderabad as a center of excellence globally. So the kind of work that's being done in Hyderabad, both on the engineering side and on the digital side, are centers of excellence for the world. So a lot of the software development and electrical engineering that we do globally is done right here in Hyderabad. And we're going to keep building to it. It was just a few years ago, we had 1,000 people in Hyderabad. Today it's about 1,600, and we see the growth potential because of the skills that we have there, We see that continuing to grow. And frankly, our retention has been very, very good because we've created a work environment where people want to be a part of our mission. Because we're a very purpose-driven company. We want to be there for our customers, but we want to be there for the planet for generations to come. So we do a lot of community activities. We do tree planting activities. So when we recruit from the local universities, it speaks to them because our mission speaks to them.
I want to talk to you about what's happening globally, David. We are in the midst of the West Asia conflict, and that has, of course, led to oil prices surging close to $120 a barrel. It has led to raw material costs going up. What has that meant as far as your business is concerned?
You know, we have seen input costs increase. It's a combination of what you just mentioned, oil prices, and that affects a lot of our logistics costs. Because if you think of the nature of our business, you know, we're in homes around the world, we're in buildings around the world, we're in a number of different verticals that require a lot of transportation. So we've seen our logistics costs increase. We've also seen an increase in some of the raw materials, copper, steel, and aluminum. And then we've been navigating some of the tariff moves that have been happening in the United States and globally. So in some cases, in parts of the world, we've had to raise prices, but we do it at a minimum. We really do it to cover the input costs and do our very best to make sure that we're providing the most competitive offering for our customers.
You know, you talked about taking some price hikes to mitigate the raw material inflation that we are seeing. But what about demand, David? You know, has demand taken a knock on account of the conflict, especially in regions like the Middle East? You know, and will that impact your growth guidance?
To a certain extent, but when we look at the Middle East, we're a $22 billion global company. We have about 400 million in sales in the Middle East, so it's a couple percent. We have a tremendously resilient team in the Middle East. We have 800 professionals that work there, and they've been there every step of the way in a very difficult environment to support our customers. So we were expecting very significant growth in the Middle East this year. We were targeting significant growth. Given what's going on right now, it's been flattish, which, given the environment, is frankly quite good. But we can manage the demand environment in the Middle East. I think when you step back and you look at Carrier, what's been good has been phenomenal. About 40% of our portfolio has been growing double digits for 5 years in a row, and that 40% will grow double digits again this year. And that's a combination of our commercial HVAC business, driven in part by data centers, but many other verticals have been extremely strong, especially in countries like India. And then our aftermarket business has been extremely strong as well, and that'll grow double digits again this year. Some of the shorter cycle businesses, our residential businesses, have been impacted by some issues around the consumer and interest rates being at a bit elevated levels. So those cycled down a little bit in the United States and in Europe and in China, but those are cyclical. We are very well positioned. They're good margin businesses. We're very well positioned. And when those cycle back, we will see the upside of those upcycling.
David, you've of course seen a significant rationalization as far as your portfolio is concerned. Today, now a pure play climate solutions company. How ready do you feel about the future? And organic growth, of course, has been driving growth for you, but M&A possibilities?
We've done a pretty massive portfolio transformation to make us very focused, as you just mentioned, as a climate solutions company. So over just the past few years, we bought the Toshiba HVAC business, which has done phenomenally well. We bought an unbelievable company based out of Germany called Viessmann Climate Solutions. That's positioned us so well for the residential and light commercial business throughout Europe and throughout the world as well. So we've done some really amazing acquisitions, and we've had to sell, didn't have to sell, but we chose to sell our fire and security business and our stationary refrigeration business. So we are a very focused climate solutions company, focused on intelligence and AI. So we see the future of our business going from a product business selling air conditioners, chillers, to a solutions companies, really differentiated by systems and by intelligence. So will we do some acquisitions? Sure. Anything that can help us achieve our our vision of being the global leader in intelligent and climate solutions, we will do acquisitions if that fills out our portfolio. But we're talking about millions, not billions. Right now, because of the hyper growth we're seeing, we're really heads down focused on execution and being there for our customers.
Two quick questions, David. One on Carrier Ventures and whether you see opportunities here in India for Carrier Ventures to invest in, and two, the SaaS revenue from your digital platforms. How's that working out?
On the latter one, it's working out great. I will tell you that we've invested a tremendous amount in digital platforms. We have one for our mobile refrigeration business. So we built a digital platform that we call Links that provides end-to-end visibility in the global cold chain network. And we just started a few years ago, and today we now have 240,000 subscriptions. So our digital revenues from that has done very well, and we see that going to 800,000 over the coming couple of years. And then if you look at buildings, we launched a digital platform that we call Abound. A lot of it actually started in Bangalore. We used to call it Eco Energy. We call it Abound. So we're monitoring buildings around the world. So if you take a company that has a massive footprint, on a single pane of glass, you can monitor all of the emissions from every building that they have globally. That can then give us insights. The emissions from certain buildings are higher than others, and then we can take action, changing the control system, upgrading the equipment. That can drive SaaS-type revenues as well. So investing a lot in digital intelligence and then overlaying agentic AI on top of it is 100% the future. In terms of your first question with Carrier Ventures, we've made some great investments. They're often in the $5 to $15 million range. A lot of it has, frankly, been in the United States. But when I look at the ecosystem of what's happening with startups in India, I think this is a perfect country for us to invest more with Carrier Ventures.
As you look at AI, as you look at the future, David, how closely are we expecting you to ink more partnerships with the likes of NVIDIA and others, especially when we talk about these AI factories and cooling solutions?
Today we work closely with the chip manufacturers. We work very closely with NVIDIA because when you look at how a lot of the cooling is taking place in data centers today, it's not only traditional cooling, but the chips themselves have direct-to-chip cooling. So we have a coolant distribution unit that distributes liquid directly to a chip and then cools the chip directly. So to do that, we integrate very closely with our chip customers and partners, including NVIDIA. We have a great relationship with them. So as they expand globally, we expand with them. And we know that NVIDIA will be expanding here in India. And we expect to be a close partner of theirs here, just like we are in the United States and elsewhere. And then when we look at AI, a lot of the skills that we have globally are based right here in Hyderabad. So again, we were there earlier this morning, and we have about 150 engineers focused exclusively in Hyderabad on AI, because what you need for buildings is really three things. You need easy to commission and install sensors so you can get data. You need a common digital stack so all of that data can be coalesced in a single data lake. And then you need to put agentic AI on top of the data to create specific applications to create value for our customers, focused on maintenance, focused on energy efficiency, focused on comfort. So we see the needs of India being, in some cases, a bit unique. There's high ambient temperatures, high humidification. We spend a lot on filtration. And then what we're working on here in Hyderabad, using AI to create really unique solutions for our customers.
David, let me end by asking you, for 2026, the one thing that you're most excited about?
I have to tell you, I'm just so excited about where we are as a company. We've come a long way since we became a public company back in 2020, 6 years ago. We put a team, a culture, a foundation in place. We've simplified and focused the portfolio, leaning into sustained megatrends around data centers and hyper-growth areas. And when I look at this visit here to India, I cannot tell you how inspired I am leaving India. We have a tremendous workforce. We have close to 5,000. It's on its way to 6,500. I look at the growth potential. I look at our relationship with customers and our differentiated brands like Carrier and Toshiba and our differentiated product portfolio. And when you bring that workforce of 5,000 together, again, going to 6,500, our ability to lean into the opportunities in India, I think it's a one-in-a-generation inflection point opportunity for us. So I could not be more thrilled with the team we have here or the opportunity that lies in front of us.
David, we wish you the very best of luck with your plans here in India and your plans for Carrier globally as well. We look forward to seeing a lot more of you here in India. But thanks very much for joining us on the Global Dialogue. Appreciate your time.
Thank you, Shireen, and you'll see a lot of us. We plan to be back very often.
Well, we look forward to that. Many thanks. With that, it is time for us to take a break, but there's a lot more coming up for you on CNBC TV 18. The news continues. Stay with us. We're back in a moment.
wanting to be even Durga. I am a simple common person. I have exactly 2 hands. I don't have 10 hands. And there is no reason for me to go to war on any count whatsoever. Okay, so please, means worshipping the female form as though the form can do everything is not what you want. You want to be treated as a human being that needs rest, that needs time off, that needs to have time to themselves. You are a common, regular person.
Yeah.
That's how you need to be treated. Yeah. And if people are going to sort of, make
I'm surprised there isn't a louder applause for that, because I think that really is the problem.
We are nowhere near all of these things, and to even want to be that is wrong. Because then you're putting a stress on yourself that's way, way difficult. I remember, for instance, my sister, for instance, she's a homemaker. And she's very particular about, everything in the house. Like the cushion must be just so, and the cups must be, served in just this manner. And she used to tell me that you live like a bhoot, like a ghost. Because, there are cobwebs in your ceiling and stuff like that. So I tell her that, it's a peaceful coexistence with the spiders. So don't worry about it, I am not so bothered about cobwebs. I am bothered about the fact that I get home and I have a comfortable home, and that's it. I don't have to have the cushions at a particular angle. I don't have to have everything, spick and span. Yes, I am also a proud, homeowner, but that doesn't mean that I have to have everything exactly in its place. And it's true in the office as well. Sometimes your presentations will not be that beautiful. Sometimes you'll just put up, what we call quip or a Canva, sheet. We'll just put that up because I haven't yet had chance to create a dashboard. So be it. As long as there is material there, people shouldn't bother about the, about the optics of it so much. So that is one. But creating the ecosystem, I think, the one simple way of doing that is reach out to people whenever you can. And reach out to them with a smile, maybe with a helping hand, maybe asking them when your job is over quicker, whether you can do something for them. So just being kind, in 2 words, is all that you need to create an ecosystem. Just be kind. Be kind and trusting. Because if you don't trust, for instance, if you're leaving your home with your caretaker, or you're leaving your home with your mother-in-law, and you are getting into all these fancy things about the child shouldn't be having sugar, shouldn't be doing this, shouldn't be doing that, and all the, modern stuff that has come up, you have to ultimately realize that that is the woman who's either brought up you or your husband. So if she has done a great job in doing that, let her be. Why are we, we really and truly go after the small things. We sweat the small things. We need to give up control wherever we can. We need to delegate wherever we can. That works in the office as well. And I remember a woman, especially, when I was in SBI, she was my best programmer, by the way. She used to take 3 weeks leave before her son's examinations, which is fine. But during those 3 weeks, her team used to go around like headless chicken because they didn't know what to do. She had everything in her hand. So when she came back from her leave in one of those times, I told her that the next promotions are due and I'm not going to recommend you. And she was shocked. She said, I'm your best programmer. I said, yes. And that's the very reason why I'm not going to recommend, because you do not share with your team. You are not a good team leader. You're an individual contributor. Stay that. The next step up, you will have to lead much bigger teams, and you're not good for that. So unless and until I see a change in you, you're not getting recommended. She obviously changed and she went ahead and got promoted. But the fact is, there are a lot of women who can't give up control.
Does that stem from fear? Does it stem from insecurity? Because the pipeline and the funnel that leads to the top is so thin, as we pointed out, that perhaps that need for control or that need to sort of hold on to your turf and territory stems from a feeling of insecurity.
Actually speaking, if you ask me, men are more territorial than women. It's not the territory, but it could be insecurity. It could be the feeling that I will be supplanted and I will no longer be needed. Now, my question there is, why do you need to be needed? There is no need for you to be needed. Why can you not take it that you are adding value and you'll be needed for that and not for seeking control? Try and add value. That's the way one needs to work. And I have constantly said this to my team, that while people shouldn't notice that you're absent, they often do, because we have this beautiful stuff that we wear, which is not black and grey and brown.
in all your resplendent colors.
Yeah, in all our splendid colors, if you're not there, so they lack that blob of color in the room and know that you're not there. But that could be the only reason that you're missed, not for anything else, because your team will cover up your absence completely. However, when you are present, you should be noticed not for that blob of color, but because of the value that you are adding. So you shouldn't be missed during your absence, but you must be felt during your presence. If we can do that, then I can tell you, you will be confident enough to give up control.
Well, there's gems being thrown here by Arundhati Bhattacharya. I hope you're taking note of the wonderful, pragmatic and very practical truth bombs that you're throwing our way here this evening. But I think I want you to address an issue which I know is a personal issue for you as well. And it's something that many in this room and many who are watching us online and the community that we've built have encountered and dealt with. Maternity. And the choices that women have to make around that time. And that is when we actually see, the data tells us, we see that sharp decline in numbers of women opting out of the workforce. I know you also encountered a very tough decision, a tough choice. You, in fact, also considered the possibility of giving up your career. What made you want to stay? And how did you then navigate your way through that?
Yes, so of course, mine wasn't during maternity. Mine was a little later on, when I was wondering whether I would find in those days, in a place like Lucknow, a proper school, which my daughter needed. And what Mr. Verma, who I used to look upon as a mentor, what he told me was very simple, that, giving up is a 30-second job. Okay, so it's 2 lines that you email and it's done. So that should be absolutely your last recourse. So it's like the nuclear option, and you never use it. Okay, you never use the nuclear option unless you really want to self-annihilate.
Even President Trump is hesitant.
So unless you have a death wish, you don't do it. Okay, so you need to explore every single way prior to that. And to my surprise of surprises, I found an excellent school over there. And I had not even thought about going there and exploring this before taking a call about giving up. And in fact, I told him, you can be so naive. One can be so naive. I think about it now. I told him I'm going to move my entire family over there, and then I'll find there is no school, and then I'll have to come back, and all this, disruptions. Why cause it? And he said, why do you need to take your family? You can't leave her behind for 2 weeks. Leave her behind for 2 weeks. Go there. Actually have a look at the situation. See if there is a school. Go talk to it. And then if there is something, at that point of time, move your family. You don't need to move with everybody. And that's exactly what I did. And I found, a school good enough for her to be in. And, I could continue with my career. So also, I think, there are a number of times in our careers when we come across these situations. And one of the things that we did, which was a sabbatical for elderly care. Yeah. And while I don't know whether your data showed it, but elderly care is another reason why a lot of women actually
It showed exactly that, yes.
So the reason there again, and I've checked with people, one of the reasons is many of the women, they credit their mothers or mothers-in-law for their rise in their career because the children were looked after by them. When those people fall sick, they really and truly feel guilty about leaving them in the hands of a caretaker and going off to work. And then they have to take a call whether I work or I give up and keep looking after her. At that point of time, if you have this choice of a sabbatical, or now after COVID, it doesn't even need to be a sabbatical, it can be just remote working, then you have really solved a problem. And there I have an actual case where after we had instituted this, one woman came up to me and told me that my mother-in-law was very sick and I didn't want to leave her alone. And I had decided to put in my papers when the sabbatical came, so I took a year's leave. Unfortunately, she passed away in 3 months' time, and I rejoined immediately, and my career is like before. But I would have given up a 22-year-old career for those 3 months. I had no idea how long it would take. But for those 3 months, I would have destroyed this career of mine. So I think it's very important for us to have a little flexibility. And today, because of COVID, we know that remote working can be just as productive. There are roles that can be earmarked for remote working, and you can still keep them up to date with whatever is going on with the processes, with the technology and things like that by allowing them to work. In fact, if you allow them to work different hours, you can yourself extend the amount of time that this organization is serving its customers. We have to find innovative ways of doing this. And the other thing that I think that we need to do is we need a little more empathy. The empathy piece, always gets sort of, diluted because people always feel that if you're making a special provision for somebody, there is an element of favoritism. Okay. The fact that this is not favoritism, that this is important for the family, for the country, for the nation itself, that people stay and they still support families, I think we need to make that very clear to people around us.
You give us wonderful examples, but the idea of empathy and the idea of kindness, how do you build that into an organization of scale? I mean, State Bank of India is one of the largest organizations in India. It's not just the largest bank, it's one of the largest organizations in India. You've got people across the country. Kindness and empathy, how do you institutionalize that? Because I think that is the challenge that most companies are sort of coming up against at this point in time.
But these things come from the top. None of these things can sort of come up by osmosis. They have to go down from the top. There has to be a diffusion. And actually speaking, there was a time when we had certain metrics in our performance that sort of gave certain incentives or took away some money if we didn't meet certain goals of creating diversity and things like that. There was a time when these things were there. And I believe that, if you really want to ensure that you are creating that roadmap, you are creating that effort to plug the leaky pipeline, you need to put in some metrics and you need to have incentives and disincentives, a measuring mechanism in order to ensure that those metrics are being fulfilled. What is not measured never happens. So you need a goal, you need a monitoring, and you need a mitigation method. You need all of these. So if you can do that along with some incentives, disincentives, and the incentives, disincentives can be as simple as just recognition. Doesn't have to be money. Okay, it could be just
recognition. And that goes a long way.
It goes a hell of a long way. If that can be done, I think, then the corporates can have a real chance of getting there.
What will it take for us to get more women? I mean, there was a period of time in India, and I think we were the highest number of women heading banks in India globally as well. What will it take for us to be able to make that the norm and not the exception?
That's a tough one. It really is a tough one, because I don't think we have put those metrics in place. Okay? But if you saw the boards had very few women, right? And SEBI put in the norm that there has to be a woman on the board. Immediately what happened, women came on the board. And by the way, most of the women were women related to the families. Okay? Now, I'm not saying that they are not competent. Most of them are extremely competent, but they're related. Okay? And if you are related, to be an independent woman. Okay, that also is done. But you look at the number of government companies or PSUs that still doesn't have an independent director on the board, woman director on the board. Why are we not holding this up and telling the government that you need to walk the talk? You need to be an example of ensuring that there are enough women on the board. At least during my time there wasn't. I don't know whether now it's different. If it's different, congratulations to the government for doing it. But the fact is, again, because it says only one independent woman.
You'll only have that one.
You'll have that one. Why is it? Because again, you're ticking the box. You're not really internalizing
it's compliance. It's compliance.
Exactly. You are ticking the box. You're not really going in deep. Why not go in deeper to find out why there should be only one woman? And again, I come across this quite often. A lot of people ask me for names of women who could come on the board. But they want women who have only been in the C-suite. Now, what happens is, not that many women are still in the C-suite. So I don't have that many names. The C-suite women all have 6 to 7 listed companies. Okay? They are inundated with offers. But there are amply good women below that. They don't get offers, and they are willing. They are willing, they'll do a good job, they will read up the papers, they will come with suggestions. Give them a chance.
Yeah.
It's a question of taking a chance on them. But you know, it's very difficult for us to get across this, that even though this woman wasn't in the C-suite, she's still very good. Some of them take my word for it because they believe in me. Most of them don't. But I would really make a request, you know, that for all the companies that are over here, it's important for them to please recognize that there is a lot of talent out there. They just need to give it a space for it to, you know, show up.
You know, this is not just a problem in India. It's a universal problem. It's a universal challenge. How's the tech world dealing with this now that you're part of the tech world and now that you're part of a global corporation? How different is it?
I think it is very different because one of the things that I was very impressed with, at least in Salesforce, is that before I could even interview somebody, I was asked to take a training on unconscious bias. And I said, well, I've been a woman and I've been a woman who's risen from the ranks. I'm sure, 100% sure I don't have bias. Why do I need to take a training for it? And they said, nothing doing. That's the norm. You have to be trained.
Did you pass?
So, I didn't.
You didn't?
I didn't. That's exactly what I'm trying to say. Even though we say that we don't have bias, we do. Because when they asked me to write down the list of questions I would ask a female candidate and the list of questions that I'd ask a male candidate, they were entirely different. I did not pass, and that made me very aware of the fact that all of us have biases. All of us. It doesn't matter whether we are men or women, whether we are high up there or just joined. It doesn't matter. We all have biases, and we need to be made aware of it. Now, once you are aware of it, you're a much better person.
Yeah.
Because then you are much more, you know, much more prepared for the way that you are going to approach this so as to ensure you're giving a level playing field. I was just talking to another company where they've just finished a whole round of interviews for their yearly promotions. And one of the women who was leading one of these boards, she was telling me that whenever there was a woman on the brink as to whether the board was half and half, whether should be promoted or not, shouldn't be promoted, the question that would be asked is, kar legi? And whenever there was a man who was in the same position, the statement would be kar lega.
Yeah, yeah.
So kar legi or kar lega, there's a very big difference.
Yeah.
Very, very big difference. And that is where we need to understand that the bias works in. No, that is where you have to be very conscious of what you are saying. Okay?
Well, you know, and I think that's a very important, the question mark often gets attached when you're talking about the roles that women can play. I want to end by asking you, for all the people who are watching us here and who are watching us on TV and online, to young women who are entering the workforce, what are the Arundhati Bhattacharya commandments that you will leave us with?
That's a tough one. You know, the only commandment that I have is that today it's a very different world from the world that we came into. Okay, it's far more competitive, but more than competitive, it's a very uncertain world. And in an uncertain world, the only thing that keeps you relevant is if you are continuously learning and giving. So, you know, those two things cannot take a backseat. You have to continuously keep learning, continuously be aware of the situation around you. And that, you know, should become second nature, that you are automatically picking up things as they evolve, because that's what is going to ensure your relevance. And that's the only way.
Are you an AI specialist now?
I won't say I'm an AI specialist, but if you ask me, there are 3 ranks of creating agents, and we had to at least be at the 3rd rank. The company made it mandatory for us to attend company-wide training meetings. So I am at that stage, so I can create an agent if you want me to.
Thank you very much. I will take you up on that offer, Arundhati Bhattacharya. What a fabulous evening it is to have you join us. Ladies and gentlemen, a big round of applause to Arundhati Bhattacharya. Thank you so much for joining us here.
Thank you, Mrs. Bhattacharya, for taking us through those pearls of wisdom and what women need to do to stay in the workforce. And thank you, Shireen, for steering us through that conversation. Now, if you would like to take this conversation forward, please scan the QR code on the LED screens and join the Future Female Forward community. The QR code is on your screen for you to scan.
And moving on, our next conversation takes the evening into a more honest and necessary space. Because when we talk about women and leadership, the question is no longer whether talent exists. It clearly does. The harder question is, why does opportunity still not move at the same pace? And the answer is often simpler than we admit. Advancement is rarely shaped by talent alone. It is shaped by access. Access to sponsorships, access to stretch roles, access to capital, influence, informal networks, and the rooms where decisions are often made long before they are formally announced. That is what makes this next conversation so important. We request Shireen to please join us back on stage to take this conversation forward, and now to explore power, access, and what it really takes to move women forward at scale. Please welcome our distinguished panelists, Vibha Padalkar, CEO, HDFC Life; N. Suresh, Chief Operating Officer, HSBC India; Avinash Satwalekar, President, Franklin Templeton Asset Management India; Anant Goenka, Vice Chairman, RPG Group and President, FICCI; and Jyoti Vich, Director General, FICCI.
Thank you very much, Arundhati. Ladies and gentlemen, as we said, that Future Female Forward is all about inclusion. It's about breaking boundaries. And very often the feedback that we got from people was that, look, it creates a distance when you have people up on stage there. So we decided that we're going to have these conversations and do a larger brainstorm and have all of our guests here with us. And I do want to thank each one of you for being here with us this evening. It truly means a lot. Vibha, I want to start by talking to you. And if I'd request you to stand up, please, so that we can have you facing our audience. For those of you who don't know Vibha, well, she is one of the formidable women leaders that we have in the country. She's been leading HDFC Life now for, over 8 years. And of course, she's spent a significant number of years at HDFC. Vibha, I want to first start with your own journey. A chartered accountant, you were in London, you decided to move back to India, get into the financial services space. What has been the question that you've been asked the most? What have been the assumptions that have been made about you that you've had to encounter and shatter?
So I think the shatter bit, I'll start with that. I've never worked towards shattering anything. I've just worked towards what interests me, excites me, giving it a good shot, and results are what they are. So it's never been corner office by this, some other goals. I just didn't have them. But I did have my Monday morning test that the day I feel, I'm not itching to go by Sunday night and the family is like switched off with me. If that's not happening, then I need to ask why. Otherwise, everything's fine. Never negotiated my pay, never negotiated the size of my cabin, just focused in terms of, am I excited with what I'm doing? So that's really been,
I want to pause there because, I say this as well. I've never negotiated my salary. I've never negotiated a cabin. I don't even have a cabin, by the way. I pretty much spend my time walking around in the newsroom because I enjoy that. But that's a very woman thing to do. And in our telling this story, do we also normalize the fact that it's okay for women to not accept what the men get?
Yes, possibly. So it's a fine balance of how much do you get pushed. But I think in organizations, if you've spent a fair bit of time or some time, people know the breaking point that she will just walk with no negotiations. So you better be fair. So actually, it turns at some point in time, the tide turns, that they're being overly cautious, that are you okay? Are you happy? Are you vested because you're just not negotiating? Yeah. But yes, I think we also tend to normalize. We also say it's okay, that's not what I was after and so on. And then do feel lousy at some point in time that did I get shortchanged? So yes, I think it is a balance. Yeah. So I don't want to make a virtue of it. Yeah. It's just that that's not the key driver.
Yeah. And the Monday morning test, I think, is a good one, that if you're excited about going into work, then I guess it tells you that what you're doing is the right thing for you. But Vibha, as a leader today, as somebody who's leading an organization that has both men and women and across India, Have you done things differently to the point that Arundhati Bhattacharya was also making about creating ecosystems that measure but also look at outcomes? Have you done things differently to ensure that you actually bring more women in, you bring down attrition, etc.?
Absolutely, and actually COVID helped a lot. I think ma'am made a mention of that. There was an inflection point during COVID wherein the realization that women could work from home and be very productive. Otherwise, there's this whole infrastructure issue of her getting out of her home and delivering the hours that are required. And sometimes one can't define how many hours or in what working conditions, safety, and so on outside the office. So suddenly this opened up. I want to take an example of our agents, our feet on. They're not my employees, but now we have 250,000 agents. Now, the phenomenal number is 1/3 of them are women. And in terms of that's in the stock, but in terms of the flow, it's a much higher number. So 40%. So I'm able to recruit women from smaller towns, say a Hubli, and she's able to give me time working from home. It doesn't matter where she's working from. She's able to respect. The brand is a good brand to be associated with. And suddenly she becomes an income wage earner. She has a Facebook page to say, I'm a financial consultant. And life's very different that she's experienced. And she had her education. It was, she kind of meandered through responsibilities and so on. And she's liking what she's seeing. So actually COVID and work from home has opened up phenomenal. And so we are learning and moving towards not just Gen Z, that's a given, but even women, older women, women who have quit and want to come back. We're really targeting, and we've been fairly successful, our own women. So we have 38,000 employees, our own women who've left, want to come back, other women in especially BFSI. I think that's working very well. Productivity is higher. My insurance persistency is higher. Attrition rate is any metric that you see over the last 5-6 years since COVID, every metric is better as a cohort.
Well, that kudos to you and to your team for ensuring that. But Vibha, I also want to understand from you, insurance in India continues to be a sector which is hugely underpenetrated. But what is it like when we look at the data? I mean, how are the women doing as far as insurance is concerned? And how is the industry treating women?
So slightly complicated because we have about currently 28 lakh customers who are currently in force, as we call it, and 40 lakh since inception. We are a 25-year company. We want more women. Clearly, it should represent the population. So 50% of our customers need to be women. And that's where it gets complicated. Women often switch off. They're not asking to be seated at the table. I'm generalizing, but very often either the father or the husband or someone else, some other male, is still making those decisions. Women start making decisions if she is single or she's a divorcee or something else, some other situation forcing her to do. So younger women, fairly savvy. Older women is what I've said. So biases again, the same biases wherein we actually have a training wherein if our employee or the financial consultant goes into a home because an appointment has been given and he says, "Saab nahi hai," so we actually have that to say that you cannot do that. The appointment is with the woman. She's taken it. Why are you asking where the Saab is? Those sorts of unconscious and even conscious biases, because the guy he doesn't know how to talk to her as a customer. So there's an entire ecosystem that we are consciously working on. We've tried to launch women-centric products, not really taken off. Products that you can start and stop, products where you have higher levels of certain kind of diseases that you're worried about, and so on. But at the same time, I've met a woman who is married into a very rich family, and a customer, and I met her, and I said, "Why did you take a term policy in your name?" And she does some advertising work and so on. So she said, yes, I'm married into a very rich family, but I want to leave some money to my kids from mom. And that is that kind of a pride to say it is important for my kids to realize that it's not about the amount of money, but it's the gesture. We need a lot more of that happening, but I think it starts off in schools in terms of financial education, that it's as important as anything else that we learn. Very, very critical.
As I asked Ms. Bhattacharya as well, what is the one thing that you would say to women who are entering the workforce, women who are navigating the decision on whether to stay on or opt out because of maternity or marriage? What is it that you would say to them?
I would say you're not the first woman to have a baby. You're not the first woman to look after your parents. You're not going to be the last. So find that little village that will help. Don't be afraid to seek help from whichever counter it comes. Don't be such a or try to be such a perfectionist that it's my way or the highway. It's okay if your husband is around with pizzas around, but looking after your kid. Don't give up to say that, no, it's only my way, look, XYZ is happening, and you take the entire load. We tend to do that. Yeah. But I absolutely agree that, giving up, we make it a virtue. We are martyrs, but actually in a way, that's the easiest thing to do. Hanging in there is really required. It's a lot more difficult. But see, kids grow up. Kids will leave home. And suddenly, you'll again regret, left with just a bag of regrets to say, oh, look at that person. She's doing so well. So who's to blame in all of this? I think that's what I would say, that this will pass. Take a back seat, but hang in there. Doesn't matter if you're from a front office, a lot more demanding role to a more boring back office. It's okay, but at least you're in the system. Yeah. Getting in because of the technology change, regulatory changes is a lot more difficult. So I would just say, do not throw in the towel.
Don't throw in the towel. Cobwebs are okay. Pizzas occasionally are just fine. Don't worry about it. Vibha, thanks so much. May I request you to take your seat as well. Avi, I want to come to you, and I'm going to request you to turn around and face all the women. Have you seen so many women in a room before?
I have. Yes, I have, especially on this trip that I've been on.
Yes, and I want to talk about this trip, and I wanted you to explain this. He's been driving through India, meeting women. What is this about, Avi?
So it started with, we'd done the drive already. So we did this in 30 days, drove from Kanyakumari all the way up to Srinagar with the sole purpose of doing investor education and bringing more financial literacy. And the idea behind it, so the drive was called Change the Soch. And the reason for that is you need to change the way we think. And that's not just women. Women definitely need to change the way they think. But given a lot of the conversations we've had so far, that is happening. But it's also the way men think, because men can be the biggest champions. And if there's one example, I think that, or one commonality I've seen across both what Vibha was saying as well as what Arundhati was saying, is that support mechanism is critical. But anyway, so this drive was more about trying to get more women to start taking ownership of their own financial future and their own financial independence.
What surprised you the most as you made your way from Kanyakumari to Kashmir?
I think we know that India is very diverse and that Bharat is very unique and different compared to India, right? But I think what did surprise me a lot was that how quickly those things change. So at almost every 50 kilometers, you had a new culture, you had a new language, you had new cuisines, you had new thinking processes. So I think the changes that we see, there's no one answer that fits everything. So I think, and I'm trying to preempt what your last question is going to be, is that what is that one thing? There's not like one thing. I know, but I'm trying to preempt that to a certain extent. But I do think that it is a difference. And I think that is, this whole myth that, women don't get certain things or women do things much better than other things. It's a myth. There is a commonality and a generality in everything. And so I think that was what was different, was that almost every 50 kilometers, and that's a lot of 50 kilometers and 4,100 kilometers from the south to the north, but seeing a lot of that change was incredible.
And he was self-driving, by the way. He was not being driven. He was actually driving his way through India. But change the soch. What is it that you want to change on the back of the insights that you've now discovered at the end of your journey?
So I think a lot of it is about thinking, right? So this self-doubt. So there's a couple of things that we learned right throughout, right? One was that there is a difference in terms of knowledge and awareness that we need to fix. There is a difference in terms of how women perceive themselves and their capabilities. And there is a difference in terms of, I'd say, that confidence that you get and translating that into conviction. So what are we trying to change? We're trying to change the fact that, I mean, the most common thing that we'd heard was, well, I don't like investing, I don't understand investing, and investing is risky. And some permutation of all those three reasons, right? And what the point we were trying to make is that it is not complicated, right? Yes, we try to make it sound complicated just so that we feel important. But that's financial services for you in general. It is not complicated. So the idea that you spend time understanding what is going to impact you in the future, see, whether you decide to make those decisions. I mean, one of the reasons that we got was, and I think, Vibha, you touched on this, is that fathers decided, brothers decided, and pretty much any other male living within 5 kilometers of you has decided what your financial future should look like. If you're comfortable with that, I'm not questioning that. What I'm saying is that you should be part of that discussion and be able to contribute to that discussion. Not say that I have no interest. Not say that I don't understand it. Because it is not complicated at all. Trust me, it is not complicated. It is very simple.
And it's not even true. The women are the ones who are managing balance sheets at home. They're managing the budget. So it's not even true. And yet, they don't even recognize that. We don't acknowledge that as well. So, what is it that you would like to do at the end of this? Is there a goal? Is there a target that you've set?
So actually, a lot of it was more about awareness, right? It was trying to create that understanding. And I think Hitendra mentioned this right at the beginning, was that try to start that conversation, right? And in a lot of the things, I mean, so we would be addressing a room full of 500 farmers. Then we had 1,800 odd students. Then we had, I mean, it was just a lot of, and if we can convert some portion of them and become more independent, or even start to think about their own financial independence, or question that, and move away from that status quo, I think that would be a job well done. Now, in terms of targets, since we are finance guys at the end of the day, we do have a target, right? We've got a 5% or 6% penetration rate of mutual funds in the country. If we can move that up to even 10%, which is still below where life insurance is, right? I think that would be a very good target to start with.
That is an ambitious target and a target, as you point out, that many people are working towards. But Avi, we're talking about having conversations with women. But if I were to ask you about having conversations with men, because they're not just part of the problem, but they also need to be part of the solution. What is the conversation that men need to have?
So I think it's the same thing. It's when we coined the phrase change the soch, it was not targeted just at women. It was targeted, I mean, a lot of unconscious bias that goes in, right? I mean, and we all have that. It is, so in a lot of the cases we had, in a lot of the investor programs that we did, we had men sitting in there. And so I'd ask them, like, do you disagree with anything that we're trying to talk about, and would you do this? And they're saying, you know what, we never thought of it, right? Now, these are in villages, in towns, right? B30 locations. So they've never thought of it, which is that if you don't think about it, you're not going to change. Or to borrow another phrase, which is, if you're not measuring it, you're not going to change it. So I think a lot of the conversations we had, and I'll give you a perfect example, right? So when we were in Gwalior, that was the first cantonment, the army cantonment that we did, right? And half the room, so there was at least about 300 people. Half the room were all the Jawans in Gwalior, and we had insisted that the other half be their wives. And yes, a lot of them, all wives came with their kids and everything. And when you hear them, I mean, you ask the question, okay, how many of you were involved? Not very many hands go up. Some do. And the ones that did go up were the senior officers' wives, educated, who already had their own careers. So that's a positive, right? But the men, I said, would you not want to get the opinions? And a lot of them said, no, we already do in some way, shape, or form. Now, of course, when you ask for confirmation, that doesn't really come through. But that's where that thinking has to change. That's where that thinking has to, and that's the conversation you have to have. One of the things we also did was students. And the idea being, catch them young. And the students is a mix. So a lot of the questions that were coming from the girls, and then an equal number came from the boys. And I said, what do you think about changing? He says, that's not a question for us at all. We don't think that there's a difference. So there is hope.
Well, there is hope, and we have to have hope. Avi, many, many thanks for joining us. Appreciate you being here with us. Anand, requests you to turn around as well as the man who's heading FICCI, and we just had the findings of the CNBC TV 18 FICCI survey being revealed. You know, as somebody who is leading an organization, but as somebody who's also leading an industry body today, is this an issue that is being seen with a sense of urgency? Is it an issue that is a boardroom priority? How are leaders looking at this?
No, I think the survey that came out gave a lot of good insights. In fact, I'd say it was a fairly positive survey with high scoring on policies, high scoring on return to home behaviors and recommendations around that space. And there were few areas of improvement, which was particularly relating to leadership, share of women in leadership, and the attrition of women between 20 to 30 years of age. But certainly, I think it is a priority. There's still a long way to go. And I think one of the main things are developing a realization on the importance of diversity across the board. And a particular example that comes to my mind is a story that I heard from Professor Damodaram on valuation from NYU University. Yeah. And he was talking about when we think of valuation, we think that the right skill that we need is that we need a finance expert. And when you look at startups and tech companies, of course, you do have finance experts doing DCF valuation, but you also need a large part of it is on storytelling. Yeah. You look at Uber, they're a ride-sharing company, taxi sharing company, and they've positioned themselves as a technology company, and therefore their multiples and valuations are at billions of dollars in terms of size. So that storytelling capability can easily come with a non-finance expert. It could be a literature expert, it could be any other kind of background, and that combination is far more powerful than having two specific, finance people in the team. So it's not only gender diversity, but I'd say all kinds of diversity. And that realization that diversity is important is something which is very important.
Yeah, you're absolutely right. All kinds of diversity is important, but I want to specifically touch upon India's manufacturing base. And what we are seeing, and that's positive actually, is that there are women now on the factory floor. In fact, we have all women factories in the FMCG space, including even in the auto space. What are you seeing there, and what do you believe you have, for instance, been able to do to bring more women on board? What changes have you been able to incorporate to ensure that they stay on in manufacturing?
No, absolutely. We're seeing a big change. We're in the tire manufacturing business. And I know that about 30 years ago, we have an old factory in Bhandup. And when we recruited people, we would say it has to be male, weighing X number of kgs. They have to lift, and being at 5'8" plus height and so on. And there was a lot of manual work. Today, times have changed. Our new factories are far more automated. Yeah. Our target is to have 50% women. In our Gujarat factory, we are at about 20%. In Tamil Nadu, it is 30% women doing the same job that our people in our factory in Bhandup used to do, which were all men. So to that extent, times have changed. The stories that you hear are much more touching. When I walk around the factory shop floor, I speak to a lot of the women, ask them about their lives, and they often say that there was some amount of resistance from their own families and their own biases that they have, where they overcame that, came to work, and when we bring the families of these women and ask them to see what they're doing, they have tears in their eyes, seeing with so much pride that what their daughters are doing at work. So absolutely, India is changing, and it's a big opportunity for women on the shop floor.
Well, it certainly is. And, to that point, I remember having a conversation with the CEO. And one of the things that they decided to do was bring the mother-in-laws into the office and get them to buy into what the daughter-in-laws were doing. And they saw a dramatic change in the number of women who came in, as well as the attrition rates dropping. But, smart manufacturing, and we're now talking about Industry 4.0, AI, and so on and so forth. Do you believe that this is, in fact, going to be the big accelerator to bridge the gap? Because as you were pointing out, you needed men who weighed a certain amount and 5 feet 8 inches, and today you don't need that anymore because the robots are doing the work for you. Do you believe technology, and as we move faster and faster to AI, will be the big leveler?
Absolutely. So as I shared, it is certainly a change that we are seeing. Now there's far more button pressing in machines that you see, and it's much simpler. There's very little physical movement that is there, and that will only get easier and easier. Just to give you an example, our leadership team went to China about 2 months ago. In our average factory, we need about 2,000 people. The same factory in China needed about 600 people. And of course, it's far more automated. You have many, people just kind of doing physical or supervisory work in that way. So you can have a lot more women. Of course, it throws up the issue of jobs as well.
And that is a whole other debate and a whole other issue that we will need to grapple with. Anand Goenka, many, many thanks. Thank you so much for joining us here this evening. Suresh, our partners in crime for the last 4 years, HSBC has, of course, bid with us shoulder to shoulder as we've taken this message across India and also to the world. By the way, Future Female Forward has been a conversation starter in Davos at the World Economic Forum as well. Suresh, what do you make of everything that you've heard today? And, I walked into the HSBC office a couple of weeks ago, and I was surprised. All I saw were women from the front office to security, and that was really heartening to see. So the change is very visible.
Yeah, thanks for having us here, and I think it's an honor to be here. I think we've done quite a bit of strategic kind of levers which have kind of come into action. We always felt that there was a myth or maybe people's understanding to say certain types of roles could be done by men, certain types of roles could be done by women. And one of the key areas that we really transformed was our security forces, right? As a bank, we do have securities deployed across all our branches and offices. And we said, okay, why have the same old men standing there and then trying to guard? And it's been a real pleasant surprise. We've got females there. We've got women of various kind of backgrounds who have come in, and some of them are doing their first job. Some of them have done their NDAs. They have a whole lot of aspirations to grow and to do a whole lot of things. So we said, why not use this as a platform to bring them in, to nurture their talent? And we've also helped them to go ahead and apply for certain of your UPSC exams and others. And it's a question of whether they're going to make it or not. That's a different thing. But I think the whole experience and the fact that they can actually think of a career of, say, guarding banks, which are supposedly having a lot of gold and money, and then feeling you're part of that, I think has been a fantastic story. And I think we just wanted to start it from where people enter. Yeah. That's the starting point for our customers. And if they see that difference, hopefully the whole organization will also see the difference.
Well, I can say that it's something that really does hit you in the face as soon as you walk in. So what's next now on the back of all the learnings over the last 4 years that we have had together on Future Female Forward? Where do you see HSBC take this forward?
See, like any other organization, we also started small. We started putting our policies in place. We said, okay, this is an area where we want to start focusing. But I think we kind of quickly realized that you could have the best of policies for the women, but the enablement has to happen. And that enablement can happen only when people who made the policies, so the people who are responsible for ensuring that the policy adherence happens, also start playing a part. We've seen in a lot of cases where the usage of the best policies weren't there, right? So then we started to craft saying that what is it that's coming in the way of some of those policies? Because most organizations feel that I have a great policy and I'm done. To me, that's a starting point. That's what is where the reflections are going to start. Where are people going to say whether it's working or not working? All ears have to be on. We have to be very patient and listen to the feedback that's coming our way. Sometimes we should not hesitate to change the policy completely. And we've started seeing that work on the ground. And at least in some of our leadership positions, we're not limited to the security guards outside. We've taken it far ahead, like the entire kind of a trading floor that we manage, and HSBC India is a large trading hub, is actually managed by women. I have my friend Anita who manages it beautifully. She's not here today. So these are the areas where normally we would think that the trading floor belongs to the men, and that's what you see in the Wall Streets and others, but that's not true anymore. So we're making those changes. Like 70% of my DRs are now women. Nice. And so the men have a complex now. So they are talking about diversity. So that's a good conversation to have. Me included, it'll be 4. So it's fine. But I think, and hopefully maybe in the next few sessions that you do here, the next CEO could be a woman.
Yes, we look forward to that. We've got a whole bunch of young women who are ready to make India proud, and we will, of course, showcase their achievements. But Suresh, thank you so much for joining us here this evening. Jyoti, may I request you to join us, because Jyoti has been instrumental in the FICCI survey, been our partner in putting all of the data together, because as you've heard from all of our leaders here today, if you measure it, then you know what the reality is, and you can actually prescribe measures to take care of that. Jyoti, on the back of the data that we've already discussed, what do you believe the next steps are? What do you believe is the absolute imperative?
So I think the data, our president also, just talked about it, that there has been improvement. But I think a lot of improvement is also on the back of a lot of compliances that have come in place. And I think a lot of government policies supported by the private sector action is going to really help in accelerating a lot of process on the ground. And like I think Arundhati ma'am did mention about the board positions, for example, and how the whole scenario really changed, post the change that was incorporated in the Companies Act. And I think at that time, we were not really in favor, and we thought that perhaps this is something which was pushed. But I think the data now shows a lot of improvement. So I think it's action on the ground, plus some of the compliances, which does help in moving the needle. But I think there's also a lot of consciousness that is happening. Government is working, private sector is coming forward, and I think that's really going to make a lot of difference going forward. And the measurement that we are doing is really going to show how the improvement and the percentage of the improvement that is going forward.
Large companies are different. MSMEs have a very different story to tell as well. How different is the picture when you go below the top the Nifty and the Sensex companies?
So exactly, I think the ESG parameters where the companies do have to report, I think the consciousness is now very high. With the MSMEs, perhaps, it's slightly slower, but you do see on the startup front, for example, I think there are a lot more women, in action out there. So it's something which has to percolate down. Perhaps I think the benefit has to be showcased. So therefore, one of the initiatives that we started 2 years back, Dr. Anish Shah was the president, and I think he took women, gender diversity as one of the priority areas. So we started an award on women in workplace, much to kind of support the data that you saw, and trying to really recognize the companies that are doing good work in terms of women in promoting women in workplace. So that was to help other companies understand what's really happening, perhaps the benefit that will come to them as well, and maybe emulate it in their own way. And this is something which comes from at a larger macro level when we're talking about Viksit Bharat. we're talking about, bringing more female workers into the economy. So that's one benefit. But the other aspect, and I think where companies and government both are now working towards, is the whole care ecosystem that we talked about. So care ecosystem will help women come out and join the economic force. Plus, also, care ecosystem will create more jobs for women. Yeah. So I think that's a prosperity cycle that can kick in, and a lot more companies can start, coming into that fold.
Absolutely. That is both an opportunity for women and a need as well. Jyoti, many, many thanks. Ladies and gentlemen, as you heard from our wonderful speakers here this evening, progress is being made, but there is need for concerted action. There is need for more effort, and that is what we're attempting to do here at Future Female Forward. The conversations continue, and I'm going to ask Arundhati to come back out and take the evening forward. Thank you once again to Avi, Jyoti, Vibha, Suresh, and Anant for joining us. And thank you very much, Arundhati Bhattacharya, for joining us here again. And we look forward to seeing a lot more of you.
Thank you to each and every one of you for giving us those insightful perspectives. And thank you, Shireen, for taking us through that conversation. As we move into the next segment of the evening, we turn from conversation to action. In Delhi, Sakhi Seed by IMFA was introduced in partnership with Future Female Forward as a focused commitment to women micro-entrepreneurs built around three essentials: funding, mentorship, and access to networks. Delhi was where the partnership was launched, and Mumbai is where the roadmap begins. Tonight, for the first time, we lay out what Sakhi Seed will look like in action, how the initiative will work, and what the pathway looks like, and what it will take to build not just individual success stories, but a stronger ecosystem around women entrepreneurs. But before we get into what comes next, let's take a quick look at where it all began in Delhi.
What begins as a small business can become something far greater. Today at CNBC TV 18 Future Female Forward, we take the next leap in partnership with IMFA's Sakhi Seed initiative, a commitment to back women at the grassroots, where resilience becomes enterprise. By identifying, funding, and mentoring women micro-entrepreneurs. The journey begins with a 1-month application window, open to 200 women entrepreneurs. Women between 20 and 50 with family income under 6 lakh per annum and independently running a business for over 2 years can apply. Applications will be onboarded, evaluated by the jury, and guided by the IMFA Advisory Committee, with CNBC TV 18 as the independent third party. Selected entrepreneurs will receive Rs 5 lakh support in 2 phases of funding. XIMB as knowledge partner will conduct structured mentorship, practical workshops, and business guidance for growth and sustainability. Because when women lead enterprises, communities thrive and the nation grows. CNBC TV 18 Future Female Forward with IMFA Sakhi Seed. Powering women, building businesses, shaping the future.
And that's the action being taken forward. And to take that conversation forward, Shireen, I would like to invite you back on stage for this conversation and to lay out the complete roadmap of this initiative. Please welcome members of our advisory committee, Chetna Gala Sinha, the founder, Mandeshi Foundation and Mandeshi Mahila Bank. We've got Neha Juneja, the co-founder and CEO of India P2P. Shaifalika Panda, the founder and CEO Bansidhar and Ila Panda Foundation. And Dr. Sutapa Sati, the Dean School of Sustainability, XIM University, the initiative's knowledge partner, providing the institutional framework to measure and build on Sakhi Seed's impact as it grows. Please give them a big round of applause, ladies and gentlemen.
Well, as we promised, Future Female Forward is not just about conversations, it's about action, and we're so proud that we're taking our conversations to action. Thank you very much to Shaifalika. Thank you very much to each one of our members of our advisory committee. And I can tell you, we've been having rigorous calls. We had a an hour-plus long call deciding and discussing what the parameters would be, what the eligibility criteria should be before we actually hand out these grants to the micro-entrepreneurs that we're hoping to create. So, Shefalika, over to you. Now we're pretty much at rollout stage. So what should people expect from this program?
Well, thank you, Shireen. And first of all, I'd like to thank the members of the advisory committee. The AV very quickly did show you the intent behind the Sakhi Seed initiative. It is about highlighting, the credit that is not available easily to the women entrepreneurs in the rural areas or the credit micro entrepreneurs. And what is now in store for us, that we will be announcing the applications by the end of the month. It'll be a month-long process during which we do an outreach program for people to apply, for women to apply. And it was going to be based on the parameters that we showed. We were looking for women within a certain income level. She must have showed us a certain proof of concept where she has worked for 2 years, but we're not holding her to having any formal registrations or, formal books of accounts, because what we need to understand is these are women who are invisible to the system. Yeah. So we're trying to bring them into the system. We're trying to showcase that they are capable, they have the domain skills, but they do not have the business skills. And that's where we bring in our partner XIMB, who is going to do a mentorship program with them on business acumen, on finance discipline, on the compliances, and of course, the tech skills required for business.
Dr. Shutapa, how excited are the students at XIMB? Because they're going to be working with these women who are selected for the grants.
Very, very excited. I told you, I sent a small photograph, and really the excitement there. And we are really happy to be partnering with the non-financial component of the structured mentorship. Also, as a teacher, really also important is the documentation for the 2 years that with our partner we are going to do. I'm looking forward for some, real learning coming out of that. Yeah. And if that could be replicated as a model and a way forward for us. So very, very happy. And thank you. It's been a long partnership with
and thank you for coming on board as our knowledge partners on this. Chetna ji, of course, she runs India's first all-women's bank, Mandeshi Mahila Bank. And of course, the credit gap continues to exist. What have been some of the important learnings, insights along the journey of starting Mandeshi and where we are today at this point in time, Chetna ji?
Thank you. Thanks for this opportunity. And actually, I would say like this whole Sakhi Seed thing. India has a very successful narrative as far as digitization is concerned, right? Everywhere in the villages, you will see women selling vegetables, will have a QR code, and there would be a transfer. But that success of SHG is there. But that success does not come to individual women entrepreneur. Why? Because no credit score, no collateral. Nobody is ready. These women are courageous. I always say that when women start business, everything starts from no from them. Household, family says, no, you won't be able to do it. No network, bankers will say no loan, no credit score, no collateral. But I said, like when I was coming here, I was talking to women, and when I told about this whole concept of Sakhi Seeds, who are going to invest in women. You know what our women said, Shireen? They said, we had the courage. They have shown the courage. But capital never showed the courage.
I couldn't agree more with you on that.
Capital never showed the courage. So I say that Sakhi Seed is the beginning of showing the courage from capital side. And I'm sure that, Sakhi Seed will also teach the supply side that there is digitization, there are soft collaterals. Even women do not own property, they can create wealth and invest in that wealth. Country is definitely going to grow. And I would say, Shireen, another thing is, everyone we say that it will take 135 years to close the gender gap, right? Yeah. World Economic Forum will say that. How many of us are going to wait for that? No, right? Anyone, would you like to wait for 135 years? No, tell at least no now. Yeah? So our women do not want to wait for 135 years. They will create jobs with Sakhi Seeds. Thank you so much, Shefalika.
No,
thank you for
Chetna
joining
ji.
us.
Thank you for joining our advisory committee and for all the wonderful work that you've been doing at Mandeshi. Neha, thank you very much for joining us. Well, congratulations to you. She's a new mom and she's decided to take time off and be here with us. So Neha, thank you so much. We truly appreciate that. And I know when I reached out to you and you said that I've just had a baby and I'm not so sure about this, but you finally came on board. So we're really grateful for you for your time. What is it that you hope this is going to be able to result in?
So I just want to, first of all, thank you. And I am very happy to be here. The baby is 3.5 weeks, but it's very important to be here. I am here. And I want to give a little flavor to what credit for women does. And first of all, what I'm doing is, in a large part inspired by Chetna. I mean, I've followed Chetna's journey for so many years, and I think there are so many others like me who are working to give women the credit they deserve. Simply, this has been an amazing role model.
And
I have to say it right here.
She does deserve a big round of applause. I mean, she has been a trailblazer. She has been a trailblazer in so many ways.
So just to give you a flavor, first of all, when women actually get access to credit, women outperform men. If you look at the data on any of the credit bureaus in India, women have higher CIBIL scores or higher credit scores than men, despite lack of collateral, despite lower incomes and whatever other parameters go into that credit scoring, to tell you that women are actually better borrowers. There are a bunch of other metrics that tell you it's it's actually very profitable to invest in women, but somehow we don't follow the data.
Yeah.
This is the data part of it. I wanted to share why I am doing what I'm doing besides this inspiration right here. The fact that in my previous avatar, I used to sell clean cook stoves that replace mattika chulas. We worked with a lot of rural women, a lot of self-help groups. And you would see that the moment a woman starts earning money, her respect within her household goes up. You're able to demand more of your family. You're able to demand more of the men in your life, which is absolutely important. And I mean this with compassion, not to diss on any gender or men here.
Absolutely.
But we do need to demand, we need more independent men in our lives. Women are becoming more independent. More women are becoming more independent.
Yes.
Men are not becoming independent at the same
Yes,
stage.
we do need more independent men in our lives.
Men.
Absolutely. Absolutely.
You need to know what's in the kitchen inventory. You need to be able to take care of yourselves. You need to be able to take care of the baby. You need to be independent in all of those things. And I mean that with compassion. It's necessary for all of us to have, thrive, for our country to have higher per capita incomes and so. And just enabling a woman to earn more, earn better really changes the status quo. It has such quick and amazing social transformation that is, I've seen it so many times, and I cannot imagine doing anything else with my life other than to, help move this forward, which is why this program is so important, because it's not just talk, it's money and action.
Yes.
And that's what we need more of, along with more independent men. But this will also lead to more independent men.
Yes, we certainly hope so. So, Shefalika, the call out to people, please, if you have networks that you're plugged into, let them know about the Sakhi Seed grant. Applications are going to be open, and we will be wetting those applications. Shefalika,
I just want to say one last thing, that, supporting women micro-entrepreneurs is not just about economic empowerment. It is the sustainable journey for India's $5 trillion economy. And the more people and the more stakeholders that we can get on board, we can really make this a powerful movement right here on Future Female Forward.
And we look forward to that. So here's to capital having more courage and to more independent men. Ladies and gentlemen, a big round of applause to Shefalika, Chetna Galasina, Neha, and Dr. Shutta. Thank you so much for joining us here this evening.
Thank you to each and every one of you for taking conversation and making it action. And that's what Future Female Forward is all about. Now, if you would like to be a part of the conversation this evening, scan the QR code on the LED screens and join the Future Female Forward community. The code is on your screen and you can scan it. And we move now from corporate leadership to civic leadership. And in a city like Bombay, this is leadership tested in real time. Mumbai moves fast, demands constantly, and leaves very little room for pause. Leading a city like this takes more than authority. It takes clarity, resilience, and the ability to stay calm in complexity. Now, to lead this conversation forward, request Shireen Bhan to please make her way back on stage today. And now joining us is a leader who knows exactly what calm under pressure looks like. Please welcome Mumbai's first woman municipal commissioner, Ashwini Bhide. Ladies and gentlemen, please put your hands together for Ashwini Bhide.
Well, we do have history right here on stage. In 160 years, the BMC has never had a woman at the helm, never had a woman at the top. Ashwini Bhide, thank you so much for breaking the ceiling finally. You know, was that something that you were thinking of when you finally sat in that chair? Did this thought occur to you that I'm making history?
Initially, it didn't, because as a women member of Indian Administrative Service, I always thought that, okay, I've always have been on the equal footing. But many people started telling me that you are the first woman commissioner. Initially, I felt, what's the big deal in it? But then I realized that in 160 years, if not a single woman has been made commissioner, then there is certainly something.
There is certainly a big deal in that. There is a very big deal in that. But, you know, as you've navigated your way through the civil services, as you've navigated your way to the very top as far as the BMC is concerned, what have been some of the toughest challenges that you've had to encounter on account of your gender? And I know that there are challenges that civil servants face on account of, you know, the environment around us. But specific to your gender, what have been some of the biggest challenges you've had to face?
Frankly, Shireen, in Indian Administrative Service, we experience less of gender disparity, because being in the administrative service itself puts you little ahead of the race. And as far as IAS is concerned, women's presence has always been there.
Yes.
The percentage has now recently increased, but presence has always been there. And we have heard stories of many of our senior officers working their way up to
when will India see a woman cabinet secretary?
But yes, there is, and even Maharashtra took a lot of time to have its first women chief secretary. But many other states, there have been many women chief secretaries actually. So at times there is some kind of a glass ceiling, but if you look at the opportunities which the service provides, even to women officers, frankly, I have never experienced that kind of disparity or any different treatment by people. But yes, there were certain posts which were always, considered that women may not be able to perform on those posts.
Which posts were these?
Even the municipal commissioner post, for that matter, in very early days, even the collector's post, people thought that women won't be able to, perform. But then it has become a norm now. So I think it takes some time for people to understand that there's no difference. Finally, an administrator is an administrator in spite of the gender, and the performer won't have any gender as such. If there is a performer, that person would perform, but that understanding takes some time. And some of the posts which look that only men can handle them. Maybe the municipal commissioner's post is like that. Even MMRDA commissioner, for that matter. Housing boards, because these posts are they are considered that they have to handle many complex things which involves too much of engagement with people, political parties, the influential people in the community, and at times people feel that women may not be able to navigate through those troubled waters. So, but once you break that ceiling and once that myth is broken, then I think it becomes a normal thing. Then that time probably people would think, why even we had thought of that the women won't be able to accept that.
You know, you're dealing with the large infrastructure projects in Mumbai. In fact, you're also called the metro woman. You know, in India, the biggest problem with infrastructure is it just doesn't get done on time. There are time overruns, there are cost overruns. Is it good to have a woman in place to ensure that we actually get the job done?
If that is the case, then probably I must say that yes. But there are multiple reasons why infrastructure projects don't get on time. What is needed is a very focused kind of leadership for that. And at times people allow things to the providence, allow things to happen on their own. But maybe when I took over, because when I came in infrastructure, that was in 2008. And since then, I have been continuously working in urban infrastructure. And my own lesson was, unless you own it, unless you take responsibility of it, and don't look at it as a regular administrative thing, the projects won't move. And from that perspective, I worked on all these projects like the CEO of a private company who would always think of the cost and time overrun, and who would always think of the lost profit. In government companies, we don't think much about profit, but the cost and time overrun is something which we have to think about. And each and every problem which comes in the way needs to be dealt with immediately. And that dynamism in the decision making, I can't leave, I can't leave it to the next officer who takes over. So I worked with that attitude, and that worked well. And most of the projects which I took over or I started, they got completed in a reasonable time frame. Not exactly on time, because there were multiple issues. So I think the women leadership brings that sense of accountability and ownership. That sense of ownership. And that makes a lot of difference.
You know, we've got a lot of young people, young women here in this audience, and many who are watching us online and on TV. As someone who's navigated the civil services, you know, what would you leave us with in terms of things that we should be mindful of? What have been some of your sort of, you know, non-negotiables to help you, as you said, navigate the very tricky, often difficult waters? What would you leave us with?
Civil services, the kind of field you have to work in is always very chaotic, because there are too many noises, too many voices, and you have to pay attention to each one of them. And so around you there is always a chaos. So what you need to do is find a method in that madness. And to do that, you need to first listen to all the voices, all the noises, absorb them, and then try to understand what exactly is important, what exactly matters, which actually will find a way out. So if you don't listen to it, at times what happens, the chaos is so much that people stop listening to that. And they find their own way out to deal with it. But it doesn't work that way. So basically, one has to be very, very patient. One has to be a good listener, understand what the problem is, and go in the details of that. And don't leave it to anyone. But one must understand that in this kind of administration, there is no one single and straightforward answer. There is no tailor-made solution. You have to find that solution, because there are multiple stakeholders, multiple viewpoints. One particular thing, somebody tells you a story, and then you think that, yes, there is a truth in this story. You start acting on it, and then two other components or members would come and they will tell you a different story. So you have to be always mindful of that, what exactly, and the principle of natural justice needs to be followed thoroughly. You need to listen to all and then find a solution. Secondly, you need to work on the details, because the devil is in the details. You can't go basis the superficial information and make your decision. And second is, you need to always review your own decisions. There is no harm if you need to change your decisions. You need to look at the thing in a completely different perspective. There is no harm in that. So that you should be ready to. Don't be so harsh and hard on yourself as well as on the situation. And the most important part is taking ownership. Taking ownership, being accountable for what you are seeing. And the thing more important than this is being very, very honest and transparent. If you follow all these things, then probably you find the right way even among the chaos and find a solution to problems. And once you are a problem solver, then I think every issue in administration can be easily solved.
You know, as many of our speakers here this evening spoke of the perfection penalty that women often burden themselves with and society also burdens us with, you know, as you've navigated a very high achieving career with also managing, you know, your family and so on and so forth, what have been some of the...
I think this trap of being a perfectionist, that initially I was also influenced by that, but slowly you realize that you don't need to. You need to navigate both, you need to manage both. And I was blessed with a very, very supportive family, because that matters a lot. And if your family understands what exactly is your job, responsibilities on your job, if I am answerable to my job 24/7, then I need to have that kind of, you know, freedom and that kind of support from the family, which I had. But at the same time, one also needs to prioritize. Because there are moments when your office and your work becomes very important. That time you can't even pay attention to your family requirements. But there are moments when your family matters a lot, and you can certainly keep office and the work demands slightly away. So that kind of prioritization has to be done. And what exactly you need in life, because you can't have best of
everything at all times.
So so you need to be fair, you need to be balanced with yourself also. We need to moderate our own expectations and then try to give justice to all. And sometimes, if there are failures, sometimes you commit mistakes, then you should be sympathetic to yourself.
Be sympathetic to yourself. I think that is a very important message that you're sending at Ashwini Bide. I want you to leave us with, perhaps, you know, give us an anecdote from all these years of working with politicians, or working with, you know, the who's who. What has been that one most interesting anecdote that you will leave us with, where you had to use all of your skills to sort of navigate through?
No, I don't think there is any one single thing, but I have been working in public life for past many years. I worked in rural areas, I worked in semi-urban areas and urban areas, and then a metropolis like Mumbai. And the kind of projects I have worked with, every time you need to convince people why we are doing a particular thing and in a particular way. So dealing with people, dealing with political representatives, dealing with non-governmental organization, dealing with civil society and the citizen groups, it has always been a very exciting journey.